Oh, it's hot. Now you got a cold in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Wednesday to you both.
Hello.
Hola. How are you, son?
Amazing.
Look at you guys, your matching haircuts.
He got his yesterday. I got mine last week. I'm not. It's not
I went to a new place because my girl's on vacation for a month.
I had a new haircut.
Why? So good for her.
A month in Italy? I mean,
Good for her.
somebody's not paying taxes. That's all I know.
Okay.
Kid
All right. Nope,
business
there it is.
Something
Okay.
unbelievable. A month. Yeah, so I got them all high and tight. I said just a trim. They made me look like an action figure.
Sure. Yeah. Yeah. I mean, it's good. Like a Johnny Unitas moment. Like, I love that for you.
I feel like I'm in high school.
I love a man's haircut that you could set your watch to.
It's only hair. Goes back.
No, it looks nice.
Thank you.
It looks nice. There you go.
Appreciate it.
Are you
How are
ready?
you?
Oh, I'm good.
Yeah?
Good. I can't complain. Today's like our synthetic Friday because we don't have to come in the rest of the week. So,
Oh, because I'm traveling.
yeah, you're traveling tomorrow,
Thursday
and then me,
afternoon.
Liz, and Jenny are gonna be remote on Friday. So
Beautiful. Look at you. See that?
yeah, so I'm good. I'm golden.
Oh, see?
Are you ready to go to LA?
I am ready to go to LA. Got a hotel room. I'll be there for, I think, under 20.
I'm glad you got a hotel room.
Under 24 hours.
We're not gonna make you
Yeah.
sleep like
In a
on
tent,
some
like they
folded
did
down
last time?
chairs in the venue.
Like they did last time.
You don't have to sleep backstage.
No, yeah, no.
So you get to go to dinner with the team. You're not
You
going
know,
to any
this has
cemeteries.
I got to talk to Brittany. Yes, Tom will be there, obviously, in LA for the show. But we got to stop the whole Mediterranean thing for dinner. I'm done. I'm done with it. You know.
But you're Mediterranean.
You're lucky on our side of the tour. We get
It's
McDonald's.
every man for themselves.
Yeah.
Fight for the scraps.
Yeah, it's like $97 a day or something like
You're
that.
going to Texas. You could get Whataburger.
Oh, we could do that.
Yeah, that
Yeah,
fits in
that's
your
a
per
step
diem.
up.
That is
We
a
have
step
them.
up. We don't have Whataburgers here. I think there's one in Orland Park.
Yeah, if I do
weirdly.
Whataburger, I only have to skip breakfast, not both breakfast and lunch.
Yeah, there you go.
To fit in the per diem.
Yeah.
Beautiful. Like that. Try walking.
So you're going to fancy Mediterranean. That's what you're beefing with
Yeah,
in LA.
yeah.
Where do you want to go? Pink's for hot dogs?
Nah, I just would I don't know. LA probably I don't know, Mexican, Chinese or something.
Yeah, I don't know.
Yeah, good Chinese.
Korean. Lots of really good Korean food.
Korean
Yeah.
would be good. Yeah, something like that. I mean,
Interesting. Okay.
That's what
I
I
think
got.
it's going to be okay.
I think it's gonna be okay too. But you know what? I'm tired of being under his thumb. I got the card now.
Uh-huh.
You know what I mean? Like, he only survives if I allow him, kind of thing.
To be fair, your last trip, you were this close to going to the ER. So, like, let's
I
not,
should have been to the.
Right, let's not get all puffy chested about our so-called independence, because receipts. I have receipts. You're not going to any cemeteries in LA, are you?
No.
Okay.
I don't have any family members.
Okay. Well, no, but there's celebrities though buried in LA. Like, you could go see, like Michael Jackson. I don't know. Just pull that out of my ass. But you could go see some celebrity that's buried in, Graceland, whatever the famous cemetery is in LA. I think like Graceland or whatever it is. I don't know.
I'd like to go on like the bus tour. You do
Oh
like,
yeah, the Star Tours.
Yeah.
Yeah, I like those.
Star F tours. No, not for me. Not for me. So I don't have enough time, to be honest with you. We get there in the afternoon. We leave in mid-afternoon again.
Sure.
So leave by home. Leave here around 12
In and out.
o'clock and get home by.
Ooh, you could get in and out.
Could get in and out.
But there's one right by LAX there.
Yes. That was always the thing that we would do. We would always get a roadie burger for the ride to the airport.
Get the animal fries.
Animal
Onions
fries,
and
animal
sauce
style.
on there.
Yeah.
Nikki, have you had In and Out? I've never had
I
In and
love
Out.
it.
Oh, you do?
Yes, I love a good sauce.
Yeah.
Anytime you get like a fun sauce, it's the best.
Yeah.
Yeah, I'm not a sauce person. That's my problem.
Oh.
Yeah, I'm not a.
Because you didn't grow up in the Midwest. You got to get that ranch.
I don't get the ranch thing either.
No, I'm just saying that
Ranch on
starts,
pizza.
that starts your love of sauce. It's just growing up young in the Midwest.
Yeah.
Your first indoctrination
Yeah, ketchup,
is
couple-
ranch.
Grilled onions. No.
All right.
Can't put sauerkraut on it like you can in your hot dog.
So
Frankfurter in my neighborhood.
Frankfurter, fancy.
Mm-hmm.
Nikki, how about you? How was your evening last night?
It was good. Nothing crazy. I made some more Batista Gardens deliveries.
Ooh.
So I've been doing that. I'm.
So you're not only the founder and the chief
I'm
grower, you're also the head of fulfillment.
Every step of production, I am it. I
Yes.
am running the entire show. But thankfully, I think that was. I got one more delivery to do. So I'm basically done. I think I have like 3 or 4 jars to myself, and then the Batista Gardens limited edition drop is officially discontinued.
Wow.
Over. So
How are you
I'm
going to
excited for
scale, though? That's the next question.
I'm not. I'm going to figure out a way to not have my apartment smell like Jardinera for
Right.
a week.
To smell just like a
Yeah.
pepper cloud.
Yeah. So that so next year we're gonna figure that out. We're gonna figure something out. But it was a
You've
fun
been very generous. You've been very generous. I will admit, a little bit of a skimpy jaw. You know, a little,
8 ounces.
little
8
bit
ounces.
small.
Yeah.
Well, can I tell you, I did try it. So the jar was on my desk, and I
Okay.
forgot to bring it home for
you
a
enjoy
while.
it?
But I got some pot belly, and instead
Ooh.
of getting pot belly jardinera, I'm like, you know what? Hold
This
it.
is my chance.
I got my own, so I took the sandwich home and I put it. It was really good.
Thank
It's
you.
very good.
Yeah.
Very good.
Yeah, I was pleasantly surprised.
You're domesticated.
Yes.
This is good.
I had to do the small jar so I could make it last.
I know, I agree with
I
you.
had
I'm
too
just
you know,
teasing. I'm
like
just teasing
you know, the word got out here, and everybody in the office is like, "I want a jar, I want a jar, I want a jar," and I'm like, this was.
Sure.
I grew this on my balcony. This is like a production here.
Well, now it is.
Yes.
Now you got to stay on that grind because the people want their peppers.
Yeah, next year
Wanna
I
pick a
got
pack of pickled
Westwater
peppers.
Farms, and I don't know what John's farm.
You know, if we
Is,
move the
but-
chairs out there and
Oh,
barbecue
McGloin Prairies.
Enterprises.
Yes.
wants to collaborate.
Yeah. We're gonna do like a 3-way.
Oh,
They don't know about it yet. They don't know about it yet, but they're involved.
they're involved. They
Yeah.
don't know about it yet. They're
Yeah.
involved.
Yeah.
McGloin's got some talent with that. He's been doing it for years.
Yes. He gave me 2 of his jars.
Oh, that's nice.
Right. I gave him one of my little 8-ounce jars, and he gave me 2 pint-sized, big ones, spicy. They're great.
He makes like pounds of it,
Yes.
like pounds and pounds of it.
Yes.
But it's very rewarding. It's like, look,
Was it rewarding for you? I mean,
It
I know-
was.
Okay.
Oh yeah. I mean, like growing it every day.
yeah,
you
that's
see 'em
rewarding.
grow,
Your
and you're like,
hands are in the
Yeah,
earth.
this is like the most.
So what if we
manly
made
thing
your
you
whole
can do.
balcony into a garden? Like we get rid of the chairs, we get rid of the barbecue.
I don't think so. I don't think I'm ready
You
to
gotta
commit that.
go to like a community space. Like you need like a ghost kitchen now. Like
No,
you need to.
What about up
to
on
expand.
the roof or something?
That's that. There is a roof deck that I could maybe make like a.
Do they grow stuff up there? Or do they?
No. Community garden, maybe. Yeah.
Okay.
I don't know. Next year we can think about that.
Go.
This is pretty
You're
good.
gonna be carrying buckets of water up there to water everything.
No, I mean, there's a spout up there.
Oh.
Yeah, that I could use. Yeah.
Oh, maybe.
Those up there too. Little sun chairs. Nice.
Nice.
Yeah.
Beautiful.
Yeah. You wouldn't know. You've only been one time.
Okay, well.
No, I've been there a couple
Cats
of
in
times.
the
Usually
cradle and
deliver
the
stuff for
silver
you.
spoon.
That's true.
You guys good?
Maybe this weekend. I'm going to see him
Never
this
got
weekend.
invited. Never got invited over for like lunch. Or
I'm going to see him
brunch
this
or-
weekend. Can you make reservations? Can you arrange the driver? Vinny doesn't like this.
Wait, what's happening this weekend?
No.
He's got a game in the city, and it's my daughter's birthday. So I said, you know places in the city better than I do. Make us a nice dinner reservation. That was 3 weeks ago. He made it yesterday.
Well, I got a great spot. So,
Yeah.
Hey, that's all that matters.
yeah.
That's all that
good,
matters.
yeah.
Oh, did the Cubs win yesterday?
Yes.
I was
yes.
not paying attention. Cubs are in the playoffs playing the Padres. It's a best of 3 series.
Cubs won. Yankees lost. the Dodgers hit a bunch of dingers.
Okay.
So yeah,
So
no,
things are happening.
for those who love it, and I
That's
think the Tigers
exciting.
squeaked out a win, if I remember correctly.
We don't get a lot
Shout
of
out to Dr.
postseason
J.
baseball.
So say it again.
We don't get a lot of postseason baseball. in
No,
Chicago,
we
so.
don't. No, you're right about that. What did you say? Oh,
Dr. Jim.
Yeah.
Tigers. Is he back
Yeah.
on the Tigers or is
Yes,
he
he's back on the
Okay,
Tigers.
good.
Yes. Are they winning? Yes, he's back
Yes,
on the
yes,
Tigers.
he's back on. Yes. Yes.
I mean, they blew like a 15 and a half game. The
Yeah, to the
division
Guardians.
lead.
Yeah,
Yeah,
kinda
so
weird.
I mean, good job, I guess. Detroit.
Yeah,
I don't
yeah.
do.
The chat saying that you missing out on the three-way comment.
I'm getting.
They're asking if you've gotten a little soft.
I-
No,
Yeah.
he's
You're slowing
evolving.
down a little bit.
He's in a leadership role now. He's got
Yes.
to be more dignified. Maybe. So,
Sad but true.
I don't know.
Sad but true.
I don't think that that's true at all.
I can be dignified until 10. I can do it. I can do it.
I don't know. I don't think so, but maybe.
The thoughts of my son in a three-way though does bring back memories, so that's kind of cool.
Why'd you have to read the chat?
That's-
we were
I'm
I
sorry.
was,
I
I was
had
this
to-
close. to
I'm so
reading the
proud
show
of him.
schedule.
I had to tee that one up.
I had to
I'm
like.
so proud of him. Sorry. See what happens?
I don't think John and Westwater is not the three-way that I had envisioned for myself.
It's a
but
start, son.
it's
We all have to
hey,
start somewhere.
You know,
We have to start somewhere.
I mean,
I'm sorry.
You could do
Sorry,
worse.
Manana.
I'm
You could
really
do worse.
sorry.
I'm so sorry.
I did this.
You did do this, Nikki, and that's 100%.
Hey. The government shut down.
I got it for news. Like,
Do
I'm
you?
gonna-
Okay, you sure?
Why would I not have
All right,
that
just
for
want to make
news?
sure. Just wanna make sure. Has your day been different so far? All right.
Yeah, now Beth is getting called out for not keeping us in line. You're slacking, Beth.
Beth has other things to do.
Yeah, Beth has other things to do. It's okay.
Anyway, hey, we got a great show for you today. Rabbit,
Oh, good one. I missed that one.
you
Yeah,
missed
you're
it.
right.
It's October 1st.
Oh wow!
Yeah,
Yeah,
here you go. It's the
time flies.
It's the
Yeah,
first
sure
of
does.
the month. Yes, it's October 1st.
Spooky season.
Today, yes. I know I got to redecorate my desk for my Halloween
Do you
theme.
put stuff up at your place?
Not in my house, no, because I live in a condo. Like, it's not.
Yeah, but
Did you put something on your door?
Oh, I have like a wreath, yeah,
Yeah,
on my
right,
door, but
right,
it's
right,
not. I don't go like all out.
You don't go like, because Mike has because he's domesticated now.
Sure.
So he has.
Mike is actually transitioning from what I could see. I mean,
Mike-
he's got
Mike's-
some good muscles and stuff like that. but
Yeah,
he's really changed.
Yeah, he's changing. Mike has
Shut up! You're whipped and you're whipped. I don't know why you guys are like.
Mike
oh,
has
yeah.
pumpkin decor, pumpkin
Like
pillows.
even like little ones. and
Little ones on
stuff,
the
big
couch. Like, I went
ones,
over
one
there.
flipped over on its side.
Yeah, I went over there
kinda.
the other day. I sat on the couch. I was like, and there was like a round pillow behind me, and it was just like a little pumpkin,
I
like a
love that.
Home Goods, pink pumpkin.
Yay! Oh, I love
I was
the
like,
pink
what
pumpkin.
is this? So you don't do that?
It's
That's not your
it's
thing.
just me in my house, and then then
You act like that's a reason that women don't decorate.
decorate. I do.
They
I do. I
decorate
just don't
for
have
everything.
the time. I don't have the time and the bandwidth. Like I'm one
Okay.
person trying to get a lot of stuff done, and so it's,
You can do it. You can do it. I have faith in you. And yet you were able to get dressed up and you look good. I'm proud of you.
right. Yeah. So I don't know how this is an attack that I need to decorate more, but okay, that's
it's okay.
fine.
I was just.
I went and bought a Bluey for my grandson yesterday at Costco.
I've
Big-
lost all control of the show. What?
I was
Bluey
I was actually there the other day, dropping off my jardiniere.
at Costco.
No, at Sasha and Rob's.
Yeah.
Sasha's place. I don't think they need any more light up.
They're
have-
taking over the tradition a little bit.
They were like, I'm like, why do you have light up Christmas stuff here?
Little
And
grandson.
they're like, Chris is getting a little bored at home.
My wife. Yeah. So she keeps bringing stuff over and buying stuff for
They
her.
have the nutcrackers and all the
For Christmas?
yes.
Yeah.
It's-
Well, the grandson. So I walked in yesterday. He doesn't say a lot of words, but I walked in yesterday to drop off something for them, and he said, "No," which is what he calls me.
Oh, Grandpa, yeah, in Italian.
No, Bluey, shoes. So he wanted to go get Bluey from Costco. So he wanted to go get his shoes.
How does he even know what a
because
Costco is.
his mom says his no is going to buy it for him. Saying it, keeps saying it.
Are you sure that she just wasn't saying no?
no, Bluey. No.
Right, yeah.
No. So I said, come on, son, let's go. Put him in the car, drove to Costco, got it, drove him home, plugged it in, blew it up, 8 feet in the living room. So it's a Christmas Bluey.
That's what grandpas do.
Just straight chaos. Like, who has room for that in their living room?
They don't. They do
Right,
not.
that's what I
It literally, like, they had to
very
move.
small
They had to
place.
move the couch to put it in. Like,
Good job.
She goes, you can
No.
put it at your house. I'm like,
Yeah.
no.
Yeah,
That's
good
not
job.
how we're
No.
doing this.
Hey, we got a great show for you today. A lot of really good stuff headed your way at the top of the 8 o'clock hour on this wonderful Wednesday. We got the options jive, government shutdown impacts, past lessons, and 2025, reframing some things from a research perspective and just looking at historical data and what happens. Because it's been, I think, 6 years since this happened last. We're just going to take a look at what happens. That's Options Jive at 8 o'clock. Then 8:40, what's your assumption? This is where viewers write in with their trade ideas. They have a trade idea, but they also have a directional bias. So the bats are going to put on some viewer-submitted trades. That's going to be at 8:40. And then 9 o'clock, Skinny on options math, understanding IV overstatement. What?
well,
You'll see.
yeah, we'll have Jacob on, and he will certainly explain it.
He will school us
Yes.
all in all of that. And then live from the trade desk, back again, we have Quentin and Ryan looking at a couple of things on the crypto side of things. It is crypto
And
week.
crypto's hot.
Yeah.
Crypto be hot.
It's hot. They're
116.
going to break it down.
Yes.
And then Liz, the very lovely Liz, going to be joined by TP on her show today. So get ready for that camera angle.
And
Everyone
if
loves
we
it.
have time today, we're going to do phone calls as well.
Oh, all right. So stay tuned for that. So let's get this show on the road. Do you want your daily dose?
Sure.
Yeah.
Yeah, let's go.
Our leading story.
today's
Breaking news.
Breaking
Coming across the wire. Our leading story. Top story. Jump in.
Today's headline. This just in.
Breaking news.
All right, everybody. Today is a wonderful Wednesday. It is October the 1st. This is a part of the show we like to call the Daily Dose. We talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Ready for the news.
Any new earnings, Mr. Bat?
Nike, after the close yesterday,
I'm going to get into. I said new earnings. I have.
You're in
We'll get
trouble
into
now.
Nike.
She
We'll
said
get
new.
into
You better
Nike.
listen to the
Wow.
We'll
adjective.
get into Nike.
Nothing right now, dear.
All I just listen to the words I'm saying.
can I
just
say
said,
that Nike's up $2?
you can, but we're gonna get into it, and then we'll
Oh, she's gonna
discuss
be
it.
mad at you now.
But newer, I'm not mad. Okay.
I'm just kidding.
I won't be gaslit into just okay, but you can be assertive and dominant, and then you was like, ooh,
I don't know. The assertiveness kind of getting to me a little
all I
bit.
said, listen to what I'm
I
saying,
feel
not
put in
what
my
I'm not
place
saying.
here.
Not what I'm not saying. Just ask for new earnings.
New.
New earnings, yes.
No new earnings. Thank you. I
Okay,
will
great.
answer
Thank you
questions.
very much, everybody.
You're welcome.
First headline of the day: the government shut down. That's it. That's
Ah!
the point. The Congress shut down. They were unable to come together to put together a continuing resolution that would have kicked the can down the road and kept the government open. So what this means, though, is you're not going to get your big jobs number on Friday. You're not going to have all that juice for your live show on Friday. And of course, we're going to break it down more granular level for our options jive at the top of the 8 o'clock hour. But what do you think this will do to the market?
Well, we had to shut down. Trump won, right? His first time, I believe. And I think
Sure.
Clinton before that, if my memory serves me correctly. Usually the market kind of dips into it ever so slightly, and within a week or two, it's usually unchanged to slightly higher.
Sure.
I would expect with volatility really doing nothing today, that you're going to get some of that. Maybe we'll get a little scared of the downside just because we're where we are.
Sure.
If we were on the lows, we probably would have gotten scared of the upside and rallied. That's the way I think.
In the last
I mean,
50 years, we've had 21
Wow.
government
50
shutdowns.
years, 21 government shutdowns? Okay.
Not a lot.
One every
I mean,
other year, pretty
yeah.
much.
Yeah.
Yeah. Interesting.
Yeah.
Interesting.
What about bonds? What are treasuries doing today?
They're not shut down. 117.02 up 15.
Market's not going to shut down. That's
No.
No. It usually doesn't affect the market too much. I mean, it's more like you would know this more than me though, but isn't it more like like government
Employee services.
Yeah,
Sure.
they have furlough, but they get back pay.
Sure. Well, so yeah, so
I mean, I'm not
150,000 government workers will be furloughed, but essential government employees, such as those who work for like TSA and like other security, they will continue to work. They will not get paid, but they will get back pay whenever this ends. The caveat though here is that federal contractors though won't get paid, and we do use a lot of federal contractors. But what we saw in the last shutdown, as it extended into a 35-day period, is the longer that the shutdown goes, the more you're just going to have TSA straight up just calling in sick because, like, look, man, you're not paying them.
Right.
So just the longer that
But
it
you
goes.
are paying them because they get back pay. I mean.
So, but if I
not
told
paying
you,
them
but if
today.
so many people live paycheck to paycheck, like it's just it's hard
not ideal.
to
Nobody wants an
finance
ideal.
your lifestyle for an indeterminate amount of time that you don't know what the end date is. That's all.
Yeah, no,
It's
no.
not very motivating to get up out of bed and go frisk people for $0.
Well, you are getting back pay. I mean, it's like a pay you for a hamburger today. Give me a hamburger today, I'll pay you for it tomorrow.
Again, you can keep saying that, but I'm saying the
That's the fact.
experience. No, but the experience of that and like not being
It sucks.
able
I mean,
to
there's no
pay-
doubt about it. It's not
right, to pay your
it's not
bills.
ideal.
And again, because you don't know when it's going to end, so.
You don't know when it's going to end, but it's going to end, and not going to work doesn't do anything to help it, unless you think that shutting down things like the airlines or slowing them down helps your cause.
Yeah, sure. I don't know what's going to happen, but like I said, we're going to take a look at some of the historical data for the
And
option
if
side.
the sides could speak to each other, this could probably be avoided, and it probably could be avoided every other year, as Nick said 21 times in the last 50 years. So. Sad.
Are you running for Miss Illinois?
No.
I just want everyone to get along together, like such as.
That's good. That's basically what you said. She
cold.
got you.
That's cold. I mean, but what I'm saying is, it's like holidays. This day didn't sneak up on them. I mean,
Sure,
there's a
right,
lot of.
right.
I mean, they have to stay at work, so
Sure.
So they get this done because.
Well, actually, they're not at work. They're not coming back until
well.
Friday. But yeah.
The government paycheck isn't what Nancy.
Yeah. So they get paid. Yeah.
I'm
they
sure
get
they're doing just.
They're not living day to day.
They're not living
Check to
day to
check?
day. They're not worried about paying their bills.
to check?
Okay,
They
they're
get paid.
Yeah, they're all right.
Hey, I do want to look at metals for a second. Silver is nearing a record in a hockey stick rally as gold approaches $4,000 an ounce. It's not just gold notching a strong quarter, but silver futures are up 27% over the past 3 months versus gold's more than 15% rise. Silver up 58% year to date compared to gold up 45% year to date.
They're both egregious, but like you said, it's assets, right, Nick? I mean,
It's all
gold-
assets. And it's funny because, when you watch this gold and silver move, everybody poo-poos like crypto or stocks or whatever. And now you're seeing metals go absolutely bonkers. And, nobody scoffs at that because,
It's not as widely watched and not widely held either. So.
Because you can physically hold a metal. You can't hold a
That's
Bitcoin.
bull crap. Nobody holds the metal.
I'm just saying, but in my mind, that's what the
Except
difference
Frankie
is.
in the chat room. He holds the metal. I don't know how he carries it all, but he holds the metal.
Yeah.
It's physical.
So it's been a crazy move.
Anything in any of the ETFs or miners?
Yeah,
They've all gone parabolic.
And they all have high IV rank, and continuing as it goes higher, volatility goes higher in these products. It's just like a NASDAQ type stock that the risk is to the upside or the velocity of the risk is to the upside in these. I stay away because they run me over.
Sure, yeah, it's rough out
it's
there
rough.
in some of those
I've
positions,
mostly-
and if it's not fun for you, you just why treat it?
Yep.
Yes.
Yes.
But some people have good luck in it, so if it's working for you, congratulations.
Yep.
ExxonMobil, the top U.S. oil producer, said yesterday they will lay off 2,000 workers globally, particularly in Canada and across the EU. This is part of a long-term restructuring plan, will affect around 3 to 4% of the company's workforce. You talk about XOM, I know you probably don't trade it a ton, but you talk about crude oil because that has been moving lower. So
Yes, it has. Crude is down 41 cents right now. We're kind of at the lower end of where it's been trading around 62. We're actually at 61.96. I got long it via micro crude contract. That's
Okay.
I remember,
MCL.
we said this is the 3 day
This is the
rule.
third day.
It was the third day. So this is the day you probably could could nibble on the long side in crude.
Yes. I also have a short put spread in the crude futures and /CL. So
Okay.
I got some long delta.
Not working today, down 41
Yes.
cents so far, just under 62.
Yes.
Pretty good.
Time's on your side.
The U.S. government announced yesterday that the Department of Energy is going to take a 5% stake in Lithium Americas and a separate 5% stake in the company's lithium mine joint venture, Thacker Pass, with General Motors. The government just straight up buying parts of companies. Vancouver. Lithium Americas is based in Vancouver, so it actually trades on the Toronto exchange. I don't know how America can own a Canadian company, but here we are.
LAC, it trades.
It does.
I don't know. It's not an ADR, so I don't know if they have like.
It was a $3 stock 2 weeks ago. It's almost $7 right now, $7.77 on this news, up another $2. So from $3 on the 23rd or so of last month of September.
So if the government's invested, we just get in? It's just going to the moon?
Yeah, we talked about it.
I think that's the next kind of little play is the government portfolio.
Oh, okay.
Like you've had Intel obviously move. You have LAC and you know you've seen some of these stocks like GM and Boeing and GE is in there and Oracle is kind of dancing on that like kind
right
of
on that line, yeah.
Like Nvidia,
Sure.
TSM kind of has been moving in that realm. So it feels like that's kind of a spot where things.
But should the government be investing in public companies?
I don't know. That's a great question.
It is a great question.
I think historically, anything the government touches, they don't usually do very well with.
Sure.
So, I mean, I think this is better than just
horrible. Isn't that a horrible?
Yeah, it's a horrible thing, but it's a fact. I think this is better than just handing them money.
Sure.
I mean, like at least you've got some stake in it, and that's better than just bailing them out because we've.
That's true.
We bailed out everybody else and got nothing for it.
Sure. That is true.
At least we have at stake now.
All right, well, we will see what happens. October is now upon us, and here's what that means for Bitcoin. I didn't know anything about this, but it is Bitcoin week here, and I guess October gains have been historically documented. Bitcoin having a green October for 9 out of the last 10 years. Bitcoin was green in September. The altcoins didn't do as well, but I was not aware because we talked about equity seasonality, in September and October, but I didn't know about October.
Who doesn't know about October?
I didn't know about October.
Well, which group of people enjoy October.
You sell Rosh Hashanah, you buy Yom
No, but I taught you this one.
The hodlers?
We're going to work on that. The hodlers really enjoy October.
Like toddlers, but with an H.
Yeah.
Toddlers.
Hodlers.
Yes.
Hodlers.
Yes. The hodlers do well. You're right. Bitcoin is up for September. I didn't actually realize that.
Yes.
It traded down like 109. It made kind of new lows for the month. And then the last 4 days have gone from around 109 and change to where it is right now.
Right, but
117.6 on the futures.
Yeah, I guess normally Bitcoin doesn't do well in September, but October is strong for it. What are you guys doing in like a Circle or a Coinbase or in a ETHA or IBIT?
Coin's up about $8 or $9 this morning.
Yeah.
October,
baby. Coin's having a big day. I got a little upside butterfly there. I got a zebra and IBIT. That should be a nice one.
Nice.
This morning.
You've got almost like a skip strike butterfly, don't you? Like you're
Yes.
55-60 call spread, and then instead of being short the 60 call again, you're short the 70-75 call spread.
Yeah,
so that is a bullish.
I have this on for like a small debt, like a 21-cent debit. So it's a tiny debit. It started as a broken wing butterfly. I bought in the risk into the downside move, and now I've got this like free shot on the upside. But
You're trying to tell me how brilliant you are? Is that what you're doing right now?
It might open at like maybe $1. I would think. Yeah, it might be worth $1 at the open. We'll see where it's at. I mean, I'm $8 out of money.
Good cheap shot, and you've got that in October with only 2 days to go.
And after that little snark, you don't get any piece of it. Okay. I was going to give you some. Now you get
Thank
none
you.
of it.
Now you
Yeah.
can't have
Might be
it.
something with 2 days to go and still $10 out of the money. Might be something you want to look to do with something.
Yeah.
Yep.
Yeah.
There you go.
Free shot.
Hey, Nike on Tuesday posted quarterly earnings and revenue that beat Wall Street expectations as sales unexpectedly rose from the prior year. But the retailer did warn of a sluggish holiday season and bigger than expected hits to their bottom line due to tariffs. Nike said revenue rose 1%. They are executing a turnaround under CEO Elliott Hill. Revenue came in at $11.72 billion versus 11 expected.
Nike up $3 bucks.
Okay,
$3
Nike.
72 and change inside the expected move.
Yeah.
Nice move for Nike.
Should be good for pretty much anything you did.
Did you trade it for earning, or you had a position in there?
I did. I sold a put. I had the 62.5 put in November. I sold it at $1.46, so that should be pretty decent in the morning. Probably like 40-ish cents maybe come out of it, 50 cents. And then I had call diagonal spread long the 70 in November, short the 75 in the weekly. This
with 2 days to go. Yeah,
2
that
days to
should
go,
work
so
out
that
nice.
should be another $100, $200. So it should be
contract.
good morning for the Nike
Yeah.
bullish
Nice.
trades.
See,
By the way,
very
one
nice.
of the only gym shoes that don't hurt my feet these days.
Really?
Yeah.
Nike?
Yes.
It hurt my
Have you
flat.
tried
Do
Hoka's?
they?
You
What's
ever
that?
tried Hoka's? I love Hoka's.
I'm trying to keep my sty.
Okay. I'm going to keep it moving here.
He just called you not stylish.
No, I didn't do that. I didn't do that.
That was
That's fine.
low blow.
I like Hoka's. JP Morgan, the world's largest bank by market capitalization, is being fundamentally rewired for the AI era. I'm scared. AI was a major topic at a 4-day executive retreat held in July by JP Morgan CEO Jamie Dimon, and they now say they are early in the next phase of their AI blueprint. They are deploying agenetic AI to handle complex multi-step tasks for employees. What do you think of JP Morgan full endorsement of AI? What could go wrong?
I mean, they did this with crypto too, right? JP Morgan.
Well, no, they were
hated-
behind. They hate. Well, yeah, they
Yeah,
hate.
I'm just saying,
Yeah.
they hated when it came out. It
They
should not
love
be
it.
part of your assets, blah, blah, blah. And then they went full tilt. You got to love it. It's got to be in your portfolio. They have to have it because they can now take it in their accounts. It's gonna be
Yeah.
the same thing here with AI.
Yeah, as long as they could get that sweet 25 to 50 basis point yearly fee on whatever the product is, they're
They're going to start taking bets on the Super Bowl soon. You kidding me?
Yeah.
They're going to do everything.
No, they don't want that risk. They just want to gather and take just like
They'll open a portal.
yeah, it's like if we were to find Frankie's stash of gold coins and we just started shaving, like the top round of it a little bit, like that's what JP Morgan does. Just shave a little bit.
I will say this, the banks are going to be the first to report we are on the precipice of a new earnings season almost, because Nike just had earnings. That to me signals the end. So what do you, how are you going to maybe position yourself for this financial sector? Because it's going to be in play in 10 days.
JP Morgan, a $300 stock on its highs with an IB rank of 25. Decent markets. It's going to be interesting. We'll see how the banks do. It should help the Russell. If they do well, it should hurt the Russell if they don't do as well. So you might even be able to do something out of it.
Do you see maybe any sort of effect with data not being able to come out maybe in the 2-week period and then the
you won't
banks
get
having
GDP, I think,
to report and
stuff
so
like
maybe
that.
that affects the bank. I don't know, but banks are going to report in 2 weeks, so
Just show you how irrelevant the numbers are. But yes.
do with that what you will. Hey, speaking of banks, Citigroup is forecasting that AI-related infrastructure spending by tech giants will surpass $2.8 trillion through 2029. That's up from $2.3 trillion an earlier estimate.
Citibank doing just like JP Morgan's off of its highs. It's down actually $1 this morning at just about 100 or so after getting up to 104, which was the high.
Yeah, but what do you think about Google, Meta, Microsoft, NVIDIA spending almost $3 trillion on AI infrastructure?
It's all in the cloud. It's all in the
The
cloud.
cloud really scares you.
Cloud really scares me.
It really does.
Cloud and
I'm
drones.
just like, fix our roads, and like, why are my utility bills so high?
That would be the federal government you were talking about a moment ago.
No, I know, but
City
the
government.
AI boom, though, I think it's raising our energy costs, and that's not cool. Anyway. In other news, CoreWeave stock closed up 12% yesterday after the company announced it had landed a $14 billion deal, speaking of spending, with Meta. The announcement comes days after CoreWeave expanded their agreement with OpenAI by $6.5 billion. How does CoreWeave have all this money?
CoreWeave in the middle of its range.
Or they're getting money, I guess.
Low Ivy rank. Meta's the higher end of its range, but it's had a 2-week slip here from around, I don't know, let's call it $7.95 down to about $7.25, down $9 this morning. So Meta kind of an underperformer relative to some of the other ones.
Yeah.
Okay.
Maybe something to
I
do
saw
there.
the put spread in Meta yesterday, so
Do you
I don't
trade
wanna hear that.
CoreWeave?
a little
Ooh,
paper
a little
cut.
pain, a little pain.
Little paper cut. What's
Yeah.
that?
Do you trade CoreWeave?
I do. I have a put broken wing butterfly in there that I did.
Okay.
I think I bought in the risk on that, but it's 70-80 handle on it.
Gotcha.
So it's way out of the money. So it's like a nothing position now, but
It was a bullish position.
It was a
You took
bullish
off- took
position.
Off the risk, and you got the free shot, kind of like what you're trying to do.
Yes.
In the other stock.
in Coinbase.
Yes.
Yes.
Nice.
It's just a downside shot. It's marked at a nickel. And it's, you just, nothing. It's dead.
The government is shut down, but I guess ADP private payrolls did come out this morning, and I think that did send bonds a little bit higher, maybe.
117 even. They did go up to 07. They did get down to 116.07. So you're right, up 12-ish ticks.
Yes. So
bonds.
there you go. Just
Yep. So there
mentioning
you go. The worry about why bonds didn't rally was taken back in the last 3 days. So
Meta announced they have plans to buy a chip startup, an AI chip startup called Rivos, to boost their semiconductor efforts. The Santa Clara, California-based startup is also backed by Intel CEO Lip Bhutan, and they're focused on designing chips based on the RISC-V architecture. That means something to you. Great. Meta intends to acquire the chip startup to bolster their in-house semiconductor efforts. Congratulations.
Intel unchanged, maybe down a dime or something like that.
It was a little weak yesterday. Down
Yeah, if 2 weeks ago it was a $25 stock and it went up to $35. I mean, it went up 30 some odd percent, and now it's sold off by $3. Yeah,
Yes.
weak relative if you're looking at it for the last 2 days.
Yes.
This is bonkers. NVIDIA's market cap now tops $4.5 trillion
Didn't think I'd see the day in my life.
after a string of AI infrastructure deals. NVIDIA shares were up almost 3% to a record yesterday, making the chip maker the first company ever to hit 4.5 trillion. What?
It's got all the rock. Wasn't it 3.5 the first one? Because Apple got to 3.
Right, like Microsoft and Apple, I think, got to 3.
Yeah, I think Nvidia has been 3.5, 4, and 4.5.
Right, yeah, you're right.
And it's been all in the last year. So it's like,
Since April.
yeah.
Yeah. So,
I just...
you're right. Made a new high. It's just off of that by about a buck and a half this morning. I mean, the S&P's down almost 30.
Government portfolio.
But what would you say to like a young bat on the floor that one day that there would maybe be a $5 trillion company? Like,
Oh my God, we keep this up. This young bat or the other young bat?
You young bat.
Me young bat? Oh, I didn't think I would see the day. I said that.
right, like the whole market wasn't even worth that much.
No,
Like,
well, they weren't half that much. I mean, no, yeah, unbelievable.
I can't wrap my mind around, and that there could, in the future, there actually will be, there could be a single person that's a trillionaire. Like, that's
Yeah,
like wild.
yeah,
Could
yeah,
be
yeah.
even, I don't know.
Right.
That-
Tom
that's-
listens to me. It could be him, but no, we'll see.
Hey, happy birthday or happy anniversary is in order. Palantir stock IPO was 5 years ago this week. It's up 1,700% since its NYSE debut 5 years ago. I don't know how it got there, but congratulations.
Yeah, this was the bat pick when we did it in the beginning of the year. Which stocks do we would pick? It was Palantir was mine. Nobody ever says anything. Palantir, 180.
Congratulations,
Yes.
Lord.
I didn't know we did pats on the back and high fives.
Yes.
No.
No high fives.
Palantir, 182 is where it closed, just under 181. NASDAQ down 120.
Do you guys want to guess what its opening price was?
Oh, it had to be was it in the 20s?
What do you say?
So
No,
I'll say 31, but I think
thought
it was
like around 10.
It was $10.
Oh, good job out of you.
$10, and it was Palantir was valued at $16.5 billion, and that was actually down from
It got
its
down to like
private
$3
market.
or $4.
Did it? I don't remember that.
Wild.
Yeah.
Well, that's a fun reminisce.
You know what? I do remember that. We had a viewer who would write me in for like a year about how he was holding on to his Palantir position. He thought the stock was going to, whatever.
Good for him.
Yeah. Well, he had some. I had to show him how to do a little bit of synthetic stock, just because he really wanted to keep his leverage that he had in it, and I hope he held on. I haven't heard from him. He's probably owns a private island now.
Yeah, I was gonna say he's
We're not
done emailing
talking-
you. He's like,
Yeah,
I don't need these.
Hey, Pat, I don't need that load anymore.
Yeah.
Yeah.
Yeah. So I hope he did great.
Yeah.
That's a good job out of that guy. Firefly Aerospace stock tanked 20% yesterday because a rocket exploded. See, that's the sort of binary risk with these space and aerospace tech companies. It's like you have one little explosion and your
And
stock
then
tanks.
poof.
The ticker is FLY, F-L-Y. It is one of the newer IPOs that has come out, but their Alpha Flight 7 rocket exploded during a test flight at their Texas facility on Monday. So they debuted on the NASDAQ last month. It's a strong demand, but shares have pulled back more than 50%.
Yeah, I mean, the most interesting thing on this stock is not just the price of it. It's a hard-to-borrow stock, which is going to make the in-the-money calls and puts not have the put-call parity that you would normally see. Now, it isn't a large carry cost, but remember, the calls and the puts will not have that put-call parity that you would think. Call spreads could trade at a different price versus the put spread. So be careful in there about that. Hard to borrow stock means you can't really short it unless we can locate it. So be careful there too.
That
The
is
stock's on its butt.
That is good information. There you go. Be careful. President Trump and Pfizer have agreed to lower U.S. drug prices while also exempting the company from pharma tariffs. Yesterday, the president announced the agreement with Pfizer to voluntarily sell their medications in a direct-to-consumer fashion at lower prices in the U.S. Pfizer has agreed to take measures to lower drug prices. I think Trump is also launching a new site called Trump RX. Okay.
I didn't know.
Government portfolio.
Yeah.
Yeah. Well, there you go. Because I didn't know Pfizer lowering prices could make the stock go higher.
It's the government portfolio.
It's the government.
If you're in bed with the government, it's going up.
It's like 23.5 to 25.5. It's
Yeah.
actually up 30 cents this morning.
And you saw a bid in like Eli Lilly too.
Yeah, other pharmaceutical companies are also expected to announce their deals in coming days.
Yes.
Yeah, Lilly went from 7.25 to 7.60, but it too is at the low end of its range.
Yeah.
All of these.
It's going to be a fun trade when you see these headlines like Pfizer.
Hey, yeah.
You go to the next 2 or 3 or 4 in line, and
Yeah.
at least in the short term.
But we pay the most for drugs in America.
Pay the most for
Subsidizing-
everything.
I know
You pay
we're
for everything.
subsidizing
The whole
all the other
thing,
countries.
the whole world.
Hey, I'm a supporter of anything that results in lower drug prices. So good job. Pfizer. Hey, Amazon had sort of their big event yesterday. No one really cared, but they announced a line of new hardware and technology. They have new Echo devices designed for their Alexa Plus system. The new Echo Dot Max will cost $99, and the Echo Studio will be $219. They also released new versions of the Echo Show, as well as some new Kindles. What are you doing in Amazon? Amazon Prime Day, another set of Prime Days coming October 7th and 8th. Sometimes a little mini binary event for Amazon.
Nice. I never really got into these.
The Echoes?
Yeah.
I have one. It's
do you?
kind of cool.
Do you use it?
I do. So
You
a little bit of
like
an
you use it.
overshare. So you can hook it up to different things and different plugs. And so in the morning when I get out of the shower, I say, Alexa, start my day, and it starts to play NPR.
Is it a male British accent?
No, it's a lady accent,
Oh,
and
I
it
would
starts
see
to
you as a
play. It
male
starts to play
British
NPR for me, which is WBEZ here in Chicago. And so, but you can also have it do like other things. Like I'll have it set timers for me. Like if I'm doing a face mask and I don't want to get my phone all sloopy with the face mask, and I'm like, Alexa, set a timer for 20 minutes, and then it'll set a time. Then I know it's time to wash my face mask off. No,
Okay.
I set my alarm. every morning with it. Or actually,
Really?
Oh, with Alexa, you do?
Yeah,
Oh,
Alexa,
okay.
set alarm for,
We're
5 o'clock
literally
in the
setting off people's devices right now.
Yeah, Alexa, set alarm for 5 a.m.
Alexa, play Taylor Swift. so sorry.
Alexa, now play John Mayer.
But I have a Kindle and I subscribe to Kindle Unlimited. I love my Kindle. I read.
Oh, so you do audiobooks through it?
I do. I have an Audible account, but I have a physical Kindle, so
Yeah.
it just allows me to get free like Kindles every month. So I read, but I listen to audiobooks and I also read books. So when are Amazon's earnings?
Amazon has earnings October 30th, so
Not yet official, but
not yet
projected.
official. October 30th
Tentatively.
area. Right.
Tentatively. But it does look like it's in that. If you look at the October 31st weekly, you have a 39% implied volatility versus like 32% before that, and then like 28 or 38, 37-ish past that. So probably there.
I've never used it, but I also have a feature that is Alexa sexy time, and it like lowers the lights and it plays like,
TMI,
sexy music.
TMI.
Wow.
Think about you like that.
Never used
TMI.
it. I've never used it.
Oh
used it.
man!
But I
you're
did
prepared.
enable it.
You're
Yeah, I did
prepared
enable
for
it,
the
yes.
when the time comes.
When the time
That's good.
comes.
Preparation is
Yeah.
how you get better.
it's-
99% of the
Yeah,
game right
yeah.
there.
You never
everybody.
know. You never know.
That's right. That's
Yeah.
right.
Never know.
That's
Never
right.
say never.
Do you have like the clapper too, so that the other lights go off?
What's
No,
or
it
so-
does. It does everything. It,
What song comes on?
It's like a playlist that I have.
Okay.
Oh, so it's like a.
Yeah.
Yeah.
You
Yeah.
really are nasty, nasty young man. Nasty young man.
Yeah. Anyway, this is a wild case. Zillow allegedly paid competitor real estate website Redfin $100 million to stop competing against them in online apartment rental listings, of course, to the detriment of the U.S. consumer. The Federal Trade Commission is now enacting a lawsuit saying that the online real estate platforms colluded to reduce competition in an already concentrated market, driving up the cost of advertising and rents and all sorts of things. So this is real bad, okay? I know you probably don't trade Zillow a ton, Z, but
Zillow, what do you think, son? Ever traded? Zillow's trading at $77. Looks kind of unchanged. Earnings are not until November. Had a nice little rally up into the 90s. It sold back off. Ivy rank of 45. Really actually expanding. November options
Pretty good.
are, yeah, not bad. 15 cents wide. You might have did something.
I done did something
I
for
usually
tomorrow.
look at
There
Zillow,
you
but that's
go.
good. Yeah.
All the stuff on Zillow, I feel like, is fake.
Fake.
Yeah, half of it. Or it's old. Like they just like leave old stuff on there. Like when I was looking for my
the
comment.
algorithm's nothing like TikTok, is what you're saying. Like, like their information and stuff.
Well, they keep people on the site. Both.
I mean, I just like to look at real estate listed. Like, it's just fun to
know.
like see and like dream
yeah.
about like.
But when I was looking, I was like, I would find something, and I'd be like, oh, this is sick, and it like didn't exist.
Oh no.
Oh.
Or
That's
it
how
was bought like a year ago.
Yeah, that's how I feel about men on dating apps. I was like, this isn't real.
Yeah.
Fubo shareholders have approved a Hulu live TV deal. Fubo, the popular live sports TV streaming service, announced that its shareholders have approved its transaction with Disney, combining Fubo with Hulu. I can't talk this morning. It's just all these nonsensical.
We should call it Fulu.
Yeah, there you
combined.
go.
$4 stock.
Or
This is,
hobo.
you really-
Or hobo.
Yeah, Fubo.
Hubo. I'm sorry, what is Fubo?
$4 stock.
Okay.
I mean, yeah.
Yeah,
nothing
I know
to
it's not
look
great.
at. I mean, unless you just
That
want.
was one of the darlings.
I used to
in
trade
the-
it back in the day. Yeah, I traded it was like $30.
Yeah, the
I
SPAC
had
craze.
Yeah, I
that
had a
was one of
Fubo
them.
trade.
Yeah.
I made money on it. It was pretty good.
Yeah.
I'm mad at it.
Yeah.
Hey, Amazon Prime Video, Nikki, is teaming up with FanDuel for real-time betting updates during NBA games. They are bettors will be able to link their FanDuel accounts to their Prime Video profiles to see how their wagers are playing out in real time. Who asked for this?
Why wouldn't you want this?
It just
They do this like DraftKings does this too. I mean, like they
connected to your TV
they haven't
account?
been connected, but they'll have like live odds on.
Sure.
So this is actually pretty cool. The only problem for the people that like to bet is that now all the people you're with are going to see your degenerate
Right,
bets and
right.
stuff. Wife, friends.
Sure.
I think in theory this is good if you could if you have your own little like man cave,
Like to silo, yeah.
to silo in,
Right.
This is nirvana. I would suggest if you're using a TV in the family room,
Sure.
you might not want to hook this one up.
Daddy, you lost by the hook.
Yeah.
Daddy, you stink. Of course.
I mean, my kids used to be
the
able to
3.5 was never gonna cover.
Daddy, is that my college fund? No. Hey, Bat, you are playing hurt, but you get the job done. You show up to work every day.
Yeah.
Much like this lady who's gone instantly viral, showing up to work even though she is injured. Watch this. It's just a funny video. I don't know.
Hey.
When you're injured, but you still gotta work the pole.
Oh my God. Oh my God. I didn't know she was
come on.
Forever.
The comments are wild. They're like, hey, props to
Is
the
that where
stage.
Josh is? I've been wondering where he's
Props to the stage for being accessible. And then two, someone else wrote, ladies and gentlemen, please welcome to the stage, Hot Wheels.
I'm a little sad there's nobody there. I mean, this must be like middle of the day on a Wednesday. She certainly got demoted. This is not a Saturday night.
She gets a 20 from me.
Yeah,
Yeah,
no
dude.
doubt.
Like that.
No doubt.
Showing up. She's got the heels on still.
Yeah.
It's good.
Yeah.
That's pretty good, though.
I thought I was going to hell. I'm going to see you. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with Confirm and Send. We'll
You're all discombobulated.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Nikki, we are back, son, and that means it's time for Confirm and Send. But before we get to that, I have to do a public service announcement. Really, this one is for you. Netflix, which is down $20, by the way.
Ooh.
Black Rabbit. Great
Is that the new show with
Jude Law's in it.
Oh, that wasn't one.
Oh, it's a good one. It's a good one. Black Rabbit. It's Rabbit today. I meant to mention with Vanetta, but I don't want to get him mad.
Oh yeah, Jason Bateman. Yeah.
Jason
I've
Bateman's
seen-
in
yeah.
it. It's very Ozark. Did you like Ozark?
Yeah.
It's very Ozark dark. like that.
Okay,
You'll like it.
I like that.
Like Breaking Bad and that kind of thing. It's like that. You're gonna love this.
Rotten Tomatoes gives it a 67. Audience score 85. You know it's a keeper.
Good. You don't like it?
Okay.
I'll give you back your time.
right.
Let's go to.
You never get that back. I mean,
You don't get that
But
back.
I appreciate
This will not be a time. It'll be a time suck, but not a waste.
you have to enjoy every moment, like this moment right here.
Absolutely, I am enjoying this moment. No, really, work with you has been amazing. So thank you for the last 10 years, right?
Yeah.
Yeah.
Kind of crazy.
Thank you,
Thanks,
guys.
guys.
Wednesday, October 1st, confirm and send. Let's do it, please. I'll go first since I'm up already. How do you account for tail risk when placing a naked trade? Aren't you worried about that? Aren't you worried about the tail risk?
I mean, yeah.
Brokerage firm certainly is.
Yes, so it's accounted for. And I mean, in some regards, it's accounted for. Your buying power is a reflection of kind of a realistic pain.
98% of it
yes.
is accounted for.
Yes,
Right.
it can get buying power will expand, of course. So if something does happen, that buying power will expand and be bigger. But generally speaking, like tails, if you could really account for tails, trading would be really easy, right? You just trade when they're about to happen.
Well,
And-
somebody
and-
would give you your tail risk at a reasonable price. That's why there's so much volatility in these out-of-the-money options. They may trade for pennies or dimes, but they're overvalued by 3-4 times as much as a near-the-money option.
It always comes down to size. So you mitigate tail risk by sizing appropriately, strategy diversification. So, some positions you have some short delta in, some positions you have some long, some you're neutral. You can get short at higher prices, long at lower prices.
Yep.
That's how you mitigate tail risk. Like you can't avoid a tariff tantrum down move or a COVID. Like those are going to happen, and you can.
And hopefully your sizing was correct enough where you have some money on the sidelines where you can benefit from that with new positions or just the one jab.
Yeah.
1 to 5% in a larger account, 3% probably if you're going to stick me down to a number, and then 3 to 10%, maybe 8% in a smaller account. Smaller account, you're going to use more buying power as a relative.
Always sizing.
Yep.
That's it.
Yep. Next question, please.
All right, so what is the minimum amount I should expect to collect on a strangle, assuming I placed it at a 16 delta on each side? If I sell a 32 delta, should I be able to collect double that?
I mean, the pricing basically works like that. I mean, it's not an exact, science. It's closer to maybe 1.5 times, 1 3/4 times, not quite 2.
It's not linear.
It's not linear like that. Unfortunately, it's not linear like that.
If it was linear, then you'd be able to sell juicy tails.
Juicy tails.
Yes.
And then it'd be egregious, for sure. I mean, if you go to Delta, you're going to get around the same amount price.
Yeah,
If
they
the
might
put
be-
is $3, the call will be $2.80 kind of thing. If you're in like SPY, if you're in a stock, the call will be like $3.50 and the put will be like $2.80.
There'll be different distances.
There'll be different distances. But if you go
Delta.
Delta, you're about the same within 20-30 cents of it. I mean, how much should you get? It all depends on where volatility is. Volatility is at its lows, but that's all
price.
all priced into the market.
Yeah, the stock price too, like
stock
$40
price.
stock versus a
$600 stock
Yeah.
like SPY or an ETF like SPY versus gold GDX is going to be completely different.
I
So
usually say like 10 to 20% of the buying power
good
being
rule.
used.
And it's a wide rule. I mean, 10 to 20% is wide.
Yeah. And in some stocks, like if you have, like I've been trading a lot of HIMs, selling strangles and ratios and whatnot, and it uses $500 or $600 in buying power, and you'll collect, $1.50, $2, $3 on some of these strangles. So it's way outside that parameter. But if you look at like SPY, you'll collect, $3 or $4 on that strangle 45 days out, and you'll use about,
How much do you collect in HIMs approximately, did you say?
It depends, but
I know.
dollars, $3, $4.
Okay, so
Like,
HIMS is approximately a $60 stock. I think it's under like 50 something. General Motors is.
but that's super high implied volatility.
Yes, and General Motors has a lower monthly implied volatility, which is a $60 stock, and you collect like $1.37, $1.40. So There's your difference. Depends
Yes.
on the volatility of the stock. It depends on the price of the stock.
Yes.
So what should you get? Whatever's there. I don't know if $1.30, 40 over 40 some odd days is enough for me. It might be enough for you to collect. I would probably prefer to go into a HIMS where I can collect $3 and try to take a buck out of the overall trade, as opposed to collecting $1.40 and sitting to try to make.
Just think about, make sure it's worth the time and the risk. I mean,
Your 10 to 20%
and that's
rule is
different
pretty
between
good.
people.
Yep.
Like if you have a larger size account and you can sell those snap 30-cent puts like I did yesterday.
Sure.
You know, then it's a different story. But yeah.
Yep. Good job. Good job. I know you emphasize opening trades at 45 days. We just went over that. Sure. Does that mean you will use the weekly expiration series in order to get closer to 45 days? How about you, son?
In something like a SPY or Qs, you could, because liquidity isn't really an issue. But generally speaking, we stick to the monthlies just because that's where all the liquidity is, or most of the liquidity is, especially in the, further down the line stocks, the stuff that you don't trade every single day, like an Apple and Amazon and Tesla. Those, you could probably get away with the weeklies. When you're talking about a HIMS, for example, you probably want to just go to the monthlies. But yeah, I mean, in something like a SPY or Qs, you certainly could use the weeklies, but generally speaking, it's the front 2 monthly expirations. That's where we're trading.
Okay, perfect. Sounds good. Sounds good to me. I don't really have too much more to add there. I mean, if it's an ETF, like you said, an SPY, you could. I certainly do that.
It gets a little goofy. Like I like to know, October 17th, I know that basically 95% of my positions are either there or in November. Like I'm not, I don't like to get caught off guard with it's October 3rd weekly expiration and I have randomly some positions there. Mm-hmm. It's kind of easy to keep track of everything.
Yep.
That's another part. Is there a way to trade a government shutdown? Got a research piece.
We do have a research piece, so we'll look at that. I'm curious to see what the team found. From my own experiences, at least the way I remember them, I know the last 2 that we had, I talked about a little bit earlier.
Yeah, it was Trump and then Obama.
Trump won.
Was the other one.
Oh, did Obama have one?
2013.
Oh, I don't remember that because I thought Clinton was the
16 days
was the other one. So I missed
34 days, the longest.
Okay, so I missed the Obama one. I knew there was a Clinton one, but I forgot there was an Obama.
Clinton, that was in 95 to 96.
Okay.
21 days.
Okay. Usually the market has a little bit of a movement lower. You're seeing it right now. I mean, this is really kind of a muted move. 25 handles. We rallied 25 handles on the close yesterday before we sold off by about 10-ish, 12-ish.
They were basically flat by the 3:30 Central.
Yeah,
close.
Yeah, but they had a huge spike up by about 30 handles.
Shout out to Michael who won the. I think it was Michael.
Was it
SPX guessed the market. I will check that and I will email you today if you're watching.
Awesome.
Yes.
Good job out of you, Michael.
66.88 was his guess. SPX closed 66.88.44.
That's awesome. It really is awesome.
Miss it by.
If you could give me a bucket full of tries like that, I would
miss it by 50 cents. Pretty incredible.
Pretty incredible. Should have got paid double. I'll talk to the powers that be, but it ain't gonna work.
Yeah. So he's still got those hands.
He's still got those hands. So usually we have a blip lower, and by the end of it, which I think the average shutdown is under 2 weeks. Don't quote me on that either. Markets usually same prior to the shutdown or a little bit higher. It's usually how it works. I don't know how it's going to work this time. Obviously, it's completely random.
Stuff.
Next one, please. Why don't you sell more straddles? The risk is no different than that of any naked strategy, but you collect more. I just don't see you do many and am wondering why.
I would say I do them occasionally. I just prefer to be out of the money. I just think it's a cleaner position. Yes, you can collect more premium at the money. And I would say from a risk perspective, your tail risk is the same because you have essentially unlimited risk on either side. But from a risk perspective, those straddles, they don't move as fast. But if you get those big moves, it's, I just prefer being on the further out on the distribution.
Very good. I agree with you. I mean, straddles work. We've actually done research that straddles are better than strangles. I just like the higher probability of success. I just like being able to look at my own portfolio I know I concentrate on being out of the money with all of my trades. I like to see that. You're always going to have an option that's in the money on a straddle.
Yeah.
It's just
and then personal
preference.
When you roll, when you're rolling a position, when you look at a position and it's a straddle or it's inverted, you know that position you've been battling.
Yeah,
that's another kind of.
But you have the chains feature that could show you that too. There's many things that can find out.
At a quick glance, when you have 2 pages worth of positions, it's
big dog.
Yeah.
Sure. Next question, please. Last one.
I saw that the SEC is pushing to fast track an end to quarterly earnings. Do you think this will do anything to market volatility if there are less reporting cycles?
Good question. Certainly going to be a guess if they even do this. I mean, right? Go twice a year instead of 4 times a year, which they do in Europe. They do it twice a year. Anything market volatility. If anything, I think it would kind of, curtail that volatility. Obviously, going to curtail that volatility spike in the quarterly time frame that you get when earnings are coming out now. So that's going to flatten maybe you chartists and you people who like to really look deep into volatility. Probably give you cleaner information because you won't have that spike for earnings. I don't think it's going to do anything about the overall market volatility. Myself, it might make the twice a year earnings announcements more volatile because there'll be more time.
Yeah,
I think in the short term, and then in the longer term, it'll probably come back in to where it was prior to the 2-time announcement and the old 4-time announcement.
Yeah,
makes sense.
My initial thought would be that it would dull volatility because you don't have these random binary events. And by random, I mean Nike's today, Apple's this day, JP Morgan's this day. You don't have these kind of scattered binary events. But I actually think it would be, I think you're right, it would dull volatility outside of the quarterly expirations would become, that month would be the trade. Every other month would be kind of stagnant. You'd have big spikes in vol at those points in time, I believe. That's kind of
Very good, very good. Let's take a quick 90-second break and come back. We got more Tasty Live after this. What do we got coming up next?
Got the government's shutdown stuff.
That's right. You're going to want to know about this before the market opens. It's an option jive on the shutdown. So stay tuned. We'll be back in 90 seconds. Tasty Live.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
What does it mean when you hear can't buy an uptick?
When a stock can't buy an uptick, it means that the stock just continues to go down every single day, every single minute, every single hour. It's a phrase to use when a stock just continues to go lower. What's it mean when you eat like a bird and shit like an elephant?
Eating like a bird, like an elephant, that means you're probably picking up a couple pennies here and there on a trade. And then you might have one trade where you get a little too big for your britches. You have that big loss and it kind of wipes it all away. So you're pecking at profits and then you piss it all away.
What does it mean when you get whipsawed?
Ooh, when you get whipsawed, you are basically selling into the hole or buying into a big rally and then the opposite happens. So let's say you have a strangle on and the stock rallies towards your short call. If you roll up the short put to add more premium to the position and then the stock drops, you have effectively been whipsawed.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
It's option jive. Nikki, we are back and we got time for an option jive. I want to get straight to this so we have enough time before the market opens here with even the S&P's down 28, NASDAQ down 115, Russell down 12, and the Dow down 125. They've all been sitting right there. The big movers really on a percentage basis are Bitcoin up $2,200, Ethereum, which is almost a 4% move, up 150-ish bucks, and then you've got gold up $26, almost $26.
Silver up 2%.
Silver up 2%, even more than gold on a percentage basis. But gold was up 20 some odd dollars more than that just a moment ago. But let's get to this option jive, and then we'll get to the opening bell. I really want to get through this government shutdown impacts past sessions.
Yes. So the team dug into some of the data around past government shutdowns to give us context into what's happening, into the size of the moves and what to expect, or at least based on past performance. Can't really expect future performance to be the same.
That's correct.
Here's some data on past government shutdowns. So let's go to the first slide here. So in the past 50 years, the U.S. has experienced 21 federal government shutdowns. Most were short-lived, but several caused significant economic disruptions. The most severe shutdown occurred during major political standoffs, so often slowing the economy, pausing government services, and delaying key data. So these are the last ones that we've had. So we have 2025, which is right now, happening now. A whole bunch of stuff. You know, you probably can't even fit all the reasons in this little, this one little column. But here's kind of the bigger newsworthy headline reasons. So we had one during Trump's term. First term, you had Obama and you had Clinton and Carter in there too. And this is the number of days that we've been in those shutdowns. So 34 being the longest, which was Trump's last term here. Of course, this
Trump's first presidency, yeah.
Yes. So of course, this one is to be determined.
Day one.
Yes, day one.
Day one.
Finally got a day one. So the next slide here, workforce impact. So we've focused on the two most recent government shutdowns, 2013 and then the 2018, 2019 to draw insights for 2025. Shutdowns quickly lead to furloughs and delayed paychecks, as Vanetta was talking about. Longer shutdowns can also affect workforce planning and slowing down rehiring. So here's a number of days. You see all the employees that are affected. Obviously, you know, not a great situation for all parties involved.
No, never fun. Never a good conversation. This is almost like having a conversation with your wife or even say, Got to stop with the Amazon.
Yeah, the Amazon.
I can't have another package.
Is that how you're going to do it? You're going to say, in support of the government workers, we're doing no more Amazon shipments until the government shutdown is ended?
In solidarity with the government shutdown. We'll see if
Can't,
that goes over.
Vinny, sorry, you can't order Uber Eats until the government comes back online.
Everybody got to feel the bite.
I know. No more Chipotle.
No more Chipotle.
So getting to the next slide here. So data policy and effects. So shutdowns delay the release of important economic reports. Some of the employment reports on Friday will not be released unless the government opens back up here. And so you can see some of the past reportings. Yeah, we had some delays on some of those and the effect that it had on GDP and whatnot. So just stuff to be aware of. This isn't like things that I'm trading on right now, but
yeah, I don't think you really
It's
can.
just kind of like an FYI of what happens during a government shutdown.
Yeah, a lot of times people would think that, bonds would go lower because the government doesn't have money to pay, and it's the full faith and obligation of the government to pay the bonds not backed by gold or crypto or anything else right now. And that's a good story, but it never comes to fruition. You got
bonds at 117.
Yeah. If bonds were to go down, a couple points, then you might have then I would say, oh, this shutdown is big news.
This is a bad
thing. Right. And if you saw volatility upticking, even the S&P is down 28, volatility up 5 or 6 cents.
Not moving. Tells you they're going to buy this dip on the open.
You know what? It's probably the prudent thing to do, but it's a tough pull.
It is a tough pull.
Those are always the best one.
I get it.
We'll see what we do with the 0 days too. So we'll go from there.
So the next slide here. So getting on to just more like stuff about, the shutdown here, the business impact. Government closures can delay contracts, permitting, and regulatory approval. Hopefully not the PDT rule. They better get that rubber stamp out and just get that thing moving. These disruptions can often affect small businesses, contractors, all that sort of stuff. So these are just some things that are going to be affected in the short term.
Yeah, you got quarterly payments due for IRS in September. It's done already. Never mind.
Yeah, September.
Yeah, I was thinking of September. Never mind.
Why you're not Social Security yet, are you?
No. Oh. Well, I think I could be. What's Social Security? I'm 63. What's Social Security?
I don't know. Man, you're old.
I know I'm ARP.
Oof. 63.
Next question.
Next slide, please. Next slide here. So travel and tourism is also affected.
As early as age 62.
Yeah, so travel, I know Vinata talked about TSA. That's something that can be affected. So maybe you see some movement in some of the airlines in the short term here.
Yeah, those are the essential workers.
These slides are a good indication of where you might see a little bit of short-term volatility. I mean, that's kind of what, these slides are meant to do is, point you in direction of things that might be affected in the short term. If you see big moves, I mean, like I can pull up UAL right now just to see where we're at. It's basically unchanged. Delta is up, UAL is down. I mean, so nothing is really affecting these.
So far, it's only day one, too.
Yes.
So it could be, but that's what I was talking about, like your essential workers who are going to get back pay. And I know that I was saying, they live paycheck to paycheck. I don't know if that's true or how many are or how many aren't or anything else like that. But if you're going to get back pay, and it sucks that you're not getting paid now, your essential worker, I think your obligation is to stay working. If you're a forest ranger and you're part of the government shutdown too, and they shut down the parks and they send you home, you stay home. You're not an essential worker. I don't understand. I know the essential workers want to speed it up by making it a little bit harder, and I get the logic behind that. But I think you open yourself up to, if they're cutting back, you open yourself up to issues. I would go to work. I mean, that's what I would do. Everybody has to do their own thing.
So here we're looking at market performance. So this is the slide everybody wants. So we analyze how the S&P 500 performed during each shutdown and how it behaved after the government reopened. So shutdowns typically trigger early declines and an increase in volatility. I guess you're getting a one-day decline today. With the E-minis down 26. But it remains mixed for the first 2 weeks. Markets usually begin to stabilize and recover after 3 to 4 weeks. So ending in periods with strong gains. So you can see here, this is pretty mixed in terms of the overall picture. It's kind of bullish on the longer end, bearish on the shorter end. You have a little bit of chop in the middle. It's kind of telling you it's a buy the dip.
It's the way I remembered it. I mean, it really is, here's the first day you had a, 1.5% move, almost a 3% move in 2018. You only had 1 day higher. That's 2013. That would be under Trump again, right? I think so.
Yeah.
Right?
No, that
would be
2018 was
that would be Clinton. Right.
Yeah.
That was the only time you had it higher pretty much throughout the whole cycle. And the third week there had a little bit of a dip, but eventually 4 weeks later, big moves higher.
Yeah.
On top, but now listen, we're at all-time highs now. So I would expect that this will be the lowest 4-day return. This is my own opinion after the shutdown is over. I mean, again, I don't know, but that would be my guess. Volatility is telling you that it's going to be the biggest upturn.
Yeah, it's going to be nothing.
And then you can go to the Rosh Hashanah Yom Kippur whole thing. You're supposed to buy
Yom Kippur
Thursday.
It's
today.
Fasting today.
Yeah, right.
Yeah. You say yeah, right. Like you.
I mean, I know.
Yeah.
Been involved.
So there's your moves. We
Yom
got
Kippur by osmosis.
By osmosis. There you go.
All right, well, there's what do you do with this info?
I got one more.
I know, but what do you do with that slide's info before we get to this?
Well, I think it tells the story that short term, it's a bearish situation. I mean, from the past 4, it's not like a huge data set, so you can't take, this isn't like a back test here, but you'd say if it's anything like the past couple that we've had, right, in the 2000s and in my lifetime, I should say.
Yeah, sure, your lifetime.
They've been relatively bearish. I mean, it's been a short-term bearish positioning, and over a couple weeks, it's usually resolved and the market's higher. And
very
that's
good.
what I would say. So, I said it. I think it's a dip opportunity. So the next slide here. So market has historically shown resilience after government shutdowns end. So while short-term moves can be mixed, markets have tended to rebound over time. And so you can see, these after the shutdown ends, like once you get the announcement that government's coming back online, which I'm sure it'll happen at some point, you see some pretty good returns there, especially over the longer duration, which is inherently skewed to the upside because over time things usually go up.
That is correct. That is correct.
Last slide here, a couple takeaways, and then we'll get to.
So this might be your only time to buy the dip from that last slide or slides or so.
I mean, vol is up 6 ticks.
6 cents, yeah, tiny.
It's not telling you that nobody's freaking out here on a 28 down move. Not yet.
Then you can get a tweet or something like that gets real angry by Trump or anybody else, and then all of a sudden you get volatility.
Markets discounted Trump. Trump's like
the tweets aren't as
it's like the Pfizer thing, Pfizer selling it at cost to the government sounds like it's super bearish, but it's not happening for 4 years.
Right.
It can kick it.
It can. All right.
So takeaways: shutdowns affect federal workers, economic data, and business quickly. Markets often fall and volatility rises in the early days of the government shutdown, but they usually start to recover after 3 to 4 weeks, especially after it reopens. So once the government reopens, stocks tend to rebound and go further in the following weeks and months. So
very nice. Good study by the team. Nothing.
It's the flop and pop, as you would say.
Flop and pop.
Not the pop and flop.
No, flop.
It's the flop, then pop.
Then pop.
Yeah.
Don't get it reversed. It's very dangerous.
Yes.
Even the S&Ps haven't moved. They're down 28. We'll take a quick 90-second break and come back. We got more Tasty Live immediately following these messages. The expected move for today is 25 handles, about what it was yesterday. We'll be back in 90 seconds. I'm talking about for the 1-day options, the 0-day options in SPS.
Yes.
We'll be back in 90 seconds. We got more Tasty Live after this with the opening bell next.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
So I've been trading for about 5 years, maybe 8 to 5 years, and I got in the options world because I wasn't making enough just holding long equity. You know, there's not a lot of strategy. It's just sort of like buy it and then pray it goes up. I found Tasty Live from my friend, and I started looking at the YouTube videos. My favorite part about it was just that there was math, there was probability, it was something you could consistently rely on. Once someone gets the right information, which they provide on Tasty Live, they can really change their financial situation for the better. Consistently, not, oh, I bought a stock and it went way up one time, but how can you do it consistently, over and over? And with Tasty Live, I was able to do that.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Nicky, we are back, son, with about less than 2 minutes before the opening bell. Let's take a quick look at the market. What do you guys doing? Let me see that.
They got the little bat on there.
The only difference is my hair was a lot darker back then, at least in this thing. Yeah.
Kind of looks more like me.
Everybody's a comedian.
Yeah.
Everybody's a comedian.
They're funny.
It looks more like Beth's uncle, Scott, than it does me.
It does. It looks like Sony.
Yeah.
True.
True, right?
So true.
Yeah.
Even the S&P is down 32. NASDAQ down 134. You can see the NASDAQ was down around 130 handles lower than this. Even the S&Ps were down about 25 handles lower than this. Russell down 14, and the Dow down 140. Volatility up by 6 cents. It too was about 30-ish cents higher, maybe a little bit more. Bonds up 18 ticks, trading near their highs, 117.05. Bitcoin up $2,200. I'm quoting the futures here at 117.5, trading near their recent highs that they had back in September. Not all-time highs, just their recent highs. Oil down 76 cents. That might be in play here. IV rank expanding to 27. You've had a little bit of a 4-day slide, taken back the 4-day rally the previous week in oil. Gold up $23 off its highs by about $25. But as you mentioned, silver's really the big mover. It was up about 20 cents higher than this, maybe almost 30 cents higher than this, but a 2% move in silver nonetheless, trading at new highs for the year for sure. Net gas up 5 cents or so. We'll wait for the opening bell here in just seconds, son. What do you think here about the market itself? Even the S&P's expected move is around $25 to $26. On the 0-day, I would expect a little bit of volatility expansion short term here. So if I was looking to put on a trade there, I might wait a little bit to see what's going on. I know you put it on early yesterday, and it worked out really nice, but I think today...
Yeah, we can wait a little. I'd like to see vol bid a little bit, maybe a little bit of a downside move. Let's get like below 6,700-ish and get like down like 40.
Here we are wrapped. You said on Sunday, you said we're going to be wrapped around $6,700, and we have really been. We've had a little blip up, a little bit blip down. Here we are, 67.07. We haven't done much of anything for the week.
We get below that, I think you look for a little.
We had the movement last night
SPX
down to 66.80. Is 20 handles enough of a movement lower?
I mean, this reverses yesterday's squeeze into the close.
It does reverse.
So that's
all of
we're net zero on the last 2 days.
That is correct.
And for the last week, 2 weeks,
that
pretty
is
much,
correct.
we've basically gone nowhere. So I would like to see a little bit of a bid involved, a little bit of a downside move, and then we can assess from there. Nike's open.
Nike for earnings. You sold some putties in there, didn't you?
Yeah,
Nike up $3 and change.
Yeah, so we're going to close out of those. So I had the 62.5 puts in the
51
in November.
November.
Yeah, so I'm going to close out of that. So I close them for 48 cents. So that nets out a 98-cent profit on that one.
Nice.
And then I'm going to close out of this call diagonal too. So I should have shown it on the platform because you can. A lot of the value came out of the short option. So that short option,
I could put up there.
That's in the 2-day. I had the 75 strike call. I sold that at about $1.20, I believe, $1.30. So like 60 cents of the $1.72 that I made on it. I bought it at 301. I just closed it at 472. So I made $172 on it. So like. Let me third or more of that.
Sure. So you look here, your long is up 65 cents from its closing price. Because again, I'm putting the trade in that you put in there. That's the closing trade.
Yes.
And your short option, even though the stock is higher, is in by 90 cents.
Yeah.
So the volatility really contracted on the 2-day options, even though it went higher because it was well inside the expected move on this bullish strategy they have. It shows short 37 deltas here because you're taking the trade off. That means you had long around 38 deltas. You made about, you said, $1.
I did it at 301. So I made $1.71.
$1.71 if you had 30 deltas, 37 deltas on the close. Let's say you came in with 30 deltas. Stock moves $3, $3.69. You should have made around 90-ish cents to a buck.
You got that.
You got the volatility contraction. That's that extra kicker that we talk about. All I took was the 30 deltas that he was long, times it by 3, just doing quick back of the envelope math here just to show you what it should have been. And then that kicker of high implied volatility gave you another 40 cents or 50 cents on the overall trade. That's what we talk about.
And that's delta coming off the short call too. So you're really, your move, to go to your point of being long 30 deltas, the move because of the contraction and volatility and because it was an inside move, your position moved as if it was 50 deltas.
That is correct.
So
that's correct. That's that little kicker.
Yes. I also wanted to highlight because the dollar has been moving as well today. So I'll pull up my platform here real quick in a second. So if you see the dollar is back near the lows of where it's been trading here on this move on the last week or so. We put on a couple trades with Glenn yesterday. So I have on the TastyFX side here on the left side window. If you don't have an account, it'll prompt you to open one. But I have a couple positions, and they're small. They're little Johnny Nothings. I put a couple $100 in here. I mean, I'm using.
You only used a couple of. What'd you use? $150?
Yeah, they each have about 150. They're notionally, so it trades. So the way FX products trade is a full. What do they call it? One tranche is $100,000 in the base currency. So you do 0.1, it's $10,000 worth of currency is what you're trading. You use about $150 in capital to put that 200, 300, depends on the.
There's your income trade.
There's your income trade. So I got a couple trades that I'm taking off here. One of the cool things though is that the bid-ask spreads are very, very tight here. So there's no, it's like trading stock. It's a one-click thing. You don't cancel, replace. You're just in and out. So I can just pop these kind of off here, taking off the British pound position that I have, and then this Aussie New Zealand dollar that I was short. I was short the Aussie, long the New Zealand dollar, so I'm taking those as well. Those ones I unfortunately can't put on the follow page with Nike stuff.
We'll hopefully get that program. Then we're going to get a joint account for the two of us so you can see my option trades today, trades, everything through.
They are in there right now, but
I know.
Put a little face of the two of us.
Yes.
I feel bad that I've
and get rid of Bob the Trader and things like that.
Yeah.
So
Off with his head, Bob the Trader.
what is that? Out of sight, out of mind, 100%. What else do you see here? Let's take a look at what's moving in the overall market to the downside, bringing us lower. Netflix, even though I just told you Black Rabbit is a great show to watch, down 27. Earnings are coming 10.21. It's about $5 or $6 off of its lows. Meta down 16. I'm surprised with Meta, Netflix, Reddit down 14, AppLovin down 9. That the Nasdaq is actually rallying here. It's only down 76 after being down 150 a moment ago. On the other side, Costco. I bought the 8-foot Bluey from Costco. It's still, for my grandson, still down $9 and change. JP Morgan down 6. AVGO down 3. Hood down 2 and change. And that Wolf down 2 and change after its.
Yeah, don't trade that. It's a goofy split. I mean, the stock, I think it was like a.
It's a hard to borrow stock. They issued more stock.
They issued more stock and wiped the debt and.
Crazy move.
It's a whole. Just don't even. There's so much more happening in the market that even these things, I know they're moving and you got all the monkeys on Twitter like, whoa. Don't mess around.
I agree with you 100%. Lilly up 21. MSTR, after being soft last couple of days, up $12. Earnings are in the 29th spot. Not something I trade all the time. A $707 stock up $9. Coin up $7. Beloved Apple up $3.70. Baba up $2 and change.
Nvidia down on a day where I guess it's not strong, but.
Nvidia is lower by $1.30. Nasdaq's actually rallying down 67.
Yeah, I just took off a bunch of positions, so
I saw
those are coming through.
Tell us what you did.
Yes, so HIMS was with Option Trading Concepts Live. We had a strangle, so I legged out of the put into the upside move. We're getting a little bit of a downside move today. I had a strangle on the put went to like nothing into that move. So I closed out of that one.
Put back at $1.54, and then you got something in IBIT?
So I took like $100 out of that. I had a Zebra and IBIT. Obviously, Bitcoin has had a huge move. IBIT is up like $4 or $5 in the last couple of days. So I took that off. I might look to buy shares and sell calls because the upside call skew is just so juicy in IBIT, even still with the Ivy rank at 31, and it's expanding into this up move. So I might try to take advantage of that.
Yeah, you're right. Volatility is expanding in IBIT.
Yeah, and those will come through on the follow page, and once we get off the show, I'll put some comments in there to explain more of the move there. But yeah, just cleaning up some stuff. I mean, that's
trying to take advantage of the moves that you get right.
Yeah,
manage anything that you get.
I want to pull up too the Coinbase position that we talked about this morning. This little butterfly that I have. I want to get your take on this. So I legged into this butterfly, and we can show this. here. So this is my order.
And you're calling it a butterfly. You can see that it's like skip striked, right?
Yeah.
I mean, it's $10 skip strike, not big in a $360 stock. Go ahead. I'm sorry.
So I did the broken wing butterfly, so I had a little bit of upside.
But it's really a condor you have on, not an iron condor, but a condor because it's all the same
condor,
strikes, all the same
iron
balls.
fly. They're all the
Right.
same thing by a different name.
A butterfly by any other name is still a butterfly.
You're my butterfly.
You're my huckleberry. I close it.
So I put the broken wing butterfly on it for 11-cent credit. I bought in the risk at a 32-cent debit. So I own this butterfly, this $5 shot. It's 5x5. I own this for 21-cent debit. Basically nothing.
Yep.
It's marked right now at like 60, 70 cents. So it's up about 50 cents.
And I probably
You
keep
gamble it into the 2 days. Because 2 days.
I gamble it into the 2 days.
So this position, although it has like essentially no risk.
I thought it was trading closer to a buck and change. You can only, what is it, $10 wide or $5?
$5 wide. So you can only make $500 on it.
Right, and you do have you don't really have any risk at 20 cents.
20 cents, nothing.
That's your
for 2 days.
Risk.
But you have more risk now because now it's trading at 50 cents. So you have $50 of risk. Because that'll go to zero through the next 2 days.
Right, you have 30 cents worth of profit.
Yes, on the table that you're letting.
You can handle it.
Oh, thank you.
You can.
You missed our dip buy. E-minis only.
I did miss the dip buy. You are right.
Yeah,
I did not think it was going to be that quick of volatility.
I'm gonna put an order in for $1. I think that's a good mark.
Sure.
To close this out. So
Sure.
let's see if we get filled at $1 on this.
Sure. You'll need a little bit of a rally.
Yeah, but the dip has been scoopy-scoopied.
Yep.
Yes.
Perfect. Well, good job out of you, son. Good morning so far.
Yes.
If you didn't know any of the news, you would say it was pretty much a morning like any other morning in the market, at least, right? Even the S&P's pretty small move, down 10 right now. Overnight move, much bigger than that, about 50-ish handles. I already told you even the S&P's expected move is around 25. It's under 24 now. So it, too, is already contracting. We'll see if we get a little bit more movement to the downside. Dow just turned green. Russell's only down $1. NASDAQ down 78. We'll take a quick
Cancel crash.
Yes, but don't worry. We got What's Your Assumption coming up next, where we got 10 trades from the viewers. Let's take a look at those immediately following this message. We're back in 90 seconds with Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
On the subject of bonds, let me now expound. Swoons, they will, nay, must someday turn around. Oh, cursed bonds, will you not soon fall like rain? Quit this parched desert of misery, I can take no more pain. With thy nimble run, I admit I am impressed. But climb no higher, or I shall be depressed. Ye tasty traders, all now hear my plea. This position chafes worse than the bat to me. Markets, this is no time for foolish frivolity. Will ye not cease this fatuous flight to quality? Oh, if I could, I'd wave all my magic wands to sweep away regret from shorting bonds.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
We are back, son. You know what that means. Time for a little bit more Tasty Live. That's right. With what's your assumption? Even the S&P is down 15.
You forgot? Oh my God.
I was gonna get there. I'm so sorry.
Okay.
Even the S&P down 16. But all that means nothing right now. We got what's your assumption?
Yeah, let's do it.
I'm ready. There you go.
Perfect.
Aw, you guys are cute.
Thank you. We practiced all weekend on that.
Yes.
What's your assumption in eBay? Let's take a look here. You want to read? You want me to read? It's up to you.
Sure. I know how to read.
Okay, go ahead.
We can switch off.
Sure.
eBay, bullish. Lyle, Baton Rouge. So we're looking 51 days, November expiration. Consumer spending is up, but the economic conditions are making people more selective. So customer to customer, that's C2C, used and discounted products are a hotbed for customers. eBay has been mooning up 45% this year. I don't see that changing. Earnings in 30 days, it's coming off its all-time high. It doesn't seem primed to reverse anytime too soon. Sell puts and strangles, I want to do both. What do you think?
Oof.
Another stock that has gone nuts in that realm is Etsy, up to 68 and change. It actually sold off yesterday, but got up to 76 and change. eBay, what are you thinking?
You know what? For a $90 stock, doesn't have the greatest markets.
Like 30 cent wide.
30 cents wide. Open interest is kind of anemic.
Yeah.
In here. I mean, if you're going to do anything, maybe it's a defined risk trade just because of the way it's pricing.
Mm-hmm.
So I might go with that. If you want to go with a slightly bullish trade, if you agree with Lyle from Baton Rouge, you'll be going into earnings, maybe a closer put spread versus a further out of the money call spread, or a $10 wide put spread versus a $5 wide call spread, which would be almost like a synthetic-ish strangle in there.
What about we do like a little Johnny diagonal spread?
You could definitely do a Johnny diagonal trade. Only question is, do you do October, November, or November, December? Now, November, December, you do have 3 vol point differential. November's higher, which would be advantageous for a diagonal.
I think we do November, December.
I would agree with you, but
and that plays
December
into
options
earnings
are going
too.
to be 40 cents wide.
Yeah,
so you got to be selective with your pricing. I would almost go in at a price, near mid price that you don't get filled at.
Yes.
And then slowly move it up during the day.
Because they want to go through earnings as well, because earnings in 30 days. So here's what I'm thinking. I'm thinking we go to the December 95 strike, which is about a 40-ish delta, 43 deltas.
Mm-hmm.
And then I'm going to sell the
you'd be buying
December Yeah, December 95. Selling the November 100.
And you'll see November here has 39 deltas. So go ahead. You're going to sell a November 100?
Yeah. And it trades at about a $2.40 debit. I mean, you could even move this to like the 105 if you want to lean a little bit more long.
I like the 100s personally, but
it's a
completely up to you.
Round
15
number.
deltas. It's decent sized trade.
Yeah. I'll put this in. I'm going to try. Oh, I just canceled it. That finger mistake, first one.
Price. You're probably going to have to pay in the 240-ish handle. I had a guess.
E-mini's down 29. Maybe
29 now, so good no play on the 0 day and good hold on the.
I'm going to try 238. 238. There we go.
Oh, good.
All right.
Filled right at mid price. Beautiful.
I like it. Some I don't normally trade, so I like to get a little.
And you'll push that through, right?
Yes, coming through. Yes.
All right, awesome. What's the?
I will post comments after we get
the
off
show.
air.
Yeah.
Yes. Very hard to do that multitasking.
Yes. What's the next one, please?
Oh God.
BE. We were actually talking about this on the break. BE opened basically unchanged. It was up $3.50 when we were talking about it, which is just on the break.
And it was down 5 or 6 to start the day.
Yeah, BE has had a range from 83 to 88. It's sitting at 86.
Yeah.
They're neutral. November, highest Ivy rank on the list right now. I'm neutral, but there's huge call skew from Brad, Flagstaff, Arizona. Earnings are November 6th also. What do you want to do in here?
I'm locked and loaded in here already. So I have the October 85-100 call ratio spread, 1/2.
October 85-100.
I did that yesterday at a 65-cent credit. So you're 15 points wide.
So you did it for a 65-cent credit. It's actually at a 65-cent debit right now. So, I mean, on the mark. And it is debit on both sides. So this is coming nicely for you.
No, you have it.
You're buying one of the 85s?
Yeah.
Selling 2 of the 100s?
Yeah, so it's in
October.
Oh, yeah. So I am. Yeah, so it's already coming. The tail has.
You made money on it. You did it for a credit.
Yeah, I did it for a credit. I did it for a 65-cent credit.
Yeah, so you're up a $1.30 on the trade at mid price.
At mid price, yeah.
I like the Ivy rank of 100 and change. I like these. Like for me, these 1x2 in these kind of stocks.
Yeah.
If you can wait for the move.
And you go wide.
Yeah, you go wide, and you don't catch it like when the stock was $70 and you put this on. You catch it when the stock is in the 80s and you put this on. I think it's a nice little trade. Your break even on that trade is $115 or something like that.
Well, this thing moves $7 a clip. So
it does.
Be careful.
It does.
So don't oversize, of course. But I also have a strangle in there, so I'm short the November 60-75 strangle for like $10. I've rolled it. I've adjusted. I rolled up the puts yesterday. Into yesterday's like $8 or $9 move. The puts, the 60 strike puts did not move. It was crazy. It was crazy. So
puts in these stocks usually hold their bids because you get, like you said, these $7 moves.
Yeah.
Everybody needs the protection of the downside because they're hodl to the upside.
Hodling
to the upside.
You could say hodl. I like that. That's fair. Next one, please. So I'm in with you, Brad.
I'm doing the best I can.
Some short premium. Just stay small.
Yes, stay very small.
Snowflake. This is another one that we put on just the other day. Snowflake bullish before the October option expiration. Snow looks like it has a move to 250 in October by October expiration, 230 calls. So they end up deep in the money. So you're thinking like doing I don't hate this idea of like a synthetic stock position. If you want to get a little bit of extra leverage, you can move this further in the money. I have an iron condor in here. So I'm short the 195, 185 put spread, 270, 280 call spread. So I'm kind of neutral here. I don't know if I want to add a bullish position here. I think I'm going to play it neutral. So
fair enough. It's your trade. It's the way your assumption.
Diagonalize it though. If you think 250 by the end of October expiration, buy the 230 November call, and then sell the 240 against there, 245 in the October monthly, make it a diagonal spread. So you don't have to be perfectly directional right on this trade. give up a little bit of the upside tail to give yourself a mulligan.
Now, November volatility is 50, just to put it up there for you. October's only 42. So, and I know you want to play it into earnings. I know you're being directional. But from a setup, that 8-point vol differential to the upside, I don't like it as much as the last trade that you just did, which I think the volatility was really was in our favor. Take it for what it's worth. Next one, please. Etsy. Do you have an Etsy account?
Etsy.
I mean, you're fully domesticated these days.
That is, I have not got there yet. It's around the corner, though.
Handwriting's on the wall.
I see it. I see a lot of things coming. So,
Etsy, they're neutral in Etsy with 45 days to go. Earnings are coming October 29th. Etsy's been trading between 40 and 80, which is a pretty big range.
Yeah,
right?
it's a 50% move. Not bad.
Yeah, for almost 2 years now. Betting it stays range bound. Ivy looks great. Now, you're right. Ivy does look great. Does have earnings coming October 29th. Etsy neutral for 45 days. He'd be in November. What do you think about Etsy? Markets in here are a little bit wide too for almost $70 stock.
But this is par for the course when volatility, when the Mag 7s are at highs, volatility is at lows. You start looking like all these trades are what happens when you get a little bored with the market.
Yes.
What do you think here?
Etsy's not my most favorite trading vehicle.
I'll give you this: the November 65 puts are a 34 delta. That's $4 out of the money. The 80 calls are a 33 delta. So you have almost twice, if not 3 times, the amount of skew on the upside. Like they are pricing in some skew here. So what about if we do something like, and then if you flip off your platform, I'll show this on mine.
Sure, it's completely delta neutral.
So you play into this a little bit. Maybe we do we'll do the 60 put. We did this in Intel the other day, and I had some questions on it.
Okay.
The 60 put, which is a 22 delta. You go with the 70-80 call ratio spread. So you do that 1/2. So synthetically, I'll show this on the analysis mode here. You're basically short the strangle, but you're giving up the call premium to give yourself that wide call ratio spread on the upside. So you're buying that call spread, financed by selling that extra call. So it gives you the risk profile and the buying power of a one contract strangle if you do this 1-1-2, but you get a little bit of a kicker to the upside. It plays into that vol skew, and even if the stock kind of stays range bound, and I could show this on like the Theo, and we move this, so we go to the analysis mode. So if you move this in time, as you get you go through, you pass some time in here, and then you move some of these, the volatility here. You could see you have a lot
subjective all of this right now, right?
Yes. We're just clicking.
You're just clicking.
To show a little bit of how that risk profile changes. Sure. But you have, this 70 call is going to hold some sort of value.
Yeah. Stock is up $3.
That was too complicated for you. I lost you. I saw your brain was like this.
No, what my brain was contemplating is the stock's already up $3. Even by Connor's admission, 40 to 80 or 70.
All right.
Stock's up $3 today. Obviously, this would have been a great trade yesterday.
Yes.
I don't hate it for today.
How about the 60-80 strangle?
I
agree with you. Stock's up a little too much.
Okay.
Is the up today.
But I like your play. If the stock was more range bound, it's the middle of its range, or even off a bit of stock on the low end of its range.
Doesn't happen.
Might be something I would look to do.
568.
Beautiful.
60-80.
Beautiful.
So the short strikes. But that was a fun little setup. I don't know. Something
Yeah, no, I like it. For those who want a little kicker to the upside, which has been prudent in this market.
Yes. Next one, please. Thank you, Connor. Tiago, Turlock, California. Aklo, this neutral, November 21. Let's start off with the new era of assumption with the bat trade. I'm neutral here. Stocks extended. Ivy's rich. I want to get paid while staying covered if we see another outsized move. Strategy, November 21st expiration, $5 wide ratios on both sides. The bat wings, the bat ears, the bat trade, bat wings. Buy one of the 85 puts, and then you're selling 2 of the 80s. Buying one of the 150s, selling 2 of the 155s. You do this at $9 credit. I personally would go wider.
Oh, I would
on the ratios.
I would absolutely.
You want to do this for like $1 or $2 credit.
Yeah. So you're doing it. I love the $9 credit. I mean, it doesn't. I mean, and I love the pop of 75%. There's definitely upside skew here. Look where you are, 150. You know, 40 handles outside the money, 85 closer to 20 ish handles, 25 ish handles to the downside, or points to the downside. You are outside the expected move. So I love your setup. If you're going to stay with these strikes, I mean, you go as wide as you like. Yeah. I mean, to Nikki's point, let's just do $20 wide, 50, 70. Just keeping these strikes, you can move it yourself over there, son, to see what fits you. But if you're $20 wide, on the put side, you can't do it.
You could, if you want to do like the 95, 75, 135, 155, it's marked at like an 8-cent debit, a small debit. You move it slightly in on to make it like a $15 wide. You could do like.
Okay, that's exactly. Well, I was going $15 to $20 wide, $15 wide on the put side, $20 wide on the $10 wide on the call side. You could certainly go $15 wide. You collect your dollar something. Anything like this, I like my probability of success on these trades to be over 85%, closer to 80 to 95%. Than the pop that Thiago had.
I like it. I think it's interesting.
I think it's interesting too.
I think we do. So you have so much call skew.
Yep.
And the put side, it can only go to 0.
Yes.
Which is a possibility when you have 100% implied volatility.
Yes, but over the year, not in the next 50 some odd days, hopefully.
So what if we do the 85-75 1x2? So that's 10 points.
85-75, okay.
On the upside, we do the 145-175. It marks at about $1. It's very wide. I don't know where we're going to get filled here, but it gives you a break even. So your upside break even is 200.
Yeah, your problem here is going to be getting a fill.
Okay.
So you're definitely going to have a problem getting a fill at a price that you like. I mean, over $1, I think is going to be aggressive.
So I'm going to move the call in. So those 70 strikes. So we're going to do the 145, 170. I'm going to try at $2, which is the high end.
You won't get filled.
I don't think
you're going to probably get filled closer.
Well, you gave me so much grief about giving up a penny on the last time I got filled on the Lulu puts that now I'm like, I'm just going to.
Did the Lulu put trade work?
Yeah, I took it off. I took it off within that.
Oh, I love it then.
2 hours.
I love it. Way to be aggressive with your pricing.
How much?
I think you get filled closer to
150, maybe.
Or 150.
165.
Oh, good. Here, so let's put this up there real quickly. You did the 45.70. I have it up there, and the 75.85. I have it up there.
Yeah.
Look at the mid price, 142. I know the natural is $1 away at 40. The offer's $2.35. You got filled at $1.65. So please. Put these in well above or below where you think you're going to get filled if you're trying to buy it, below, above if you're trying to sell it. You never know. Good things happen.
And that's true for anything that has very high implied volatility where it's move-in dollars.
Yep.
Start high and work your way.
That's correct.
Okay, cool. We're in.
Beautiful.
Thank you. Great trade.
Well, we don't know.
Great trade idea.
It's an 82%
NFA,
pop.
Not financial advice.
Right, down.
Thank you for the suggestion.
-4 short delta, but you got more room to the upside than the downside. So
Get a little vol crush.
Yeah, you're gonna need a vol crush. I mean, volatility is probably a little bit lower today with the stock going lower by $1.50. So you got that to contend to too. All right, go. Nick.
All right, SPX 0 day. Only pull the trigger when the market moves at least 0.5% on the day, just in case. Neutral iron condor cell. We're a little bit inside that.
Yeah, you're down about 0.3%, 0.32 or something like that. SPX expected move is about $21. The E-mini S&Ps are about $22. They just really collapsed volatility by about 3 or 4 handles. I think we kind of missed the boat on this.
I think we did too, which stinks. I wanted a little bit more of a down move in the open.
Me too. I thought we were going to get one.
Oh, yeah. Unfortunate.
I think we're going to have to abstain, right?
Yes.
But hopefully tomorrow.
Next one, please.
RSI.
Is this a stock or are they talking about the RSI?
bullish.
Rush Street Interactive.
Okay, so the first thing I'm going to do.
Let me figure out what the stock is.
And look at the markets. You look at the markets here, no bid at 50 cents, no bid at 75 cents. You look at the open interest and see it anemic, 3 contracts, 2 contracts, 19 contracts. Kevin?
It's an online casino and sports gaming company.
Unfortunately, I think this would just be a stock play if I was doing something on this 20-something dollar stock. I don't think you can do anything with the options. Even you could try to if you're.
It's a no-go. You can't do anything.
I know, but if you wanted to use less buying power and sell the put, buy the call, and probably give up 10 cents or so over parity because there's just not a lot of bids and offers for the stock, you could use a little bit less buying power, and you don't even use that much less buying power. I think it's a stock play. I think it's a stock play or nothing.
Yeah.
The 20 calls have $1.70 in juice in them or $1.60 in juice in them. Too much.
Yeah.
Too much. You just got to trade the stock here, unfortunately. I'm sorry.
Yes.
What is October? Let's just try to take a look here. Even the October 20 calls, if you were trying to do a short-term play here over the next 16 days, you want to use a lot less money. You want to pay, 60, 70 cents over stock. You're only paying $1 for the options. Maybe you can get filled at 90 cents or so. You'd be paying 70 cents over where the stock is trading right now. Maybe you take a cheap shot that way. That would be about the only thing I would do there. So,
sorry, Kevin.
Yeah, sorry, Kevin.
45 to 80 days. Ugh.
45 to 80 days.
There's the government doesn't come back online. I don't know how we're even going to we're going to survive. Can we survive without the government?
We all go gamble and drink martinis.
Next one, please. Ooh,
mRNA. So I got emails about mRNA yesterday. Up $1.60 today. Stock has come off of its lows of around $25, $27.5 today. They were neutral in this in the November cycle. It does have earnings November 6th. Markets are okay here. They're okay for a $25 stock. They're about 10 cents wide. Great open interest. From a trading standpoint, it makes that way. What do you think about being neutral in here? IB rank of 46.
I'd rather just sell the puts. I don't want the upside risk in the.
Stock up 6.5% today. I think you had to do that yesterday.
You had to.
I don't think you chased it.
Yeah, I don't think you chase it. But on a stock that we know from past has had some binary. It's a biotech. Stock. So you have that upside risk. So I'm gonna pass. But thank you, Juan.
Yep. Appreciate it. Yep. Hope you did something in there yesterday. Maybe even with a little bit of bullish delta to it. ETHA neutral.
Neutral. Okay. I have a call diagonal spread in there that's up a couple bucks, but
it's about mid-range. It got down into under 30. It's been over 36, about 32.5, a little bit up $1 and change today. That's almost a 4% move though. Neutral over the last 30 to 60 days would bring you into November. It is an ETF, so you don't have to worry about earnings or anything else like that. IV rank of 60 is pretty good, although there's not a lot of data on this because it's a new product. Newly slightly bullish. How about a J Lizard or a skewed strangle?
I was actually thinking and I just did this in IBIT as well. There's so much call skew.
Yes, there is.
And so I'm thinking this is an interesting one to have just like a covered call on. A little bit of it's neutral, right? It's only 50-ish deltas total with 100 shares of stock. It's one we can kind of wheel for a couple months at least, hopefully, unless it just blows through.
Okay, so what are you looking to do? There you go. You did it.
I did. I bought stock, sold the 35 strike call in November.
Bought stock, shares. Sold the 35. Yeah, it's classic.
Break evens at 30. That's where we were. That's kind of lower end of the range here.
Yeah, classic covered call, right? Yep. Awesome.
Last one. We got one.
Oracle. Neutral in November. Oracle dropped to midpoint between pre-gap highs and all-time highs might fill the gap, but will swing between, not going anywhere soon. Mike Y in DC.
Okay, so we're going neutral. I have a short put spread that's left over from an iron condor that's right at the money, 275, 265.
Oracle's been on a downturn the last 6 or 8 days.
Yeah. I have the October short put spread.
Oracle trade up to 281 was higher today. Now it's down by $2.50.
You think you do like a 20-point wide iron condor out in November?
Certainly could.
Maybe do like the 240, 220, the 230, 250. And that puts you, the 52-week high, which was only there for a short period of time, was 345. This has a break even that's at like 335 on the upside.
Ivy rank has been steady to expanding. It's
about
54.
a 1 standard deviation on either side.
Yeah, no, I like it. I like it.
Let's see if I can.
Mm-hmm. Looks like you get about $5 and change credit.
Mm-hmm.
525 is mid price. 520 was just a mid price. I think you're gonna have to move this by a nickel.
Yeah, I moved it to 520, didn't get filled. So
keep it there. See what happens.
515. 515. Price improved to 517.
Okay, very good.
So I gave up 2 pennies on that, but I got 15 cents on the Oklo trade. So
you didn't get anything. The mid price was skewed. You got fair prices, which you got on both these trades.
Yeah, I got my price.
You got your price. 6 out of 4. I mean, 6 out of 10. 4 we didn't do. No, I like it on a day like today when a lot of uncertainty in the market.
Yeah.
Although volatility is completely unchanged.
And we already have snow.
And we already have snow.
So it's really 7.
9. Right.
7 of 10. Oh, look at the team. They can adjust on the fly. Love it.
You really love it. You just make a 10 out of 10 and lie.
No.
No lying. No. We're going to take a quick, we're going to take a quick 90-second break. You don't have to go to the bathroom or anything like that, right?
Oh, no, I'm good. Young bladder.
Good today. You're getting used to it. Good.
Yes.
Good job out of you. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. Nick, you know what comes up next?
Market measure.
Skinny on options math with Jacob. We'll be back in 90 seconds. It's Tasty Live. Unbelievable. It's time to shine.
It was
a trick question.
That was a trick question.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
We are back. Whoa, I'm just seeing you. That thing is coming in beautiful.
Ooh.
You got going on there.
Nice.
Jacob, how are you? The skinny on options, Matt. Strong style you got going there. You play hockey or something like that? That's a good one. I like that.
It's been coming in every week for the past year, right?
Yes,
It's a new
very
thing.
nice.
We got Gus has a great mustache.
Yeah,
too.
Gus has a great mustache.
Ryan has a great mustache.
Yeah.
They're trying to show up I don't have the same thickness.
You don't have the girt.
Yeah.
It's not as girthy as Jacob.
Girthy is what one looks for in a mustache. Oh, gross.
You got to smile a little bit, Jacob.
sorry,
You're making fun of me
No,
now
it's
for
good.
the
It's
next
good.
20 minutes.
Listen, I like how it looks, and I like how much less effort it takes. Because the real
True.
problem is that, I really don't like how the stubble on the upper lip looks, and I've got about 2 or 3 hours after I shave before it starts coming in like that.
How long did it take for that length?
I haven't shaved the mustache since New Year's, but it was a good enough length after 2.5 weeks.
Yeah. Okay.
I could see you with the big beard bald. Shave yourself, beard, mustache.
It doesn't connect. I don't grow any facial hair ear to ear.
Yeah.
We can fill it in with
I like
a
those
pencil.
sideburns and a mustache and a little patch, but there's missing chunks on the full
Fill it in
beard.
with a little pen. Be all right.
Yeah, we'll mascara it over. It'll be fine.
Good job out of you. Well, you're doing good. What do you got for us today? What are you going to woo us
So
with?
today I wanted to talk about IV overstatement, which is a thing that we've sort of seen in market measures a number of times. I wanted to discuss sort of how it can fit into the theory without, it's one of those things that seems like it violates the efficient market hypothesis. It seems like it's an arbitrage and there's free money. And of course, I'm always here to be the wet blanket and tell you that no, that's not what's happening. So we'll sort of unpack whatever overstatement is, where it comes into play, and then the sort of why it isn't as promising a thing as it seems. It has a hidden risk in it.
You mean there's no free money glitch?
That is literally the efficient market hypothesis.
Good.
No free money.
Yeah. No, I
haven't found it. If it's
I haven't found it. That's how I respond to emails and I say, "Is this free money?" I'm like, I've been doing this for 10 years. I haven't found free money yet.
But I have gotten lucky, and I think
Yeah,
the more you
that's
do it, the luckier you get. You know what I mean? You have to.
And the more you'll see asymmetric opportunities.
Yep, exactly.
Yes.
Thank you.
Yes, I agree.
Yep.
All right, so let's unpack this free money.
Perfect.
So to understand IV overstatement, we first have to understand the V is volatility. We have to understand volatility. Then we have to understand implied volatility. Then we can get to IV overstatement. So firstly, just our usual, what is volatility? It's important to recognize that volatility has been a word used to talk about prices and markets for, since the Dutch East India Company. but it hasn't really, but it wasn't precise in any sense back then. It was just sort of this general sense about how stable or unstable the prices are, right? This is a very volatile, the tulip market. This is a, more stable tulip market. And it wasn't until 1968 when the Black-Scholes model got published that there was like a widely accepted formal definition for volatility. And it's because in the Black-Scholes model, there's a specific parameter that like does that job. And it's the infinitesimal variance of the Brownian motion that it drives the log returns, right? Like the log returns are Brownian motions, so that price returns are geometric Brownian motions, so that log returns are normally distributed, so that price returns are log normally distributed. And as a result, you get this one term, which we usually denote with the sigma, which was the annual variance of this, right? It's the standard deviation of annual log returns. Which is the same as the infinitesimal variance of the Brownian motion scaled for annuals. Unfortunately, volatility, while this really useful concept and would tell you how everything behaves, isn't a thing you can look at. It's this unknown feature about how uncertain the future is, right? Anytime you look at the past, you can check out historical volatility, you can see how wiggly it really was in the past, but that doesn't tell you what it's going to do, right? That just gives you one sample from its distribution. And right, the volatility is supposed to be sort of a distributional fact. So let's go forward. So we've got volatility, and we'll now need to unwind it into implied volatility so that we can get to implied volatility overstatement. Take us one, Beth. Yeah. Right, so the Black-Scholes model, takes in a bunch of market observables like the spot price and the strikes, and the time to expiration, and these things that and then there's one unobservable of the volatility. And it gives you what would be a theoretical fair price for the option, right? If the underlying behaves according to this distribution, then the option's going to have this price, right? We talked about this last week. So if we give them, but we can't see the volatility. So instead, what we usually wind up doing is we say, well, but the market does have prices for options. And so we'll just reverse the whole process. And so we can invert it and find the implied volatility that fits any particular price, right? Which is the volatility that if it were constant between now and expiration would make that the correct price for the option. Unfortunately, though, Black-Scholes model isn't true. No one really believes it since 1987. And as a result, different options in the same underlying will have different IVs based on their strike and expiration. You wind up with some sort of surface, like the thing I have at the right here, where real close in and at the money tends to be lower implied volatility, whereas you go further out, you tend to see both in time and strike. You tend to see higher implied volatilities. This is really cumbersome for most people to deal with, right? You've got this surface, and you're asked to try to understand what the underlying is going to do based on this weird shape. And so we sort of scrunch it down and try to collapse the whole shape into a single number just to make it something that people can actually reason from and apply to a decision-making process. And there's a couple of different ways this gets done. Maybe you just pick out the at the money IV. Maybe you do IVX, which is at the money IV mixed up with a couple of near the money IVs. Or you do a VIX style thing, which is up and down the option chain, doing a mixture of them all. And it doesn't really make a huge difference. The point is that you collapse the whole surface into one number that you think of as the implied volatility for the underlying, even though it's not really each option has its own implied volatility. And this is some amalgamation of them to give you one volatility to consider.
Yeah.
Why do we do that? Well, let's look at the next slide. We'll see why we care about doing that. Why do we want a single implied volatility for the underlying? There's a couple of reasons, but one of the most important reasons is that we want to come up with expected moves. The expected moves are a really useful thing to have. Let's go forward one, Beth. Thank you. Expected moves are a useful thing to have. And you just do them very simply by taking the implied volatility and the square root of the time to expiration, and that tells you the expected log move, and then if you multiply it by the spot price, that gets you the approximate expected move. I wanted to bring up, you guys said if you have 100% implied volatility, that means things are priced like they're going to zero. That's not quite true. That's why they have an approximate on the expected move down below. It means that the expected log move is 100, but a log move of 100 doesn't mean you've gone to zero. It means you've gone to a fraction of 1 over e, which is a 36%. So it means it's priced to lose 64% of its value. as an expected move, rather not 100% as expected move, because it needs to be able to go past the expected move sometimes.
You correct me again.
So this is one of those. It's confusing because log move percentages and expected move percentages are very close when they're small, right? When they're 0, 1%, 2%, 5%, it's only going to be a couple of pennies different. But when you get up to really high implied volatilities, it becomes more important to consider the log normal distribution, right? Because the normal distribution and the log normal distribution look very similar right at their rounded top. But then when you go away from there, they start to have different shapes. And so if you have really high implied volatilities, it's important to adjust for log normality.
Can't shake Jacob off this game.
Okay, that's good to know. No, that's good. Yeah. That's good. I like that.
But so under the normal distribution, it stays with one expected move 68% of the time. That's our one standard deviation expected normal distribution statistics. But right, and that's that parabola opening out in the price graph, right? The parabola opens out to the right. That's the square root of time. That's why it's a parabola, and it gives you sort of what the one expected move to the up and the downside would be. But historical analysis shows that the underlyings stay inside that way more often than 68% of the time. It sort of depends on the underlying. SPY, it's like almost 87% of the time, whereas like I think Apple, it's more like 75% of the time. But it's still significantly higher than 68, right? That's still like 10% more often than 68, even if the sort of lowest. And that's the effect that gets called IV overstatement. That this expected move based on the implied volatility seems to be further out than your one standard deviation normal move would be. And as a result, you get a lot of trades. Like if you put your strikes for your short strangle at the expected move, it's going to have a higher probability of success than the theory gives you. Right, more of those will be winners than pure theory would say. Pure theory says it's going to be 68 plus a little bit for your credit moving your break evens, but about 68, where the reality is just much higher than that. And this seems pretty good, right? This means that this is a really tempting feature, right? We computed the expected move so that we could try to pick strikes. We found some strikes. We now see that those strikes are profitable more often than theory says they should be. But we found those strikes by getting to them through theory. So this is where the suspicion that you maybe see in arbitrage comes in, right? We derived these strikes by looking at the theory, and we said where the prices gave us where we said a 68% of the time we should stay within. But then in fact we stay within that more often. Is that free money? Have we found the free money glitch?
Maybe close. I mean, you still got the tail risk.
That's exactly what's happening. Let's go forward to the next one, and we'll unpack the tail risk. Right? How can this be with the efficient market hypothesis? Well, if the expected moves are calculated via theory from the option prices, isn't this an arbitrage? Well, the efficient market hypothesis is not a consequence of the Black-Scholes model, right? We know the Black-Scholes model isn't exactly true, but it's not. The efficient market hypothesis is an assumption you use to derive the Black-Scholes model. It's not it's not shown via it. And in fact, when one recognizes that the Black-Scholes model isn't true, the thing you tend to relax isn't the efficient market hypothesis, it's the constant volatility assumption. You introduce some sort of dynamic volatility model, right? Either local volatility or Heston or stochastic volatilities, right? At that point, it becomes a very guessworky thing about how volatility changes, but it is pretty certain that volatility isn't as constant as the Black-Scholes model puts it to be. And as a result, you don't wind up actually following the normal distribution, even though, right, because volatility is always a symmetric thing, right? When volatility goes up, it doesn't say the underlying is going to go up or down. It just says the underlying is going to move more than it would have otherwise, either to up or to down. And as a result, it's symmetric. And so it never violates the efficient market hypothesis. No matter what the current volatility is, and no matter what happens to the volatility, the efficient market hypothesis is still fine. Everything in the future is still balanced around the present. And as a result, you're not going to, even if you throw out the normal distribution, you'll keep the symmetry and the efficient market hypothesis. So let's go forward and see these fat tails at work. That the market is not normal. Oh, these texts are too small, but I'll speak it. So it's both the historical data, which shows these more frequent small moves, and then also more frequent very large moves, and the IV smile, right? The fact that implied volatilities go up as you move away from the underlying, show that the market expects to have leptokurtosis, right? Expects fat tails and high peaks, right? And sort of narrow shoulders compared to sort of the normal distribution. Just to give our historical facts, that twice the expected moves happen pretty close to what the Black-Scholes model normal distribution says they should be, but it's about 5% of the time. Again, varies a little bit underlying to underlying. But the thing that happens vastly more are the really big moves. That in the normal distribution, you only get a 3 standard deviation move like 0.03% of the time. It's very, very, or no, 0.3%, not 0.0, 0.3% of the time. It's very rare. Whereas in reality, under most underlyings, we see these large moves more like 1.5 to 3% of the time, which is still rare, but on a scale basis, right? That's 5 to 10 times more likely than the normal distribution says it should be. And that's exactly what you were saying. It's this tail risk that's keeping this from bringing free money.
The problem is knowing when those tails come.
Yes,
that's.
never do.
I mean, even if it's a higher probability than what the normal distribution would suggest, it's hard to trade that. It's
still 1.5 to 3.
Yeah.
Yeah, it's hard to trade it, but it is something you need to be aware of,
yes.
Right? It's why this isn't free money, right? So expected move strangles are profitable much more frequently than the model predicts. Their bad losers are often worse than the model predicts, right?
Yes.
When you get these really big moves, they're bigger than the model. So you get these bad losers to offset your more frequent wins. The specifics of tail events are never going to be that well understood, right? This 1.5% to 3%, or like you said, knowing when they're going to happen, they're just never going to be that well understood. No model can be tested on them because we don't have a laboratory to study this in. We only have the real world, so we only get to do one trial. And if you only get to do one trial, you're only going to get very rare events. And if you get only a small number of rare events, you're not going to be able to say anything with confidence about sort of what their actual properties are, because there's just going to be a small sample size. You can, in your trading, cut out all of this effect, right? You can ignore the fat tails, but what that means by sticking to a defined risk position, right? Because then your long call and your short call, the tail effects are going to cancel out. It's only between the strikes that anything matters. But then you're also giving back whatever advantage the IV overstatement was like you thought you were getting from it, right? Because whatever advantage you had on the long one is on the short one is lost on the long option. Right, those two things balance out. So you can trade defined risk positions with much more confidence in using normal distribution statistics for them, even though it's not precise, just because the differences will be smaller. But you didn't think you had an arbitrage to begin with, so it's fine. I don't need to argue with you. And that's the idea, is that, right, we've got this concept of IV overstatement, but really what it is it's an expression of the leptokurtosis of return underlyings, which means that you get small moves more frequently than normal distribution says, moderate moves about as often, and then or slightly less often, and then large moves more often, right? And as a result, a short option position is profitable more often, but takes large losses more often.
Size kills.
Size kills.
Always.
That's right.
So,
Size kills.
Despite the unreality of the Black-Scholes model, it's a powerful tool for understanding things. In particular, we use implied volatility to derive expected moves, and this is really a big level up for people who want to expand their number of underlyings that they trade in, because that way you don't have to have specific familiarity and the history with it. You can really take things in a very much more quantitative, contextual way. This results in the IV overstatement phenomena, where when you go to the expected move, you see that things fall within it significantly more than 68% of the time. But historically and theoretically, based on the IV surfaces, the distribution of underlyings is leptokurtosis, has leptokurtosis. It is leptokurtic. Both the small moves and very large moves are more common, which is so we don't want to be wary of over-inferring based on normal distribution statistics. Just because, the normal distribution says that a 4x expected move is like pretty much never happening, and those options can be sold for a dime or a nickel, that doesn't make those free money. Because that's really where the normal distribution isn't true, and you gotta be careful out in the tail like that. Okay.
Good job.
Beautiful.
I think you did. I think you did great. What's that?
Wait, do you guys just do Johnny trades with Nikki sitting in place?
No, we don't have Johnny trades. We got Quentin and Ryan coming in.
Johnny trades will be back in some capacity. We're still doing life cycle of a trade. We're working out how we're gonna fit this in.
All right. I'm excited.
Some people have babies. Life is getting in the way with them and stuff like that.
He looks at me.
I'm injured. I mean,
No,
Oh no, Tony, what happened?
Oh my God, you sound so sincere.
Yeah, I really do not.
Like Humpty Dumpty, he fell off a fence. He got stuck.
Why were you on a
and
fence? This is, they tell you don't sit on fences. Got to make the decision one way or the other.
He wasn't running from the police. Okay, it's not him that has to worry about that.
I was climbing over a cemetery fence to see my mom.
Oh.
It was closed at 5 o'clock, 5:30. I don't know what cemetery closed at 5:30. Like they lock the doors. It's
because people who work for a living can't visit their loved ones.
Yeah, exactly. On a weekday. I mean,
yeah, exactly.
I've never heard of such a thing. But whatever. But that's what happened.
So he fell, and then he didn't even get to see.
And I was at the back of the cemetery. My mom's in the front of the cemetery. I walked for about 30, 40 minutes. I got very aggravated.
Oh.
My arm was throbbing. Then I had to climb back over the fence.
Is it broke? Is it sprained? What's?
Oh, I fractured it.
Oh, dear.
So it's a little tender.
Yeah, that's broke.
Yeah, it's bad.
Well,
well.
I wish you a speedy recovery, Tony.
Oh well, I'm here. Bell to bell. No worries.
Yes.
Yeah.
Hardest working man in showbiz, right there.
Strong left hook.
Thank you, Jacob. Appreciate your time. Wow, look at these E-mini S&Ps down 575. Russell and the Dow down just a skosh. The Nasdaq is going to turn green here in a second. We'll take a quick 90-second break. We'll come back. We got more Tasty Live after this with Quentin and Ryan. Immediately found these messages.
There you go.
Thank you, my friend.
Get Quentin and Ryan in here.
Live from the trade desks.
Live from the trade desks.
Desks.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock, and short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock, like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Nikki, we are back, son. You know what that means? We've got the trade desks with an S coming up. We got somebody from the trade desk equity side right now. Equity, futures. Quentin, you handle Forex too?
No Forex, no.
No Forex, just futures, stock, options, obviously.
Yes.
Yeah.
A little bit of everything.
You're like an expert in the room here. Oh, did it.
See, you don't. I might have to take the DDT from you.
You might have to.
If you're not going to do it.
I reserved that for a person.
I know.
Remain nameless.
I know.
But Quentin, welcome to the show, my friend.
Fellas, how's it going?
Doing great.
Morning.
Doing great. You came in here, before you get to your list, you came in here hot with a topic that you want to talk about because it became dear and near to you.
Yeah.
Yes.
I saw the pain. I saw the pain in your eyes.
Yes.
Oh yeah.
You had some money you were banking on. Because on the trade desk, you guys are allowed to trade, right? I mean, you can trade.
Oh, of course. I mean,
it's encouraged even.
One of the things I really take pride in is that I'm a customer before I'm a representative.
Yep.
So I think that's something super special about a lot of people on our desk as well, is that a lot of us are traders, a lot of us are customers, and we go through the same exact things as everyone else.
A lot of the questions that you take are probably emotional in nature too. I mean, they're always rooted in, how can I do this? What can I do here? Kind of thing. But there's a lot of emotion there. And if you haven't traded and felt that emotion, it's pretty cold to answer somebody's question. You know what I mean? Like if you've had the emotion, you can have some sympathy towards it and maybe come up with an answer that might be a little bit more strategic in nature than just, hey, this is what you have. What do you want to do? Kind of thing. So I love the idea that you guys.
Yeah, and having that experience as a trader yourself is a lot different than, just knowing the answer is one thing, but having gone through yourself is completely different. And that's something that is really special about our trade desk. A lot of us are traders. Head of the trade desk is a trader. Head of service is a trader. And it's
secondary. Okay, helping you out there is their first concern. Okay, the trading's secondary.
Yeah, I mean, well. That's why I got hurt yesterday. It's because, I'm busy going into the
Exactly. You're on the phone, you're talking, you're helping.
Yeah, I can't trade all day. Of course, trading obviously comes secondary.
Yeah.
But it is something we like to do, for sure.
Very nice.
Beautiful. Good job. All right, well, continue.
Should we do the top?
The stage is
top
yours.
symbols first, then we'll get into it?
Sure.
Alrighty, Beth, can I get the list?
The stage is yours, Quentin.
Okay, here we go. So at 1, top 20 symbols going through the system, and their IVRs. We've got Nike.
Earnings.
23%. Oh, earnings, okay.
Yeah.
Nike, 23%. We've got Tesla, 29%. Meta, 34%. iBit, 33%. NVIDIA, 10%. MSTR, 13%. Apple, 20%. GLD, 37%. AMD, 31%. Netflix, 35%. SLV, 51%, Palantir, 29%, Robinhood, 27%, TQQQ, 23%, ETHA, 57%, AMZN, Amazon, 30%, Oracle, 55%, Coinbase, 29%, Eli Lilly, LLY, Eli Lilly, 32%, and Reddit, 47%. Eli Lilly, I'm a bit surprised on that being on there.
The Trump portfolio.
Yeah.
It's like the secondary names. You got Pfizer, Now you got to go to the secondary one.
Lily up $39, a 5% move on an $800 stock. There's the reason why. And
Merck as well.
What is that?
Merck
is
moving.
Merck is
$4.
Also on a tear, almost a 5% move, similar to Lilly. It's more impactful, at least when you look at the 5% move on an $800 stock than on a $80 stock like Merck. But Lilly, believe it or not, is always one of the ones, at least on the high option volume list that I look at, that's always at the top of the board on movement. Not necessarily the amount of trades, which now today trades is high, but the percentage move is usually high, and Lilly is a mover.
Interesting. You think they're a candidate for a stock split soon? Because, I mean, getting that high, it's probably pretty hard to trade.
I don't know when's Lilly. I could look it up. Lilly's last split.
Well, I mean, their move has just been parabolic, going like that.
Yep.
So, yeah. All right. Let's get into today's topic. I've got zero DTE price risk. And so yesterday into the close, we saw a rip to the upside.
I'm sorry to interrupt you, but before I lose the Lilly thought, last time Lilly split was 2 for 1 in 97.
Damn.
So it's not a split kind of stock.
Yeah, I'm thinking maybe they're due. I mean, $800, maybe $200. So what, by the end of the year, right? With the movement in that stock, but yeah.
So continue. You were talking about something that's a lot more important than I was just discussing. So continue.
And so zero DTE price risk. I mean, that's something we see a lot with the zero DTE options, the risk in that, the markets move fast, your positions move even faster. And so what we were looking at was yesterday into the close, there was a huge rip up in the SPX. That's typically what we see people trade, or the ES typically when it comes to zero DT.
Cash settles for SPX. Pretty clean for people with no stock left over. Buying power is what it is on entry. It doesn't change.
No need to worry about the futures exercise or assignment either. So typically SPX, but I mean S&P 500, we saw a huge tear to the upside, which I myself got caught in. I had an iron condor on earlier in the day.
You had a worthless iron condor on probably, right?
Pretty
You were going
much,
to take the full profit on this. How much was really left?
GTC. Got to use the GTC.
I got to use the GTC. Got a little caught up in the day-to-day.
Okay.
But
what were you?
Yeah, I mean, what it was probably trading for 50 cents before that move on a 5 wide. So, and then wound up short call side, went in the money. The short call of my spread went in the money. So that's something we see a lot. That's why days like yesterday is why those really far out of the money options have those bids. And so whether you want to, take that risk, leave it on till the end of the day, or close out earlier, pay that small debit that you have to pay, but secure that profit for yourself, that's completely up to you. But that's definitely something to consider because days like yesterday do happen. The SPX ripped up, and then 2 minutes after, the SPOs were down, 13 points after that. So it hurt.
Irrelevant to your zero-day trade, right?
And it hurt. I was like, oh.
The other part is, like, if you see single name equities that have, like, Friday expirations, sometimes they stay bid into the close. I've gotten emails a bunch of times on this, like, why is this call with 30 seconds to go in
$2 out of the money or whatever.
$2, $3 out of the money. Why is it, I could trade this at 50 cents. Why aren't I selling that with, both hands? And it's usually because of some sort of binary event because stocks trade in that 30 minutes after the close.
Like an earnings event or something.
Earnings, S&P inclusion, that was kind of the one that caught people with Robinhood and APP. When they got added to the S&P 500, the calls and the puts, both sides, were bid into the close and even on the close. And that's because when the announcement comes out, the stock has 30 minutes to trade, and those options can be exercised in that aftermarket trade. So you got to, again, this goes to what Jacob was saying, no free money in this market.
No free money.
Yeah, that's something we actually got a lot of calls about when that was happening, the APP especially.
Yeah.
Because it's like, what's this stock doing with like all this,
They were trading like $3, $4.
Yeah, like way out of the money. And it's because, there's that after hours exercise risk.
And then
you
were short stock.
I haven't said this recently, but I'll say it again now so you remember. If something looks too good to be true,
it probably is. It's probably something you're missing.
Yeah, you don't know the whole story. Like there's something there that you're not figuring out. So
that's one thing I love about the stock market compared to just like other prediction and like betting stuff like that is there's so much money at risk that any ARB that's out there gets ARB'd out right away. And then
immediately, if not sooner.
That's a great way to put it, too.
Yeah, and then so it's like the prices that are out there are extremely fair, and that's what is. And that's what's true.
It is what it is.
Yes.
There's no it's not better to sell it. It's not better to buy it. It's the same exact price.
It's there.
What's your assumption? It's really what it comes down to.
It's your assumption and how you trade the other things that are variable, like volatility and time and directional assumption. Those are all the variables, but the price is the price.
Yeah.
Awesome.
Yeah.
Awesome.
Very good.
Very good, my friend. You did an excellent job.
Yeah. There you have it.
Thank you. Nick, since you're taking over, who's next? Where's he from?
Well, we're giving him a D as well, but we have Mr. Ryan Grace in the house for the first day, the start of the beautiful October.
What's up,
the
guys?
Man, the myth, the legend, the #1 October fan in this office, Mr.
I
Ryan.
appreciate the sound effects. Thank you.
You're welcome. You're welcome.
We're trying to incorporate
I didn't think you were worthy, quite frankly, Ryan, but
working on it.
powers that be said you were.
Can we get an applause for Ryan, please?
Thank you. Thank you.
Please.
I'm not worthy of the applause, but it's nice to get the radio signal as I'm coming.
You got it. We're working on timing, but thank you.
Easy, Nicky.
Soon we need some smoke, some pyrotechnics in here, maybe some strobe lights. Guys, we need to step it up.
Maybe.
That's an interesting idea. I like the smoke. No. Oh, come on, Beth.
Bummer.
All right. That's good enough for me. The applause, that's good. We'll talk about the smoke machine.
All right, what do you got for us, Ryan?
Welcome to October, Tony.
October. Nick was telling me about this pre-market.
I taught him HODL the other day.
Okay.
HODL, October. Right. I'm learning so much from my son these days. I'm so proud of him and now you.
Thank you. So what typically happens here, it's very straightforward.
In October?
Yeah. It's kind of quiet during the summer period, and I think that extends quite often into September.
We had a monster rally this summer.
Well, when you look at crypto prices.
Oh, crypto. Oh, never mind. Your world. I got it.
Volatility stays relatively low. At least it does historically.
Yes, you are
When we
right.
look at August, September. September tends to be the one month where it does, at least historically, it underperforms. Yeah. But in October, it goes up. So we'll talk about that in just a second. But to kick off the month here, biggest movers, some of the smaller cap stuff is a little bit more volatile today. XLM up 6%, SUI up 6%, Aave, that's DeFi, up 5%, Chainlink as well, up 5%. And the Solana, which I think a lot of people are familiar with, has retaken 200, up another 5% here to 220. And a lot of these are now getting back into kind of that recovering that bullish trend that they've been in over the last few months. So you can see the monthly performance there. Volatility is still relatively muted, but if you're long crypto, we talked about this the other day, everything tends to move together. You're probably feeling a little bit better here today, but I want to jump over to the next slide and just show you guys what the last 10 years of average monthly returns look like in here. Obviously, past performance is not indicative of the future, but it is fun to look at times. And so you will see, for one reason or the other, September is the point in time in which crypto does underperform.
It lines up with equities because it's that we've been talking about the September seasonality of being like kind of weak end of summer. You kind of get a little bit of volatility coming in. It lines up perfectly with that.
It goes up in October for whatever reason. The one thing I will, in all seriousness, throw out here, right? We're looking at 10 years of data. We've done this on a 5-year slice as well. But when you look at 10 years of data, you absolutely have to consider the fact that you're looking at an asset that at one point was pennies and is now over $100,000, right? So you have these years where it's gone up over 1,000%, well over 1,000%. You have months that are massive in here. That is going to come down over time. The volatility of those returns is going to dampen. You're going to see less in terms of that upside. But that said, it is fun to look at. October tends to be a month in which this outperforms. It doesn't mean that it will or that it always has. But generally speaking, into the fourth quarter of the year, crypto markets have historically done well. We'll see if that continues or not. But to start the month, we have
starting the month nicely.
Yeah.
I mean, Bitcoin up 2.5%. I know you're going to talk some of the other coins, but big move in Ethereum up 4%.
Yeah. So I think, you're in this period of consolidation. I do believe, in my opinion, given my analysis, that you have some time left to this cycle, another 3 to 6 months or so. At one point, you will want to take some profits, certainly if you haven't already. But you're seeing the same thing in equities. You're seeing the same thing in gold. We talked about, that dollar strength over the last couple of weeks as a headwind. Interest rates, if you look at the 2-year yield, rising as a little bit of a headwind. What are you seeing here now? The exact opposite of that. So we're back at where we were, right around FOMC levels on the 2-year. Dollar has given up some of that recent strength there. So I think when you look at the correlations, you trade this short term, those are the couple of signals that I'm looking at. But I think if I had to pick one here between Bitcoin and Ethereum, in terms of where the potential for more upside return is, I'm going to stick with Ethereum at this stage. I think you get back to 5,000. You could go higher. That said, you've got to take some profits at some point, in my opinion. You look at total crypto market cap around $4 trillion. Does it get to 5, 6? Maybe. But you're getting a little rich, and you could probably argue the same thing around gold and some other areas of the market. Doesn't mean that it's over. You make money in the bubbles, obviously, but just don't get caught getting greedy.
I mean, for you, go home or go big or go home crypto traders, you really sound a little...
No.
I think the returns are fun. I mean, it's just the nominal dollar amount, right? Bitcoin's up 2% today. But it's fun to see it back. It was at 108,000, now it's at 117, right? When I look at something like Ethereum, okay, you got
it's gone from under 110 to over 118.
It's also you have to, because there's no options or so you can really only trim and buy into.
Yeah, you have to long and long less, or completely out.
You keep a core and you trade.
You short futures, but wouldn't interested in do that.
Yes. But you got to trade around,
Yeah, I mean, the flow tends to be outside of your large drawdowns. It tends to be one way. It's to the upside, and you have an asset that has a degree of scarcity, right? At least with Bitcoin, there's only 21 million that'll ever be in existence. So that kind of comes into play. And I think you see the same thing in gold at times. You get these squeezes. But they present opportunities to take some profits. And I think, you want to trade around in here, right? Buy it back on the dips, sell some on the rips, rinse and repeat.
Good job out of you, my friend.
Yeah,
very,
awesome.
very nice. Good information.
Good stuff.
What's it called? What's the hot?
Uptober.
Uptober.
Can you write that down next to Huddle? So you got him for next time?
I'm going to do my best. I'm going to take a quick 90-second break. I'm going to go write that down right after this. Well, who comes up next?
Liz and TP.
Liz and TP is right. We'll be
Special
back in 90
guest.
seconds. This is Tasty Live. Good job.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
If you had to swap jobs with somebody else in this office, who would you pick and why?
Oh, if I had to swap jobs, I kind of like the idea. I might go for Tori's job because I really want to be the one responsible for ordering lunch. I think I would love that responsibility.
Maybe somebody on the other side, on the brokerage side, I'd probably swap jobs. I'd probably swap jobs with Clink. Clink has a lot of cool looking tools that he looks at day to day, a lot of that risk management stuff. It's kind of interesting to me. I'd probably be honest.
Oh, I got to go, Scott. I mean, he's only here a couple months. Goes back to Arizona, plays some golf, Tokyo. I mean, that's a great gig. How do I get that one?
Oh, I think Ryan Sullivan's got a great job, man behind the camera. He does a lot of cool stuff all around the office, from videography to written content. So he's the man.
Ryan, would you want Glenn's job?
Absolutely.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin, number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Hello, everybody, and welcome to TP and the LD show. TP, I want to say thank you very, very, very much for filling in last minute. Jenny is totally fine. She's at her daughter's golf meet, but TP is a wealth of knowledge, and we want to say thank you for coming in with, what do I call that shirt? We don't call it Flame Shirt Friday.
It's the lightning shirt.
Lightning bolts.
It's the lightning bolt shirt.
Lightning Bolt Wednesday. I love it.
It's the same person who makes these. So he's got a whole bunch of them, and I have a few of them. But there's the flame shirt, there's the lightning bolt shirt. It's it's a whole thing.
In my mind, those are waterproof, are they?
Well, they're cotton. I mean, they're heavy. They're heavy shirts. So these aren't really summer shirts. They're. I mean, it depends on because I'm always kind of hot, So if it's above like 75, I can't wear these outside because they're a little bit heavy. But it's below 75. If my wife and I go out in the evening, something like that, it's a little bit cooler. These are perfect.
Yeah, they look fantastic. I run hot too. I think all traders run hot.
Thank you. Yeah, it's a little,
I know. I hear you. I hear you. All right. Well, TP, we have you on for today. I know you are our consummate fill-in, and we appreciate everything that you do. But while we're here, we like to absorb your knowledge. TP is the creator. He has created lots of things on this platform. He can dissect. There isn't anything we can't ask him. I said that there's something in Twitter that we can go with because you were here from the beginning. You created 90% of it, meaning you came up with a lot of the things that are on the platform. And all that nature. So we have a jam-packed show today. It is Wednesday. So Jacob, our other resident genius, sends us a 0 DTE SPX study every Wednesday that Jenny and I typically do live from the middle of the SPX pit. But today we're going to walk through that with you. The second thing that we're going to do, I like to set up expectations so we get to everything. You and I are going to break down. You're going to talk to us about interest rates on a box, right?
Yes, of course.
Yes, of course. Which I'm very excited for because I do love that. I have a lot of boxes in my account. And then number 3, we wanted to have a brief discussion about an article that we both read.
Yeah. And that, I sent it to you, I guess, a couple days ago, and it really kind of bugged me. And I wanted to have a discussion with you because we have a different perspective than a lot of people, right? Sure. And we've both been doing this for a while, decades. So I think I would like to hear your thoughts about it. I'll give you my thoughts, and we'll hash it out.
And so we can start with that too, and I'll keep us on. I'll keep an eye and keep us on track. So the article basically stated that the Americans right now have more invested in the stock market than they ever have. Correct?
Yes. So something like 45% of their wealth is in the market, whatever that means.
And they say this is the largest point in history of percentage of Americans and their wealth that is in the market. I don't want to paraphrase, but I did just look at it right before.
It's Americans.
Yes, in history, and they said the last time they'd seen this was before the dot-com bubble.
So this was on CNN a couple of days ago. To give full attribution and credit, you can dig it up or whatever. It's not that big of a deal, and it's not that interesting an article. But I remember. But here's the first thing that jumped up to me, Liz, is I remember 25 plus years ago when Americans' savings, the majority of their savings went into the market, mutual funds, things like that, more than cash. So I remember when that happened, right? So if you had, let's say, $100,000 of liquid assets, 55,000 would be in mutual funds, 45,000 would be in cash. Traditionally, most people held their savings and investments in cash in a bank account.
So traditionally, most are flipped, correct?
Right. So that flipped decades ago. And now we have this, the bulk of people's net lick is in equities in the market. And the premise of the article was that, gee, this is really a bad sign for the market in general and not a great sign for the economy. And the gripe I have with it, Liz, is they gave the impression that only rich people had investments in stocks and things like that. And the way that people who make money in stocks, they fund their lifestyle is by taking the impression that the article gave me anyway, is that people would sell their stocks, close positions, and then go buy Ferraris. Okay. And that was helping prop up the economy. It was those people who were spending money, right? And the other half of Americans live paycheck to paycheck with no savings, no investments. And that the economists stepped in and said, with such a thin support for the market, it surely is going to crash at some point. Maybe not tomorrow, maybe not next week, but at some point. And I just hated the whole premise of the article.
I hated the whole premise of the article too, and I'm glad.
What did you hate about it?
I'm glad that was your take because it does. It seems number one, it's a flimsy argument, but number two, it seems like clickbait, right? So it's kind of like that to me what it was. It's just kind of they're trying to get eyeballs on it for clickbait because you and I both know that's not the case.
So one of the things that and Liz, if you want to talk about, you shouldn't buy here. Okay, don't. In other words, the S&Ps are near their all-time highs. Don't buy here. Liz, can you go into our charts? And I know that we don't often look at charts here.
What would you like me to go to? Hold on.
Just go to the SPX.
Whoops, SPX.
Just for the sake of argument.
And can we jump into the platform, please, so that everybody can see what TP and I are going to look at? There we go.
Let's look at a chart of the SPX.
Okay.
Go and see where it says 20 years. See where it says 1 day.
Yep.
Change that to month.
1 month. Okay, hold on.
Yeah, or it just go for a long period.
So there's 20 years month chart.
Okay, so I remember in 2008 when the market looked like it was an all-time high.
Oh, yeah. Okay?
And then it crashed. And then, oh no, it's over.
You know what's crazy is look at how little the financial crisis looks on this chart.
Yes, exactly. And granted, you and I aren't really big chart people, but what was the approximate price of the S&Ps before the crash was about what, 1,500?
This is the exact date, because on May 1st in 2008, my water broke on the trading floor. Right there, May 1st, 2008, my water broke. My daughter was born a day later. Yes.
So let's hear it for the baby. Let's hear it for the baby.
Yep. Slow clap for Annabelle, but yes, there we go. So yeah, you're right. Here, this is the financial crisis.
So buying at that all-time high and then, oh no, it crashes. It crashes. The S&Ps now are about 4 times what they were.
Uh-huh.
Okay, trading about 6,000. It used to be 15,000 or 1,500. They've gone up about 4x, 400%, and the continuous carry and all that. And of course, we've had some ups and the downs. But the point is, it's just because a handful of stocks, and they don't explain why the big stocks are carrying the S&Ps, because it's market cap weighted. Okay, that's just the math. It's not some it's not like the market's teetering on the edge of collapse here. So this is my bigger point is that it should have been encouraging people who have a small amount of savings to start investing to get exposure to the growth of the U.S. economy. Okay? Don't sit there feeling sorry for yourself. Don't do that. Get involved.
You cannot time the market. That's the only thing I was going to say is no one ever in the history of people can time the market. Ever, period, end of story. You can't time it. No.
Nobody.
So, but just get involved, get invested, right? I think that was kind of it. But you're right. That was that article bothered me. They also, in that same publication, there was an article that I read that infuriated me about how the pattern day trading rule is going away and about how it's going to get more dangerous out there because it's going away.
But Liz, I have a heart condition. I don't know if we want to talk about pattern day trading rules.
I mean, TP, the steam was coming out of my ears as I was reading.
Seriously. Pattern day trading rules, when they introduced them, one of the worst ideas ever. And the other thing too is, you know what, I have a short list. If I were elected president, maybe in 2028.
You have my votes.
Thank you, Liz. Here, one of the things that I would institute is eliminating the pattern day trading rules, but also make your capital losses up to, pick a number, $10,000.
Sure.
Make them or if you have $10,000 of profit, you keep the profit. Those are tax-free. There's no tax. And you put, okay, somebody makes $10 million trading. Okay, maybe you tax that. But your first $10,000, tax-free. Second, any losses, any capital losses, directly come out of your income. In other words, if I make $50,000 a year and I have $5,000 losses, my taxable income is $45,000.
You're fighting this with logic, TP.
I know, it's crazy. That's why. My point is, we need to make things easier for the 50% of people who aren't exposed, don't have financial exposure to the market. Okay, who don't have exposure to the growth of the American economy. This is my big gripe. Don't scare them.
No.
Okay, because people like us, and I don't remember. You might remember, Liz, but maybe you don't. You don't remember. I remember my first trade, but I don't remember being nervous about it. Right? I never felt that, and I'm sure I did at some point when I was first getting in. Maybe I don't remember, but we shouldn't be scaring people.
Do you know what though?
Okay.
I mean, I know you and I go off on tangents, but we both have kids that are of, investing age. And I know your daughter's, starting her career, but you've had her looking at the markets for a long time. So it doesn't scare her now. But the people who, wake up like Rip Van Winkle and they're 30 and the first time they look at it, they're petrified. And that doesn't make any sense.
It's very confusing. The numbers moving up and down. You pull up the S&Ps, we can do this next. You pull up the SPX and you see dozens of expirations. You see hundreds of strikes. What the heck?
Yeah, so if you were going to
What do I do with this?
Yeah, to his point, if you open this up, it does look very intimidating, but it's only intimidating until it's not. It's kind of like you open up a book, and I just did a commercial on this. Millions of people speak Greek. So if the Greeks look confusing to you, but millions of people do speak Greek. If you look at this and open it up and break it down, it's not that hard.
That's why you watch the Liz and Jenny show.
Or the TP
and
the LD.
TP and the LD. Well, that's more of like a 70s police procedural.
I know.
I still like the idea, like a reboot of Starsky and Hutch or something like that.
I hope our creatives are listening. We're gonna need to make some new commercials.
Oh yeah, that'd be cool. We'll get like an old Dodge Charger or something like that.
Yes.
That'd be cool.
Yes, we'll just be driving like this.
All right.
This is a good transition into this. We're in the SPX. We are in the SPX options chain currently. So, do you want to transition from this into the box? So then maybe we can get.
No, let's do Jacob's piece first, because that's kind of important today.
Okay, and I love it because it all kind of translates, because this is also SPX. So Jacob has done, every week we film from the SPX pit. Jacob has done an SPX study. They kind of have been building on one another, which is great. And so TP, I'm sure you know this, but so just act surprised when I tell you the statistic. But we just found out that the SPX 0DTE retail volume has surpassed professional volume. It's 40. It's
unbelievable.
60-40 retail in the 0DTE realm. Isn't that crazy?
Yeah. It's yes and no. It is due in no small part to your efforts, and Liz, I really, really mean that.
And this is why I love having you on the show, TP.
That when you see somebody trading them, right, and explaining the way you and Jen explain it, oh, okay, I'll do 0DTEs. The other point, when Sosnoff and I came up with this idea 20 years ago, 15 years ago, it was we never saw it as an institutional product. It was always, we were to talk to our retail customers at that point, saying they would love this thing. Yeah. Okay, that's what people want. So it took a while, but I am not surprised in the least that the retail volume in those 0DTEs has surpassed the institutional volume. I'm not surprised at all. Good.
I know.
Let's hear it for us. Let's hear it for the retail traders.
TP, I think your efforts here have done a great job. So let's jump in. So this is a market measure sponsored by the SIBO. Every Wednesday we do it. This is Jacob. What would we call
Jacob Perlman. Jacob Perlman is we first met Jacob back in like 2015, 2014, when he was a friend of a friend. He was getting his PhD in math from the University of Chicago or something like that. And we needed a math genius to help us with some calculations. We actually did. I don't know if you remember this. We did a game show.
Sneak and the Geek.
We did Sneak and the Geek, and I forgot the name. Thanks, Liz.
Oh my God, TB, do you
Sneak
remember,
and the
like-
Geek, and we had Sneak.
He'd be turned to the back, and then if you had to call the geek, he would turn his chair.
That's right. And Jacob would explain the math theory behind what we were talking about. It was a great. It was a lot of fun to do. Anyway, Jacob Perlman is he's an honest to God mathematician. Okay. There aren't many out there. There are people who are good at math. Like, I'm pretty good at math, and I understand what Jacob does, but he's an actual mathematician. He can come up with new math theories and things like that. So he does a lot of this, a little bit more deep dive into these strategies.
And I actually love that he's been focusing. I mean, I know he did different pieces with, the Tasty Live show, but for us, he's specifically focusing on zero DTEs because that's kind of what our viewers want. I know my son looks at it. I know kids that age look at it. So it's been great for us. Okay, but here we go. Streaks with zero DTE options. Okay. So I'll read, you're going to explain. Deal?
Okay.
Okay. So streaks with zero DTE options, 0 days till expiration trades have surged in popularity due to their potential for high returns within a remarkably short time frame. The sheer frequency of zero DTE opportunities allows traders to accumulate numerous trades swiftly. Consequently, traditional per-trade statistics, such as win-loss ratios or average returns, may fall short in capturing the intricacies of zero DTE trading, as they often overlook the significant impacts of consecutive winning or losing streaks. Today, let's explore the realities of these streaks and examine how our management decisions can influence our trading outcomes. That's pretty that's easy. Okay, so this is the study. And Jacob, the study is the same every week. This is 2.5 years of data collected. And it's collected every 10 minutes. And they do it, so he's also honed a lot of this over the past studies. It's always done every day, 9 a.m. our time, give or take 5 minutes, okay? And so then this one is, he's collected the results into streaks of winners and losers and then analyzed, and this is where you're gonna come in, these streaks by the duration and the magnitudes of wins or losses. So we're gonna look at both of those. Now, TP, the other thing that is springboarding off things that he's already done, he's using contrasted 10% of max profit or 25% of max profit. And I believe he's using iron flies, if I'm understanding this correctly.
Yes.
Yes, they're $10 wide iron flies at either 10% max profit or 25% of max profit. Did I read that somewhere? Yeah. Or did I make that up?
No, I know that's what he's doing because it's.
Oh yeah, here we go. The daily results, $10 wide iron flies at 9 a.m. So he's doing $10 wide iron flies, which is selling the at the money straddle and $10 wide this way. And then closing them 10% of max profit or 25. So a lot of this stuff is springboarded. There's a reason why it's $10 wide iron flies. There's a reason why it's 10% profit and 25% profit. But what he's going to go into now is the duration of the streaks and the magnitudes. Okay?
Mm-hmm.
Okay. TP, hit me with it.
Yikes. Okay.
This is 10% max profit. So I'll just go to the next one. We're going to compare 10% versus 25%.
Right. So on the left, where you have it's kind of a histogram, right? And you see these red and green bars. What they mean are the number of times, the number of winning trades that lasted, in other words, the streaks. In other words, a streak is I have a winning trade on Wednesday and then I have a winning trade on Thursday. That's a streak of 2 days. If I have a winning trade on Wednesday and a losing trade on Thursday, I had a winning streak of 1 day. Okay. So on the bottom, you see run length days. So you have 1 day, 2 days, 3 days, 4 days.
Okay.
The number, the big red bar on the far left looks pretty scary. Right?
Yeah.
That's a losing trade on that 10% iron con. Doesn't say that you lost the full amount, but it just says it was a losing trade. But the losing streak only lasted 1 day. In other words, the majority of the losers didn't happen. You didn't have loser, 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 loser. You didn't have Monday loser, Tuesday loser, Wednesday loser, Thursday loser. Okay? Couple of times you did. Liz, if you look at like the 5 day, so in other words, it goes in the bottom, you go 0, 2, 4, 6. If you look at that one, that would have been, there was like 1, series where you lost 5 times in a row. Monday was a loser, Tuesday was a loser, Wednesday loser, Thursday loser, Friday loser on these 10% max profit flies.
Yeah.
But it only happened once in 2.5 years.
And so you can see the average up here too, right? The mean is 3.4 days of winning streaks and only 1.58 of losing streaks.
Right. So the point is that most of the time when you have a losing trade, you have a winner the next day. Yes, of course. You can have 2 days where it's loser, loser, Tuesday loser, Wednesday loser, Wednesday, or 2 days. But those don't last very long. There's an even rarer case where you have 3-day losers in a row. Okay.
This chart seemed a little bit more self-explanatory. This is the one where I got caught in the weeds. What does this mean?
That's where it's the P&L. Okay. So in other words, when you had a winning run, what was the P&L?
Oh, okay. So he's springboarding off that. So if your links were, now I get it. Okay.
So if you had, let's say, 5 losing trades in a row, what was the big loser? Like 20, the average losing trades when you had a run of losers is 222.
Okay.
The run of winning trades had on average 502.
Okay.
Okay. So yes, you will have loser, loser, loser. Okay. But you have more times winner, winner, winner.
And keep in mind, this is closed at 25% max profit, meaning
Well, this is 10%. What we're looking at is 10%.
So if you're selling
5% is kind of the same.
So 9 o'clock TP, 9 o'clock when you put it on, you're usually going to be getting between $750 and $800 on a $10 website fly. So just because we've been doing this, you're getting about $750 to $800. So on average, so if I'm taking 10%, it's going to be $75 to $80. But with when he's done this before, when he nets out the winners and the losers, when he nets it out, meaning like he takes all the winners and all the losers, it's going to be an average P&L of around $55 just for a 10%. And that makes sense, right?
It kind of makes sense with the numbers you're seeing here. So in other words, it doesn't mean you're making $502 on a single trade. Like you said, Liz, you're going to make about $75.80.
Yes.
But the runs, you on average, the winning runs netted you $500 of profits.
Yeah.
Versus the losing runs that average 222.
That's pretty interesting. This is a pretty good chart then.
Yeah, that's why the strategy works over time. I had some big losers last week when boom, the market was swinging around. I put the trade on today. It's down a little bit. It's not catastrophic, but it's down some money. But you know what? I'm going to do it again tomorrow.
Right, because I don't think you can take. That's what I like about these, and we've talked about this on the show at nauseum with our kids. I have JD doing this, and I don't have him taking a day off. I go, I don't care if you lose. I'd rather you lose when you don't have a big account. Just you need to see the consistency in this.
Right. Yeah. And yesterday, when the whole government shutdown thing, I thought we were going to have much bigger moves than we did, but the S&Ps went down a little bit. I think it was still a winning trade. I'd have to go back because
We ended up on the day.
Yeah, the S&Ps just ticked up. What I want to emphasize to people, and you may have the same thing, Liz, if you actually downloaded my SPX butterfly trades, if you could sort those out, they would show exactly this.
Yes, as long as you're consistent with it, because I think that's where the kind of the wheels fall off. Because what Jacob is doing is he's taking, keeping this in mind, this is 2.5 years of data doing it every single day. So you can't say, oh, I'm going to do it today and not do it tomorrow, because you can't time the market. You don't know if it's going to be a losing day or a winning day.
No.
Okay,
No.
let's go to 25, because now we're going to compare these two, because this is 10%. The next visual you're going to see is the same trade closed at 25% of max profit.
And it's kind of the same. The left hand's a little bit different. In other words, there's fewer there's fewer 2-day winning runs.
Yes.
It's still, again, fewer 4-day. It's just you don't get as many winning runs when you let the trade go that far. Here's the thing with those iron flies. It takes about 2 hours, and I would be interested if Jacob could look at the distribution of time. In other words, how many minutes did it take to take this off?
Yes, that's what we're looking for. I love it. Okay.
Yeah. So in other words, because my own experience, I take them off between 11 a.m. and 12.
Yeah, or just afternoon, depending if it's a slow moving day. Then it's but usually before 1. How about that?
And that's 10%.
Yeah.
To collect 25%, I'm getting a lot closer to 3 p.m.
Right.
Okay. They do not suck the value out of these irons until well into the afternoon. So if I'm holding on to that iron butterfly to make 25%, I'm exposing myself to more risk. In other words, that's why I have a few more losing trades on that. Okay. And the 2-day streaks, a little bit more frequent. 2-day winning streaks, less frequent.
Yes, and you can notice too the distribution of the magnitudes. That green bars that the green seems to be more robust in the losing runs.
Yes. So the point is then, if you look on the right hand side, the winning runs and the losing runs, again, it's a winning strategy because you make enough on that 25%. On average, $585 when you have winning streaks. The losing streaks cost you about $298. Yes, you're going to have some, Wednesday losing trade, Thursday losing trade, Friday losing trade. But the 25% profits, if you can hang on for that, will offset the losses there.
Yeah, that's pretty
Makes sense.
That makes perfect sense, and I'm glad I'm glad you helped me with the run of magnitudes, because when I looked at that, I really didn't know what he was saying there, and now that makes sense. Okay, now let's go to the trades unmanaged. This
hold it to expiration.
Yes, this is held till expiration, and look at the red.
So what you have are long streaks of losers. So you can have 10 if you go down and you see 10 on the left-hand side. What that means is, for 2 weeks, you had loser all the way. Every day for 2 weeks was a losing trade, holding it through. Okay, holding it through.
So TP, you and I have been doing this for a long time, right? We have. So, I mean, just trading for a long time. But you and I both know that a $10 wide iron fly in SPX is a very low probability trade. So why would you hold it till expiration? The chances of SPX staying within that tight of a range throughout the whole day is very low. It's a low pop trade.
Yes, and maybe the next time we do a show, because I don't think we have time to do it, but we talk about iron flies and selling options here. Synthetically, this is a long butterfly. It's a long haul butterfly.
It's a long haul butterfly.
Butterflies,
however you want to do it, but yes.
Right. Butterflies are like roulette tables. In other words, the ball's rolling around and there's going to be a winning number somewhere on the roulette wheel, right?
Yeah.
And the winning butterfly in the SPX with a $6,600 product that moves around $10 at a clip, which strike is the SPX going to land on, making that the winning butterfly? You don't know, right? That's why
Yeah.
That's why they're low probability trade, right? Because I don't know which is going to be the winning butterfly. And if I just let this go to expiration, there are way more losers than winners. This is not a set it and forget it strategy.
No,
it's set it, and I shouldn't say that. It's set it, forget it in the sense that you put the closing trade in. In other words, I sell it at $8 and I put the order in to buy it back for $7.20 immediately.
Correct.
Right? 10% winner. And I let that go. But the point is, you don't want to necessarily let this go through expiration. And this is, yes.
If you have your GTC in and it go, so I mean, I'm guilty as charged, TP. I do let it go through expiration. If my GTC doesn't hit, I don't even think about these. I put it in, I walk away. I do check at the end of the day to see if I'm, getting exercised and assigned, but there is no, I don't come in, I don't have the stock, I don't have anything like that. That's why I like the 0 DTE SPX, because you can put them in, put your order in. The risk in it is very little, 200-ish total. And then you can just come in and see what happened. That's what's kind of nice about it.
So, and I want to make sure that I'm clear about this, and thank you for bringing that up, because you either, for the strategies that we do here, for this particular one, it's you either take a 10% profit or you let it go and hit max loss or whatever happens to it, right?
Which might not be max loss. So I figured this out with there. When you look at somebody had called us on this, and I just want to be clear because I did get emails on this. When Jacob was doing the numbers, she's like, it doesn't make sense. Not when it added up with the percentages, not everyone goes to max loss. It's just not close to 10%. So it could close and you could be down $5.
Right. And it still qualifies as a losing trade.
Correct.
Right. So if you go, and you don't have to do this, but when you look at the run lengths on the left-hand side, it doesn't tell me how big those losers are.
No.
It just says it was a loser. And like you just said, Liz, I might have a max risk of $200, but I only lose about $60 on the trade.
Yeah. You know what else though, TP? If it doesn't hit 10%, I don't know if that goes in the win. You might win 5. It might be a 5% winner. Does that go in the win column or the lose column? Because it wasn't.
That's exactly right. Well, that goes as a winning trade. So in other words, it didn't lose money, but that's exactly right. So we try to give you simple rules to follow, because that's what trading is. You try to boil it down, and here's what you do. What we're doing today is drilling down into some of the details and saying, okay, when you start trading, you may see things, but there's no mystery. You may see a P&L that looks a little bit different. The loss might not be as big. The profit might not be as big. We're drilling down and explaining why it happens. There's no mystery to it. There's no mystery to it.
Good. I agree. Okay, let's go to takeaways. And then we have completed the SPX 0 DTE. So takeaways. By closing winners soon after they reach 10% of max profit, consecutive losers were largely avoided, while long runs of winners made for good profits. Unmanaged iron flies had the opposite results. This is exactly what TP was saying. Rarely having more than one win in a row and net being down a great deal. Okay, 25% profit target resulted in similar distribution for the lengths of the winning and losing runs, but with win streaks being more profitable than loss streaks were costly, given overall positive results. Okay, so they can do 25%, but 10% is preferred. Whether considered trade by trade or taking a longer view, the more we analyze 0 DTE option selling, the more ways we find to appreciate rapid profit taking.
Right.
Pretty good, right?
So if we can go into the platform.
Oh, we can do anything you want to, TP. No one.
Well, I don't know about that. I don't want to, I remember we did a donut eating contest last year. We could do that again.
We could do that again.
I love donuts. So if we open up the SPX right now, you
want to do 0 DTE?
You don't do it at 10:30. Okay.
No.
You do this at 9 a.m. But the iron fly is just, let's say, selling the at the money, selling the 90 call, the 90 put, and then buying the put that's 10% or $10 lower. So 990 minus 10, or 6690 minus 10 is 6680. 6690 plus 10 is 6700. That's it. Okay. And Liz, just like you said, you're collecting about a 780, 775 credit for this trade.
You'll get more at 9 o'clock, but it's so funny, TP, because this is how I taught my son. I go, sell the one that you see the line, you sell the one that's the most expensive, skip a strike, buy something, skip a strike, buy something. That's all I taught him. I was told there'd be no math today for him, so he didn't even have to do the math on it. But yeah.
So while we're in here, Liz, if you leave this on, if you just leave that on, okay, I want to throw a curveball to your son.
Okay.
Okay. So what I want to talk about is, and I wanted to, with interest rates particularly moving around, what I wanted to talk about, and this is something I learned when I first started, Okay. Because back in the days before we had computers and all this calculated, we kept options in line with these basic arbitrage trades. And one of the big ones was the box. Okay. So to create a box, Liz, all you have to do, if you
Want me to clear this out?
leave that on because I want people to see it's the same structure.
Okay.
Okay.
So I want to stay in the 0 to T because there's no real interest with 0 to T's.
But we can push that out to all right. Well, we can push the expirations out to do this.
Okay.
So what I want to do first is change the strikes. So go down, take that 6680 and drag it down to, let's say 6600.
You got it. I'm just going to delete.
Okay. Drag it down to 6600.
Okay, 6600.
And
Do you
buy.
want me to make it symmetrical? Do you want me to make the butterfly?
Yeah, then make the 6700, make that 6800.
So here, I'm going to go 6800 and I'm buying this one, but I'm just going to move these so everything's symmetrical.
Right. And then you move those down. So in other words, now you move that short put all the way up to 6800. Turn it from 6700 to 6800. Drag that.
Oh, you're making me do it this way. I get what you're doing. I'm picking up what you're putting down now. Hold on.
Because I want people to see, and then you drag that call all the way down to 6600.
You've got, and I'm going to use different words than you're probably doing. It's combo, right?
Yes.
You're long one combo, short another.
So this is a 200-point box. Now, Liz, let's extend the expiration and push it out to December.
Okay, so watch what I can do here. This is what I love about our platform. I'm just keeping the same strike. So we've got a 200-point wide box, and I'm going to go to December. So let's look in that little corner where it says October 1st. We're going to go to December, but
look how easy it is to do.
And the strikes are staying the same. Oh, I'll go December 31st.
That's okay. All right, so D's 31. D's 31. So here's what this is. A box is selling a deep in the money put spread and a deep in the money call spread. Okay. Look at the delta of this. Does this have any delta, Liz?
Zero
No.
delta there, TP. Zero
delta. And if you wanted, you can click on the analysis and you'll see that it doesn't really have a P&L. It just kind of is a flat line. Okay. It doesn't move very much because at expiration, this trade will be worth $200.
Okay, and let's kind of talk to how you know that. So here's what I want to show you. So if I am getting a credit of $197.85, but it's $200 wide. So I know and you know that it should be 200.
Yep.
I should be paying 200. So I'm getting something here for this.
So what this is because it's going to be worth $200 in 91 days, whatever the S&Ps do, you discount that value to the current date. So when I see it's $197.85, if I sold that box, I would lose $215 on that trade. Okay, it would go from $197.85 to $200. That's $215. If I take my calculator and I do this, 215 divided by 197.85.
There you go.
You can watch this. You can replay this. 197.5 is equal to 1.08, right, percent. Okay, times 4 because it's basically a quarter
of the year.
So I'm getting that's about 435%.
Ah, very good.
All right. So this is how you can flip this around. In other words, do a swap here, Liz. Do a swap.
Equal to, this is what I was going to say though. This is equal to, and they should be equal, TP. I mean, I don't know that there's a gaming of the system, but this is going to be close to what the interest rate is. The risk.
Yes. That's exactly it. That is exactly it.
So I don't know if there's in my small brain, it's hard to find an arbitrage opportunity because it does kind of follow along those interest rate patterns. Now you might get filled. So I will tell you, I've done these with Tony from Mexico, where he'll play with them, where he's trying to get a better interest rate than what's out there. And sometimes because the SPX markets are wide, you can get filled.
So this is what you can do. And I'm not saying you should do this, but if you buy a lot of stocks and you're paying broker call, selling an SPX box to generate a lot of cash in your account is a way to reduce your negative cash balance.
Yes.
If you have cash on hand, Liz, if you swap this, don't confirm and send, swap this. In other words, hit the swap button.
Okay, you ready?
Now you're buying it. Okay. Now I'm earning that 4%.
Yes.
If you have cash and you're not getting it from your CD anymore, you don't want to deal with T-bills and things like that. You could buy an SPX box, hold it for 91 days and make about 4 point whatever percent.
So I just want to show I'm going to hit swap again. When you swap it, because you should be, so to TP's point here, if your buying power effect is, I'm in a regular margin account here. It's different for a portfolio margin board. Not even going to talk about that. That's a story for another day. But so if you're doing this and you're in a regular margin account and your buying power effect is 220, that means you're paying the interest. If you swap it and your buying power effect is underneath $20,000, you're getting that interest.
You're
collecting the interest.
You are collecting the interest. You're buying the bond.
Yes.
Okay.
So I'm going to show this on the analysis page. So I want to show both sides. So here, because that's the fair thing to do. Here, you, I don't know why it's got a loss up there. It shouldn't.
Because
I have other SPX positions in TP.
Because you got
No, we have other SPX positions in. That's exactly what's happening. So
it's a little hard to do.
Let me take these off. Hold on.
Unchecking things.
Yeah, there we go. So I had other SPX positions in, and that's exactly why it looks like that. There is no scenario here where you don't make $220. I know that with the box. You know that with the box. That was just very concerning to me because we had some other different positions in. So
why do I want to bring this up to people? First of all, I like to pull the curtain back on how the option prices work. And back in the old days, this is how you'd keep things in line. Now, I wouldn't necessarily look at 200-point SPX boxes. And if you want to get cute with this, you start looking at futures boxes, like the bond boxes and stuff that I used to do, and the tail risk and the futures margin variation. But it's all the same idea. It is an interest rate trade. It's not a delta trade. So, if you are looking to borrow, or if you have cash and you're saying, what kind of interest can I get? Maybe you can look at a box. Yes, you pay commissions. And here's the difference, Liz. This is a P&L, not an interest. So
if taxed differently.
It's a P&L. It's not taxed like, in other words, I don't want to tell people what their tax things are. I'm not a tax expert. But this is seen as P&L against your account. It's not like you're earning interest on a T-bill.
So let me ask you this, only because there's lots of things out there that I know Tasty uses. Like you can use BIL or which is essentially, creating the T-bill, or you can go out and actually just buy a T-bill in Tasty. You got to call them. They'll let you to have a T-bill in your account. But I think this is another building block for people to understand where all that stuff is coming from. I've got a question for you, and you can say you don't know because I think this is a newer thing. I'll keep this up to the SPX, and I can go back to that box pretty quickly. But what about this product, BOXX?
Sure.
So this is, I'm going to go to the chart. This is this is traders doing the box for you and rolling it.
Yeah. Yes. Why is it? It's the P&L of buying the box.
Yes.
And because you're buying it at a discount, and you are always, in other words, and I typically look at $100 boxes to make the math a little bit easier, but $200 boxes.
I like round numbers with boxes, TP.
Right. But you just drag it down, make 200, whatever. You see the exact same thing. If you're buying it for less than than the difference between the strikes, you're earning interest, and that's what that BOXX, that box P&L is. You're making a little bit of money every single month.
Yeah.
Now, it's not a great return.
No,
Okay.
it's interest rates. It's basically what the interest rates are.
Correct. And so but it might be bigger than your CD. And to somebody who is, I'm a little nervous about trading. I'm happy with my CDs. Maybe this is the way to think about it. Yes, it is. I don't think this is particularly complex, but I understand it might be a conceptual leap for some people. I get that. But that's why I like to talk about it on the show, to
I think
introduce it.
But I think our viewers I think our viewers particularly are pretty smart, and I don't think it's that much of a leap for them to synthetically understand this. You're doing two combos. You're buying one and selling the other. So if you're buying stock and selling stock, you get to keep the interest between the two.
Right. The other way to think about it, it's just switching the verticals of an iron fly.
It is pretty
iron condor. It's all verticals. And as you go out, if this makes sense to you, and it probably, like Liz said, it probably does, as you go out and talk to your friends and family and think, hey, you know what? If you're not trading, if you're not involved in the market, and I understand it's scary, and you read these articles and it spooks you, if you're not getting the interest that you used to be earning on your CDs.
Yeah. Go out and look
I don't know. I don't know. And yes, you pay commissions on this. And it is a P&L, not an interest rate. So go ahead.
Is that better to be a P&L, not an interest rate? I'm actually asking because I don't know.
I don't. It depends on who you are.
Okay.
It depends on who you are. And granted, I don't do these really. Okay. I used to trading on the floor mainly and they were much tighter because I would want to get my deltas to zero. So I knew what the way a floor trader would think about this is, okay, I have this vertical. It has deltas. I bought somebody sold this call vertical. I bought the call vertical. It has positive deltas. I don't want those positive deltas. I would like to close it out. But nobody's trading that call spread. But somebody's coming in and selling the put spread. I can buy the put spread, box myself off, and the price I will pay for that put spread will give me a profitable interest rate on the box.
Yeah.
You see, so that's the way a market maker has to think.
You legged into it. You had to use you're almost like playing a game of Tetris, right? Where it's kind of you have to figure out how to layer into this box.
So I wasn't saying, today I'm going to trade boxes. That's not the way it works. It's just all this stuff coming in. And I have to buy things and sell things, and I've got this piece, that piece, and I have deltas that I want to reduce or whatever. I would box things off.
Yeah, I mean, that's how old traders used to do it.
Yeah.
I just want to do something real quick. Hold on.
All right. So
hold on. I just moved up the spread. I got to go to curve analysis. Yeah, take a look at this. I mean, I've played with boxes so much, TP, that it's kind of fun. Okay, so I just moved it. You can actually move it up so you will make money to the downside. You can actually play with the strikes a wee little bit when you're doing these things. If you're going to manipulate them instead of being there, where you can make your profit different in different areas.
Yeah, if you want to have a teeny tiny amount of delta, because you went from 0 delta to 1.36. Okay, that's basically that's nothing. All right. What I like to show people, especially your viewers, Liz, is because you do have people that have followed you for years, and they're a little bit, they're more experienced. I like to show them things that are a little bit different, to pull the curtain back, to show them why option prices are the way they are. And just like you said, it's like a game of Tetris, and where the relationship between option prices and the SPX in 1 month are governed. Here's the way to think about it. The call to the put at the same strike is the combo. That combo is the ARB.
Yeah.
Cross strikes, it's the box. Okay? Yeah. The box keeps it in line.
But it doesn't.
Cross expirations, it's the rolls.
The roll, yes.
Okay?
When you see a lot of
It's-
roles on the floor, so TP,
Yes.
The one thing I will tell you is being in the SPX pit, it's kind of back to basics a little bit, because when there is the more institutional trading, it's a lot of roles. There's a lot of roles going on, and there
Yeah.
you'll see them. End of month, they're constantly rolling positions, and that just brings me back to being there, watching the rolls. But that's not something that us retail traders typically do, because it's kind of big. But you could do it.
But we don't need to do it, especially if you do the whole 21 DTE things like that. But the other thing to emphasize too is the prices for the boxes, the rolls are very specific numbers. It's not something people, I don't know, 10. No. Okay. it's 10.75, and I'm not budging. Okay, the market makers know this. You're not gonna pull get one across the market makers. Okay, they know what this stuff is worth, and so they'll say, "What's the 3-month roll? 20 cents over, or whatever it is." Right, and they can spit that out, and they know exactly what the number is.
Yes, they do.
Okay, they know what the boxes are. But back when I used to have sheets, it would give me the 1 point or the 10 point bond box.
But you know what though? It's their job to know that. It's not our job to know that right now.
We don't need to do that. Our job is to go find opportunity.
Yes, correct.
Right.
Okay, TP, while I've got you, and I just glanced at
Yes,
the time,
ma'am.
I have a couple administrative things to do real quick, just for the viewers. Okay, activity, I did this today. We put these trades on yesterday. Nike, we had an earnings trade. We took off for 2 cents. We just sold a put. mRNA, we took it up. We put it on yesterday, sold the put for like $1.06, and I bought it back for 49% today, just because it was 49%.
Nice.
That's
Nice.
it. That's administrative stuff. But I also wanted to tell you too, I want to go jump into Twitter and I'm going to go top down. But what I love about this TP is that you were talking about how our viewers are so smart. Oh my God. You are
The
so
fourth quarter are coming through. Nice. Oh, and I like the little ruffle.
Okay.
If he could add, that's not a Charger. That looks like an old. Is it a Dodge Charger?
I don't know what that is, but I like it. Okay, but I was just about to say our viewers are so smart that they can handle that and they can rise up to learn what a box was. They don't need to know what it is, but they're probably smart enough too. But I was about to say we learn from them as well, but I did not expect this picture to pop up because I was going to show you Jack Tucker, because I mean he's taking things that he learns, and he is I did not meet him, but he came to a couple of events. He is a full-time employee. He takes care of lots of different people around him. So he's a caregiver as well. And he's constantly trading. And I love it. So we learn from him as well as him learning from us, because he's got a high level. And when you can talk to somebody that's at a high level, and when you trust the team you're on, your trading only gets better and better and better.
Yeah.
Everybody can learn from him.
Yes.
Yeah. I was about to give that speech and then I popped into this photo. So I'm going to
That's funny. That's awesome. I got to tell you, we've been building retail platforms for 25 years. I thought I was a genius. When I left the floor and was running a little hedge fund, I thought I knew everything. I thought I was a genius. Okay. I was managing my own money. I was doing pretty well.
CP, you are actually kind of on genius level IQ.
No.
I was just FYI.
No, not at all. When I started talking to retail traded customers, I realized all the things I'd never thought about. Okay. Because when you talk to 50,000 people, they have all sorts of questions. And there are people who do really tough things. They're caregivers, they're pilot, they're doctor, they're construction workers, they're business owners. They do all sorts of stuff, and they have different perspectives and they have different questions, things that I never thought of before.
Yeah.
I steal all those ideas. Okay. The one thing, Liz, and we've talked about this before, the traders that don't survive are the ones who who trade for like a month, have some profits, and think they have it all figured out.
Oh, I got this. The people who say I got this are the ones
I got this. Okay. It's when trading is always learning. That's why Liz, and I know I don't like to get into the weeds of this stuff necessarily, but all this discussion, everything, just like that article we talked about, everything is taking on a political element these days, and it's getting and I love politics. I love talking about it. I love the game of it, because I grew up in watching all this stuff. It's fun. But right now, I think people should identify as traders. First thing.
I think
Who are you? Liz, what are you? I'm a trader.
Yes. I mean, I think I've told you this story before, but when I was at the Genius Bar at the Apple Store, you've heard this, right? I was at the Genius Bar, and the guy asked me what I did for a living, and I said I was a trader. And he leaned in and he goes, I don't think you're supposed to say that out loud. And I said, I'm an options trader, not a trader to my country. Like, he thought I said, like, I'm a traitor, not a trader. So I need to enunciate.
Because anybody can do it. And the markets treat everybody the same. And when I press that sell button, I don't know who's on the other side of it.
And it doesn't matter, TP, and I'm glad you brought that up. Like, you talking to the customers and, crowdsourcing, the best ideas. Trading is not a zero-sum game. You can make money. I can make money. We could put the same trades on, and we actually can make money at the same time. You can take the opposite of me, and we can still make money.
That's what most people don't understand. People who don't trade, people who are not engaged in the market do not understand. It doesn't make sense. If you're a winner, I have to be a loser, and vice versa.
It's not. That's not true. No, it's not true. It is
so to the point of all that what I wanted to talk about today is that there's so many things you can do with options. There's nuances with strategy. There's nuances with pricing, things like that. You take trades off. You're doing trades in Myrna or in Nike or in whatever. Okay. That there's always an opportunity to trade. That's why it's like, yes, I love talking about the SPX and doing studies in SPY because they're liquid and easy to understand. But I have trades on dozens and dozens of underlyings. There's always something to trade. Don't ever say, well, gee, the VIX is, 16. It's too low. I can't find anything to trade. That's bull. There's always something to trade.
Always.
I'm sorry.
There's always something to trade. I agree.
Yeah. If you if you can go to the platform again really quickly, here's what I do when I'm stuck. Go to the watch list, the thing there, and any watch list, and sort by IV rank.
Hi.
Bing.
Yeah.
GDXJ. I don't know what it is, but it's got a 56% IV rank. Baidu, 52%. Snap, 49%. I'm not saying I'm going to trade these things necessarily, but don't tell me there isn't premium to sell somewhere out there.
Well, and what I would like to just to jump on your point too, TP, is when you do this, when you go to the Tasty Default, this is what's hot right now. You've got a lot of the gold miners and you got some Japanese stocks, okay? So that's what you got. But in a week, this will switch and it might be your metas and your semis or something that are up on the top. And there is always something.
Yes. So instead of pulling your hair up because your side is winning or losing, go to the trading platform and look for a way to pull a couple of bucks out of the market. Maybe it's a winner, maybe it's a loser. But you have to keep going back to it, whether you're trading iron butterflies in the SPX or trading strangles in Baidu or iron condors in Snap. I don't know. You got to keep doing it. And it focuses you on different things.
It does. It focuses you on different things.
Trading is going to save the country. I believe that, Liz.
I agree. TP for president. You've got my vote. You heard it here first. Because we are out of time. It is 11 o'clock, TP. This is the fastest hour of my day, done and dusted. And I want to say thank you very much for joining me. It's been a real joy.
Love doing the shows with you guys.
We have to kick Jenny out, and we're going to need to make those commercials of us slinging guns and driving in old cars. All right. TP, thank you so much. Everybody out there, remember to trade small, trade often. Laugh with us, learn with us. Watch TP and the LD. See you tomorrow, everybody.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
started trading around 2018, soon as I got out of college. Stumbled upon a couple of different YouTube videos and learned that way. Truth or Skepticism with Dylan Radigan was actually kind of what really caught me in the early stages, because Dylan was sort of the skeptic, and like I was a skeptic as well. And Tom was able to sort of convince him, and that was kind of my favorite show from the beginning. The fundamental principle that present fear of future uncertainty is fundamentally overpriced. In other words, volatility and selling volatility is the key to getting a statistical advantage in financial markets, is the biggest takeaway. And that's kind of just the overarching principle I follow.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
What's up, everyone? Welcome back to the show. This is Options Trading Concepts Live. My name is Mike. I'm here with Jamal and the one and only Glenn Freiberger from the Tasty FX team. Glenn and Jamal, how you doing today?
Pretty good.
Government's taking a break?
I tried to pull that card this morning.
Yeah.
I'll be a little late today. Government's not working. No one really cares here about it.
I mean, it's a good time to try it.
I canceled a meeting today.
Oh, yeah.
I said, we just don't have the funds for that anymore.
Yeah.
Don't have the resources.
Yeah. Government's shut down. I'm shutting down.
Yeah.
Type thing.
Hey, Cubs won yesterday. Cubs won
did.
their playoff game. That was exciting.
Yeah,
it was kind of fun
big.
to watch. It's huge. I went to a preseason Hawks game last night.
Oh, you did?
Really?
I was
Yeah.
about to go to that, and then I was.
Were you?
It's like $30 for 100 level or 200 level.
Yeah. I got the hookup. A buddy of mine works for the Hawks, so he just like gave like some of us, a bunch of us who work out together, like so 4 of us like went. It was cool. I mean, the diehards were there last night for sure.
yeah.
I mean, if you're at a preseason game where Bedard actually was playing.
Oh, nice.
But most of the other dudes, I don't know.
What's your call for the season?
Better.
What are you? Well, I was about to say, what are you trying to do to me here, Glenn? I mean, come on.
Well, it's funny.
you setting me up for failure?
I don't know. How do they look? They're flying.
Well, I'll tell you what. The goalie, you could tell he didn't have much confidence. And it was funny because I'm looking at the two of them. And I was telling my buddy, I was like, look at our goalie. There's something about it, the way he's standing. And the guy down there, he was just like, he was ready. Our goalie was like.
One with the pads.
He looked so scared. He gave up a goal within like the first 3 minutes.
Yeah.
He gave up 2 in the first period.
I saw that. I opened the app. I was like, okay, maybe it's better I didn't go to this game.
Yeah,
But
we ended up. We actually didn't even stay in this. We were in the seats for like the first 2 periods, and then we spent the third period, maybe most of the second, kind of in the FanDuel thing, and we were watching. We were watching the Yankees game as well, which ended up being pretty good. The Yankees
That was pretty good.
Yeah.
At the end
Good
there?
sports night. It was.
But yeah, playoff baseball's sick.
Living up to
And but yeah, the Hawks are absolutely a destination team in the hockey world. Like players want to come to Chicago because of the legacy that we set. So
I haven't
any
seen
goalies out there.
I haven't seen the opening thing in a while.
Oh yeah,
and it's different since the last time I noticed it. It's pretty dope. Like it's just dope. Like the way they do the whole thing in the beginning and just about the Blackhawks Nation, and then it's like this, and then just the whole going back through the history. It was awesome.
Do they do the stitching of the logo?
Yeah,
Okay.
yeah. It's pretty sweet.
But yeah, Cubs play again in like 3 hours. Let's see if we can go 2-0. That'd be sick. Basically, I'm not gonna say it, but
unless you're
go 2-0.
unless you're a Thursday ticket holder, then
who's pitching tonight?
It's a there's an opener and then a planned reliever, but Yamanga. He's relieving. There's a random opener for the first
Kittredge, right?
Yeah, for the first inning or two, and then swapping it out. But
Oh my God, Dan's on
it's
here
gonna be a
talking
tough one
about
'cause
all
we
his Boston love. Oh gosh, we have to.
But yeah, Dylan Cease pitching on the other side. He used to be much better than he is now. He can still throw, but I think he's got some leaks that we can exploit. So we'll see.
All right.
We'll just start with we should have the whole crowd shout out his old address in Chicago or something. I don't know what, you know what I mean? Like something.
Something crazy. Mess with his head. E-minis up 7, NASDAQ up 44, Bitcoin ripping to the moon, up 3,200, getting closer to that 120K mark. Ethereum following suit as well. Both of those are up almost over 3%. Ethereum's actually leading the charge, up 4%. Some other futures products that are moving, not much, actually. When you look at the futures CME watch list, you can see there's a handful that are over 1%. Anything within 1%, I don't really pay attention to. Not much to the downside. Corn and wheat down 1%. Not too crazy of a move, but you've got Natty Gas continuing its charge. Silver up. That was a great trade from yesterday.
Thanks for reminding me how I didn't get in. I never got in.
You didn't get filled.
I never got filled. I never got filled. I looked. That was the first thing I noticed this morning. I'm like, oh, of course it's up.
The day after. But yeah, everything else kind of chopping around. You've got some single name stocks ripping around, but Costco down 13 points. Nike had earnings yesterday. To my shock, they're up $4. I thought the floor was going to drop out for that one, but I guess not.
Totally did too. Yeah. They got the calendar calls. They're working a little bit.
But yeah, Glenn, we've got you here for the next 20 minutes or so. Government's shutting down. I saw some Tasty FX pairs that were moving quite aggressively.
Oh yeah.
And I closed a couple of them. The only ones I have left are I'm long the New Zealand dollar, and I'm short the U.S. dollar CAD. That one's a big loser, $45. But
if you're holding the line there, it's another possible position entry in that dollar CAD. It's just about to touch its previous high of last Friday. Yeah, last Friday. But yeah, dollar getting a little bit of a bid back here in the U.S. session. Some of them started to run away a little bit pre-market. Pound for sure, yen. But kind of a muted reaction. We had this whole government shutdown thing pretty priced in from, Monday or Friday to now. So not a big mover right now. But yeah, I've got a couple slides for you just to give you a little context on what happens to the U.S. dollar when the government shuts down. We've seen this story before. We've had, I think, around 20 government shutdowns in this fashion since 1977.
That's
Equities.
20 vacations embedded in.
Exactly. Paid for.
Yeah.
Yeah, I don't know what the cutoff is for paid versus unpaid federal work during this time. Must be a bad deal if you're. I mean, obviously, government jobs are affected, right? And some are
I used to work
paid
for a
leave.
government job actually. I feel like we had a furlough situation one time.
I think that's how it works. And then if it's extended, then it's changes, but.
Yeah. It's kind of a weird. It's a weird kind of almost pushing paper around type of thing.
Mm-hmm.
It's the best way I can describe it.
And probably not the weirdest employment news a lot of federal government workers have had since this administration started. But yeah, if we're looking at historic price action, historic market movement, when the government shuts down, I mean, stocks relatively unaffected. We've seen some outperformance, in fact, in the equity market. But if we want to cut over to the next slide, U.S. dollar pretty consistently bearing the burden during government shutdown periods. We've seen pretty consistent declines. I think if you're looking across asset classes, you can look most consistently to gold as an outperformer during these times. But U.S. dollar historically not getting a lot of love during these times. But the magnitude of this effect on an average basis, not so much, more so in recent years, to the tune of almost a % decline over this period, but typically in the percent, around a % handle during the shutdown. And after the shutdown, there's a bit of a mixed bag, but we've seen some outsized negative reactions there. And looking back towards the most recent period, most recent shutdown, I think, has some more, even though it's a small sample size, I mean, just looking at one observation, has a lot of relevance here, not only because it's the last one, but it's a similar administration, right? The last shutdown happened during Trump's first term. We've had some narrowly avoided ones since then, but this happened in 2018, heading into 2019. Only 35 days from this slide. It looks like it was a whole year long. But happened over the new year. And we saw, looking at this euro-dollar market here on the right, we saw this across dollar pairs that we had the most exhaustive weakness around 2 weeks into it. Didn't do enough qualitative research to know exactly what the circumstances were around this time that affected such a move. But overall, throughout these shutdowns, we haven't seen too much of a sustained pullback throughout the shutdown period. Now going over to the next slide, what matters most here, I think, is the duration and the resolution, because what we saw last time, which was the most exhaustive dollar drawdown, was also that 35-day, very long shutdown. So I think we'll start to see, as you've seen in the 9 hours since it's been shut down, we haven't seen any jolted reaction, as dollar markets were pretty pricing this in, as were gold markets and everything else. And so not a surprise that we didn't avoid a shutdown last night, but I'm curious to know, how long of a duration are people pricing in for this? Because it was clear to see that people are expecting a shutdown, but I don't know how to tell from just looking at tape action how long this is expected to go on. So we'll definitely see, like we saw last time, around that 2 to 3 week period. Probably some, if all of these effects compound over time, and if there isn't really an end in sight immediately of, okay, we've got everyone in the room trying their hardest to resolve this. If they can't figure it out quickly, how long is it going to last? Bad effect on the dollar. Mm-hmm. And also, the other thing that I think we saw last time is the actual resolution matters, because that's a data point that markets are digesting, just like anything else, that if we get out of this shutdown and it results in a huge spending package, is that good for dollar prospects? The national deficit rising in its own right, not really. So I think how the conclusion, the deal we make, matters a lot for getting out of this period as well. But we have seen, looking at the past observations, we haven't seen too much of a detrimental impact over the long term for getting out of these shutdowns. So just wanted to end with this last slide here of what to watch. Looking at all of the 20 US dollar pairs, we're looking most at the British pound and the Japanese yen. Historically, the pound has had the most consistent shutdown reaction, and right now is an interesting time for this to happen, because we've had some pound weakness from their own fiscal policy concerns. Now we're giving a little bit back there, and then
I could see that. You know why?
Why?
Because they're like, we told them. during the war. We told them a long time ago they should have stayed under our rule. So every time we shut down, they're like, we told you guys. Yep. Every time.
Here's a % back. I like it.
That's a throwback.
It's
like throwback
I don't
hate,
have
you know?
government shutdown data back to 1776.
Yeah, that's right.
but,
Yeah.
if
Well,
it
that's
were,
unfortunate because that's most important.
that's the most relevant.
Yeah.
It's called
and
the King George effect or something like that. I don't know.
And then dollar yen, we've seen already today, a 0.7% downturn in that pair. That's reversing slightly now, but we're seeing that from a competing safe haven flow, much like gold. Assets moving away from U.S. dollar and bonds just because of the decreased demand for confidence in U.S. assets and moving to that Japanese yen, which where we're sitting historically from a price action perspective, a lot of room to fall. And then the other wrinkle here is no news from government agencies like the BLS. So the much anticipated non-farm payroll report this Friday, not looking like it's going to happen. Maybe even the CPI release on the 15th. And so we talked about it for stocks. I think we might be in the no news is good news camp right now. But for U.S. dollar, not too sure what the impact is. It might be a drift lower. But regardless, you're not getting as much event risk from the dollar side of things if you are actively trading these pairs. So it goes back to more of that ad hoc event risk of developments in this story. But definitely key to point out that we're not getting any of those releases. So that's what I got for you in terms of highlighting what to watch during this shutdown.
I'll clap. Go.
Love to see
Thank
it.
you.
A couple points. So we were talking about this yesterday, how the market wasn't pricing in any volatility related to the government shutdown, which, to your point, speaks to, this doesn't really affect anything, status quo. Maybe we will grind higher until volatility comes back in the market. Luckily, we do have prediction markets.
Nice.
So I'm looking at the prediction of when this will end. And 90% of bettors have this ending at the very least October 6th to 9th or past October 15th. So of the 90%, 41% have it October 15th or later, which would be a 2-week shutdown or longer, which, to your point, the longer this lasts, the weaker the dollar could get.
Right.
So with all that said, I just doubled down on my dollar CAD.
There you go. Yeah, I mean,
but the nice thing about that is I was already short many moons ago.
Mm-hmm.
So getting short with another tranche brings my dollar cost average significantly higher. So I was at 138 ish, 138 and change. I just shorted another 5 micro lots, so my average is now at 139. Yeah, 139.
There you go.
So don't need nearly as much of a sell-off from here to get back to break-even or profit zone. So
yeah, and as we've seen in the past government shutdowns, this might, if you are a long-term dollar bull, what we've seen historically is the lasting impact of these shutdowns isn't really there in terms of dollar weakness perspective. So if this does draw out and we see anything like we saw in 2018, 2019, could give you even more unique entry points around the week 2 to 3 time horizon for a potential reversal. Then the non-dollar pair I want to call out today, chart of the day. It's a chart of yesterday too, but Australian dollar, New Zealand dollar finally starting to turn around. Don't know if it'll last, but pull up that chart. That's an interesting one for you.
I was just going to ask you about that because I see, you're spot on with the euro, and just for me, I see spot on with the euro and the British pound, but then I noticed the New Zealand dollar moving to the upside too. I was curious about that.
Yeah, so New Zealand dollar's been hurting real bad recently, especially against its Australasian counterpart, the Australian dollar. Just in terms of economic outlook and unemployment, just notably weaker than Australia. And it's the New Zealand dollar, the Kiwi, has been bearing the brunt of that, just now starting to turn around from highs dating back to 2023. So we've seen this blip. If the chart you're looking at, we've seen a couple drawbacks. This one, a slightly higher magnitude if we can sustain it, but not sure if that speaks to a reversal. The top is in, or just another small blip on the path to Australian dominance.
Well, Australia did dominate the UFC card that was held in Australia this weekend, so I think that's the
priced in.
that's the topping
That's
pattern.
it.
But
Is there anything like a U.S.-Canada relationship where Australia is like, we could take New Zealand? I don't know. I don't have many boots on the ground there.
yeah,
Yeah, right.
We'll have to get some intel on that. But I think getting short here near the upper end of the range, I like the fact that we've had a couple of days prior to this final turnaround here where it got higher, but it didn't close that high. And yesterday it got significantly higher, but it didn't close that high. So I think you're starting to see some more resistance in the intraday movement here. And you could very well see this just come down anywhere in this range, and it could be a nice trade. So you know what? I'm just going to get in on this too.
And similar to, shorting the S&P, even though that hasn't been a good idea.
No.
In this market, if you're looking at tape action, you have a pretty good idea of when you're wrong. Now just pulling back from those highs, that if this turns around, you could get out thinking that it is on a continuation pattern. So
yeah,
there you go.
Lovely. Just love to see it. Any other spicy pairs? Spicy. Your eye?
That wasn't spicy enough?
That was pretty spicy, but
That was pretty spicy.
How about the Scandinavian watch list? How about the emerging non-USD? That's the spiciest watch list.
Emerging that.
I think that we need to do a trip to these countries. I think we need to see these pairs up close. You know what I'm saying? I feel like they're like we just.
Otherwise, how would we know?
Yeah, right.
There's something to that. I bet you there are like big FX traders that do that. They just go boots on the ground, what's going on here?
What's going on here?
Yeah.
You got a huge sizable position.
I've done a 1 week assessment, and I'm out on this whole country.
Correct.
I mean, in terms of looking at that section of the market of what people actually trade, we do see people trade Mexican peso, Japanese yen. That one is, extremely volatile.
Take me through, and I need to look at this more often. This is why I'm asking. Take me through like these spreads. Like when you look at the spread, is there anything that draws to your attention when you're looking at this and say, "Ooh, I want to put something on in here because I like what's going on with the spread or the swap bid"? Like
absolutely, yeah. That's why we've featured them on the platform.
I know you've talked about it probably a bunch of times across the different networks, but
Of course, yeah. I think the main call out there is you can gauge very quickly the liquidity of these markets, knowing how tight they can be. So the spread and the swap bid and ask, those are in pips. So that just shows you the difference between the buy and the sell price. And with TastyFX, because of how they're compensated, that's the only cost to get into a trade. There's no commission. So the cost structure is all right in front of you. And just knowing that if you're looking at the top of the table, that 0.8 is the minimum spread for euro dollar and Japanese yen, and 1 pip for a lot of these other markets is the minimum spread. Right now, what I would be looking at is that there is a lot of liquidity in these markets, and that this is the tightest that you can trade them right now. So the pairs are moving. Beyond that, it's just if you're looking at those emerging non-dollar pairs, and you see some pairs with a very wide spread, that tells you right away that that's
like this New Zealand CAD. I mean, that's 4.5, 4.5.
Yeah, so just
is
less
that wide,
liquid.
Is that wide for in general, or is that par for the course for the New Zealand CAD?
I think that'll be those spreads will be wider just because of less participants there, and then you think of it as a function of, I think the last time I ran the standard deviation of daily price movements, or you can even just anecdotally look at the daily candles. You're having in those pairs 25 to 30 pips a day in movement, and so then you kind of back the envelope. Is 4.5 pips eating it off the jump, is that something I'm comfortable with in terms of where I am looking for profit targets? That could be a strategy with very high frequency traders. 10 pips is really all you're looking for in the euro dollar market, and you're only getting in with 0.8 pip spreads, and so it's a lot easier to turn those around. But if you're long-term position trading and you still think, even the price level I'm at, 4 pips worse, I'm still comfortable getting in, then that's how I think about that. And then the swap bid and the offer is our good friend Mike's here, his favorite thing to watch. Those just the indicative values of what it costs to finance that position overnight. So if you hold these positions past 4 p.m. Central, if that value is positive, that's actually a financing adjustment that's credited to your account, a positive carry based on the interest rate differential between the two currencies. So any opportunity there is kind of like you're also thinking perhaps long term. Where if this is
sorry to cut you up. You said swap if it's positive, so swap it. So if you're hitting the bid, that's positive, and so like you're short that, so that way you're collecting overnight.
Yeah, exactly. So if you're thinking about holding a longer term position, you might factor that into the calculus of, okay, I think this is a good price to get in, but I'm going to lose 2, 3, 4 pips a night. So that kind of factors into how long I'm willing to hold on to it, or maybe I'm trying to call the top in one pair, and I know I might not actually do that because that's hard, but I'm willing to sit on it longer because I'm actually getting paid overnight in positive carry. So if it starts to move against me, I'm more comfortable waiting it out.
Yeah,
that is the literal example of making money while you sleep.
Yeah, correct. Yeah, I used to exclusively only be on the positive side of the carry with between the bid and ask, but we were also at an opportune time where we were basically buying the U.S. dollar at lows with pairs where you were getting a positive carry on it too. So, and it's not crazy. Like we're doing like 5 micro lots, which is a very small position. We were getting maybe like 50 cents or $1 a day.
Right.
But there was one position I held for a month, and I got an extra $30 out of it, and it added to my profit. I was like a $30 winner, but it would basically double my profit because of the positive carry. So, anytime I have a directional assumption on a pair, and that directional assumption also has a positive carry, I'm gonna smash that. and just wait, but do it in a small way where you can just absorb any volatility until you're right. Yeah. And at least you're getting paid to wait if you're not right away. So, yeah, all good stuff. I don't think these positions I have now, so the US CAD, New Zealand dollar, Aussie, New Zealand dollar. I don't think any of these have a positive carry for me. Yeah, I'm short there. I'm long there.
Gotcha, yeah.
Yeah, I'm long the euro and the pound. That's been those 2 trades I did a while ago. And I didn't pay attention to that thing at the time, the swap ask, but now I will. It's definitely something I'm going to pay attention to.
There you go. Well, thank you for your assessment.
You'll leave me to my turkey sandwiches?
I was just going to say, go enjoy your turkey sandwiches.
Okay.
I like the tuna.
Glenn was giving us the warning ahead of time that the sandwiches are ready, which is a really, really sweet thing to do.
It was nice.
Glenn. But it was funny.
Then I was chastised because...
Well, you followed it up with the turkeys go fast.
Hey, sandwiches are in. Turkeys go fast. Go get them right now.
Okay, but if that's evidence. If the turkeys go fast, that
there's
it's
something
popular.
With the turkey.
Something in the something in the turkey.
Yeah.
I think JP Graziano does a fantastic turkey sandwich.
I think my favorite is the Mr. G.
Yep, it's more of an Italian meats.
Yeah. And then I always just get a tuna because it's high protein. Nobody gets it. There's always tuna left.
I was going to say, because you're always nabbing it at 12. When it's between the tuna and the tuna, I usually go tuna.
Right, at that point, I know. Wait, was Mr. G is an Italian-like sandwich, and then they also have I don't think I noticed a Mr. G before.
Mr. G has artichoke on it, which is
Different than Heart of Palm, but you're a fan of both.
Oh, I love Heart of Palm. So whenever we get the Cuban sandwiches,
Yeah.
and they bring the salad. If you notice that all the Heart of Palms are gone, it's because they're on my plate. Just love them. Water chestnuts and Hearts of Palm. I just like the crunchy.
Yeah, that's good stuff.
They are good.
All right.
All right, go eat your turkey sandwiches.
Yeah, man, have fun.
Much.
You enjoy that. That's where you go serve your sandwiches.
See you guys.
Go shoot Glenn a follow on Twitter. He's at Glenn Freiberger with an A. Also TastyFX. A lot of cool stuff going on there. Great charting package too. If you're trading these actively, you can set up your stop loss profit target on the chart itself. You can drag them up and down. It's really nice.
Yeah, it's pretty awesome, dude. Yeah, I haven't looked at my positions in a minute. I mean, I kind of like bought this euro and this pound, just really because I really believe in being long dollar, and so I just wanted, to have that was my first positions that I put on in the TastyFX account, just to have these be counteractive to really where I kind of feel, and they've been working. They've actually been working.
Well, I mean, I joke with Glenn. I always say, like, I haven't had a losing position in here. I haven't closed a losing position in here. And it's really just because the markets have been pretty volatile. We've been buying and shorting price extremes, but we've been doing it in such a super small way to where it literally doesn't matter what happens after the fact. It's not like I have thousands of dollars in leverage here. I have like $100 or $200 in leverage, where my worst position I've had to date is literally this dollar CAD, and I shorted it. I shorted it when we were near the bottom of the range that it just went through. So here, I was short like here, and it ripped all the way up, but it was only a $40 loser. So now I've shorted it again up here, bringing my dollar cost average right between there. So super manageable when it comes to size. I like to do 0.05. I started off doing 0.02, but yeah, I think 0.05 with the ability to add more layers into it is a nice size.
It is actually. I'm so, like when you get a new thing and like they always say, you learn something new, kind of a wrinkle in your brain. I'm sure he told me that when we talked about these positions, talked about TastyFX stuff, but I didn't notice a swap bid and ask. I didn't think about it as much. Now I'm glued in, you know what I mean? Like I'm paying attention, I'm looking for trades, and I'm looking for it in that manner.
Yeah, it's like if you're positive on the swap bid or ask, it's like a short premium component to static delta position.
I mean, most of these I'm probably just going to trade and hold. So that's why it's kind of important.
For sure. Markets have not moved at all, much to my pleasure.
You need 5 points, right?
Yeah, I've got this SPX 1 day Iron Condor. I put it on yesterday for today, right before last call yesterday, but it was up like 80 cents. Put it in order to close it. Didn't get filled. Markets ripped higher. So waiting on some kind of sell off here. If this market goes red, this will go to a $100 winner pretty quickly.
Yep.
So just holding on to it. See if I can get this for $100. I've got a limit order at 90 cents. Collected $1.90 yesterday. So just trying to get that $100 out of this thing. And again, any kind of sell-off here, it will fill pretty quickly. Nike position, I shorted it, but I went really long-term. I bought the 70 put in December, sold the 63 in October. So this is a $190 loser right now. I looked at rolling to October, no premium there. Looked at rolling to November, no premium there. So I'm just going to hold on to the long put. The nice thing about this is my basis is $500. So if you look at where the December options are trading for $500, I basically need a 5-point sell-off, and it'll be a small winner.
Is this worth a long-term play? Is this one of those where eventually, if we get the whole, because there still is an overhang in some way, right, with tariffs. I mean, there's supposedly a Supreme Court ruling eventually coming on whether or not tariffs are unconstitutional. Is this a long-term play, or is this a situation where Nike is getting to be just blah? And I mean, it's not the growth company that it used to be once upon a time, although it is still the largest shoemaker. It's still the largest shoe manufacturer in the world.
Yeah.
Because I did look that up like a few months back when it was tanking. I was like, is it over for them just based on the way the stock price was looking? And it's like, no. So I'm still trying to determine whether this is like a long-term play or if it's just like a no-touch.
Yeah, I think they're just in the heart of a restructuring, figuring out what the next move is, and then the tariffs got slapped on and yada, yada, yada. So, yeah, I mean, I would be shocked if it just skyrockets from here. I would be less shocked if it sold off from here. It's actually already selling off intraday from the opening price. So, yeah, I'm comfortable holding this position. Again, 80
They're
days
not bringing
out.
manufacturing here, right? Like,
no.
Nike's already cost $200. They'll cost $500 if you bring it here.
Yeah.
You know?
I think at a certain point, people will go to other shoemakers, like Aloe or Adidas, whatever, what have you. I think it's tough. It's an uphill battle for Nike for sure, but nice reaction from earnings. But yeah, we'll hold on to that one. And silver doing nicely. But yeah, I've got my eyes on this SPX position. Hopefully we hear the ding a little bit later today if we get a sell-off. Or just a lack of rally.
Yeah,
we're right there. I mean, I need a sell-off or a lack of rally, but I only have 5 points of wiggle room here. So can't accept much more to the upside than this, but we're seeing some of these indices tick red here with the Dow and the Russell. So
my biggest gainer has been IBIT, the Zebra and IBIT, man. Two-day move here. It's been awesome, actually, and a 3-day move, honestly. It's been really strong, so I'm not changing anything there. It's in November. I have the 60-62 Zebra in November, and I am keeping it up 40% at the moment.
Yeah, it's a nice one. And you had to think, like, if gold's ripping and there's concerns with the other markets, with the E-mini and NASDAQ, would you be surprised to see Bitcoin rally? Probably not.
Right.
And we're finally seeing that. So definitely nice. I've got the year-long strangle on here in November, short the 65.75. Collected $2,600 this year so far. Beautiful trade. It basically hasn't moved. I'm just collecting premium. That's reflective of a much bigger range than we've seen in IBIT.
Yeah, for sure. And that tells you, I think, because you put this on, when did you put this on?
At the
11 rolls. Yeah, that's pretty awesome.
The end of, it was at the end of December.
I mean, that just tells you how much vol there was initially when this product kind of started, right? And there was just so much more uncertainty, and it's just kind of calmed down over time. I've never even really looked at flat vol in here. I guess played it direct. Okay, 40s and change. 40s, 42, 40. That sounds about right.
Yes, I mean, when you look at, we can pull up the, maybe this right click doesn't work on this mouse. That'd be crazy. I don't think it does. That's crazy. But yeah, I was going to right click on this and pull up the market snapshot just to look at implied volatility. But yeah, we could go to ibit.ivr and we can see the plot of IV rank, and we can see here, So we had, at the beginning of this year, IV rank and IBIT was closer to 100. Now we're sitting at 33. So significantly higher implied volatility for the first 4 months of the year. And then after the tariff stuff, we've kind of flattened out. We haven't gone above 60 IV rank since then. So yeah, it's been a great trade. But yeah, you can see that reflected here in my order chains along the right-hand side. I collected 565, rolled for $3, rolled for $2, rolled for 40 cents, rolled for $3, rolled for $1.40, rolled for 60 cents, $2.40, $2. So it's just like anytime you roll in here, you're picking up $2 or around there, which is nice. And now with these strikes, with $2,600 in premium, we're looking at a downside break even of 39 and an upside break even of over 100. So basically the entire range that we've seen in IBIT. But yeah, very excited to see where we end the year with that one.
For sure, man. I mean, it's been a wild ride recently with Bitcoin kind of bouncing back. It looked like it was just going to sit and chill for a while there, but now all of a sudden it's been strong. And I mean, you have to think it's recent events that's kind of leading to that.
Yeah. We shall see. But yeah, loving the move today, that is for sure. If you want to join us on the YouTube channel, we're streaming live there. Just pop over to Tasty Live. You can throw in your trade ideas, questions along the right-hand side chat. I'm going to throw in the money match promo that Tasty Trade is doing. It's actually pretty sick. It's a 1% match for new, brand new accounts up to 2K match for any deposits up to 30 days. But you also get 30 days of commission-free trading. So whether you're active or less active, you get that little rebate there. So check it out. tastytrade.com/moneymatch. I just pinned it to the top of the YouTube chat. It will go on for another month or so.
Tell your friends.
Yeah, certainly. What else is moving here? Let's pull up the S&P 100. See what we got
This
here.
is so emblematic of the stock market we've found ourselves in for the last several weeks. It's not moving huge at the index level or the futures level, but like there's a lot of movers underneath the surface.
Yeah, and we saw yesterday the biggest movers in the S&P 100 were these healthcare stocks.
Mm-hmm.
Eli Lilly, Pfizer.
Back at it again.
Yeah, it's crazy.
This was one of the ones I was looking at. I think I told you this a while back when we talked, and I had like some Zebra ideas back around. It was the early August. This was one of them. CRM was one of them. But I never pulled the trigger on this one, and I'm really kind of annoyed. It was kind of expensive, though. I'm not gonna lie. Like to do a Zebra in here is not cheap.
Yeah.
Even when its stock was down $200 lower.
Yeah, I mean, the higher the IV, the more expensive it is. But yeah, crazy to see these moves continue here. Tesla ripping higher, Oracle. I mean, the fact that AbbVie, Eli Lilly, Pfizer, Amgen, like, what is going on here? Where are we at?
Yeah.
Some people looking at MRK, Tesla.
Merck was another one that was on my list, actually. No lie. Like, but I was like, is Merck really gonna bounce hard? Like, why would that bounce? And then I was also worried about, well, I think the exact reason that they're moving, like all the discussion around potential tariffs. I was like, these things might have another leg down before they go up. Yeah, I was wrong.
Hey, you win some, you lose some.
Yeah.
But yeah, right now I think this one is a no-go for me. Considering you've had a 10-point move in 2 days.
Yeah.
And when you look at implied volatility, like the only thing I would be doing here is a directional play with a debit trade, like a Zebra or a diagonal spread, not selling premium in a product that has moved 10 points in 2 days and doesn't have another 10-point move projected for another 170 days. So that's your cookie cutter, realized volatility exceeding implied, but implied isn't really catching up. You're seeing a little bit of a bump, up 4.7% in the last 5 days when you look at the IVX 5-day change. But these options are still dirt cheap. Like if you wanted to play for a reversal of this, a Zebra is $1,000 in an $80 stock. Not too cheap, but if you do something like a diagonal spread, you could do like the 90 November, short the October 85. Now you're in a nice palatable range. 360 for a 5-point wide diagonal spread. Max profit to the downside is probably $200 in the near term if you get a reversal down to 85, and your risk is defined at the debit paid. So I would be looking at something like this if I was trying to play for a reversal or a continuation.
Mm-hmm.
Continuation, you're going to get more premium. A little bit more premium to the upside than you are to the downside, but yeah, that's where I'd be leaning if I was to trade this. I thought I had a calendar spread in Tesla. I think I closed it.
What did you? This thing has just been on the go, dude. Like as soon as that news came out, whatever week and change ago, Elon was back. It has just been ripper. Big time. What's the all-time high more recently? 466.5. $10 away from that now. No way, that's wrong. 488.5. So we're about $30 away. So, wow.
Nuts.
Yeah.
Crazy. But yeah, this one's tough. Like I would rather be long in the sell-off zone here.
For sure.
Which is where I was. I had the 350 calendar spread. Closed that for a small winner, but I don't know. I have a hard time shorting it near
As
highs.
you should.
Yeah. But I guess I'll wait and see if we get any kind of pullback here.
One of the plays I like to do recently And of course, it depends on market conditions. It depends on if we're still, which I don't see any reason why we wouldn't be moving to the upside. But I like on Thursday evenings, like right before the close, looking at cheap upside calls for the one day for the move on Friday, if that potentially happens. It's happened in Tesla a couple of times. It's happened in Palantir. Names like that usually kind of work a little bit. Just depends on how potentially cheap the upside calls may be. We'll see.
Yeah, I mean, when the market's projecting basically no movement, makes a lot of sense to take those shots if you want to, for sure. A couple questions here in the YouTube chat. The ETH A crab, any management here close the near-term contracts? Yes, I was looking at that this morning. So I have a long 30 call in November, short 2 of the 40s in October, and long 1 of the 50s. So it's up 80 cents right now, basically getting all of the profit from today's move, which you love to see. So yeah, this is what we're looking at as of right now. We are going to be just fine if we stay right here. If we get a move closer to 40, that's where you have your max profit, $500-ish at expiration. But yeah, I'm not going to roll the shorts because there's not really a place to roll them to. I'd have to roll them to a weird October weekly cycle. And there's not much premium to be had left in this position. We've basically extracted all of the short premium, $218 in the 2 October shorts, trading for 50 cents now. The net premium I can get is 40 cents remaining in the 16-day cycle. So all of this premium is coming from the long option, which leads me to say I think I'm just going to close this one and then see if I can get in on a sell-off with a new contract where I'm long December, short November, and do that more long-term, make it wider. But yeah, let's book this profit. If I had more short premium that I could extract from the short options, I would keep it on. But because I don't, this is going to be very sensitive to price movement, and we're getting a pretty perfect move today. So let's book that 80 cents. Bada bing.
These things are super liquid, IBIT and Ether.
Mm-hmm.
I mean, I might do a little strangle in Ether. 58 IVR. I haven't actually never traded this one.
Yeah, it's basically similar product as IBIT, just Ethereum based. IBIT's certainly more liquid, but ETH is right up there too.
And I'm just looking at skew in here in November. 19 delta is basically $1, and 19. Okay, so skews to the downside.
Yeah, you could do something like this too. Like the same setup I had for November, October. You could do December, November. Do a 10-point wide for 350. These are super cheap relative to your upside profit potential, especially as time passes. This will get much larger, but yeah. I'm going to wait and see if we get a little sell-off, and then I'll throw something like this on for sure. But yeah, just close that other one for 80 cents. Speaking of IBIT, Miko says an IBIT long 65 call with 16 days to go. Modestly positive with this move. Would you ring the bell for a quick profit, ride it longer, roll for more, or sell an at the money call against it? I'm going to lean towards just closing it with 16 days just because when you have a long option, especially one that is slightly in the money, when you look at the extrinsic value here, about a third of this is your total value. As time passes, as it stays in the money, it's going to go lower and lower in terms of extrinsic value, so you'll be fully sensitive to price movement. You're getting a nice move today. I think what I would do is, and especially since it's in the money, it has more teeth if you get a sell-off here, I would just close this, book the profit, and then if you want to stay in this, do something like I just showed in ETH A. Like you could go to the 65.70 in IBIT, just do a small 5-point wide diagonal spread. You're basically keeping the same monetary risk on, but you have a lot more short premium to hedge against a downside move, and you can make another $200 if you get a continuation to 70. You can mess around with this. You can make it wider. You could do a crab trade like I just showed in ETH A, do a 65, 75, 85. That's a little bit more costly, but you have more profit potential to the upside. So yeah, I would close the near-term one just because it's so sensitive. And if you want to stay into the upside, just do something later.
100%. And I don't know how much you paid for it. I'm not sure what your profit is, but you like Mikey said, you're kind of exposing yourself to risk with that one being kind of in the money. As soon as you have a little bit of a fade here, a couple dollar fade, you're going to be kicking yourself that you didn't do it.
Yeah, yeah, and you can just restructure it, keep the upside stance there, but have a less sensitive price movement if there is a sell-off, because you'll have way more short premium, and selling something against it, there's just not much to sell there. Like the 2-day or the 9-day, that just kills your trade. It turns it into a vertical spread. And 50, 60 cents isn't much when you have a product that moves $2 a day.
This is what gets to something I always talk about, man, like managing your emotions around losses, but wins as well. I mean, people think it's easy when you win money, but like a lot of times you're winning and you're like, okay, wait, now what do I do? The thing that I wanted to happen happened. Now what do I do?
Yeah,
and
especially with naked long options, I think is probably the toughest one.
Oh yeah.
Because your mind is like, oh yeah, we're gonna take this thing to the moon, and then it doesn't happen, and then you're like, wait, now what? So.
Or you take it off early and it does go to the moon.
Yeah.
You're like, damn.
Yeah, you can't
jumped off too early.
Oklo and Reddit, check on a 20 or 30% correction in less than 2 weeks. Yeah, that helped you, the Oklo one.
Yeah.
You had that strangle on there.
Closed it yesterday.
Love to see it. App, Carvana, Palantir, and Hood are up next for a 20 or 30% correction. Ooh.
That app stock is nuts, man. Never traded it. Just watching it. I'm a fan from the sidelines. I just watch it. That stock is wild. No interest in playing it right now. $700 name. I don't even really know what it does. I don't know how I got to 700. I just can't see myself playing this thing as of right now. These options are a little wide-ish too. I don't know.
Yeah. A lot of premium here, but this is now a $700 stock. So it's tough to play. So even if you wanted to play for a downside move, if you're looking for a 20% correction, that brings you back down to 500. So what can you do to reflect that? I think you got to be in the calendar spread realm. That's basically it. I mean,
it's big, and these options kind of trade by appointment. You definitely, calendar spread is probably the way to go.
Yeah, a calendar spread, if you go longer term, like a December Nove, $600. But as you can see, this has no change to time or implied volatility. If you get a sizable sell-off, your break even is projected to be around 640. But as you pass time and as you crush implied volatility a little bit, you can see this widens out because your short option is cutting cost basis against your long by like 60%, 70%. So it's a big chunk for sure. But yeah, this is probably where I would go. Or a downside butterfly. That's cool too.
Maybe around centered around 600 or something like that. I was just looking at recent lows. The was that 2-week moving average, for those who believe in that type of thing, is 665. But one of the most recent lows, and I don't know when this was, if it was after earnings, you see that on 925 there, it was as low as 619. So you could do something around that. Probably. You imagine there's a bunch of buyers who got in there who would capitulate maybe at some point.
Yeah, it's an expensive one, but still some opportunity there. You just got to bite the bullet of the bid-ask spreads being wide. Let's see. What else we got here?
Everyone buy that crypto dip last week? I'm still buying it. Hood is it. You know what? I was looking at the other day with Hood. Hood's a brokerage, right? But it's really interesting how you see their vol. Like the vol is like in the 70s, 60s, 70s. I would venture to say I don't think IBKR is the same way or in some of the others. So it tells you a lot about what they got going on, right? Different things that they've been doing. That vol is kind of up there.
Yeah, I think when it comes to like Coinbase and Hood, they both just had moonshots. Both selling off a little bit here. Coinbase, not so much, but Hood is. I think when it comes to iron condors in this environment, I think it's okay, but you have to be understanding that you're probably gonna have to hold this well past earnings. That's my only issue here is earnings are projected to be end of October. You can see it's confirmed with a boost in implied volatility up to 71% in the 30-day cycle from the 23-day. So if you sell an iron condor in November, you're going to be holding this until earnings because this thing's not going to move. Given the fact that you already have high implied volatility and there's a binary event priced into your cycle, if you're taking risk on both sides, that offsets your ability to get that premium decay. To a large degree, especially if it's like a 5-point wide iron condor. The thing's not going to move until after earnings. So I would lean directional if you want to take a shot, or wait until earnings and then throw it on, because then you can center everything and be just fine. 67.28 ES closed today. That's the projection or the prediction. 67.28. Okay, so basically going 10 points red.
Really? It's a bold call, Cotton. We'll see if it works out.
Mm-hmm. I wouldn't mind it.
Yeah, I bet you wouldn't.
I would fill my SPX. I think we're pretty close here, yeah. It's up 80 cents. The market sold off 4 points and it went from being a scratch to up 80 cents. So these are sensitive too. But yeah, I'm 20 cents away from getting filled there for a $100 winner. Let's see if we can keep the train rolling.
Is the 2-year yield really down 2% today? Am I seeing that right?
What is?
The 2-year yield? Is that really down 2% today? I mean, if it is, that would explain why Russell 2000 and Dow are down. But this divergence we're seeing between Russell 2000, Dow, and NASDAQ and ES.
Yeah.
I guess it is. Okay.
Yeah, the 10-year also selling off. You're actually seeing some pretty big ranges there.
That would seem to me to be the most interesting trades around the government shutdown would be bonds and the dollar and gold.
Yeah. Someone in the chat said, do you think gold sells off when the government reopens?
Narrative flexibility. No, I don't.
I don't think nothing's stopping this thing. What a crazy move. It seemed like the writing was on the wall, but the magnitude of this move, I don't think was. I think people were, when you have trouble in paradise, gold tends to catch a bid, but this is wild.
Yeah, it's been impressive for sure.
Same with silver. Absolutely nuts.
And it's interesting because they did kind of trade, silver not as much. It was a lot more noisy. Gold definitely had that long sort of kind of trading sideways, right? Basically from like mid-April through so it's 4 months through August, and then boom. You knew it was going to move one way big or the other. We just didn't know which one, but you had to be ready for it. This has been massive.
Absolutely nuts. Just a straight up bar. And yeah, I mean, it's tough to play it to the downside. I think if you get a big move, what's interesting is I feel like we're just in this weird holding pattern. Like gold and silver are at highs. What would bring them down other than a huge rip in the E-minis and NASDAQ? Like I don't see a world where gold and silver come down if there's trouble in E-minis and NASDAQ land.
What I want is a big blow off top, honestly, if you're asking me when I'm playing. That's why I have no position right now. I'd rather see it moonshot right now to 4,000, and then I'd be like, okay, now I'm going to get in and get the short.
Yeah.
Right? Like, if it rips off my face for another 100, I'll still deal with it, but now it's had this crazy moonshot, and it's going to reverse. And I think that's the best way to play it to the downside. Just wait for that, or wait for the strong weakness to happen, and then pile on in then. But trying to do it now, it's just too big.
Yeah. People in the YouTube chat debating now what's going to break first, metals or equities. I put a poll.
I like it.
In the Tasty Live YouTube channel. You can go vote. That's all the time we have for today. It is 12 o'clock. Time flies when you're having fun. Thanks for tuning in. If you have any further questions, you can find us on the Twitters. I'm at Trader Mikey B. Jamal's at Jamal Chandler. Glenn is at Glenn Freibarger with an A. Stay tuned, though. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. So stay tuned. We'll be back same time, same place, 11 a.m. Central tomorrow. We'll see you then. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Having trouble understanding what your trader buddies are saying? Here is what they mean when they say slippage. Every business has costs. Slippage is in reference to the cost to transact in the market and is most associated with the difference between the price you can buy and the price you can sell at for options or stock. If you can buy at $1 and sell at 99 cents, you have 1 penny of slippage. If you can buy at $1 but sell at 90 cents, you have 10 cents of slippage. The more slippage between the prices, the more likely it is to lose out on value when opening and closing positions. This adds up over time. That is why liquidity is so important.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Nikki Batt, University of Kansas. Number 20, because that's how many underlines are in my portfolio.
Rick Welch, Illinois Institute of Technology. Number 23, because I'm trading 23 hours a day.
Dr. Data, Louisiana State University. Number, square root of 1/365, because that's the square root of time for one day, which is multiplied times the stock price, multiplied times the implied volatility, which gets you the projected stock price for one day.
I like the looks of that lineup.
Well, being mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Nikki Batt, University of Kansas. Number 20, because that's how many underlines are in my portfolio.
Rick Welch, Illinois Institute of Technology. Number 23, because I'm trading 23 hours a day.
Dr. Data, Louisiana State University. Number, square root of 1/365, because that's the square root of time for one day, which is multiplied times the stock price, multiplied times the implied volatility, which gets you the projected stock price for one day.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
What is going on, everybody, and welcome back to another always wonderful installment of Risk and Reward. Today, Errol and I will be discussing our personal political beliefs.
You know what? What's been on my chest? A government shutdown.
Yeah, no, we're not talking personal political beliefs, but we will be talking some government shutdown, doing some live trade, and all the works. Here, as always, joined by Errol. Errol, how we feeling? What's going on?
I'm feeling good, despite having a government shutdown. Price action has been not surprising, I guess. I guess with something like a government shutdown, I was like maybe an initial sell-off, but what would sound super surprising, like a rip into a government shutdown, and it looks like that's what we're getting right now. So. Just a lot of that news, but going pretty well. It's Wednesday, so middle of the week.
We are getting the reality of the joke that I've been making all week, which is surely we won't go up when the government shuts down, right? Surely that would be enough to slow down the market.
Famous last words.
Yes, and it appears that nothing is enough to slow down this market as we just keep on chugging. So anyway, yeah, but government shutdown. I have a flight tomorrow, and TSA is going to suck.
Okay.
So, like, this is the first time I've maybe ever been, like, personally, tangibly affected by a government shutdown. I'm going to have to get to the airport super early tomorrow.
You headed out from O'Hare?
Yeah.
Have you been to Midway?
I have been to Midway.
You have a preference?
Yeah. Well, I like Midway a lot more, but it's Southwest only.
Is it because it's a little bit smaller?
Yeah, it's just smaller. Everything is just easier about it. It's I'm not actually sure. I would imagine Midway is newer, but that's not necessarily a factor. It's just it's much smaller. It's easier to get from point A to point B. The parking situation is so much better. That's a big part of it for me. They have a nice just like big garage that's real quick shuttle to the airport, and it's something like $9 a day or $15 a day. It's not bad at all. So yeah, I do prefer Midway, but Southwest has a chokehold on Midway. I think it's like 100% Southwest from that airport, so I don't fly out of there too often.
I got you. We'll get long Boeing then, or we'll get long whatever we want. Oh, I'm sorry. United, American. We'll get long those underlines. We'll short some Southwest.
Yeah, exactly. We'll be flying United tomorrow, so there's some insider info, guys. Yeah. I bought a United ticket, but yeah, in Southwest they're moving to the assigned seating, so that actually might.
Southwest is.
Yeah. That might make me slightly more of a proponent of Southwest because I hate the cattle call personally.
So actually with Southwest, that was one of the last airlines I actually went on. I went through American, United, every single airline first before Southwest. I think Southwest was the first one that caught me off guard with the first come first serve kind of seating placement. Is that correct?
Yes. Yeah. It's first come first serve, and there's boarding groups that are they have the exclusivity set up and credit card holders and their status.
Not a fan of that.
But yeah, I don't care for the cattle call very much. I know a lot of people like it, and it's very nice for certain specific situations, like mothers with children is a big one because you get to board early, and so you get a primo seat right at the front of the plane wherever you want, easy to get off. But I was never a big fan of it, and so yeah, with Southwest moving away from that, I might be a little more inclined to fly Southwest a bit more. I just flew Southwest for the first time this year, I think.
Okay.
Yeah.
And you weren't even fond of their process.
No. I knew what I was getting into. Like I knew how it worked. But yeah, I just was doing it for the first time this year, and yeah, I'm not a big fan. I just like to know what I'm getting into ahead of time. I really, I'll pay extra for seats too. That's my thing. I'm in that boat. I'll pay extra for, I usually like to do the first row behind first class, left side aisle is like my preferential seat on a plane.
Aisle though.
Yeah, aisle. I'm not a window guy. I like to get up and down. I like to stretch my legs, and I got some knee problems in my right knee, so I like to be able to straighten my right knee into the aisle. That's a big part of it. I'm a tall guy.
I'm more of a window.
You like
yeah,
the window?
You're right. I feel like you might be a little bit more crammed in that window. But one thing that I hate is I don't really get up during the flight, so I think that's one reason why I prefer to be in the window. And then also, I don't like leaning on my neighbor.
I get up and down a lot. I'm annoying in the opposite boat. I hate sitting. As soon as that seatbelt sign goes off, I'll get up and just walk back to the bathroom. I often will befriend flight attendants, which leads to me being able to chill back there in the flight attendant area and just kind of cut it up with them for 30 minutes. That always makes it go by faster. The racket of setting an alarm to check in so you weren't C48. Yeah, exactly. Southwest getting assigned seats. Boarding a Southwest flight is like the airline equivalent of the Thunderdome. Yes, that's precisely right, and precisely why I do not care for it. But yeah, Southwest going assigned seating. All of their existing patrons are not happy about this, but I do think it's going to raise them up as a whole. I think there's a lot of people that are in my camp that are scared away from Southwest because of the seating situation.
Yeah, nobody likes change.
Yeah.
So
yeah. Anyway, that's enough yapping about our personal flight preferences. Everyone, drop what airline team you're on. I'm American myself, though. I'm flying United.
We're not going to judge. If you're on Southwest, we're not going to judge you.
Yeah, I kind of bounce back and forth between American and United. I have some existing United status because I've had an account for all the travel I've done with my parents. We're a United family, but I've switched to American since I've moved here because O'Hare is an American hub. Anywho. Let's dive in. We're talking government shutdown, and we're talking related market moves. We'll jump over and look at some trading, but yeah, let's hop into these slides here. Beautiful.
Here we go.
Government go down, market go up, which is kind of my reaction to the results of today. But yes, the U.S. government has officially shut down. The stock market does not seem to care about it. First of all, details of the shutdown. Government officially shut down today. Deep partisan divisions prevented Congress and the White House from agreeing to a funding deal. And government shutdowns aren't entirely uncommon. The media kind of likes to act like the sky is falling every time we have one. But this is the fourth one in the last 12 years. And there's going to be a lot of data suspended as a result. And this is like the most tangible tie-in to the market that this government shutdown really has, is that we are suspending data on jobless claims, non-farm payroll, CPI, PPI, retail sales, factory orders, trade data, employment trends index, housing starts, all of it. We're going to be missing a lot of data here, which is going to make it increasingly difficult for the Fed as they try to evaluate whether a quarter point cut in the next meeting is worthwhile. So that could potentially have some spillover effects into the market, but holistically, yeah, I don't like to run around like a chicken with my head cut off when the government shuts down. This is pretty common practice. We've been through this before. What are your thoughts?
I don't have many thoughts, to be honest. The main thought was, how will this affect the market, right? Like, government shutdown, it always feels like it's so much semantics at play whenever we have a government shutdown, because it's always just like, how do we get to the point where we're still having government shutdowns? I understand they're quite necessary sometimes, but excuse me, my current thoughts is just like, how is the market volatility going to be affected by this? Are we going to see an expansion in volatility? I think that the conversations around the Fed, data being reported, just a lot of those conversations over the years, I'm just like, are we going to try and pull the market down now during this time of the government being shut down? Like, I just got a lot of questions, and how is the market going to digest this? So that's kind of the boat that I'm in right now. So not too many thoughts.
Okay.
Yeah.
Quick sidebar to acknowledge these airline comments. I'm Team JetBlue. Southwest sucks. Yeah, JetBlue kind of gets slept on. It's a nice like one rung above budget while you still kind of get the budget price.
It was the Spirit Airlines JetBlue merger that didn't go through.
Yeah,
the Frontier.
That got blocked.
That got blocked.
They were trying to merge and that got blocked.
It's like the same thing with them blocking the merger with CP3 going to play with Kobe back.
It is.
And then later on they're like, it's all good. It's fine. And I bet the same thing might happen in the airline industry later on, right?
Yeah, it very well could be. I mean, Spirit, if they're just bankrupt now. They've been trying to find a suitor forever, and it just hasn't. They get blocked and shut down at every turn, and now, it's
the
bad.
Spirit and Frontier, didn't they try to become a powerhouse, or am I mistaken? That could have been a little propaganda.
They also attempted that, and it fell through, to my knowledge. Team Delta, we're options traders after all. That's true. I need Theta Airlines. Amtrak all the way.
Gamma Airlines. Let me get the Gamma Airlines.
Oh, that's Hill saying Amtrak all the way. And then, they all suck. It's like finding the lesser of evils with airlines nowadays. I could not agree more. Flying, I went my whole life never getting any travel anxiety, and in the last year, suddenly I started getting travel anxiety just because the airline experience sucks more. I don't know.
Yeah. Was there like a particular trigger to where it's like, this experience is a little uncomfortable?
There wasn't, but my friends could attest, and my family could attest. I've flown probably connections in there. I would say I've flown something like 16 to 20 times this year.
That's a lot.
And I have had one flight depart on time. It is insane.
Yeah.
I get delayed every single time. And it saved me a couple of times when I was running late, and then all of a sudden it gets delayed. And the whole time I'm running late, I'm like, I'm Gus. This thing's gonna get delayed.
Yeah.
I'm not even worried about it. And then they do. But yeah, the delays and I don't know.
No, I hear
It
you.
just feels like everything is getting tangibly worse. I mean, even like you don't. And now they ask if you want cookies or pretzels. It used to just be cookies and pretzels for everybody.
Yeah.
You know, they just give you both. And
You got
if you didn't want one, you toss it in your bag. It's like little things like that. The experience has just been getting a lot worse.
I've never been a big fan, and if I'm being completely honest, it's one of the reasons why I'm not a big traveler.
Yeah.
Like the thought of traveling, like the experiences sound cool when you're there, but after that, I'm just thinking like, okay, I want to go back home now to my cave, and then also thinking about the transportation process. Like that is actually a huge reason why I don't like to travel and why there's never plans to travel, because it's like such a hassle. It's uncomfortable. I don't really enjoy it too much.
I will add to that, though. I mean, to give a counterpoint, that I find that I never actually remember the flight issues.
Great,
It's all, you always just remember the good memories and the places that you went.
And a lot of the
and saw and
times it's the anticipation up to what we don't want. A lot of times clouds are, judging me a little bit. Because I'm sure after the fact that it's like, not too bad, kind of happy that we did this.
Absolutely. But honing it back in, my next point here is that government shutdowns are primarily caused by when the parties can't agree, bipartisan disagreement. And so I think that it's interesting that these government shutdowns are accelerating in terms of like the pace at which we're getting them. The one before 2013 was during the Clinton administration in '96, I want to say, but that was the most recent one. So we go '96. 2013, that's a big gap, 17 years. And then all of a sudden, 5-year gap to 2018, and then 1 year, and now we have a 6-year gap into this one that we're in now. But I just think that that's interesting and reflective of the way that America has become increasingly divided politically as social media has come on. Because when you think about this, it's like these last 4, I don't think that there's been another instance where we had 4 government shutdowns in 12 years, and all 4 of these come in the age of social media as division creeps up more and more, and they're getting progressively closer together, which is interesting to me. I guess not progressively closer together, but there is a cluster. They're starting to happen more frequently. Anyway, moving on. Stonks, man. Market's reaction.
Stonks go up.
Stonks go up.
You know, it's a good time. You know exactly what the market's doing whenever you see this meme flying around. Don't even check your portfolio. You know where it's at.
Exactly. So yeah, indexes and futures all slightly green, unless that has changed in the last 17 minutes since we hopped on air. I don't have a chart right in front of me. Gold at all-time highs, which is interesting. We've been talking about how strange it is that gold has been running up alongside the market this entire time, and it's like, if gold's going to start moving alongside the market, do we cease to perceive it as a safe haven asset? And we do not. Now, when all of a sudden there's a little bit of turmoil, suddenly gold goes shooting higher. It looks like a safe haven asset. So maybe it's just both. Maybe gold is going to be worth $1 million an ounce by the end of the year at the pace that we're going. It's insane. Oil prices, little change to slightly red. And then banks are taking a hit with the exception of Capital One. I had to sneak that in there as it's a position I have open. But with the exception of Capital One, which has actually rallied like 1.5%. So yeah, I'm sure you're as surprised as I am by the market reaction to this news.
Oh, no doubt. I mean, I don't know. It always seems like when there's that catalyst that could make the market budge, that could be it. But time and time again, we've been proving that the market's gonna keep doing what it's doing. And I mean, at this point, I think it's just funny. Like I think seeing the market rip off of perceived, quote unquote, theoretical perceived negative news, it's always just funny to see how the market can move away from your expectations.
Big deal. To respond to your question, I check in with my phone. I have lots of friends my age, and maybe you could speak to this too, who still like swear by checking in at the counter. You don't have to do that. We live in 2025. Yeah, I check in on my phone. My boarding pass is on my phone. I mean, the only like employees of the airline I am flying that I will talk to are the gate agents. I never do anything else.
Yeah.
When you hear news reports of 80-year-old women driving 400 miles to stack silver, the run is almost over, gang. That's a good point. That is definitely a recession indicator or a pullback indicator. Anyway, so looking ahead, one of my favorite GIFs of all time right here.
It's good.
The timeline is indeterminate. The longest shutdown in history was the 2018 one, which ran 35 days. They typically are about 2 weeks is sort of average. That's a Gus brain average. I did not put them in a spreadsheet or anything, but just at a glance. The Senate is holding procedural votes as we speak. Right now, I believe they started at 11 a.m. Central. 60 votes are needed to advance, and if successful, everything can come back together very quickly. The only holdup is that the House is not going to return until next week. So even if the Senate acts first, even if the Senate were to pass the bill today, they would still need House approval, which is going to be Monday at the earliest. If the Senate and the House pass it, then it goes to the president for final sign-off. So it's a lot of layers and a lot of people that are disagreeing with each other. And yes, many non-essential government operations pause or slow down in times of shutdown. TSA, as I alluded to earlier, is an essential government operation that will simply slow down. But lots of non-essential operations get shut down altogether, such as the data reporting that we were talking about.
I just still don't understand how government shutdowns happen. And part of my conclusion, until I get updated with more information, is the fact that they want government shutdowns to happen for whatever they need it to happen for. So they have more time to come back, reconvene, whatever the case is. But I just think like government shutdowns are so avoidable that they almost seem that was the goal, almost to an extent sometimes.
Yeah, I mean, I don't know that I would say that that's the goal. I think, I mean, recently, and the reason for the last few that we've seen is that it's become progressively more common for people on both sides of the aisle, definitely a bipartisan issue, to just try to sneak a bunch of extra crap that does not have anything to do with the budget or funding into the bill. Right. And like that's what the holdups are over right now. That's what the holdups were over in 2018 and 19. It's just that there's so many external things, and that's like so annoyingly prevalent in all aspects of government now. Is we're never just voting on this one issue. If you want X party to vote positively on the issue, then you got to include their
negotiate.
thing.
It's a negotiation.
You got to throw their thing in that has nothing to do with the issue at all, just to make all sides happy. And it's you never know what's going on.
Yeah,
but
I mean, that's my political view, is the fact that we have left and we're just negotiating. It's like at the point we're just missing the mark. So that's my political view.
Well, it's a lack of sound negotiations that are what's causing this shutdown and what's causing the division at large. It's that no one can have a civil conversation anymore. Everybody feels like they have to be at each other's throats all the time, and it's not good for anybody. Everybody.
You know what, Gus? I disagree.
Yeah, exactly. Anyway, closing tire departments during the shutdown permanently. Yeah, I mean, there are certainly some that we probably could. I'm not going to lie to you. Watch out, free upgrades, guys. Oh, free upgrades. I assume you're talking about an airline. I'm not sure which one. But anyway.
Maybe meeting the check-in people at the counter or something, maybe meeting.
Oh, could be.
I don't know.
Could be, yeah.
But back to that conversation lastly, checking in at the counter, no thank you. Only if it's like a must, technology's not working, Wi-Fi's not loading.
If you have to check a bag, I understand that too.
100%.
But I never, ever check bags. I couldn't tell you the last time I checked a bag.
General anxiety levels from the airport, though, has had to dramatically go down since the use of technology. I mean, having to have your paper pass with hundreds and hundreds of flights that's going on a daily basis had to have been so hectic without the phone, right?
Oh, yeah.
We grew up in it without a cell phone and QR codes. We grew up that way, but now we're adults living with a QR code.
Yeah, absolutely. And I think it's funny because there's, I mean, many people who very rightfully still, I mean, there's no harm to it, but will get to the airport, 3 hours early, like 3 hours before boarding starts, because you want to really make sure that you have time to do all these things. And I'm in like the total opposite camp. I'm pushing the envelope sometimes. Like I'll leave the house I'll leave the house like an hour 45 before my flight departs, and I will still make it.
Like hopefully, TSA and security's not too long today.
Yeah. I'm hoping so. Yeah, that'll be tomorrow. But I will be getting there crazy early tomorrow just because it's a security situation.
O'Hare sometimes is a different breed in terms of lines in the population inside the airport. Good Lord. Like if you're from Chicago, you're probably used to it, but if you're not.
I'll tell you what too, I have pre-check, which historically has always helped, and I'm able to just breeze by everything. But as of late now, they're just handing out pre-check all willy-nilly, and half the time that line's longer. Like I'll evaluate the two, and then
I'm going over there.
Yeah, and I'll get in the regular line, and then I go, and when I scan my boarding pass, like right before you walk through security, they're like, "Oh, you know your pre-check, right?" And I'm like, "Yeah, but look at that line. I'm not going and waiting in that thing. I don't care if I have to take my shoes off over here, I'll do it. Like whatever. It's I'm not going to wait in this long line." So yeah, and I know Clear is also a thing. If anybody has Clear or can tell me how that works and how it ties into pre-check, I'm not exactly sure what the deal is with Clear.
You got any TSA agents in the chat? Make your case.
Yeah. Well, all I know about Clear is that they are really trying to sell it to me every time I go to the airport, which is what puts me off of it. Because pre-check, nobody's approaching you saying, you want to get pre-check right now, but they do with Clear. So
yeah.
Anyway. That's all we got government shutdown-wise. We can hop over platform or charts or whatever Errol has open for us on his side.
We can jump over here. Look, obviously we have NASDAQ pulled up, but before we get into that, we can look at any other underlyings that we have on our mind. I know we're going to check out UNH a little bit, and then we'll come back to NASDAQ and some of these futures markets that we spend a little bit more time on.
Yeah, there's a lot of movers today.
Yeah, what's been sticking out?
I mean, Novo Nordisk is finally kind of taking a move to the upside for me. That's been nice. I'm still deeply red on my Novo Nordisk leaps, but having a good day there. Capital One, as I mentioned, COF, only bank that's rallying right now. And then what was I looking at?
BAC pulling back a little bit more today. I know the financials is taking a little bit of a hit.
Oh, yeah. And I'll tell you something I've been eyeing for a position is KDP.
KDP?
Yeah, Keurig Dr. Pepper. I didn't know that these...
Keurig Dr. Pepper?
Yeah, Keurig Dr. Pepper.
So, was that a merger?
I suppose so. It's unclear to me when this happened. Last I heard, Dr. Pepper was a independent company. They also, I think Dr. Pepper is also 7-Up. Someone can correct me on that if I'm wrong.
Like owned by the same company.
Yeah, but I think it's like just those two.
Okay.
It's like those two are kind of in their own thing in isolation, and then you have Coke products and Pepsi products. But Dr. Pepper, 7-Up are neither. If I'm not mistaken, somebody I might be totally talking out my rear end there. Somebody jump in if I'm incorrect, but. 1 hour TSA at Philly Airport, that really wouldn't be too bad. Also, the Philly Airport is terrible. I'm sorry if you're from Philly. I hate that airport.
Is it big or is it just hectic, not organized very well, or what?
The last time I was there, which was some years ago, to be fair, maybe they've done some massive regulations, but the last time I was there, I was just felt really dilapidated, is the way that I would put it. Just kind of felt like the walls the drywall could fall off at any given point. KDP merged a few years ago.
On your toes.
Yeah, okay. Thank you, Jared. So Keurig Dr. Pepper. I had a similar reaction that you just did the first time I ever saw this ticker. It's really, really been sliding here, and this is sort of looking progressively more attractive to me for some longs as a Dr. Pepper enjoyer.
What's the IVR looking like in KDP right now?
75.
75?
Yeah.
That's pretty high.
It is pretty high. Justifiably so if you look at this thing. But, we're talking about well north of 1-year lows here. Or I guess I should say well south of 1-year lows here. This is just starting to kind of sit on the back of my mind here. We seem like we're finally getting some consolidation and maybe like a little bit of recovery. I suppose that pattern has kind of shown itself 6 times during the course of this rundown. I'm thinking about some KDP, especially with that IVR, and I know the puts would be super juiced. Mm-hmm. Let me just do it. Why don't I just stop talking about it and freaking do it?
For KDP?
Yeah. What's it at? 25.71.
What's the option chain looking like? Not bad?
Let me tell you. Let's see. I gotta kind of decide expiration here first. I'm thinking like 27 is gonna be like a good top strike here, and then. Yeah, I want like through the end of the year for sure. So let's try March. 170 DTE, very, very attractive options chain. These are super duper tight. I'm happy about that.
Pretty juicy over there.
Yeah, and then I want to go short put vertical, maybe 25, 27. Yeah, 25, 27, that's 95 of BP for 105 in credit. Let's throw that bad boy on. Surely I'll get a fill on these $5 wide spreads.
Oh, we're getting a fill. Hold on, big deal's buying it. Hold on, he's gonna hop in there and fill that order real
103.
quick.
There we go. All right, so 2 cents of slippage. That would be catastrophic. That would be catastrophic to someone with $1 million portfolio, but is nothing to a guy like me.
Drops in the bucket. Dr. Pepper has the perfect business model. They just sell their concentrates of Pepsi and Coke and let them battle for territory. I didn't know that, actually. Almost no overhead for manufacturing and distribution. It's genius.
But it's just one or the other, right? Dr. Pepper, do they sell to both Pepsi and Coke, or is it just one or the other? Because I know Mr. Pibb exists, which is one of those companies' attempts at Dr. Pepper. Mr. Pibb's good. I'll float that as well. I'm not hating on it. What's up, Whit? Good to see you. Shutting down GPS shuts down most financial transactions, worldwide, including Tasty. GPS is part of the Space Force budget. Article 2 of the Constitution vests the executive power in POTUS and authorizes the president to direct federal executive departments. His heads serve at his pleasure. Interesting. Breaking out constitutional law here. That's not what I thought we'd be getting into today. Yep, it's all based on region. Interesting. So they do both. Huh. Well, as a former Texas resident, I can speak to my love for Dr. Pepper and the love for Dr. Pepper at large in the state of Texas. They're headquartered in Texas.
Dr. Pepper is one of those drinks where I never really drink it, but when I do, I'm like, oh, that hits.
Yeah,
that's a good drink.
Dr. Pepper, we used to like I've said before, I can't sodas are kind of too sweet for me. I don't often have a Dr. Pepper, but Dr. Pepper I will deploy as like a dessert. Sometimes I'll have like 8 ounces of Dr. Pepper as a dessert style thing. We used to we go to an all-you-can-eat sushi restaurant while I was in college, and your all-you-can-eat sushi came with a drink, but I never cared about a drink, so I would just have water the whole time, and then at the end I'd be like, can I get Dr. Pepper? And have like a few sips of Dr. Pepper for dessert because it's included anyway.
Yeah. Ice cold too, just wash it down.
Diet Coke specifically for me, yeah. Diet Coke has, I would say, even more than a cult following. Lots of people just prefer Diet Coke.
It's a different breed. I mean, that might be one of the strongest cult followings I've ever witnessed in my life is the Diet Coke.
No, yeah, because when you meet like a Diet Coke drinker, it's like, holy cow, you drink a lot of Diet Coke.
Yeah. Which is my girlfriend. I'm like, brother, we gotta hydrate ourselves.
Vernon's is the best. Vernon's. I think I know what you're talking about.
Gold's still going ballistic. These metals are no joke. I don't know if anybody's trading gold right now. I've been on the sidelines. I've been patient. I'm going to wait for structure to shift a little bit more. I'm not a big TA guy, like look for a double top with this, that, and the other. But gold feels like one of those ones you don't want to step into the train ahead of time. So I'm going to be patient there. But gold's
I'm going to do it. I don't know when I'm going to do it, but I'm stepping in front of this train sometime. I'm not exactly sure when.
Hey, if you jump, I'll jump.
Yeah, I gotta make sure the train's slowing down. But now that the like legit gold safe haven case all of a sudden is in play, I definitely don't want to step in front of this.
Yeah, no.
Wits, yeah, Vernon, good. Vernon's is good. I'm more of a Seagram's guy if we're talking ginger ale specifically. But ginger ale is specifically a plain drink. I have all types of sodas that are randomly specific. Like cherry Dr. Pepper is what I get at the movie theater exclusively, and that's the only time I drink it also.
We just gotta know why that is.
It's just kind of how things have fallen into place. I don't know, like the cherry Dr. Pepper thing, it's just in high school, we had a movie theater real close to my house. It was called Palladium. It was this big, like, arcade. There's like a huge arcade and bowling alley in there, and like it's a whole thing. You'd go hang out there like for the night. When we were in high school, we would go there and see movies all the time, and they had a Coke Freestyle machine, and I would always get Dr. Pepper Cherry, and so that just kind of became my movie drink. And then I eventually my taste buds sort of outgrew soda a little bit, but now every time I go to the movies, I still just get a Dr. Pepper Cherry. I do the Seagrams on airplanes. Again, really no reason. It's just the only place I will ever drink ginger ale is on an airplane. It's just kind of the way it's worked out. I don't know, settle my stomach a little bit. Sometimes the pressure changes can mess with you, but Schweppes is also a great ginger ale. The plastic bottle Schweppes is good stuff.
Schweppes.
I can attest to that. Dr. Pepper is a Texas staple drink. Its ugly cousin Big Red should just be retired. Man, Big Red, that is funny. I haven't thought about Big Red in a while.
The gum?
No, Big Red, it's like, you're thinking of Red Hots. Big Red is like it's a soda.
Oh, it's a soda. It's like the pink red cherry soda, whatever it is.
Yeah, I don't even know how I would really describe the flavor profile.
Strawberry, wasn't it?
I guess
Big Red strawberry?
I guess it's strawberry. I don't know. I haven't had one in, I could tell you the last time I had a Big Red was at a baseball tournament my junior year of high school. Okay. So it's been some time.
On the bench?
You guys gonna say what 2 years ago? 7 years ago.
You're drinking Big Red in the dugout?
Was it drinking Big Red? No, it was like an all-day tournament thing. So we had 3 games, and it was like between a couple of the games, I had a hot dog and a Big Red. I remember that because that might have been the first time I ever had a Big Red or something. I just saw that they were selling it at the concession stand, and I was like, what the heck, Big Red? I'll take a Big Red. Big Red was a gun as well. Okay, there you go. Anyway, yeah, I'm gonna step in front of this gold freight train sometime. I do not know when, but these things, well, at least I keep telling myself it can't go forever. Who knows? Maybe we're gonna swing all the way through to a 200 BC style situation where gold is incredibly valuable. I don't know.
Maybe. Because it doesn't look like gold is slowing down anytime soon. Gold break. Let's quickly go back to gold, and then we'll go back to NASDAQ, and then we'll go ahead and see what these markets been up to. But gold had that breakout. It looks like gold had that. Let me go to a daily chart. And again, I'm not one for I'm not big on flag patterns, this, that, and the other. But sometimes it's pretty obvious whenever the market starts to form kind of that compression before a large move. And it does kind of feel like if you're not in gold right now, whenever we are forming this top right there, maybe a lot of people were hoping that the market would drop here. Maybe a lot of people were trading for the breakout. But if you weren't involved there, man, it feels really difficult to get involved here.
Well, yeah, now that we have the benefit of hindsight, you could just, any technical analysis person would just look at this and say, yeah, bull flag. Obviously a bull flag from the start in that range. Bull flag into breakout, textbook. But yes, it could just as easily have been consolidation at the top, indicating that we were running out of steam and then came back down.
Yeah, I mean, it could have been whatever, but it just...
Shooting star pattern.
Shooting star. No, this is the hot dog breakout. The hot dog morning breakout. Y'all haven't heard of that one? No. With that being said, let's go ahead and switch over to NASDAQ, see what's been going on lately. We did have a trade on before we left yesterday. Guys, we did end up getting stopped out of that before I think the market closed. I think it was just in the after hours. So let's cover that real quick because it was a bummer. I'm not going to lie. we managed the trade well. It was almost pretty much a break-even trade, but for a trade to be like 100-something points in your favor and then to rip back against you, honestly, such a negligent decision on my end. Like, number one, we're up 100-something points, but not only that, I mean, I think we're up maybe like 80-something. Not only that, like, why hold that contract? And again, I did make the decision beforehand, but why hold that contract through the uncertainty of there potentially being a government shutdown within the next like 12 hours? You know, so you could take it from that perspective, but at the same time, hindsight's 20/20. If this would have worked out, we could have been saying something completely different, but it is something to think about. So yesterday when we had gotten in that short, we had went and got short over, we got short right here, and then we had our stop loss in at the highs, and then the market just absolutely ripped, came back down throughout the day, and then we've been trading at these upper levels. But that was a trade from yesterday. We were forced to manage our risk, and you can see after getting short here, I mean, we sold all the way off.
It's really interesting to me how different the way that we trade are, because like I would say that you go looking for trades,
right?
And I find that the trades tend to come to me more often than not, just being like in the world and reading the headlines and watching the movers and all that. It's like the trades find me, and I just think it's interesting. I mean, we're both they're both successful angles, and you can do a lot.
No, I hear you completely. I would actually still side on the same air as you. I feel like I'm just waiting for the trade to go to me at the same time, you know?
Sure.
So like, for example,
I guess I'm speaking at more of a product level, but in terms of like 100%. actually finding the trade itself, you are definitely letting it come to you.
Yeah. No, it's just like sometimes you just sit there and just wait, and the market never kind of pans out. But I mean, again, that move from yesterday was a little bit of a bummer. Again, great entry, market sells off. We're able to put in our stops near break even. So in that sense of like a P&L wise, no, it didn't hurt. We managed the trade just as we should. But when you don't manage, I guess, a trade to the best of your abilities, it's still like, I know I didn't really lose money, but dang, I definitely could have done a lot better and performed a little bit better right there. So
absolutely,
that's just a reality of it.
Well, yeah, sometimes something that you had up big that turns into break even can feel like a loss, and conversely, if something is down big and you get it all the way back to break even, sometimes that can feel like a win. Even though they're both technically the same result. Dan, I'm glad you know that I'm laughing at your chats over here. I hear you on the shooting star thing. I wasn't trying to make fun of that. It's just a funny. A funny name, but Steve Neeson, great book, should be required reading. People on TikTok have made entire careers around Red 40 products. That they have. I've seen that guy that's Red 40 maxing. I wouldn't recommend that strategy.
I did see the Red 40 maxing.
Yeah.
What generation are we living in right now?
I don't know.
Red 40 maxing's hilarious.
I don't know.
If you guys want there's content for anything.
Here's a niche one. Has anybody ever in your local supermarket seen those Skittles drinks? Do you know what I'm talking about?
I can't say I have.
I took a picture of them at HEB in Texas one time. Skittles has a beverage, and it is like the most artificially colored thing you've ever seen in your entire life. I cannot believe it. They look like acid. I don't know who. They're clearly marketed towards children. I don't know who would ever give their children one of these godforsaken beverages that are literally just pure Red 40. It's crazy. I mean, they have all the colors, but.
I know that didn't feel good slightly.
Sounds like a Yoda quote. Search not to trade. Trade come to Yoda. It's my half-ass Yoda impression there, guys. You're welcome. Natty Gas ripping. Natty Gas, something I never pay attention to. I'm going to confess something right now. I don't know the ticker. I don't even know where I'm supposed to look. Thank you. Mm-hmm. I never, ever, ever think about Natty Gas.
Energy just is so volatile. I kind of have my hands off the wheel when it comes down to some of these energy products.
Nuclear is kind of the only thing that could class as energy that I
like oil,
dip my toes into.
Uranium.
Yeah.
Oil, but uranium. Make something happen.
I don't do no oil. I don't do no Natty Gas, but uranium. Uranium's fun. Uranium is kind of fun. Objective. I mean, like if you think about like all the elements, like there's so many that are just really boring. Uranium's kind of a fun one.
Yeah.
Or KOLD, nat gas ETFs.
I mean, how do you...
32 grams of added sugar in the Skittles drink. That is lower than I would have guessed. Honestly, I would have bet money that was north of 50. I mean, because like a 12-ounce can of Starry, formerly Sierra Mist, is 44 grams of added sugar, I believe. That's off the top of my head. Buy the dip. Quack, quack, quack. I assume you wanted me to make the duck noises there. Thought they were going to ban TikTok, so I must have bought some Trump coin. Trump kicked that can down the road is what happened. The deadline was September 15th, but has now been moved to December 15th with Oracle as the most likely suitor at this time. I'm pretty sure skim milk has more sugar than whole milk. Now we're asking the real questions. I drink 2%. generally. Kind of depends what dieting phase I'm in. Sometimes if I need the calories, I'll work in some whole. America's tap water has sugar. That's true too. Yeah, I have. I guess everybody's looking it up independently now. I was going to see, can I search Skittles in my photos and this will pop up? Nah, I can't. Yeah, if you're looking at the Skittles drink, you understand the reason for my sentiment here. It's pretty nutty. Oh, is Tesla back up? Are we getting the breakout on Tesla? Looks like we were going to lose it yesterday. We are.
Looks like it is.
We are.
Looking at the daily here.
Yeah, very interesting. What about my boy Firefly Aerospace? Whew. It's down more.
That was Fly, right?
Yeah, Fly.
Oh yeah, it's getting hit a little bit, just a little bit. It's just waiting for takeoff.
Just a lot. Just 10%.
Just a lot of it.
Just 10%. Yeah. Okay. Well.
A lot of it.
I'm 350 days till expiration, so.
For Fly.
Surely. Yeah, for Fly.
It's
when is Tesla not up? When it's down, Mr. Pillows. Whenever I take calls, that's actually the answer to your question. Tesla is like the firmest thing on my no trade list and has been for years. I am just terrified of Tesla. Immense respect to anybody trading Tesla. Fly, more like crash. Good one. I mean, that is what happened. That is what happened. Their rocket blew up. Oh no. Oh no, the aerospace company can't do aero or space. Oh no, let's all lose our minds because their rocket blew up. It's not good. But I assume at some point they're going to successfully launch a rocket. And if not, this will just be a funny story. You know, you got to think about that with your trades too. It's like, how funny would it be if I take these leaps on Firefly saying, oh yeah, surely their next launch will go well and their next rocket blows up.
You got to do it for the plot.
Yeah, it's just like hand up, head tap, take me out of the game. You know
Great story to tell later on.
If I bought Tesla, it would take, yeah, exactly, Dan. Exactly my sentiment. You guys, does anybody need Tesla to go down? I can get long it right now and fix all this. Quick hop over to my Forex portfolio. This is something I don't usually acknowledge too much on air. I still have not lost a Forex trade. I'm something like 12-0, and I am up 70% on my Forex portfolio, and I don't know what I'm doing. I don't know what I'm doing at all. I just buy things towards the top of ranges and let them come down. Getting burned on some Canadian dollar right now, but my Mexican peso working out. So
the Mexican peso, we got any shekel right now?
I'm long U.S. dollar against the peso, and I am short U.S. dollar against the Canadian dollar. No, I don't have any shekel at the moment. I think shekel is just in the middle of its range. DraftKings down again? Man, DraftKings got to present a buy spot here sometime. Holy cow.
Good luck getting hit.
Like maybe here. I mean, it's like, I understand that it's substantiated, but at the same time, this is getting nutty. I mean, another 4% today after, well, what is this? My public school math tells me like 12% yesterday. This is really getting to be something. I mean, what's that lowest candle right there in April, like the Liberation Day low?
Here in April was 29.78.
Yeah, so I mean, we're talking dang near Liberation Day lows right now for DraftKings. I guess we're again 20% above that level.
This does look like the first change of character that we've seen since Liberation Day. Andrew, what's going on? What stock are we eyeing? We're looking at DraftKings right now. We're looking at NASDAQ, DraftKings, all the equities, some Tesla too. Tesla's up on the day. They've been doing pretty well.
Sportsbooks and Vegas casinos, watch out, going to get smacked. I mean, yeah, I will say, I think that sportsbooks fundamentally are going to start getting hurt because of the emergence of these exchanges. I think that the Kalshis, the Poly markets of the world, there's ProfitX now, there's PropSwap, all these different. There's NoVig is another one. There's all these different exchanges, sports betting exchanges that are so much lower vig and give so much better prices to the player that I think that as they are able to effectively communicate that to the American populace, we'll see a lot of turnover because, yeah, who wants to bet into a 5.5% hold market on DraftKings when I can go over to ProfitX and bet into the exact same market at 1.3% hold? It doesn't make any sense. MGM, FanDuel. Klarna. You guys doing a play for Tesla delivery numbers before the bell tomorrow? I'm certainly not.
I'm not doing anything I might do something post Tesla.
Tesla makes me quiver in my boots, man.
Yeah.
Whatever. Let's. I mean, yeah. I guess I could throw out a guess. It'll be wrong, and you can fade me. I'm intrigued about Kalshi. Yeah, Kalshi, very interesting. Kalshi, Poly Market. What's the other What's the other big one? Is it just
for the
those
prediction
two?
markets?
Yeah.
I think it's just those two.
I mean, there's Predict It, I guess.
Yeah.
That's existed for a long time.
I mean, if there's one to know about, it's Polymarket, right?
Yeah, but yeah, Polymarket and Kalshi are the two big ones. But yeah, I mean, as they and the sports books are mad at them. I mean, the sports books are putting up all kinds of lawsuits against Kalshi because they know that their market is going to get cannibalized. But the solution for the sports books is just quit screwing your consumer and give us bettable lines, and this won't happen. But yeah, I mean, Kalshi, and I think that Kalshi is really interesting too, because I mean, if you look at the numbers, like I know it wasn't this past Monday night, but maybe Monday Night Football before that, Kalshi did, I think, $42 million in handle on one game, on that Monday Night Football game. And the most interesting part is that that's something like, these are rough numbers, I don't have the exact ones in front of me, but it was something like $10 million before the game, an additional $15 million in the first half, and then like, I don't know, I guess 20 some odd million, I think it was, in the second half. But it's that the live opportunities and the way that those lines are moving as things happen in the game really entice people to try to get in there and trade more. Because that's the other thing, is it's not binary. You can, a team is down 14, you can buy that team, let them score a touchdown, and then sell that team and make a profit, as opposed to like a traditional sports book where they're just going to give you some crappy cash out option because your team is still losing. So it is interesting.
What exactly is that? I'm still getting a little bit more familiar with that.
Like events contracts?
Yeah. You said events or advanced?
Events contracts.
Yeah.
That's what they're called. Yeah. So it's just that you're
So you can adjust your position live during the game?
Yeah. It's you can buy before the game if you want, or you can buy in at any point during the game. But yeah, they have a percentage chance that both teams will win, and that's the market essentially. And they add up to 100 or slightly more than 100, because I do think there is a little bit of hold on these exchanges. But and then, yeah, so it's like, say two teams start exactly 50-50 in a football game, and then Team A scores a touchdown. Suddenly they'll jump up to 62, and the other team will fall down to 38. And so now that means that the team that's at 38, you can buy that team for 38 cents per contract. Mm-hmm. And then if they win, they will become worth $1 per contract.
Right, so it's
what
like
that also means is that if you buy them at 38 and then they score a touchdown to tie the game back up and it goes back to 50-50, you can now sell them for 50 and make 12 cents per contract of profit, instead of like a binary sports bet where you'd have to wait until the end of the game and win or lose.
Right. So you can kind of go neutral to long, or like neutral short. The live adjustments is really the key.
Yeah, exactly. And also, like, if you're say you take a team before the game, and then it's the fourth quarter with 6 minutes left, and they're up big, and it's a 95% chance, you can just say, okay, I'm gonna take my risk off the table and make sure that I don't get burned by some kind of miracle here. And that's
especially what team you support. You know what I mean?
Yeah,
especially
exactly.
If you're the Steelers, when we played them in the first game of the playoffs,
Yeah.
Broncos and Tebow right down the middle to Thomas. First play of the playoffs, OT. I know you Steelers fans remember that one. But
Yeah, that is all. It is all very interesting. Polymarket was just legalized in the U.S., Bob, like 2 weeks ago. Like very, very recently, Polymarket finally got legalized. Bull flag on the spoos, I'm being told. I treat those game contracts like zero DTE, and that's precisely correct, Ash. I mean, it is essentially a zero DTE. I mean, I shouldn't even say essentially, but that's basically just what it is. It's a contract that is binary for the next few hours. If you hold it until the end, it will be binary, or you can choose to buy or sell them at any given point as they become more or less attractive. Tesla also moving on Musk compensation package. Is that to say that it was declined or approved? I could see either one of those being a valid reason for Tesla to move up. Gus, can you do iron condors on events contracts? Mike Evans, you play for the Buccaneers, my boy. You cannot do iron condors on events contracts, unfortunately. No, that would be really OP. I see what you're saying. Just do an iron condor and then wait until the end of the game when it breaks out of the. Yeah, no. There's no semblance of options other than that you are trading the contracts themselves in lots of however you see fit. And that's the thing too, is it's not always like, an option is always inherently tied to 100 shares. It's not like that. If you want, you could buy, like 35 shares essentially, if you want to think about it in an options context. No, I'm much too old for that. Interesting. Yes, Mike Evans in the house. That was Baker. Yeah, exactly. But yeah, the events contracts, I think it's a very interesting thing, and I think that it is going to continue to hurt these sports books, and I wouldn't be surprised if that is somewhat being priced into this DraftKings move, because Kalshi is taking more handle than a lot of these sports books on some of these primetime games. It just makes sense. People are shifting over. Dynamics changing, and the legalization too. I mean, that's the thing. Kalshi is legal in all 50 right now.
How's Baker? Yo, Baker's actually a tough dude for Tampa right now. He might be holding his own.
Yeah, no, he's doing good. He looked like his career was over, and then he had that one drive with the Rams some years ago, and suddenly it just saved
Like
the
you've
entire
seen the
thing.
old Baker again.
Yeah.
He does have a different type of energy to him. I mean, I think it's becoming more and more. It was already obvious, but especially into his adult years.
Yeah,
Buccaneers got that dog in him.
Buccaneers got Igbuka coming in the door right as Mike Evans is going out too. It's perfect. Go Red Sox. Down with these damn Yankees. Hey, I would prefer to see the Red Sox win that series. I will say that. Anyway, yeah. So I got that position on. The heck did I even just trade? I already forget.
Which one was that?
It was KDP, Keurig Dr Pepper. Long. I got some long KDP on. Capital One longs are working out. If anything, I'm just kicking myself that yesterday all day I was like, I don't want to get long into the government shutdown. Yeah. I should know. I keep saying until proven otherwise. Ariel, why would I not trust myself? Why would I not trust myself?
Exactly.
The market cares not for frivolous things such as the government shutdown or a rate cut. The market does not concern itself.
Especially not the economy.
The lion does not concern himself.
Especially not the economy.
Yeah.
No, honestly, when it comes down to fundamentals and it comes down to trading something like NASDAQ or an indice for that matter, I'm curious to see how anybody else kind of prices in fundamentals with your trading decisions. But I have noticed I've had a tough time using fundamentals for trading something like NASDAQ. It's been tough. I just know it feels more like a binary event where you're gonna get increased volatility, but most of the time it's like bad or good. How do you interpret what's bad or good? It seems really difficult to do that and easier to just calculate if we're gonna get increased volatility in a certain time window for whatever that matter might be.
Yeah, absolutely. I mean, to the same end as well. I mean, I'm sitting here surprised that the market is this tolerant through a government shutdown, which I shouldn't be. I've been joking all week that I just thought it would be. But at the same time, I mean, it is like what I've kind of been saying all week and what we alluded to in the slides earlier is that these government shutdowns are generally short-lived and they generally don't actually have too much bearing on broader society, on the finances of these private companies, that kind of thing. So I think with that in mind, I mean, this is just the efficient market saying, hey, we're going to chill out until this government shutdown resolves itself. But yeah, I mean, we just keep pushing to slightly higher and higher highs. I mean, it's just, I don't know. I mean, it's like uncertainty and fear trigger these sell-offs. And does the government shutdown really bring true fear or uncertainty? I don't know that it does. It certainly doesn't the way that like Liberation Day did, with these very tangible things. So yeah, I think that it's very plausible that we just kind of see no impact at all from this. I don't know. I mean, obviously the week will tell. But as we just continue chugging toward, are we at? Yeah, we're at new all-time highs right now. So
and that's exactly why it feels like risk to reward. Risk to reward is all that matters when it comes down to a trade. All the uncertainty, there's so many external factors. What is our risk to reward on the position? And at the end of the day, that's really all that matters. Because if we really believe something's going to move for whatever reason, we don't know, and we don't know why. And then that's why we're going to lean on our risk to reward. Quick plug.
Yeah.
Tune in with us at Monday through Friday, 2 o'clock.
Yeah, and like VIX, I mean, we opened over 17 today, but have just run straight back down to.
I'm done with VIX until proven otherwise. VIX is either back or it's not. So it's either back until proven otherwise. So every day I'm waking up, VIX not back until proven otherwise.
No, yeah, and it's going to have to prove it otherwise in a big way. I'm not going to start jumping out of my shoes if VIX gets over 20. I need to see some substantiated VIX move.
Well, anything over 20. Both my eyes are are wide open.
I will start watching it when it gets over 20.
If you wake up before me one morning, I'm hoping to see a text saying, "Oh, it's back."
Yeah, it will. Yeah, VIX will have my attention as it starts to approach 20. But yeah, VIX, we're talking like I need one of these April 7th type spikes in VIX for me to really. No, it wouldn't take that much. But yeah, I mean, I would want to see like 22 or 24 before I'm like actually buying this, because we continually do this thing where intraday we test these higher VIX levels and then just nothing happens, and then we just decide everything's okay, and the VIX goes back down. Lots of government employees try to prevent the worst case. Yeah. Why is shutdown seen as a negative, though? Also, market rally to new all-time highs again. Yeah. Why is the shutdown seen as a negative? That's kind of exactly the point that I'm making. I don't know that it necessarily is in a stock market context. I mean, obviously there are negative connotations to it, but yeah, that was just my thought process. Is that those negative connotations would kind of be enough just to bring the overall sentiment of the market down, because government shutdown sounds bad, but it's really not actually that big of a deal. And as we know, markets are efficient, and the efficient market seems to agree that it's really just not a big deal. We don't care. The market cares not. I mean, I keep saying it. We can try to stop this thing, and it just keeps going. I don't understand.
Looking at NASDAQ here, I know NASDAQ is brushing up on the all-time highs. It's looking like it wants to do something there.
We haven't had more than 3 red days in a row since August, since July 28th to August 1st. That's the last time that we had more than 3 consecutive red days.
Yeah. No, all-time highs. It looks like we could be there. We could be there pretty soon. Not many red days. David, Dan, I'm in the same boat as you. Another all-time high. That's how it kind of feels like. Because it's another opportunity to practice patience. We don't like that.
Yeah, no, it's true. It's true. And I mean, yeah, it does make your buying opportunities spread a lot thinner, to say the least.
100%.
What about outside of a stock market context? Outside of stock market context, it's just that everything slows down. It's that the Postal Service slows down, and TSA slows down, and the House of Representatives is at home and can't vote on other issues that are now going to get kicked further and further down the road.
Yeah.
It's all of those things. It's the government employees that I would say is the most negative thing about the government shutdown. Remember when I used to work at UPS, we worked very closely with the post office, and I was working there during the 2018 and 2019 government shutdowns, and it was like such a nightmare. All our box holders would be coming in every day complaining about the mail not being in, like we have anything to do with it. But yeah, it's the little things like that.
Yeah.
Anyway, I know we're about at our time here. You got anything else you want to leave the people with?
No, nothing else on my end. Will Social Security be paid in November?
To my knowledge, yes. I believe Social Security would be paid, and I have no definitive confirmation of that, but I am basing that claim on the fact that government employees now, it used to be if the government shut down, they just wouldn't get paid at all, and their pay would resume when they got back. But after the one in 2019, they signed a new act into place that now will, it back pays government employees if they are furloughed in the event of a shutdown. Yeah. So I would imagine that Social Security isn't going to be hurt. That would be like insanity if
that's crazy. That wasn't
a Social Security payment.
That's crazy. That wasn't in place prior to 2019. That's so dated.
Well, I mean, the logic was figure it out or you don't get paid, which I honestly kind of agree with. Like, if you want to keep making money, you can't shut down the government and still just have a paid leave the entire time.
The thing is, you catch a lot of there's a lot of people that are going to catch strays because of that, which is unfortunate. Yeah.
Absolutely, yes. All kinds of people who are not directly involved in the government at all, but do work for the government that get hurt. Yes. So it's just I'm saying, Congress evil, but yeah, the post office.
There's got to be some type of incentive
and people like that. Yeah.
Right.
Exactly. Anyway.
Oh, that's gonna wrap it up for today's segment. Anything else?
No, I got nothing else. Cool. Imagine calling the IRS now. That's a good point. Yeah, if you're evading taxes right now, it's a good time to be doing it. Probably.
You're gonna have to wait an extra year to get somebody on the line. No, but that's gonna do it for today's segment. Be sure to stay tuned for more coming on next. We appreciate everybody taking the time to come hang out with us. We'll catch you guys next time. Peace.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Schultz, and this is From Theory to Practice. Welcome to the Wednesday edition of the broadcast, and today we are going to shoot from strength, and we are going to start with a deep dive into Delta. So, John, go ahead and cue us up on the title slide here. So what I want to do today, I want to start a little three-part series. This will be at the beginning of the show today, beginning of the show tomorrow, and beginning of the show Friday. Let's do a deep dive into Delta and essentially work through the three different ways that you can use Delta. So if you're a beginner trader, if you're like a newer trader, then I'm really speaking to you. If you're an experienced trader, if you've been around the block a few times, my hope is you can still pick up some breadcrumbs along the trail, but this is not necessarily for you. But still, don't click off, because your boy needs that watch time. But this is for the newer traders that might be out there. Now, what's interesting about Delta is if you think about the different Greeks that we look at, that we analyze, you've got Delta, you've got Theta, you've got Vega, you've got all these different Greeks that we're kind of trying to analyze on a daily basis to make good decisions for our, position entry and overall portfolios, whatever. Most traders would agree Delta is going to be the Greek that you're looking at on a daily basis the most. Now, you might actually try to profit from Theta a lot more. You might actually try to profit from Vega a lot more. But when it comes to the actual day-to-day and position-by-position adjustments that you make, Delta is going to be the king. So I think it's useful for us to spend a few minutes doing a bit of a deep dive into Delta to better understand how we can use this Greek. So, John, bring us into the information today. Okay, so here is the first way that you would use Delta to measure option price movements. The textbook definition of option delta is as a measurement of option price movements. Now, I can say this is the case from firsthand experience because in a former life, I was a finance professor. Before I joined the Tasty Network, I was teaching undergraduate, I was teaching MBA classes at a small university in South Carolina, and I loved it. I absolutely loved it. I taught investments classes, I taught principles of finance classes, I think I even taught a derivatives class at one time, if memory serves me correctly. But anyway, the options, which my blueberry intake is a little bit off its game, so it may not be correct. Either way, though, when it comes to option price movements, this is the way that Delta is used in a classroom setting, in a kind of textbook type of world. What's ironic about this, as we're going to see tomorrow and then going into Friday, this is actually the way that traders use Delta probably the least. This is actually the way that on a day-to-day basis that we are using Delta as active traders, probably the least of the three ways. But still, when we're building up the foundation, when we're trying to kind of, put together these building blocks of understanding Delta, it's important to understand that this is kind of how the analysis begins. Delta technically means option price move for every $1 move in the underlying stock price. So when it comes to how is my underlying stock, or I'm sorry, how is my option position going to move when the underlying stock itself moves? That's what Delta is going to show you. And so obviously that's going to be a critically important piece to the puzzle when it comes to, P&L, when it comes to, okay, I'm making money, I'm losing money, like what is happening? What is causing my options, positions, P&L to change? Delta is going to be a huge driver of that. And if you think about this kind of baseline textbook definition, it is really, really helpful. helpful. Even if we're not using it on the front lines, even if we're not using it on a day-to-day basis with most of the analysis that we might deploy for a given position or scouting out new trades or existing trades, whatever, it's still very, very helpful to understand, all right, at a base level, this tells me, the connection, right? The link between the underlying stock and its price movements and the option that I have, a call, a put, whatever it might be. It's going to show me how my option price moves when the underlying stock moves. Okay. When you interpret delta, this is a very, very important thing, especially if you're a brand new trader and you're new to all of this. Welcome aboard. I hope you stick around. You have to understand that delta is oftentimes presented in two different ways. It's presented as a decimal, so like 0.30, or it's presented as a whole number, so 30. We typically, and by typically I mean basically 100 times out of 100, a 0.30 delta that you might see in the Tasty Trade platform, that is actually more commonly referred to as a 30 delta. We don't typically converse or analyze deltas in their decimal form. We're typically looking at them and conversing about them in their whole number form. And the best way to think about this is essentially deltas are oftentimes presented on a per share basis, but they're communicated about on a per contract basis. And remember, there are 100 shares for every options contract. And so if I'm looking at a 0.30 delta per share, that's actually a 30 delta for the whole contract. And that's how we typically communicate deltas, with one another in the options world. So if I have a 30 delta, what that tells me, very simply, a $1 stock move is going to lead to a 30-cent option move. If I have a 70 delta, that means a $1 stock move is going to lead to a 70-cent option move. Now here you can see that it's kind of interesting that, on the one hand, we talk about deltas on a per contract basis, but on the other hand, we talk about option price moves on a per share basis. Because again, the same rules apply. If it's a 30 delta, right, and you've got a $1 move in the underlying stock, that's going to be a $30 move for the whole contract, but we actually typically communicate that in terms of the cents, in terms of the per share basis. I know it's confusing. It seems a little bit not consistent or inconsistent, but that is the way that traders typically communicate back and forth when it comes to this is what the stock is doing, this is what the option is doing. Okay, now, how do you take all this and kind of understand how this is going to affect certain options, like puts, like calls, like long puts, long calls, short puts, and short calls? Okay, let's talk about that for a couple of minutes, and I think that'll be a good kind of ending point to this first way of using delta. So long puts and short calls are going to have negative delta. These are going to be bearish positions. So the easiest way to think about this is you want the underlying stock to go down. So if the underlying stock doesn't go down, if the underlying stock goes up, then that is going to hurt your options position. Okay, if I'm bearish, if I have a long put, what direction do I want the option price to move? I want the option price to move higher, right? I want the option price to go up because I bought the put down here. I can then sell it up here. I bought it for $3. I can sell it for $4. How is that going to happen? Well, when it comes to underlying stock movements, that's going to happen if the underlying stock goes down. Well, what happens if the underlying stock goes up? That's moving against you. That is going to hurt you. So that in that situation, the put value is going to be going down. It's going to be moving against you. So stock up, put value down. Okay, what about a short call? Well, a short call, also a bearish position, but very different from the standpoint of now you're selling the option up here. You want it to fall to some level down here. I sold it for $3. I want it to fall down to $2. If the underlying stock moves higher, so it goes up by $1, call prices, call values are going to move in the same direction. So they're going to follow the stock price. So if the stock price goes up, call prices are going to be going up. Well, if I sold a call, then that is also going to be working against me. So if that is working against me, then I'm going to see a situation where the call value is going up, but I'm short that call. I want the call value to go down. And then, of course, the reverse is going to be true if the stock price goes down. But what about long calls and short puts? Well, let's stick with the stock price going up. if the stock price goes up on a long call, again, remember, stock prices and call values are going to follow each other, right? If the underlying stock price goes up, that means the call prices are also going to go up. I bought this call. I want its price to rise. So if I buy it for $2, now maybe it's worth, $2.50, $2.75, $3.75, whatever the case may be. That's going to be good for me. That's going to be a profitable turn of events for my position. Similarly, if I sell a put, that's still a bullish strategy, but it's very different from the standpoint of I sold it up here for whatever price I sold it for, $2, $3, $4, whatever. I want the price to go down. Well, what happens if the stock price goes up? Well, just like we saw with the long put, if the stock price goes up, put values go down, all other things being equal. Now, again, you've got thetas, you've got vegas, you've got all these other things that are also impacting the stock price. But just specifically from a delta standpoint, this is how we can better understand the underlying stock movements and the corresponding option price movements. So if the stock price goes up and the put value contracts are going down, that's going to be beneficial for me with a short put that has positive delta, is a bullish position. And so my hope is that now you have at least a slightly better understanding, building up that foundation of 3 different ways to use option delta. This was the first way. So, all right, John, bring us into the market. Whew, man, I'll tell you, man, it's like getting home, putting on the hoodie, slipping into the sweatpants, and man, there we go. So where are we at? E-mini S&P's up 20. Man, look at this. I see you guys, by the way. Look at you guys. I see you guys in the chat. Man, I see you guys talking some Red Sox baseball. This is what I'm here for. This is 100% what I'm here for. I appreciate you guys. So, E-mini S&P's up 20. Risk-free instrument up 104. Didn't the government shut down? And the market, man, market doesn't even care. Market could care less. Risk-free instrument up 105. That would be the NASDAQ futures, which is an extremely high-risk product. You've got the boomers up 19. You've got the Russell 2000 futures index down 3 on the day. You got bonds up 8. You got notes up 9. You got oil down 50 cents, man. UB40's even up a few ticks. They haven't made a hit in 47 years, and look at them go, man. Look at them go. Got gold up another 11 points, although it was up a lot higher, I think. Got silver up 84 cents. Man, look at silver. Silver was up a lot higher, too, I think. If I'm not mistaken, let me take a look at this really quick. Gold was up over 3,900, was it not? If I take a look at a chart of gold here. Yeah, look at this thing, man. This thing was, oh, wait, hold on. That doesn't even do it justice. Let's do like a 15-minute. We'll do like a 30-minute chart. Yeah, let's go back like a couple of days. So yeah, so you can see this just this morning. I mean, early this morning, 39.22 was your high on gold. And then they took them out to the woodshed, man. I mean, look at that thing down to 38.84. Still up $11 on the day, but down about 40 points from the high on gold. And then silver, I think, did it crack 48? I don't know if it did. Let me see. 47.97.5. So very close, but did not quite crack 48 there. And crazy, crazy, crazy stuff. And so that's silver. That's gold. Those are your metals. Little metals analysis. What's volatility doing today? You've got volatility down 22 cents. That makes sense. You've got the VIX is down 17 cents. That also makes sense from a standpoint of the government. Or the market rallying. The government shutdown, I mean, it's like, I mean, has your life changed at all today? I mean, obviously for some people it's going to, so I don't want to make too much light of that. But for most people, it's like, I don't know. It kind of feels like when Elon took over Twitter and he got rid of 95% of the staff, right? It's like, it still works. Like it still is pretty much the same to me. And so I don't know, man, maybe we should kind of try a little no government for a while. Might be good. Might be a little change. Just kind of shock the muscle. I don't know. Just give it a shot. And so I'm actually shocked they made it this far, to be honest with you. I would imagine that they're going to cut some kind of a backroom deal or even a front room deal in the next, 2 hours, 15 hours, whatever. I doubt this will last too long. Somebody will cave if history is any indication. And so, all right, what I want to do, though, is let's take a look at what's going on in the portfolio. And then, man, I see you guys, man. Look at you guys. Adam Armfield in the house. Man, Dan Duquesne in the house. Talking about go Red Sox. That's what I'm saying. 100%. That's what I'm saying. Lobo Doe's in the house. Lobo Doe's in the house. Man, Sam L in the house. Ashfin in the house, man. Marcus in the house. Man, look at you guys. I see you guys. I'm surprised and delay somebody early here. I see Marcus asking, Dr. Jim, in a similar manner to Dr. J, are you able to dunk a basketball? Well, I'm only 5'9". And so, no, I can barely grab the net, man. Like I can barely grab the net. Now, if I've got my old Larry Johnson pump-up shoes, I might be able to get a little bit of the rim. but that's the best I can give you, man. And again, I got to break out the old school LJs to even do that for you. So no, I can't do that. But let's see here. Let me go in. So we've got our gold butterfly. Let's take a look at a few things happening here with our position. So we've got our gold butterfly, and you can see gold up $14 today. And so we're about even on the butterfly. We're down about $1, on the butterfly so far. But we've got 2 days to go. And, we put this guy on for the government shutdown. Of course, we should have played it to the upside because we would have had all kinds of opportunities to close that guy, this morning and even right now, probably, based on, yesterday's movement into today. And so we're going to sit tight on this guy and not do anything when it comes to the gold butterfly as of yet, which is good. The simple fact that we chose, the Friday expiration, it gives us more ways to potentially make money. Now, we may not be able to make as much money. So if we, even if we get the move perfectly right, or we kind of get this thing moving in the direction that we want it to move in, then we may not make as much money as we would have had we done like an overnight 1 day butterfly. But again, you've got to pick and choose, right? It's gamers and gotchas. You've got to say, hey, this is what I'm going for. Like, this is kind of what I'm going after. And, I'm okay with the way that this guy sets up. When you choose a butterfly that has a few days to go, as opposed to a butterfly that has like 1 day to go, what you're basically saying is, all right, what I'm going for is more ways to make a modest profit. Whereas if I go with an overnight butterfly or like a 1 day play, now it's like, man, I want one way to maybe make a bigger profit. And so that's kind of the gimme gotcha exchange that you're making. It's not really a better or worse situation. It's just a different situation. And so you just kind of have to understand. And typically, butterflies that have less time are more expensive because you have a higher probability of the butterfly landing where you want it to land, especially if it's anywhere around where the stock is, kind of right now. And so, so with gold, we're going to sit tight. We're not going to do anything. And we'll kind of see what's what. And so that's some gold commentary for you. Palo Alto is another one. We didn't get to this one yesterday, and I want to get to this. It's so weird, by the way, and it's amazing. It's an amazing weird. It's so weird to be on the show on a Wednesday with you guys. Like, this is great. Like, I'm very excited about the future. I'm very excited about things that are coming on down the chutes, and to be able to be with you guys on Wednesday, especially as the NASDAQ crosses 25,000. Man, look at this, guys. This is only on the Tasty Network, right? Like, nobody else even knows this is happening. Like, no one else has access to this kind of information. Like, anyone else, like on Yahoo Finance or CNBC or Interactive Brokers or whatever, they don't know that this is happening. But you guys are getting first dibs on the NASDAQ crossing 25,000. Did it cross 25,000 before? I'm not even sure. This might actually be an all-time high. But man, that's crazy stuff. That's really, really crazy stuff. The market just does not give a rip about your puts. Not at all. Not at all. Your puts, my puts. It is an equal opportunity put destroyer, the market. And so very, very crazy stuff. But with Palo Alto, we're inside of 21 days to go. I'm kind of thinking what we're going to do here is let's go ahead and I'm going to close this trade down. So we're right at about a scratch. So you can see that right here. Right, you can see that we sold the trade for 722. It's marking as 744. That's that's down 22 cents. That's basically a scratch, at least for our mental records at this point. And so, from the standpoint of risk control and risk management, I like the idea of taking this risk off. Hey, this was a trade that it was working out okay in the beginning. I think Sam L gave us this trade, and so thank you so much. I appreciate you there, Sam L, for this trade. I think this was a winner for a while, and then I just wasn't able to turn it into a winner. I mean, no one can take a winning trade and turn it into a loser quite like I can. And so if you're brand new to the show, you can expect a lot more of that coming on down the chutes. But again, that's good for you because if you just do the opposite of everything I do, you're going to be in a really, really good spot to make a little bit of money for you, for your family, for even your friends, for your favorite charity. Like, there's a lot of things that you can do with the winnings that you're going to get from fading me. But Palo Alto, I'm kind of thinking we just close this trade down. We could keep it on potentially. We could roll it out again, but I think they might have earnings coming up in near cycle. Yeah, they've got earnings coming up. Yeah, November 19th. And so I don't really want to deal with that. I don't really want to roll here into the November cycle, have to deal with November earnings. You could make the case that, the expiration in November is November 21st. The earnings day is November 19th. We're probably not going to be in the trade any longer. And so I don't really necessarily have a problem with rolling this guy out. Maybe just keeping the strikes the same. That would, in fact, let's take a look at that. Now that I'm thinking about this, I was kind of dead set on closing this trade. But I don't know, man. Markets move and things change. And I was really focused on getting my Delta information out to you guys today. So wasn't as focused on the current positions. But let's take a look at this now. We got a few extra seconds. If I go into let's see. I see you guys selling me, Duncan. Like Dr. J. Hey, I sold myself on it. Like I said, you get me the 1992 LJs, I'll get you some rim. That's the best I can do. That's the best I can get you today, right? I'll get you a little bit of rim, but they got to be the original LJs. They were black, right? They were black with a little bit of blue, I think, on the laces. And so, man, good times. I was what, 11 at the time? And so, yeah, some good stuff. But let's see if I go in here. If I roll this guy out. Oh, happy month anniversary to you guys. I can't even believe. Man, the Delta thing just got me all thrown off. Happy month anniversary to you guys. So today is October 1st. So obviously me and my wife, we are celebrating our, 5 millionth month anniversary in a row. I don't think I've ever told that story before. Have I? I've meant to, but I don't think I have. I don't have time to do it today. We'll have to do it in November's month anniversary. But anyway, happy month anniversary to you all. It's kind of sad I've never told that story before. But let's see if I take a look at a roll here. If I go into November, wow, $10? Oh, that's because of earnings. Whoa, that's crazy, crazy, crazy. Man, I don't know. Now it's kind of like, I don't know, man. Like we can collect a whole bunch and we can improve the break evens. And I mean, we are going to be out. We are going to be gone before earnings come. You can bet your bottom biscuit on that guy. I'm not going to run this guy through earnings. So one way or another, it's going to meet its maker before November 19th. But now that I'm looking at the credit being so high from the roll, what's the gimme gotcha exchange here? Like, what are you up against? Okay, the gimme is the really nice credit. The gimme is the wider break evens on the upside, like all those kinds of things. What are some of the gotchas? Well, at least one of them is the fact that even if I'm going to get out before earnings, you have to remember that the implied volatility in the underlying stock is going to increase going into earnings. It typically starts maybe 14 days before earnings. Maybe a couple weeks, maybe 2.5 weeks, something like that. So, we are probably going to have to battle against some implied volatility expansion. But I don't know, man. I kind of think I want to give it a shot. I kind of think I want to give it a go here and see if we can't maybe, weasel our way into a slight little profit on this trade. So let's see here. If I go into, let's see. If I go to 996. All right, we got filled at 996. How about that? So, okay. I went in looking to close it, but the roll just made more sense to me. The roll 100% made more sense to me. Oh, and by the way, one thing to note really quick. This is something that a lot of new traders kind of get, and there's really not much else to talk about. I mean, Costco's taking us down, Chipotle's taking us down. It's all the same stuff. Like, it's all the same stuff that's been, where it is, for however long we can remember. But if you take a look at, this roll, one thing that sometimes confuses some new traders is they'll look at a position like you saw Palo Alto, I was down like 20 cents, right? 20, 30 cents before I made the roll. A lot of new traders will look at that and they'll say, well, wait a minute, I'm down 30 cents, but I'm going to collect $10 or $9.96, whatever it was. I'm going to collect $10 on this roll. Could I not then, I'm collecting $10. Does that not push me into a profit and then I can close it really quick? And that's a really, really good question. I mean, there's a lot of critical thinking that's going into that, but the markets are never going to be set up in such a way that when you roll, like whatever you pick up on the roll just turns into immediate profits. Because if that was the case, then we would never take a loser. Like we would quite literally never take a loser on an undefined risk position. And so you are able to collect a credit, but you have to understand that your trade price now also increases along with the roll. Right? So the trade price goes up, the mark price goes up. These things move together. It doesn't change the fact that your break-even point is better. It doesn't change the fact that you have more credits to work with. Like that's all true, but it doesn't go into immediate profits that then allows you to take the trade off immediately for a profit, for a scratch, for some type of green, whatever, and just kind of erase the red that you were in right prior to the roll. Like you can see right now, I'm down 50 cents now. But obviously Palo Alto is moving around as the market moves. And so I'm basically in the same spot that I was in before the roll, essentially. And so hopefully that's helpful for you guys, especially if you are brand new and just getting started. Man, if you are brand new and you're looking to take an active approach to your portfolio, man, you are in good hands. This is the place to be. This is 100% the place to be. You know, when it comes to active trading, when it comes to derivatives, options, futures, even got some Forex, even got a little something for the crypto bros out there, which we are going to become crypto bros ourselves here pretty soon, I think, once we get Crypto Dan here on the show to kind of walk us through, you know, and kind of, you know, teach us like we're a 5-year-old. Like, I want to be taught like I'm 5 again because I don't know anything about it, man. Ethereums and Bitcoins and whatever's. I can do some BITO ETFs or whatever, but now I want to hear it. I want to hear it from the master himself. And so anyway, there's Palo Alto. That was really the only thing. You know, you've got Nike. Obviously, we're taking it on the chin of Nike, which is not great. But I'm not going to do anything now because, you know, there's no reason to, in my opinion. I'd rather just leave it on and let's see if we can't get a little down move in the market, which again, governments shut down. It's open for business. I mean, it's whatever. You know, it doesn't even matter. The market's up another, 40 basis points. And so, but that's about it, I think. So let's go to you guys, man. I appreciate you guys. Man, I appreciate you guys so much. I see you guys, man. Look at Sergio. Man, look at Dan Duquesne blowing up the chat. Man, Dan, I appreciate you because that's going to push this out to more people. I may not be able to get to all of your comments and questions, but I appreciate you so much there, Dan. Let me see. Let me go to somebody. Where are we at? Okay, so Scramble Everything says, let me see here. So Scramble Everything in the middle says, this is funny. Dr. Jim, now that Tom is gone, do you have enough pull around the Tasty Nation now to appease the Charm Bros and get it onto the platform? So here's the kicker, right? So Tom was two things at the same time. He was our biggest obstacle to getting Charm to the platform. In some ways, he was also our greatest advocate. And so I know that doesn't make any sense, but that is the enigma that is Tom Sosnoff, right? So now that he's gone, I don't know that we're going to be able to tap into, the Sosnoff clout and the Sosnoff prestige to get Charm on the platform. But I don't know, man. You got to stay tuned. You just never know what's coming on down the chutes. It's not impossible. Like, it's definitely not impossible. And so, but I appreciate you there, Scramble Everything. So let's go to, let's see, where are we at? Man, let me get to the beginning. I appreciate you guys. I see Ash Finn is in the house. What's going on there, Ash Finn? Thank you, my friend. Thank you for being here. Let's see. Lobo does. Yeah, all those air traffic controllers watching Netflix. Oh, that must be a previous conversation. So I will go ahead and sidestep that guy. But Sam L's in the house. But I appreciate you there, Lobo does. It's hard to tell which way you want that to be said. But Sam L says, "Man, we are blessed. The best tasty show also on Wednesday. Even the shutdown can't stop our underappreciated Doc Speed minus humor. Man, I appreciate you. I think it's appropriately appreciated. I think the B minus humor is appreciated at about a B minus level. And so there's a lot of balance there. There's a lot of feng shui-ness that goes with all of that. And I think it's appropriate. I think it's accurate. And so thank you there, Samuel. Yeah, it feels odd to be with you all on a Wednesday. Like, it's great. Like, I think we're going to be in mid-season form here, pretty soon. And I think it's good. Again, for the continuity of the show, I'm very, very excited about, the different things we're going to be able to do. And just, it's going to be super fun on the first Fed day. So, like, on the first Fed day, man, that's going to be crazy, crazy, crazy. Like, you and me together at 2 o'clock? Like, when Powell walks out? Wait, no, he doesn't walk out till 2:30. So, wow, we're going to get to do that live. Man, that's going to be so much fun. When is the next Fed meeting? Somebody put it in the chat because I can't look it up here because I'm with you all. But let me know. When is the next Fed meeting? Because I am excited. I'm already excited. Is it in October or is the next one in November? I think there might be 2 more, right? There's 2 more. There's one in December. And then I don't know if it's in early November or if it's in late October. But let me know when the next Fed meeting is because, man, so not only are we going to get to watch the fireworks together as a family at 2 o'clock, but at 2:30, you guys are going to get to let me know, like, did he really go with purple again for the 66th consecutive time? For the 66th consecutive public appearance, my man went purple again. That's unbelievable. That's very Cal Ripken-esque. So I'm excited about that. It's going to be great. But let's see. Dan Duquesne saying, "Give me some gotchas." That's 100% right. Let's see. Wolf. That's really funny. Are you the artist formerly known as Wolf? Like, I think you've added a wolf to your username, which I didn't know you could do that. I didn't know. Can you change usernames like on the daily? Like, is it that fluid to where you can just kind of like be like, hey, I was going to go in today and do like some dumbbell presses, but I kind of feel like doing some barbell presses. Like, you just make that decision like on the spot. I thought you were kind of locked in and you had to like send in like photo ID and like letters of recommendation and things like that if you wanted to change your YouTube username. But it appears you might be doing it on the fly, which is impressive. But Wolf says, Dr. J, happy Wednesday. No sarcasm today. Just a big thanks for all you do, man. I appreciate you. Man, thank you so much. And the sarcasm is welcome. But again, I'm not looking for the really good stuff. I'm looking for the B- stuff, which I know if you're the artist formerly known as Wolf, I know that you're good for it. I know you're 100% in that lane. So I appreciate you. Samuel says, Dr. Nike trade's looking good. No, it's certainly not. It's not looking good at all, unless you took the opposite like you should be doing. But it's been a while since we had a proper 5-minute victory lap. Lace up those 200 euro sneakers and let's see the full ROM moves. Yeah, not going to be doing that, especially since, look at Nike, man. That may have been a troll there, Samuel, which it would be a mighty fine one if it was. But no, Nike is, Nike up, $3 and whatever. And so I think my LJs from back in the day, I don't think they were Nike. I think they were like Puma or something like that, like Champion. I'm not even sure Champion made sneakers, but yeah, the LJs from back in the day, I don't think they were Nikes. I think they were something else, maybe Reeboks. I think they were Reebok actually. Yeah, so Miko's in the house. Dr. Jim, Cubs won, Sox won, Yankees lost, and markets were up. Was yesterday the perfect day? Man, I don't know. All I know is that Red Sox game last night was intense, man. That thing was intense. Wow. I mean, you had the Volpe home run early on. It was 1-0. Couldn't get the bats going. And then once we got freed out of there, like it was over. Like once Luke Weaver came in the game, like Harold, if you're watching, you know what I'm saying. I ordered myself a Luke Weaver jersey today because he's now my new favorite player. Like we light that guy up like Christmas Eve. Like I don't know what he's throwing up there. Fastballs, cutters, splitters. I don't even care. Everybody's got his number. Masa, Taka, Yoshida's got his number. Seidon Rafaela's got his number. Like everybody's got his number. It was amazing. It was incredible. And then, of course, Chapman came in and loaded the bases in the bottom of the ninth with nobody out, and then got out of it, which was just, man, I was on the edge of my seat, 100%. So it was a good night for sure. And now tonight, it's like, wow, are we really gonna beat him in 2? That would be pretty awesome. But Scott S says, Dr. Jim, what are we doing for the Tesla delivery numbers tomorrow? Before the bell, really? All right, let's do something. I was looking for something to do, and I couldn't really find anything. But wow, Tesla up $14. I kind of think I'm going to really surprise you guys a little bit here. So I'm going to really surprise you guys a little bit. I know what you guys are probably thinking I'm going to do if you've seen the show for any length of time. So I do brand myself as being a short-term contrarian. I do brand myself as generally liking to sell things that are up and buy things that are down. I think that that's a very, very I think it's a strategic way to approach the markets. Now, I know the momentum bros and brosats, man, they're going to rake you over the coals if you say that out loud. So be very careful with who you share that information with. I understand that. But I'm kind of thinking here, I don't know, man. Is this a if you can't beat them, join them situation? I think it might be. I kind of think we're going to play Tesla to the upside tomorrow. Like, I kind of think, man, what if these delivery numbers are looking good? What if we just I don't want to deal with earnings on October 22nd. So what if I just go into the front week, so 2 days to go, and this is just going to be a smash and grab. Like this is just going to be let's just see if we can get a little something to kind of pad the stats and grease the wheels, and nothing super crazy either way. But what if I buy a 455 and sell a 465? I mean, this is the prototypical perfect, at the money vertical spread for taking a directional shot for some binary event. And again, I mean, according to that was what Scott S. Yes, thank you, Scott S. They've got the delivery numbers in the morning before the bell tomorrow, and so this is good. Right. I mean, I am obviously after the Red Sox win tonight because we don't want to go to game 3 because I think I'm pitching game 3. Like, I think I'm slated for a couple innings in game 3. That would not be good. So if they're going to get it done, they got to get it done tonight. And if they do, I am not going to sleep. I am not going to sleep at all. I'm going to be watching highlights from yesterday, highlights from tonight, highlights from 2004, like whatever I can do to just kind of get me going to the ALDS, which would be next on the slate, of course. But then I'll have this trade to look forward to in the mornings, which in the morning, which would be super fun. With this little Tesla deal, but I like it, man. I don't know, Scott asked me. I don't know what you're thinking. I know you kind of said a butterfly potentially. Nah, let's keep it a little simpler than that. Plus, let's be a little bit more aware and cognizant of just how thick the stacks of cash that we're lighting on fire actually are. And so the gold stack of cash, I mean, I could smell the smoke in the air, but it's not quite set ablaze just yet. We've still got time. There's still a little bit of hope. Now, gold is rallying right now. In fact, I think it rallied about 11 or 12 points since we've been on the show. So that's not good. But but I think for this Tesla situation, let's just do a little something to the upside. Nothing super crazy, but we do a 455, 465, and looks like 483 on the mid price. Again, just a way to take a cheap shot, just a way to take a very cheap, simple shot. You don't have undefined risk, so you don't have to worry about that. You also don't have, the butterfly risk of having to really get the directional move and the magnitude of the directional move correct. You don't have that either. And so this is just a very clean, simple upside play that looks like it's going to be about 495 now. I'll try 494. I'll probably get filled, maybe even improved. All right, yeah, we got improved to 492. So there you go. So we got a little Tesla action for tomorrow, and boom, there you go. So thank you there, Scott S. I appreciate you so much. Let's see. Lobo Doe says, gives folks confidence when flying that your air traffic controllers are not being paid. Yeah, I think I've heard that. Are they part of the government? Is that a government run type of thing? Yeah, that would not be good. Like, that doesn't necessarily give me a lot of confidence. I have to be honest with you. And so maybe we need to make some exceptions. Like, maybe we keep the air traffic controllers kind of, on the job. I mean, that seems to make a little bit of sense to me, but maybe I'm way off base. And so let's see. Joel James, wait, what day is this? Jokes aside, more Dr. Jim helps cure the burn of no more Tom. Thanks you for all you do. Can you explain the calendar spread and maybe even put one on so we can take the journey with you? Man, let's do it. Joel James, let's do it, man. I appreciate you so much. And you mentioned this Tom character. I don't know who you're talking about, but I'm so glad that you're here with us. And no, we all have to lament and grieve the sadness, of course, and we're all doing it in our own unique ways. And I prefer to do it with humor of the B- variety, but humor nonetheless. And so, all right. So when you're doing so thank you there, Joel James. I appreciate you. So when you're doing a calendar spread, you generally want to have a lower implied volatility underlying. So we're going to go to the watch list and we are going to choose, a low implied volatility underlying. That's going to be a good situation because usually with a calendar spread, you want to play for volatility expansion. Like you're kind of playing for volatility mean reversion to work in your favor with expanding volatility, not contracting volatility. And so when you want to enter a calendar spread, you're typically looking for low volatility. So if I go to the watch list here, I've got the Tasty default watch list. Now let's go to Tom's watch list. I'm pretty sure contractually he still gets some royalties. So let's get him a few cents. I mean, from what I understand, the second Range Rover has not been bought. And it's certainly not going to buy itself, especially now that my man's unemployed. So we got to do our part. We got to help out a little bit. So let's go ahead and maybe we can get a Tom's watch list gone and a Dr. Jim's watch list. It's just going to be, Dr. Jim's watch list is just going to be Kroger. It's going to be Florida, obviously. And then, maybe, I don't know, maybe some Nike. Maybe obviously some Wolf. We'll get some Wolf on there. Maybe some GameStop. I haven't talked about GameStop in years, but maybe it's time to resuscitate that guy. But if we go to Tom's watch list and we sort by IVR from low to high, you can see that, there's a few candidates there at the top of the list. So TLT, right? Home Depot. Home Depot is going to be a really, really good option. So here's the second thing, in my opinion, when it comes to calendar spreads. You want to choose a stock that's probably at least a couple $100 because you want the calendar spread to be worthwhile, right? Because you don't want to buy a calendar spread for like $1. Because generally speaking, when we do calendar spreads, we're typically looking to manage them at maybe 20 to 25% profit. So if I buy a calendar spread for $1, I'm only looking for it to rise up to maybe $1.20, $1.25. So again, you got to think about that like contextually. It's like that's only 20, 25 cents. That's not really that economically significant. Right. And so you have to be mindful of transaction costs. You have to be mindful of kind of, just the capital that you're allocating, even if it's not very much capital, because it is defined risk. It's just not a great habit, in my opinion, to get into using calendar spreads on really low priced underlyings. You're going to want at least a few $100, if not more. Like you could do calendar spreads in Netflix. You could do calendar spreads in some high priced stocks, and that wouldn't necessarily be a problem. And so I'm thinking here, let's go to Home Depot, though. It's almost a $400 stock. That should be a good option for us. We go to Home Depot. You can see the volatility, the IV rank is pretty low. It's only 8.9. We go to the trade page. Now, Home Depot has earnings on November 18th, but that's actually okay for a calendar spread because with a calendar spread, you're going to be selling the front month and buying the back month. And so when you set that up, and if there's earnings that kind of straddle the two different expirations that you choose, that can actually work in your favor, because what that essentially is doing is, I'm going to be selling premium in a cycle that does not include earnings, and I'm going to be buying premium in a cycle that does include earnings. And again, if we have any implied volatility expansion, like I kind of alluded to earlier in Palo Alto, then that's going to be beneficial to us, because it's going to pump up the volatility in the back month more than the front month, and we might be able to benefit from that differential. And so if you see an earnings like a purple line on the trade page on the option chain, and you're looking for a calendar, Joel, or anybody else for that matter, don't necessarily use that as like, all right, I need to stop and do something else. Not necessarily. Like, you might be able to still kind of proceed as planned, which I think we can do. I think we can go ahead and do that here. So what I want to do is I'm going to buy November with 51 days, and I'm going to sell October. I'll just sell October with 16 days. I mean, usually we want kind of a 2-to-1 ratio. So if I was buying 51 days, I mean, I might be selling about 25 days. So maybe, I could do the October weekly, but I prefer to stay in the monthlies if I can, because the liquidity is that much better. And still, this is going to give me a few opportunities to sell more premium against the back month. Like, let's say October expires worthless or close to worthless. I take it off. I can just establish like little mini calendars, right? Like in the October 24th weekly, the October 31st weekly, the November 7th weekly, and so on and so forth. And apparently there is no November 14th weekly, which is a bit odd, but that's probably going to show up at some point here soon. So, all right, so let's go in here. Let's see if this guy sets up. So I'm thinking, let's just do something that's really neutral. Maybe neutral to a little bit bearish. Usually with calendar spreads, in my opinion, it's easier to play them on the put side, because, whether it be right where the stock is or a little bit lower, because again, remember, this is a strategy that's set up for volatility expansion. This is a strategy that's set up for expanding volatility. If that is the case, then choosing the put side is going to be a bit more helpful, because if the stock does go down, volatility is probably picking up in that stock. If volatility is picking up in that stock, the calendar spread is going to be beneficial. The put calendar spread is going to be beneficial, I should say. Now, does that mean that you can't make money on call counter spreads? No, it doesn't mean that at all. You can certainly make money on call counter spreads, but you have to understand that you might have a couple of things working against you that you weren't entirely sure that you had signed up for in the first place. Like if I do a call calendar spread at like the 405 strike, let's say, and Home Depot rallies up to 405, then I may be in a situation where I'm not making as much money as I thought, because volatility is going down as the stock rallies. And so that can be problematic in terms of having a couple things kind of working against what it is that you're kind of ultimately trying to accomplish. And so I'm thinking here, let's do a 395. Like if I sell the 395 put in October, and then I go to November and I buy the 395 put in November. Now, typically, when it comes to calendar spreads, we like to collect enough extrinsic value on the front month that covers the cost of the calendar. So you can see the cost of the calendar right here is 653, right? If I go back to October, you can see that the option that I sold only had 455 in extrinsic value. So it's a little bit not the best pricing for what we would typically look for, but we've already invested so much time in this, Joel. I want to put this trade on because I do think we can learn a lot in terms of managing this moving forward, and I don't necessarily want to lose the last 4 to 7 minutes of our lives and have nothing to show for it. But I did want to point out that if I had more time and if the show wasn't about to end, I would probably start to change around the strikes a little bit, maybe even change around the expirations, go into some of those weeklies, and see if I can't find a situation where in the front month, I'm collecting $5, and in the back month, I'm, the overall debit of the strategy is only maybe $4.75 or something like that. But I like the way this sets up, generally speaking. So let's go ahead and let's push this guy out, and we'll see what happens. So there's your activity. Let's go ahead and do we can do maybe 647 to see if we can get filled. There you go. So we got filled at 644. So we actually got improved. So there you go. So that's good stuff. So thank you there, Joel. I appreciate that very, very much. But let me see if I can get somebody else. Emmett Morrison. What's going on there, Emmett Morrison? With today's topic being Delta, what's the Delta on the Bo Sox winning the World Series? Man, I don't know. Do you want the objective Delta, or do you want my own personal Delta? I mean, objective Delta? 12, 15. Personal Delta? 105, 109. Like, it's happening, baby. You can't stop it now. Like, especially, can you even imagine if we get Roman Anthony back for the ALCS, which I think he's behind schedule when it comes to his recovery with that oblique strain or whatever it was. But if we get him back, oh my gosh, can you even imagine that lineup with Roman Anthony? I mean, first you've got Masataka Yoshida, and then you've got Nick Sogard, and now you've got Roman Anthony. Man, that's some crazy stuff there, Emmett. That's some super, super crazy stuff. But let's see. Oh, Dan Duquesne says 100 Delta guaranteed. That's what I'm saying, Dan. Although I'm a little bit above you at about 105 Delta. Scramble everything. Oh boy, I made it back just in time for the daily dose of Dr. Jim's Power Hour. Well, it's like a power of 45 minutes. Ready to reopen the Gov and start the money printers again. That's right. That's right. That's right. Let's see. Ask Dr. Bonnie in the house. What's going on there? Ask Dr. Bonnie. Thank you for being here so much. I hope that you get some value from the show and hope you come back. And of course, if I can ever help you, man, please reach out to me. I am so happy to help you. Adam Armfield, hey Jim, would be great if someone could clip these segments as separate videos. Well, that's what we do. That's what we do on YouTube. So we're gonna wait and do all three parts. For today, we've already done one, and then 2 and 3 tomorrow and the next day. And then on YouTube, it's gonna be a separate standalone video. And so that is going to happen. That's kind of why we're doing what we're doing. And so be on the lookout for that. Even though if you saw it today live, I expect you guys to be on YouTube pumping that things up. Watch time, likes, comments, all that stuff. I'm counting on each and every one of you. And so, man, I'm totally out of time, though. Totally out of time. Man, I appreciate you guys. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with Engineering the Trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
I tend to call myself a lonely options trader because I really don't have a lot of people that I can share stories of wins and losses with. Like Tasty Live plays the whole day at my house. I love that they've made everything really easy to digest and take in. I love that you can easily send an email if you have any questions and Tom will be quick to respond to you, or if somebody else, Nick, Tony. I really enjoy that it's a customer focused and it's a customer centric system that you guys have here. And Tasty Live has definitely changed my life financially because I'm able to determine how and where I can make my gains and not be a passive investor where you're just relying on the markets to do something for you. You could actually go out there and do it yourself.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed.
Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
What's going on, everybody, and welcome to the most dangerous show on the Tasty Live Network. It's Engineering the Trade. I'm your host, Jamal Chandler. If you guys got questions, comments, concerns, anything, jump in the chat. I'm here for you today, man. It's a live Q&A. Let's do it. Markets are continually going higher. I got to say, while I was probably the first person you heard all week, starting on Monday, to say this government shutdown ain't going to affect stocks at all, I'm still a little bit surprised to see markets just continually going higher. It's kind of awesome. I mean, essentially, I think we're kind of breaking out of the sort of little range that we've been holding in here, and it looks like we're on a clear path to move a little bit higher. But I want to hear from you guys today, man. You guys are completely jumping in with both feet. I love it. Scramble everything. Trade idea. GDX. Jade Lizard, huh? You like Jade Lizard? Just pull up the platform here. Let's show the people what they want. Jade Lizard and GDX. I'm curious, why do you want an actual, you want a Jade Lizard because I personally like Jade Lizards on names that are kind of down in the dumps. This one is, geez, I mean, you know, this is a tough one. But I will oblige. I mean, what are you thinking? What strikes are you looking at? What are your strikes? Give me what you're thinking. Scramble everything. I want to know your strikes. Tell me. In the meantime, I'm going to answer Adam. Hi, Jamal. I have a First Solar 195. First Solar, huh? I used to love this name. I haven't traded in a while. But First Solar, 195, 215 call spread. Month? I'm assuming you're in November. Okay. Let's see. I'm wondering what to do with it. I could get about $400 credit by either rolling the call side to so you're in the 195, 215. I'm going to guess oh, no, you're not. You're probably in October, huh? Let's see. 195. I'm guessing you're short the 195, 215 call spread, right? Tell me if I'm wrong. Looks like I could get about $400 credit either rolling the call side to the 180, 200. And the next expiration, yeah. So, rolling forward, rolling down. So if I was short this thing, and it's in the money, and you can roll to this expiration, let's see. You're collecting $1,600 in credit right now. Yeah, let's see. So you said you could go to the 180, 200. Yeah, I would do that. I would just roll to that expiration. Let's just see if it's going to pull back some. Now you pull up the chart here. It's done some funky stuff recently, right? I'm sure you probably had it on for a minute, and this move kind of got in the way of fun times and making money, and just see if it's going to pull back some. So I would just roll, and yeah, you could do that credit spread right there if that helps you any, if that makes any sense. That's what I would do. Cool. Hope that helps, Adam. Is one of these better than the other? What do you mean? I saw vol not moving anywhere this morning. I don't remember. Tell me your real question. I still remember your GDX Jade Lizard scramble everything. Just tell me strikes, or I could just make up my own. I was just curious if you had a specific strikes that you were looking at. Looking for something down in the dumps. Can I interest you in Target? Yeah, exactly. Target is typically something that, I mean, but there's not enough vol in this one. But I just don't believe in the Target story. I've tried it. I tried to trade this a couple of times, even around earnings, and I just don't see it. But back to the GDX. Let's just see here. Jade Lizard. Let's look at, well, yeah, I wish this would have had a couple of strikes wide. Yeah, the 350 credit. You really want more. Can we get a little bit more? 85. Let's see. I mean, this would be a good Jade Lizard, I suppose. You could do the 73 strike along with the 78, 81 call spread. You're getting well over the difference between these two. This call spread here is It's $3. You're getting basically 54 cents more than that credit. It does cost you a little bit, $1,200 to do it. And then there's the whole thing of the pullback potentially in gold. Now, we haven't seen any signs of a pullback in gold, but you could do that one. You know, that one works. And again, if it gets down to 73, the reason why I chose 73 is because that's basically the 2-week moving average here. That blue line that you see on the chart is essentially the 2-week moving average. If it pulls back, maybe it holds there for a little bit, and that gives you the opportunity to do something, maybe close out the spread if you want. But it does cost you $1,200. I kind of have this rule. A lot of times when I do trades, maybe 3 to 1, maybe 4 to 1, a little bit. This is kind of on the edge there of a little more than 4 to 1, so I don't necessarily know if I would love it, but it's very doable, that's for sure. Where do we got here? How about a 1-day long call spread, 24,980, 2,500? Sure. I mean, you know, let me look at this. Actually, yeah, this GDX spread. Do I really want to do it? I'll, you know, for giggles, let's do it. Let's put it on. Let's see if we can get that off. 354, 350. We're just gonna have to go 350, aren't we? Does trade in pennies? It does trade in pennies. I should be able to get filled on that, right? There we go. How about that? Scramble everything. Somebody said something. What did you say? Well, at this point, the 24.90 long call spread, I mean, that's already done unless you were talking the X. The NDX spread? What does that look like? 24 what? No, can't do it here. 24,980. Yeah, I wouldn't do that in here. And I assume you were talking about, I mean, well, M&Q, it's already gone, bro. Like, it's too late. We're already 25K. I'm not exactly sure which one you're talking about. You're talking about in NDX. Whoa. Getting ooh, yeah, I love it. You guys got so many questions, so many. Let's see what else. Reddit had a upside broken wing butterfly that is now getting crushed. Would you ever roll down the long put and the short call to create an inverted, iron condor? So let's see Reddit. Obviously, stock is getting rocked today, and I'd love to know your strikes. Just it would help make things easier. But to answer your question, I guess without looking at strikes, in that situation, you probably had a little bit more on the downside, I imagine, on your strike. Would you ever roll down the long put and the short call? Honestly, I'd probably just close the whole thing. It depends on what expiration you're in. I'm not exactly sure what expiration you're in. I need a little more info. But I'd probably just close and move on, or just close and reestablish with this huge move that has already happened, that has taken place. Seems like it's gone lower. Oh, it has. Yeah, it went a little bit lower in the last few minutes here. I was thinking about throwing on maybe some. I just couldn't figure out what the deal. I usually don't like to sell in an earnings cycle before earnings happens. So for that reason, I'm going to stay away. Happy Hump Day. How about them Dodgers, huh? Yeah, I give love to the Dodgers. My dad is a Dodgers fan, so it was actually a good day yesterday for sure. Dodgers winning and the Cubs winning. Thoughts on the Meta and Netflix getting smacked while the NASDAQ goes to the moon? I wouldn't put too much. I think there's I think it's interesting. I think the rumor is that Netflix is down because, you know, Elon has been making a lot of noise about it. I'm not sure about Meta, but either way, I think they're just one-offs. It is kind of interesting to see the market push higher without some of the major leaders, especially on the tech side. You know, Amazon's up, Google's up, NVIDIA. I guess all you need is for them to really be positive. So it's just drifting higher, right? I mean, I say drifting because we're only up half a percent. I know it seems like, you know, we're a lot, but it's only 0.5%. It is. I'm with you. It is a little fascinating with Meta being down and with Netflix being down. I was wondering if that's an interesting dip to get in. You know what I mean? Like maybe it's time. When we got earnings? October 21. Wow, we got almost 3 weeks until earnings. That's some time here. October 21, do we even want to do anything? Do we think Netflix is headed back towards the good times? These options are not cheap, though, I'll tell you that. Not at all. Can it get back to $12.50? Maybe it can. What does the $12.50 in, let's see. Nope, $19 is way too damn expensive. We're not touching that at all. Jamal, I sold the 170 strike put in Lulu. 16 days to go. Okay. Let's see here. 16 days to go, 170 strike put in Lulu. Okay, I see you. And it's not in the money, but it's not profitable either. When I roll out in time, I receive a credit, but no buying power and less than 1% pop. Yeah, well, this thing is 22 IVR right now, and it did already have earnings. You could roll out to here. The pop is a 68 pop. This is $2,000. I can't say why wouldn't you want to do that? It's not terrible. 50, your chance of making 50% is 80%. P50 is 80%. Your pop is 68%. And the only reason I don't love this, again, it's my 3-to-1 situation. Like, I would rather, if this is gonna cost me $2,800, I really want to be collecting like $9 for this put. To be honest with you, that's just kind of how I feel a lot of times. So, I want a higher IVR. Correct me if I'm wrong. I just do in this situation. But maybe I'll play along with you. Why not? We'll trade that. We'll sell those just to show you that it's possible. Publish the follow feed. Publish the follow feed. That's two trades. Good stuff, guys. Keep it going. Gives me down. It is kind of crazy day, right? Like these are interesting times. When you have a looming government shutdown, market doesn't seem to care, which it really shouldn't, but there's a lot of different names that are moving, a lot of different stuff that's happening. Short puts on UNH, Costco, JP Morgan, closed out my Lilly. Yeah, nice. Lilly has been good. Nice job, Steven. Steven's just, there's a Twitter page that I follow of guys posting wins. This is Steven posting wins. Nice job. Netflix, I do want to kind of do something here, honestly. I'm looking at it, and earnings is coming up. It gets a little expensive, though, but gosh, I want to see if, this is way upside. I'm not trying to play this far upside. I am, what to do? I don't really want to sell a put spread. That's not the play. I really do want to do a calendar call spread. They're usually a little bit cheaper than this. The 1300 seems ridiculous, but I don't know, maybe it's not. Let's see. It's just these are not cheap. I'm not paying $1,000 for a calendar call spread. I don't know. I can't figure it out. I don't like it. I do think it's an opportunity, though. Short-term iron condor, monthly UNH. You're doing the October. 16 days to go, huh? Yeah, it's getting a little bit difficult right now because there's a lot of names that are coming up with earnings, and I really don't like to sell earnings months ahead of earnings. It's just so much that could happen within that time period. Meta, what about an 800 calendar call? You know what? That's a good call. Let's do that. The end of the month, the 800 strike. Hopefully it's not. Let's see, 800, and we'll do the 24 just in front of it. Yeah, why not? Let's do that. I like that. With earnings coming up. Replace. Let's go 735 since you want to be stingy. The 735 kind, bam, filled on that. And you know what? Let's see if we can get a 775 as well. Why? Just because I like the odds. Never tell me the odds. God, that's $1,000. All right, we're just going to stick with the 1. I don't really want that to be a big position like that. Yeah, I don't want that to be a big position like that. UNH. UNH has gotten quiet ever since the big moves in August and September, but I've been wondering if it's going to do another thing again. I'm not sure, but what I do know is this fall is pumped. Maybe we can go to the 400, 410. And how expensive is it to sell a put in here? Ooh, that is not cheap. I know this would be a decent one. That would be an even better one, like 320, 400 and 410. It just costs $5,000 though. That is, that sucks. But that's a good one. That's a good one to do. Sell a vertical call spread once Netflix hits 250. Okay, I see you. Nice triple bottom. Nice on BMY and triple bottom at 44. Yeah, BMY. These stocks are really flying today when you look at some of them. BMY, Pfizer, Lilly, of course. Big news in that whole kind of sector today. Big bars, too, the last 2 days. Merck is another one. I'm a little bit annoyed. Merck was one that I had on my list back in August. Although I would have been annoyed by now. I mean, it would have never really taken off. But it was a name that I had on my list back in August when I was looking at potential zebras. It was very interesting to me. But since then, I have yet to, I never did it, never touched it. CRM was one that worked. Maybe it's time. CRM has been really weak. Maybe it's time to get back in the CRM. I don't know what's going to take. I don't know what the catalyst is going to be to push this stock higher, but it definitely needs one at some point or another. I had one of these not too long ago. It is not a cheap trade, but again, this is one where if it really starts to get on the roll, we can get upwards of 280. We need a push, though, and it's been very quiet recently, right? It's been very, very quiet. It hasn't really done much at all. It just needs the right push. That's all it is, guys, right? Like, it just needs the right push at some point or another. So what's been nice is that Microsoft, and I can't remember who, if you remember, I almost want to say, was it Scramble Everything, who mentioned Microsoft in last week. Talked to me and came up with an idea for a trade. You came up with the idea, what do you want to do at Microsoft? And I was like, well, the one thing I would do is a calendar call spread, and it's actually worked out well. It's been pretty street. Steven, yeah, you're short UNH. I like that. You're short that put. I mean, I'm trying to see if I want to talk myself into that trade. It's not the craziest thing. I kind of like it, actually. And you get some nice credits there. I should do this trade probably, huh? What's the deal here? Where's 320? 320 is here. That would be, so 320 would be okay, this is above that lower end of the breakdown, 327. If it were to break down for some reason, it could be that. Let's do this. Let's see if we can get this off. Let's see if we can get that off. I like that trade. Too late to hop on Microsoft? Probably not. I don't know. It depends. I actually don't think so. Look at this long base that Microsoft is carving out. At some point or another, Microsoft may get to making a serious move once again, like we saw in May of this year and early last year, when it really became, it was the first one to really get on target with a lot of the open AI stuff. So it's probably not too late. You might be able to still get in. You never know. I believe it's someone else, but yeah, nice trade. Oh, well, it looks like we're filled in the UNH trade. Look at that. Look at that. Up on the board on that. Yeah, it was it's been a nice trade in the Microsoft. So thank you to whoever came up with the idea. Much props. Just posting GDX, the Lulu, and the UNH trade. Let's see. Yeah, Merck. 160 target on Merck. Okay. Well, This is one of those situations where you talk about you want to make a trade, not exactly sure what trade to do. In Merck, it might. Listen, you got to pull out. Let me pull out the chart here, the longer term chart. Let's see. This stock, has taken a real dive since the beginning of 2024. Is it time? Is it going to be bouncing back? I wonder. What could we do to keep tabs on this in here? I guess we could. This could be one for the. This could be a zebra. We'll put the zebra on in here. How about that? Publish that. We got those trades on. Yeah, I could probably do a little risk managing here too, maybe. So, oh, that was sweet. For a second, it looked like I had like this crazy P&L in there. iBit, one of the things that I've been looking at recently and wanting to do is maybe some vol stuff with a lot of with a couple of these crypto related ETFs. Ether being one of them, and iBit. iBit, I have a Iron Condor in here, and I've had that on for some time. This is, I'm sorry, not Iron Condor, a Zebra on in here. I was looking at the vol component though, and so on Options Trading Concepts Live, me and Mikey were talking about his year-long strangle trade, and this thing does have a little bit of vol to it, right? So while I have a direction little trade on, right, with this Zebra, having the strangle on, I think could be worthwhile too. But I've really looked at Ether. This one seems to have, when you look at the vol in here, 68 and change 70. You don't usually see ETFs like that. But again, this is a newer product. This is something that is still coming under adoption. But again, this just doesn't, I'm surprised the buying power is this much. It doesn't really hit my 3-to-1, 4-to-1 type of ratio there. Strategic resistance. Are Vecchio, Spivak, again, still with Tasty? Yeah, they're still around. The Vecchio, Spivak, and Radigan are still with Tasty. Vecchio's on paternal leave right now. Just had a baby boy not too long ago. Julia is still here. Julia is doing other things right now. She's not doing as much with the network. She's been doing more, a lot of stuff with our mobile, because they just need her brain. You know what I mean? They just need her brain. They just do. I know. I can't figure out why CRM won't break. Like it's been really. I'm a little bit surprised, and it's been really weighed down, and I can't figure out why. And it just feels like, it was one of my trades that I had on a couple of weeks back, but I took it off not that long ago. Let me see. Let's go to the tree here. I closed it 2 weeks ago, essentially, and yeah, almost 10 days ago actually, and yeah, the Zebra was on. I mean, I made a little bit of money on it, but it's it just hasn't really broken out. You know what I mean? And I don't know. It's going to take some type of catalyst to make it work at some point or another. So I have this strangle on in IBM. I think I'm going to keep it on. Although this is another one where earnings are coming up at some point, and earnings have moved in. I think maybe it's time to close this. This will be one to risk manage. Small gain here, but I could use this capital elsewhere, and we'll move on in this one. Nice. I love it when you get filled fairly easily on a closing trade, especially one that you made money on. Oh, look at you. Look at you, Night Moves. Now you're going to be in charge of determining our show cadences here. You want Liz and Jenny in the afternoon? Well, I think you'd have to take that up with Liz and Jenny for sure. I mean, first. CRM debit vertical call. Nove 240, 250 and Nove, huh? Nove 240, 250. Yeah, it does. I mean, 640 is not bad. I mean, when's the last time? Let's see. When's the last time it got to these levels? Let's go to the 1 year. Let's look at the 1 day. It really is hanging below. what's my red line here? The 50-day moving average, essentially. So it is kind of hanging below that. But 360, it's not bad. It's a low pop, though. See, that's the thing. Like, this is a lower pop. We typically like to do these trades, do it more like this. Again, I mean, it's a 50-50 shot. It's almost like buying Stockton if you're going to buy the call spread. It's a little bit better. I don't love this one just because it's $1,500, but I want a better pop. Can you see the difference in the pop? 49% here with little extrinsic versus your 240, 250 is a lot more extrinsic, right? You don't want as much extrinsic. So this is a better trade, but of course this is bigger. It's just $30 wide. So I could understand why you wouldn't want to do it in a bigger name like this. Just my thoughts there. Ether. Again, I like the strangle in here. I think this falls high, but I'm not going to do it because I don't love the buying power that you're getting for it. It's just not the greatest thing. Yeah, CRM, if it breaks lower, I think at this point it's just a matter of just waiting on it to break lower, maybe break through annual lows, which are 226.48. If it breaks through there, I'll probably get interested again and maybe do some type of zebra or something like that. What's up, Donald? How you doing? CELH, what you got in here? What are you looking at? What you doing? What you thinking? CLH, isn't this, what is Celsius Holdings? I feel like I've heard about this. Yeah, I don't know. Well, look, we got a second here, but basically that's the time. I put on about 3 trades there. Those are all on the follow page. And yeah, other than that, we're just hanging tight and holding the line while markets are continuing to move higher. But I feel like we just put on a bunch of bullish trades. I'm going to have to find something that's a little bit of short delta now just to offset it all. Folks, thanks for watching the show. And as always, be smart, be patient, trade them small, and trade them often. I'll see you.
When you define risk, you set a limit on how much you could lose.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Hey everybody, Tim Knight again, and it is another green day.
Government shutdown doesn't matter at all, it seems. In fact, I was just looking at some stats. Government shutdowns are historically very good for stocks. Stocks don't care. They'll have less data to work with, as I mentioned yesterday, because this Friday will be a non-event in terms of data, whereas it would have been the jobs report. I noticed that the calendar's also tentative now, which is a nice way of saying it's not going to happen. The market did fall steadily yesterday, pretty much from the close all the way down to midnight, my time, which is PST. And from midnight, it has been just like a straight line up, almost 100 points on the ES for no particular reason, but people are digging the shutdown, I guess. I've got 20 shorts now, 12 are down, which is good because those are shorts. 8 are up, none of them too much. All in all, a slightly positive day, which isn't bad considering everything is green, 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 green in the general market. ES, NQ, RTY, YM, all green. Gold is teasing the $4,000 level. It got to over 3,900. And I've got some charts. So let us jump into our government-free world that we live in now and kind of see what's cooking. Here's the spider going back for about 4 years or so. And we can see the two broad patterns that are key in this multi-year chart is this base that forms down here, which was during kind of the brief bear market we had and the recovery from that. So kind of a nice cup with handle base there, and then a blast higher, and then interestingly, a quick, powerful plunge lower based on trade war fears, which, wouldn't you know it, fell right back to support. So this had been resistance. It changed to support here, and even during the plunge, that's just where it hit right there. And since then, it's been just nothing but up. Our wedge here has been violated to some degree, as you can see. I am honest to a fault when it comes to charts, and there's a way to draw this so it looks like we're still below it. That's not me. I got to show you what's real. And so on this scale, although I got to tell you, and I'm still getting used to this new platform, the scale tends to change, on its own. So I'm not even sure if this is a log scale. Okay, it's not. Let's change that. Okay, that made all the difference. Good Lord. Okay. Never mind. I'm pleased to say we're still below this thing. And maybe it's me. I don't think it is, but maybe it's me. But the scale just like, I think I'll change back to arithmetic, which tends to confuse poor old Tim. So the good news is that the wedge is still behaving beautifully, and this is still below that. Although interestingly, I think we have to change this a skosh, just to be, again, very honest chartists. So this looks like it's more along those lines. So it's still a really pretty chart, and we're still below, in spite of being at lifetime highs, we're still below that broken trend line. The diamonds, kind of the same deal. You can see here the same wedge, and we have the same kind of principal patterns, which was this base down here, whose top represented the bottom when we fell. In other words, this had been resistance until here. It changed roles to support, so when we went to plunge-a-rooney, it ended bang right there at that same level and shot up like a rocket afterwards. And last Wednesday, we had the failure of that trend line, and we're below it still. And much, much longer term, you can see this blue supporting trend line. We are several light years away from that. The cubes continue to be strong, another lifetime high. And I've got to say, I was re-watching clips from The Big Short, which it'll surprise none of you is a favorite movie of mine, very inspirational. And, one of the themes of the movie is that there's this small number of people completely derided during the housing bubble that kind of saw beneath the surface something was very wrong. And it's one of those agonies of being a bear that you can be as smart as you like and you know all kinds of stuff and have all the facts in your hands and still be wrong in terms of your results. That's the plight of the bear. And I'm reminded of that these days because there's a fellow I read, Ed, I don't know if it's Zytron or Zitron, very good writer. And he about once a month, I get a long newsletter from him, just shredding the whole AI industry. And it's lucid and intelligent and well-written and well-researched and just heaped with intellect. And it's been wrong so long in terms of at least the financial results. So it's kind of a heartbreaker to see that, because one day I imagine he'll be right, but it's hard to be wrong for a long time with the facts, but screw up the financial side of things. So if you see Big Short again, keep that in mind, because it's kind of a quirk of the world. Having said all that, AI doesn't care. They're still flying higher. Everything's going, NVIDIA, another lifetime high, Cube's another lifetime high. The virtuous cycle that we spoke about yesterday is still very much intact. China, by way of FXI, I have tiptoed back into this as a short. We are in the vicinity of what I believe is an important resistance zone after a very big push higher, thanks to the likes of Alibaba. And, we'll see. It's a nice, tight stop and worth a shot. We have not broken support. It would take a failure of this level to make things really interesting. But I've entered a kind of medium-sized position on FXI. One interesting thing, in spite of the shutdown, one of the very few items that I like on the long side continues to be IEF, which is the kind of medium-term bond fund, 7 to 10 years, I think. It's been hammering out a very good-looking right triangle base. This is not a dynamo. You're not going to wake up to 40% gains on this. It just kind of tiptoes its way higher while also throwing off, what do you expect, like 3.5% yield, something like that, something modest. But as a conservative but well-formed place to stick money that you don't know what to do with, you could do a lot worse. So I still really like IEF. Gold continues to be just a monster. The front month is up about $18 right now. If you've watched me for more than a day, you know I'm a big fan of precious metals. I'm also kind of confounded that they're not taking a breath in this run-up. And those breaths do happen. So for example, you can see, going back some years here, there had been a base round about here where it had been just messing around for the longest time, and finally cut loose from that. And it too had this just rush higher. But from time to time, you're going to get some back end filling here, and then here, and then here, and so forth. So it's the tricky bit is to figure out, all right, when is enough? And it's hard to tell because this thing just keeps raging higher. Sometimes there's a human love of big round numbers. I'm sure 4,000 is beckoning the masses to pull it up to that level. So my usual shtick here, long-term, as enthusiastic as ever, if you told me in a couple of years gold would be 10,000 an ounce, absolutely could believe that. But I don't think it's going to go up every day. So having said that, I do think the miners have gone kind of into la-la land here. If you back up from this, it has been just an absolutely explosive move. Well earned. This is a very nice base beneath that. Everything below that green was hammering out a good long base, and it's responded appropriately. But for goodness sake, it can't go up every day. So having said all that, I have entered early this morning a small position in Dust. And Dust, as you may know, is the leveraged bearish bet against precious metals miners. Why not short GDX? Well, this particular account's just a cash account. I can't shorten it, so I'm just going to buy Dust. It's a simple trade. The stop's just below today's low. And if gold even catches its breath slightly, I think Dust will do nicely. So we'll see how that turns out. But yeah, to date, going against gold has been a losing bet. We'll see if that changes. I would also mention that in spite of my persistent love of palladium, I'm out of it for now. It's a terrific looking base. It simply concerns me that gold is so high. It would be vastly more appealing if gold could take the aforementioned breather which I think would drag palladium down to some very appealing prices. But the longer term view of this is still just dynamite. I love palladium. And my friend Jesse Colombo did a nice write-up on that on Substack yesterday. What else is cooking? Here's a new one. I shorted some XLB early today. And even with the market all green now, that's working out well. XLB is down over 1%. And this is the stop, right, like so. And what I'm looking for is kind of an analog happening right here. You can see I've drawn these two oval areas of kind of a diamond pattern. And so that's the basis of the trade. And that's been one of my better trades of the day. So XLB, that's materials. Some other items that, in spite of today's strength, are going well on the short side. Continue to like Costco. We're down nicely on this one today by about $7 or so. Hilton, HLT, that continues to move in the right direction. These are all just simple shorts, and I think they've got plenty more downside to go because it's a matter of relative performance. If they can move down on a day like this, that's quite encouraging. A real favorite, and my best dollar result has been Meta, formerly known as Facebook. I've tightened up the stop on this quite a bit to this new gap, that is to say yesterday's low. But yeah, that's my biggest dollar winner. That's moved down a lot. And I think it's plenty left. Another good one that's doing well is Netflix, down well more than $20 today. And it hasn't even broken key support here, which may or may not happen. But that's one of those 20 shorts I mentioned. A couple more of these. This is my occasional nemesis, Royal Caribbean, RCL, which itself is down about $7. So that's a nice move. And another one, which is a bit subject to the tariff wars right now itself, is Wayfair, symbol W. And if you're back way away from this, you can see that we've got kind of a triple top going down here, having come down from this long slump years ago. It had topped out during the COVID boom. This is an online furniture company, and it's had this tremendous run up in recent months, but I am short this, and it's starting to, I think, ease back some. Well, the better I get at this, the quicker it'll go. We did better today. We got like 40% through the symbols yesterday. We've got about 70% today. So we're perfecting the system here. So I'll cover some of the other more broad items tomorrow, but saw some good charts there. So anyway, hope you're doing all right. And I will see you at the same time and place tomorrow. Take care and good night.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more. from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Jamal, my friend, we are back for the last call. And of course, we've got a nice little market rally here. E-minis currently up 27 and change here, a little under 0.5%. You got the NASDAQ up 123, the Dow up 80, and the Russell up 8. It's been a all-out assault to the upside here, down 30 or 40 points on the E-minis to start the session today. We've been rallying, stair-stepping higher throughout the whole session here. Oil selling off a bit, /CL 62.07. You got volatility futures down 26 ticks, a little under 1.5% here. Bonds up 11, just under the 117 handle. Gold and silver have both been strong, but have sold off from the highs. Gold up $17, silver up 90 cents, and Bitcoin back on its risk-on move. Futures up 3,000, spot up 2,600, just below the 117 mark on Bitcoin. There, it's been quite the rally of a day. Ethereum up $186 as well, so strong move there. It's been a risk-on day, risk-on week, risk-on month. September seasonality, who cares about that? It's October now, as the crypto boys would say.
The market does not care about your government shutting down, okay? It has no feelings on it at all. We are in a bull market, and we should be, honestly. There's really no wall of worry, as they say. You mentioned gold and silver. They continue to be strong, man. Like it's kind of an interesting environment where you see dollar with I guess it's back down. It was kind of moving up a little bit earlier today. Maybe that's to your point, like how they pulled back. But dollar's not super weak, yet gold and silver continue to be strong. Bitcoin is strong. It is quite the environment. And then, equities, of course. We got to talk about what we were talking about heading into the show. Some of these names, like these healthcare names, it's been quite the ride. XLV, you pull. I mean, look at that. 2 days. I mean, wow.
This was part of the Trump basket, the government portfolio, as I've been calling it. You had the Pfizer news the other day, yesterday really, which I don't really know if it's bullish or bearish, considering it's like a kind of a price setting.
Yeah.
But these stocks have just gone nuts. One of the things you can do is if you go to the watch list here, you go to the sectors, you can pull up a bunch of the names that are in specific sectors. Of course, you got basic materials, comm services, energy. And if you go to healthcare, I mean, these stocks are just going bananas today. And when you look at these moves, you might scoff at it and say, "Oh, Eli Lilly up 8.5%." Nvidia does that in just a couple days. These are way different volatility stocks. I mean, it's not a very volatile sector traditionally. I mean, when you get into biotech stocks, those are volatile. But, when you think about a healthcare company like a Pfizer, to give you perspective, 32% implied volatility, and that's after a massive move today. These stocks don't typically move 8 to 10% across the board, and that's kind of what you're seeing.
It's a huge 2-day move, I gotta say, and I look at the 5-year chart and look at the weekly. I think it behooves to look at that. I'm not saying I want to get long here at all.
Yeah.
But I am saying that these things have gotten rocked. I mean, when you zoom out a little bit, it's kind of interesting to look at and be like, oh, okay, well, this is a huge move, and you want to get short this, but at the same time, you're like, I mean, this could keep moving. You really don't know. So I think that's what makes it interesting. I think it makes it interesting overall, and you can definitely find a multitude of different trades if you want to do it.
Yeah, I agree. I actually had that same thought with somebody sent in a "What's your assumption" trade for mRNA, and while it was having a nice move, the trade suggestion was a strangle with slightly skewed short delta. The stock has had, it's been one of those where I don't know if I want to be selling calls into basically the lows. I mean, it's up, a little bit under 8% today, but it's a couple dollars off lows. So it's like, I don't know if I want to mess around with that. Whatever news event could pop up, rip your face off to the upside there.
A friend of my wife's was like employee number 10 in this company. Yeah.
Really?
So they were in there in 2021.
Are they still your friends? Because they could be on a beach somewhere.
We haven't talked to her in a while. Yeah. We're actually really cool. It's funny because she was really cool with the girl. They were in school. They were engineering at the same time. And then but my wife became more cool with her younger brother, who actually lives here. Okay. So we actually hang out with Dude every now and again. We see him. But yeah, that chick was employee number 10, man. And look what this stock used to be. And again, this one I think is a little different than the Pfizer, than the Merck, right? They were mostly focused on one single thing, which was the shot.
Yeah.
And so that's a little bit different. I feel like if I'm gonna do something, it would be in Pfizer, it wouldn't be in Merck. Companies that have a multitude of drugs, not just one thing.
Yes.
So yeah, you're right. I'm not selling upside and Moderna.
Yeah, it's just you're
asking for it.
Yeah, you don't want to mess with that. Even if you look at the S&P 500 here or the S&P 100, which is a list that I like to look at here on the watch list, you'll see your names at the top are a lot of biotech, healthcare type names here, and then you've got Intel in there. You have Nike, which reported earnings after the close yesterday. AbbVie is in there, Bristol Myers. I mean, these are stocks that we haven't talked about in 3 years, 4 years. These were stocks that we were talking about during COVID, and then they just sold off. They've all been at lows, and now they're all just catching a bid today.
You know what's funny, though? Bristol Myers, it's funny to hear the life cycle of some names sometimes. And this is one of those times where it would be good to have Tony here because
Bristol Myers
that used to be a big name long time ago.
Yeah.
That these dudes used to trade on the floor, and it was crazy. And then it calmed down. It was a nothing stock. Look at this.
Now today it's up 6%, and we're talking about it. It's crazy.
It's wild.
Some of the other big movers today, you look at Tesla, 460. It's done nothing but go straight up. I mean, this has been like a rocket ship. Has it surprised? I've been talking about this with my dad of the speed at which everything catches up, right? So Tesla was sitting at 300 to 340 for, let's call it, 4 months. Nobody wanted it. He was, he was out of favor with Trump. EVs are going extinct. Nobody wants to buy it. In 2 weeks, it's back to basically all-time highs. It was the same sort of story with Apple, which went, sideways from 190 to 210 for 4 months, it goes, from that little range, blast higher to basically all-time highs. Google was one where people said, oh, Google is screwed. AI is going to totally eat their lunch. It goes from, chopping around 150 to 170-ish for 4 months and skyrockets to 250. Does the speed concern you, or is that just the new market?
I think that's the market that we find ourselves in, and pretty much all of those things you talked about kind of almost had a binary event when you think about it.
Mm-hmm.
Google had the little situation going on, whatever, right? Antitrust situation, and it did seem like it was kind of dead in the water. As soon as that came out, freed the stock, and Apple had a little bit of tie to that. Apple still has an overhang. I think Apple could probably, in that same vein, I'm not saying I know, I'm just saying in that same vein, Apple could move more because there's still the tariff situation, right?
Yeah.
Like there's still, they, as far as I know, they haven't brought all this production from China on U.S. soil. They have said that they're willing to invest in the government, however many billion. They could probably forecast them investing a little bit more in the U.S. government, and that could lead to another breakout in Apple. And so it's a lot of them have had something attached to them. And here's my question: what is there out there now that has something attached to it? I want to know so I can get along it. Like that's what I'm looking for.
That's what I'm saying. I'm saying like it's you're looking for those binary events. I've been using the Trump tweets and the Trump takeovers as my next catalyst.
Yeah, that LAC stock, that one, the lithium situation, that one's up again today. I mean, it seems as though, this once upon a time used to be a thing that we saw in smaller names, not in these huge names that we trade day to day.
Yeah.
And again, a Tesla was the same deal, right? Like it's kind of binary. It was, Elon wasn't there. The company's going downhill. Now he comes back and all these other things. Did they have numbers, by the way? Their monthly numbers? Are those coming out?
I think
maybe
those
tomorrow.
I don't know if they came out already.
Or are those paused by the government too? I'm just.
I would imagine that's not paused. I think those should come out at some point. I think those do come out soon, if not now.
I think they do, yeah.
I had some other people asking in the YouTube chat about earnings. Nothing really today or really for the rest of the week. We don't really start earnings until the middle of next week. You get into like your Delta Airlines, Pepsi.
Banks.
Some of the banks are just after that. So the banks start like October 14th, Tuesday before the market opens. So you got like Goldman Sachs, JP Morgan, Citigroup. Those are kind of like it always. For some reason, Delta Airlines is always like the first earnings. It's Nike, Delta, and then the banks. That's kind of how I go by here.
When I was coming up, it was Alcoa. So Alcoa was like the start of earnings cycle. It's not anymore, but it used to be.
Alcoa is on.
Now it's like after.
Oh yeah, it's on the 22nd.
It used to be like the start of it, like literally.
I haven't looked.
Changed.
Alcoa was one of my favorite. I think I did a bump that we play on the network about Alcoa being one of my favorite stocks to trade. Like
why?
This was like
money in there?
Well, like 8 years ago, it was like kind of a mover. I mean, you had it was one of those stocks that had high implied volatility. It was, commodity stock.
And FCX, yeah.
FCX was another one.
Sure.
Do we get long those? Are those the next move?
Good question. I mean, steel production is coming back. I mean that's actually a good point. Ooh, the metal stocks. Why aren't some of these moving a little bit more? To be honest with you, I mean, yeah, we need to. That's the thing. So at a time like this, I think we always emphasize creating watch lists.
Yeah.
This is the time to create watch lists for certain sectors and areas because once you start seeing them all move as a group,
you're like, okay, we got something there.
Yes, that's a good point, Nikki. Yeah, FCX, Alcoa. What are some of the other ones? I can't even remember half of the names.
Well, U.S. Steel is gone.
X,
right?
yeah, X
So
is gone. X should be gone.
Is done with.
Yeah.
FCX had that like mine issue.
Yeah.
Or one of the mines like.
Oh, it has an issue? Perfect. Yes.
Yeah,
let's get along.
Well, it had a down move, and
Hell yeah.
you missed half of it, so you got another, $5-6 to get back in there.
Oh yeah.
If you like, I sold a put there and took a couple bucks out of that, but yeah, it's one that's kind of been left for dead.
Ooh, long FCX then. Okay. Long FCX.
Yeah.
Long Alcoa. Those are the next moves? We'll see.
Maybe. Amazon's another one which has kind of a catch up to do. It looked like it was going to break out to new highs and just sold off here. It's actually selling off into the close today, basically unchanged, up 90 cents, was up about $2 or so just a minute ago.
Is this kind of due to the pivot on grocery, right? Like I just saw they opened some new grocery thing. It's like everything's $5 or whatever. I don't know how long that lasts, but.
I think they have another Prime Day coming up soon. Vanetta mentioned that they do like another one in October.
They do.
Maybe that's another upside catalyst. I don't know. It seems like any sort of dip is worth buying here.
It seems like a mistake. It seemed like you should just keep it at one Prime Day and like call it, I don't know. It just seems like the more, what are you going to have? You're going to have a quarterly Prime Day sooner or later? Then what is the point of
Maybe. That? I don't see the downside because the numbers come out and they're just astronomical. So it gives you need a little bump in the stock. You do a Prime Day and then just put those numbers out and they're always big numbers.
You know what they say you're supposed to do? You're supposed to put stuff in your cart that you like and then you just leave it in there. And then when Prime Day comes, you see if it price drop.
Ooh.
Yeah, okay, that's the hack.
Okay, that's
doesn't always work. Doesn't always make you buy anything, but
I see those like
because if you don't, everything that you pull up and you look on that day, everything looks like a deal, but it's not really.
Yeah, I've seen those where they're like they post pictures of like a month ago the price was basically the same, and then they just like they increase the original price and just give you a discount, but it's the same price net.
I feel like most stores do that nowadays in general. Like they make you, everybody wants to feel like they're getting a deal, right? So they always make it seem like, this is $100, it's 50% off, but it's basically the same price.
Speaking of deals, there is a deal for new account holders at Tasty Trade. If you want to open up a Tasty Trade account, we have a little art card we can pull up here. And, we're going high tech here, so we actually have a QR code. So if you'd like, you can just scan that little QR code if you're watching us live here. It's a 1% cash match up to 30 days from the first time you fund it, and then you have commission-free trading for those 30 days. The cool thing about this is that, and for a lot of people, if you haven't made the jump to Tasty Trade, you can try it out, fund it with a couple grand or whatever you got, and you can try out the platform. If you like it, you can bring in more capital, and it'll match all the funding that you do within that 30 days. So you don't have to do it all at once. Give it a try. I've been, pitching that to all my friends. I'm like, come on, give it a try.
She's saying it's not like the free credits that some unnamed other sites do that you have to use within a certain time period. Is that what?
Exactly. and it doesn't, and it's not just the first one.
Yeah, it's not. Yeah.
Like usually it's like your first one, you gotta figure out how much you're gonna put in, and that's the only match that you get.
Right.
This is all the matches within 30 days, so it should be good. We also have still some spots left for Los Angeles with Tom and Tony. I have got some emails asking if Tom will be there. He will be there, so you can say hi to him there. As well as, of course, the bat. So that should be fun. We got a couple other events coming up as well. Dallas with Mike, Katie, and I, and then Tom and Tony. Ryan has told me a million times where their next event is after this one, but I keep
Charlotte.
Charlotte?
Yeah. Oh. My mom lives there.
Oh, you're gonna?
Yeah, my mom's probably gonna go. Oh yeah, she's probably gonna go. She's super excited actually.
Oh.
I need to make sure she gets on the list. Yeah.
Oh, that's awesome. Yeah. Well, you know some people here. You could probably get her on the list.
I know some people. Yeah, I think I can get her on the list. Yeah.
Get her backstage passes.
Yeah, I know, right? She would love that. Yeah. The one in Charlotte.
At least free parking.
I didn't tell her about it until maybe like 2 months ago, until we actually started publicizing it, because I didn't want her to be like, what's going on? When does it happen? And I'd be remiss if I didn't mention LA and the Fonda. It just, I don't know. I think of the Fonda when I think of the Fonda.
Yeah, it's a nice.
I like LA in October, by the way. It's a nice. It's like really kind of nice, sunny. Yeah, it's perfect, right?
Yeah. High 60s, mid 70s ish every day. It's great.
Super bright. Yep.
Yeah.
The Fonda.
E-mini S&P 500 futures up 25 here. NASDAQ up 115. Have any of the other, have you been trading oil? I saw there was a move in soybeans as well. Some of the softs that are the ags that have just been getting killed throughout the last 4 or 5 months here. Caught a little bit of a bid. I saw Trump throw some jabs at China's import amounts here. Any of those interest you?
I really hadn't looked at them in a while, and we were talking, of course, obviously on Thomas Tuesday, we were on Options Trading Concepts Live. We were talking to Thomas, and he was going through some of these. I saw corn, I saw wheat. I haven't traded them in a while. I mean, these kind of interest me given how low they are and these levels. A couple of short put spreads seem to be in order in here, but I haven't done anything yet. You mentioned oil. I haven't been interested. I think I've traded oil like once all year. I really haven't been that interested.
I've been kind of around this. I mean, it's not a shock to see that we, have bounced off the 60 hand. It's 60 to 70 has kind of been the range that's been trading in. I've been trading iron condors and kind of legging out into these moves. So I'll start with an iron condor. If we're in kind of the mid 60 handle, we dip down to around the 60s. I then close out of the call spread, lean a little bit directional there. I've also been using the MCL, which is the micro crude contract. It trades in 100 barrel notional. So it's easy, like today, a 40-cent move to the downside is $40. So it's easy, kind of easy math and size, and only uses, $1,000 or $1,500 in buying power. It's relatively capital efficient.
So you've been scalping good.
Scalping the micro crude contract, and then I trade around crude with the crude oil options, CL options. The MCL options, they are listed. They're just not super liquid, and the bid-ask spreads get funky. All the micro futures, just the size themselves is small enough to just trade them as kind of a scalping vehicle if you want to do that. Getting into the options in those, it gets very, very goofy. Like if you ever look at like MES options, and I can pull some of these up here.
I'm about to message trade up for everybody. I'm about to try and sell iron condor now and oil. I really hadn't done it, but it's been the best trade. Like the iron condor and oil has been the best trade for several months now because of, like you said, being in that range period.
It's been range bound, and volatility in oil is not super high right now, but has upticked slightly. So if you're wondering how to get the oil volatility index, it has a new ticker. The CBOE changes this for all of these products. So like VXN, RVX, which is the Russell volatility. It's a VIX style calculation, but you got to type in OVX CGI in the search bar to pull it up. It'll give you the oil volatility. While oil volatility isn't super high, it's on the higher end of where we've been trading over the last couple months, as you can see with Ivy Rank at 27.
Yeah, no, it's been there. It's been there to be had, that iron condor and oil. The oil ball has been somewhere between 20s, like kind of mid 20s to high 20s, and it just seems to kind of go up a little bit and then collapse a little bit, and then you're able to make money on it, especially if you're scalping around it. That's even better.
And trading the options, like if you do a 1 point wide spread, you get a little added leverage because of the span margining. And it trades like, a normal 10-point wide spread in something like an Apple or something like that, where you can get, 30 cents on it and kind of manage it at 50%. It's been a good trade there.
Yeah, I'm going to try and get one off. We'll see what happens.
There you go. E-mini's up 24 here. They've been chopping around this mark. It's been just every dip gets bought. It's been a wild little ride here.
So are we really not getting a jobs number on Friday? Is that what's happening?
I guess not. If we're not getting a reopening announcement, I guess not. Scary.
Fascinating.
My Taiwanese sources give me some stats on the market today. SPOO's traded a little over 1 million contracts, which is relatively decent. 2.3 million Tesla options with 3x on the call side versus the put side. Obviously, as Tesla moves higher, it gets the attention again. I know we've been switching between like Tesla, Nvidia, and then like the meme stocks of the open door basket between the call volume there. 4 million SPX, lots of iron condors coming through today. Lots of natty gas options, about 8 times the average. I have not looked at natty gas recently. It is moving higher, kind of having a nice little bounce here in natty gas. And then Intel options, one of the hot options for today.
Really? Natty gas options, huh?
Intel, high of the session, 36.
Yeah, what do you think about that one? Like, what's up with that one? Are we just going to keep hearing more news that sends Intel higher? Or is it time to sell vol in here? You know what? I usually don't like selling vol ahead of earnings, but there's more than just earnings vol in these Nova options.
I've been doing in some of these stocks and Intel now has some call skew here. If you can sell you sell a put, let's say the 32 strike put, it's about a 26 delta. I'm looking at November. Mm-hmm. And then you can do like the 40-45 call ratio spread 1/2. So you're 1 put, 1 long call, 2 short calls. It's a synthetic from a risk perspective. It's basically a strangle, but you have a lot of upside room because you're financing the buying of that $5 wide call spread by selling that extra short call. So it gives you a little bit of a buffer to the upside. It also plays into like that tail call volatility. So even if the stock stays kind of range bound, that long call holds some of its value because it's closer at the money, and the tail vol kind of comes in. Of course, you still have the upside like tail risk,
right?
But your break evens are up at 50. If you do this 1-1-2, it's I'm willing to take some risk at 50. I did see a stat. Sil posted it for us. I will pull that one up. It was a good one. So Intel is now back to where it was 25 years ago. So if you put $10,000 into Intel 25 years ago, it is now worth $10,000.
Yay!
Full round trip.
Golf clap. Yeah.
Amazing. Absolutely incredible.
That is hilarious.
Oh,
did we hit it all? Is there anything else we got supposed to pub? No, nothing. Nothing, right? Nothing from research?
No, nothing.
I didn't give us anything. We're good? All right.
No, we're good. We're good. Yeah, we got nothing else. Going into the close here, we got
E-minis. I like that Intel trade, by the way. I got it queued up.
Yeah. They're fun little trades. Mm-hmm. E-minis up 23 here going into the close. I guess they sold off 5 or 6 handles from the high. Just a long covering, we'll call it, of the day. NASDAQ up 110. You got the Dow up 32. You got the Russell up 4. A nice little rally here today. Volatility coming in 21 cents, 17.54. You got the bonds up 12 ticks. Gold and silver staying strong. Bitcoin staying strong. ETH rallying into the close as well. So been a risk-on day here, my friend.
Got a heck of a market, people. Tell your friends, those who are involved. And guess what? If they start talking about it, then we all need to get out of everything.
That's true. That's true.
At least we don't have that.
Yeah. That
market's not making the news, the nightly news,
Good stuff out of you, my friend. Thank you for joining me today. We're going to take a quick little 90-second break, come back with the Overtime Boys. We got Ilya, Glenn, and Mikey Butler in the house with us today. So we're going to take a quick little 90-second break. You're listening to Tasty Live. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
If you missed the live show, here's our cherry on top weekly recap.
You became Chicago's most eligible bachelor. What year was that? That was the debate we were having earlier while you weren't on the show to defend yourself.
1988.
88. So Vanetta was right. Late 80s, early 90s.
You mean when I was on the Oprah show?
Yeah.
Yeah. Well, 88. I had flowing locks like Khan.
Oprah just made it.
Oh, here it comes.
I mean,
she felt bad. She felt badly for him. You know, you couldn't get a date.
You get a car, you get a car, you get a Scott Sheridan, you get a Scott Sheridan.
I want the car.
That's right.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
If you missed the live show, here's our cherry on top weekly recap.
You became Chicago's most eligible bachelor. What year was that? That was the debate we were having earlier while you weren't on the show to defend yourself.
1988.
88. So Vanetta was right. Late 80s, early 90s.
You mean when I was on the Oprah show?
Yeah.
Yeah. Well, 88. I had flowing locks like Khan.
Oprah just made it.
Oh, here it comes.
I mean,
she felt bad. She felt badly for him. You know, you couldn't get a date.
You get a car, you get a car, you get a Scott Sheridan, you get a Scott Sheridan.
I want the car.
That's right.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
We are back. That's Mr. Mike Butler in Chicago. Glenn Freiberg is with him. I'm Ilya Spivak here in San Francisco. Glenn, am I pronouncing your last name correctly?
Freiberger. Yeah, it's phonetic.
There we go. There we go. not good with the names.
That's all right. You can just
Ask
call
me
me
who
G-Money.
the deputy governor of the BOJ is. I might actually have an answer for you, but real people names, that's not my department.
Freiburger with an A. That's what I say.
There
Need
it
a
is.
J.
That works.
How's it going, gentlemen?
Yeah. So the government's shut down. Market
Apparently,
actually,
yes.
Market actually sold off a little bit into the close. Interesting.
Yeah.
Glenn actually brought up some interesting data points earlier today related to how market shutdown could be bad for US dollar in the short term, not so bad for equity markets. It's interesting.
But of course,
this is sort of the essence of what we've been talking about this week, right? In anticipation of this thing going down, is do the markets actually care about any of this? And it seems like even at the onset, I mean, obviously going into this overnight, I mean, futures were down all night. So Europe didn't like it. Asia didn't like it. We had some pretty hairy wicks. I mean, if we look at the S&P here, we can see that overnight things were definitely a little spicy. So looking at sort of where we got the S&P at one point, S&P futures, ES, was down something like almost 1%, like maybe 0.9% from the close yesterday. But obviously, we are not doing that here. So U.S. markets seem to come in and think, yeah, this is nothing. This is fine. Is this just because we're expecting for all of the posturing to eventually give us an answer? I mean, I think Westwater had a great chart that he's been sharing all week that basically says the longest shutdown was the 30-plus days in 2018, and markets were up. So ostensibly, is the framework here then, well, if it's within 30 days-ish, then we've seen this movie before and it's not painful. So I'll see you in a month? Is that what this is?
I mean, I would take it one step further and say that even the last occurrence, 35 days, I mean, that was a long time. And so
Yes.
I wouldn't necessarily be looking at a month. I'd honestly be looking at next week. I think we knew that this was coming as far as economic data not getting non-farms this week. We got a number today from the private ADP.
Did we ever?
And we're pricing in now for pretty certain a cut in October and not needing another data point to confirm or deny that. I think everyone's comfortable with thinking that the Fed is comfortable with that. And so I would look to next week, just because in looking at the previous, 20 shutdowns, the median duration of it is 3 days, and the mean being, I think, around 8. And that's skewed heavily by the last occurrence.
By the 35, yeah.
And a couple others that lasted 2 weeks, roughly. And so I'm looking at next week just to see if this is one of those blips. Okay, we needed everyone to get on the same page, past whatever we were close to, or if there really are holdouts and we end up with a continuation package that isn't what people are expecting. That's the only thing I'm thinking of, not playing in the consensus right now.
Yeah. I mean, markets are drifting higher, volatility getting crushed. The prediction markets have this shutdown lasting 90% of the probability based on betting markets is at the very least October 6th to 9th. And then it's about a 30% chop between that week, the week after, or the October 15th or later selection. So 90% of bettors are saying it will last till the 6th.
So a little weekend retreat.
Yeah.
Get all your ducks in a row.
Yeah.
Come with your answers on Monday.
Yeah. To Glenn's point, though, the CME FedWatch tool, where we look to gauge probabilities of interest rate cuts, that was already pricing in a strong probability in the October 29th decision.
Yeah.
Also the 10th, but now it's a stone cold lock 29th has a 99% chance we get another 25 basis point cut. And December 10th, we also are getting a nice 10% boost from yesterday. So just from yesterday to today, it went from 77% to 87% that we get yet another 25 basis point cut. So the market is pricing in 25 basis points in the next two decisions. Wipe our hands, SPX to 7,000. That's my prediction.
Because what could we hear from now until then that would
that's
you?
Yeah,
that's exactly what I've been looking at here, because since the 18th, since the Fed issued its announcement, you got 1 day of, hey, we got the cut from markets, and then everything stalled. And the dollar tellingly came up, yields came up. The markets clearly said this was not hawkish enough, or this was not dovish enough. And as you got some of those expectations loosening a little bit, especially for December, the markets went, whoa, hold on. 1 second here. What? And the S&P kind of stalled. And we had a little pullback there. We had a little pullback in the NASDAQ. To both of your points here, the defining feature of this rally today is a rebuilding of rate cut expectations. So the market here is basically praying for rain. It wants a weak economy because what it wants is the rate cuts. It's almost as if the market has said, you know what, bad things may happen. We may even want some degree of bad things happen, as long as the cheap money is coming to insulate us from whatever risks might arise. The cheaper the money, the better, because then, sure, things might go wrong, but if the money's cheaper, then we can take a loss, borrow again, roll it again, and that's fine, as long as we have the bulwark of cheap money.
So then the disconnect to me is, we were talking about yesterday, is the Russell interesting? We kind of argued, hard to say, moving with rate cuts. I don't know now, is this a confidence signal for you, Ilya, in the Russell, or not really the magnitude I would have expected if it was
not really.
Lifted
I would have thought that Russell would do better. I think one of the interesting things here today is the S&P is outperforming even relative to NASDAQ, in the sense that at least the S&P attempted to breach its swing high. NASDAQ didn't make it. But one of the more interesting things here, it's healthcare that's pushing this thing. That's easily, by far, the best performing sector today. And of course, it was the worst performing sector yesterday. So you get this. I mean, if we look at XLV here, it's basically all pinned on one thing, right? So you had this extended pullback in September, and over the past 2 days, it's just a fire hose. And this is not a macro story. This is a healthcare story. This isn't carrying over elsewhere. So you sort of wonder what this is. In particular, perhaps with the shutdown, I mean, that's not the part of the economy that's going to get terribly impacted.
Yeah, if you look at the S&P 100, some of the top movers the last couple of days, Eli Lilly, Merck, Pfizer, Amgen, AbbVie. So all these health-related or, pharma-related companies definitely seeing big moves. Merck looks exactly like XLK from a chart standpoint. Or not XLK. XLV.
And this is all on Trump RX?
I guess.
So, interesting thing here. I was looking at a list of furloughed federal employees as a consequence of this, the share of employees furloughed by department. So if you look at commerce, education, and the EPA, over 80% are furloughed.
Oh, wow.
Health and Human Services, 40%. Veterans Affairs, 3%.
Oh, wow.
So, Social Security Administration, 12. So when you look at sort of the names that would be impacted by a shutdown, let's say insurers, hospitals, healthcare names, those parts of the government are not really shut down. That business is going to continue. I mean, Medicare, Medicaid, they're not getting turned off. I mean, rightly, of course. But those are vital enough that this shutdown doesn't go there. So, yeah, I mean, there's been obviously a one-off catalyst here in healthcare, but at least in terms of doing no harm, this is medical jokes. This sector is not a shutdown victim, you would think.
How much more does it got? No, is this? I mean, now we're back kind of in the middle of a range. It's broken out from its range, but is this still interesting?
I think it's interesting in terms of like a sector rotation, for sure. I mean, you have different sectors that make up the S&P, and one sector in particular has blown the roof off in terms of concentration and the gains on the year. So like, if we are to see this continue, could you see maybe a flattening of like the tech stocks and then a rotation into these other lagging sectors that would bring the whole thing up? I think it makes sense. I agree. I mean, but from an XLK standpoint, huge move over the last 2 days. The last 2 days, we went from basically 134 to 144, we'll call it 10-point range. If you look at future implied volatility in XL, do I keep saying XLK?
You do.
XLV. XLV. Where's the next 10-point move priced in? Not till the end of the year. So in 2 days, we've realized a move greater than the implied volatility priced into the next 80-day cycle. So sometimes.
So should we just sell this vol then?
Well, there's no vol. That's what I'm saying. There's no vol. This is just a move. This is a realized move that's not priced into vol. So if you're gonna trade this, I think you stay defined risk. I don't see any reason to sell premium in here when you can just buy options for $200 that are 90 days out. You could play for the upside or downside. I think that's where I would go. You could diagonalize it, do a zebra, something like that. But with sub 20% IV in a product that just moved 10 points in 2 days, I think that's where you go if you're trading this. Just defined risk directional.
And I would imagine in your mind, it's directional upside, especially given the strength of the breakout here.
Yeah, if you're playing for like a move back to 150, in theory, you could get that tomorrow. So,
I mean,
yeah, these options are cheap. Like these options are dirt cheap for a potential move back to recent highs. The markets are kind of wide. Could be just a fact that the market's closed, but tomorrow, I think it'd be interesting to check out, especially if there's a flattening of this move or maybe a little pullback, and you want to play for year-end XLV getting back to highs. It's a very cheap way to do it because the IV, although IV has increased into this move, 2.4% is nothing in the grand scheme of things. When you go from 15% to 17%, like this is a scenario where I don't care what IV rank is. IV rank could be 100. If IV ranks 100 and I look at the IV and it's only 20%, that doesn't really move the needle for selling premium. Like I want to see premium in the 50, 60% range, which you're not going to see unless there's a market meltdown. Like you only see the S&Ps and NASDAQ in the 50s or 60s when there's a market meltdown. Here, same story. It's kind of just look at the IV. If we're under 20% in any product, I'm going to lean more towards a debit strategy to define the risk and just play for a directional move.
It's how I end up a lot of times being long premium is vol is relatively cheap, and you can get much better risk reward. I mean, you can basically lock in a 2-to-1 risk reward, sometimes better, risk defined. Why would you not do that?
Yeah. And I'm willing to bet, yeah, these options were basically worthless 2 days ago. These are trading for 20 cents. Now they're $2. So
Hence the IV rank.
exactly. Yeah. It's sometimes you have to always take everything into full consideration. And for a product like XLV, XLK, any of the XLs, I'm almost always going to lean towards long premium just because the premium itself is just not there. And you're still getting moves like this that will pay you off if you're directionally right.
Yeah, you can get really, IBIT actually is sort of similar to this, where you can get incredible risk reward just being long premium. I mean, sometimes like 3-to-1, 4-to-1, just because it's so cheap.
Mm-hmm. What else you got your eye on in this magical market, Ilya?
One of the most interesting things, and I don't know if it's time to attaboy myself yet, but at the very least, so we started this week with a conversation saying a shutdown, well, the scuttlebutt being a shutdown would be bad for the US dollar, and me arguing no, it wouldn't. It wouldn't be bad for the US dollar. And boy, did the dollar turn today. So it started off bad for the US dollar, again, in the overnight when European and Asian traders seem to be taking the shutdown at face value. But my God, the reversals. Euro couldn't make it stick at all. The yen probably had the best showing of the bunch today, but the euro couldn't make it stick. The Aussie couldn't make it stick. The pound gave away almost all of it. The Canadian dollar is actually down on the day. So is the franc. So you look at this thing and you go, well, why? Like, of all things, how is it that the dollar is holding up this strongly? I'm happy that it is, of course. I've been looking for it to bottom since July, so I'm long, and I'm staying long, and I'm getting more long. It hasn't made its move yet, but for all the dovish talk, for all of this apparent structural concern, the dollar is up. And in my mind, it's up because it's up for the same reasons that gold is up, interestingly, which is to say that there is a lot of uncertainty and defensiveness. And when you look at gold and this most recent rally, and silver too, it's been completely disconnected from yields and from the dollar, which are usually its catalysts. So if you look from mid-September, gold and silver rip at the same time that the dollar is recovering and yields are going higher after the Fed. So this is something else. This is not gold and silver being kind of the usual anti-fiat foil, the usual anti-interest rates foil, because, of course, they yield nothing. So this is something else. This seems like the market basically going, you know what? We don't know what's going on, and there's a bunch of idiosyncratic risk on the board. There's, well, maybe the president's tariffs are going to get overruled by the Supreme Court, and that would take 4 or 5 months of benchmarking in markets and toss them out the window. Maybe you have some sort of a Fed situation. It can go either this way or that, but just today we learned that the Supreme Court said Lisa Cook, the governor that the president is trying to fire, can stay at least until January, when her case is going to get looked at in oral arguments. So maybe there's some kind of a confrontation here where the president gets told, no, you can't infringe on Fed independence, and then all kinds of things follow on. There's just a lot that's up in the air. I would think the tariffs most significantly. And the market seemed to be going into some sort of a, you know what, where can we go to park some capital to not think about these things. And gold and silver stand out, and maybe the dollar too, because I think since April, the dollar has really found its groove as a haven once again. I think in sort of late March, early April, there was definitely that Liberation Day kerfuffle where stocks and bonds and the dollar were all going down at the same time because the markets were afraid that maybe the U.S. government has gone so crazy as to cut off its nose to spite its face. Like maybe it really does want to pull apart the architecture of the U.S. dollar and the treasury bond-based global financial system. And then the president backed off. And market discipline worked. And the president said, oh, whoa, 90-day pause. Hang on, everybody. Stop that. And then the China deadline got extended and extended again. And we got sort of semblances of deals with other main trading partners. Sans Canada, that's probably coming. So, I mean, we're running up to the renegotiation of the USMCA next year. It's not illogical that this one is a little bit feistier. So you get maybe a dollar haven bid again because the markets go, oh, they're not going to structurally undermine the dollar. Fine. It's still a haven. It's still the cash of choice. Its role in global commerce as the cash of commerce, that remains. And the U.S. is not going to shoot itself in the foot in this sense. So, okay, fine. I like the dollar here. It is defying any kind of news interpretation you might have, and that's a sign of even greater strength, I think.
Yeah, I mean, shutdown aside, with how clean the move was in, rate cut expectations, I was definitely surprised that we didn't at least see, some consistent skid throughout the day in dollar prices. Did get a bid back up throughout the U.S. session, not moving with those rates. But yeah, I think today and yesterday kind of contextualized this shutdown for me in an important way of thinking, of course it's not fun, but a dramatic headline to talk about government shutdown. But when you really think about what's burdened the U.S. dollar so far this year, what we're looking at right now is just a congressional disagreement that we've seen 20-odd times before. Nothing really as uncertain as what we've seen, from the administration early in the year with all those tariff uncertainties, as well as the Fed independence piece that I think definitely hampered a dollar price action throughout the summer as well. And so those pieces staying put really have supported this stronger than I would have expected with the news of, perhaps successive rates, very likely, as we talked about, most of that price action is now playing into 2026. Markets looking really far ahead in terms of what kind of the neutral rate will be for this cycle, as opposed to does the 1-2 cuts come October, December, October, January. I think it's the whole scope of the cuts. That's the story now.
Definitely.
So, I think
definitely. I mean, to me, this has been the biggest deal, is that the markets and the Fed are far apart on next year. This year is kind of a given in a lot of ways because the calendar is so limited. And it was already so limited by September. I mean, they had 50 basis points on the board that they themselves predicted as of June. And by September, they had 3 meetings. There's only so many configurations to do this easing when you've got 3 meetings left. So whether they do 50
sans
or
jumbo cut.
Well, sans jumbo cut. Exactly. And given how reluctant the Fed has been, jumbo cut was never something with serious odds. So you look at this and you go, okay, this year is kind of a given. The question is next year. And there's still a wide gap between the markets and the Fed. I mean, the markets are at 63 basis points for next year. And that's what, at least 2 cuts and about 50-50 on a third. And The Fed's at a quarter. That's it.
Hey,
They're only looking at 25.
Get your mortgage broker on the line. You might have an opportunity to refi, baby.
That's right.
We get down there.
It's an interesting thing because let's assume that we don't get NFP on Friday. Right? Let's assume the BLS does not let us look at the numbers. Okay. ISM will still come out. So that'll be an employment indicator. The service sector ISM is obviously a huge thing for employment. It's by far the service sector, by far the biggest employer of Americans. And that will have some jobs data baked into it. And obviously today we have ADP, which is something that, Glenn, as you were mentioning, that came out either god-awful or great, depending on your perspective. God-awful in the sense that it was a 32,000 job loss that came out against expectations for a 50,000 jobs gain. The prior month was revised from a 54,000 jobs gain to a 3,000 jobs loss. So that's the 2 consecutive months now of job losses, according to ADP. And that's the first time that we've seen something like that since 2020. It's the first negative, or the largest negative reading since March of 2023, which was a one-off, just a weird month. But we haven't had back-to-back job losses from ADP since COVID, since basically the onset of COVID. So if this is the only data we're going to have, and ISM is not incredible, then the markets are, going to look at this and go, well, I guess the labor market is terrible. I guess the Fed's going to cut rates a bunch. BLS could have told us something different, but I don't know what I don't know.
It's true.
Yeah, I think the no bad numbers, no problem sentence is going to fly around for a little bit here.
No worry, no cry.
Yeah, the lack of numbers, lack of things that can turn this ship around. We're in for some low volatility times, I fear. I did put out a poll on the YouTube chat earlier today. My poll question was, what breaks first, the equity market or the metals? 66% said the equity market breaks down first, which I kind of agree with. All things said, I mean, if the narrative is there's fear in the market, we're placing cash into a product we trust, like gold and silver, or even Bitcoin, seeing a nice rally the last couple of days. I tend to agree that even though these moves have been so astronomical in gold and silver, and both of these also have exceeded implied volatility to the upside, I would be more surprised to see these come down to previous levels versus the equity market coming down to 6,300, 6,200, something like that.
Yeah, I mean, I think it's an interesting conundrum. I would think that if gold and silver were powered by the usual catalysts, if we were talking about yields, if we were talking about the dollar in particular, you'd think would be exerting some pressure here because it seems like it wants to turn. It seems to be shrugging off negative thing after negative thing. And if the metals were a foil for fiat currency, of which the dollar is the benchmark, full stop, you'd think, okay, herein is the danger. The dollar is building a bottom. It's going to have some sort of a rip. That rip might be because the economy actually looks like it's heating up, jobs data notwithstanding. I mean, the Atlanta Fed GDP now tracker is steeply climbing. The Citigroup index of U.S. economic data surprises is steeply climbing. So ADP, I'll save my words of disparagement for that indicator. But ADP notwithstanding, because it might actually matter this month, ADP notwithstanding, U.S. economic data has been relatively good, at least like compared with forecasts. And so, and what the GDP Now tracker is telling you, it's not telling you anything about GDP. Forget that. The important, I mean, that'll be for the third quarter, which is ages away still. It'll look very different by then. The important thing is you can see the trend in the model. So you can see that the data going into it has been GDP positive. That is relatively positive data. So you could say, okay, well, the risk to the metals is the rate cut calculus is wrong. The Fed is right. The economy is actually heating up. That's why they forecasted faster growth next year in the latest SEP. That's why they forecasted faster inflation, lower unemployment. They see it. The economy is actually accelerating. And because the economy is accelerating and the labor market is a lagging indicator, they're not going to need to do all the cuts that the markets think. There's your dollar catalyst to really go. And that could boost yields, that could boost metals. Or that could hurt metals. Right. But metals don't care about that here. And so actually, I think that narrative might be a bigger risk for the stock market, interestingly, than it is for metals. Because stock markets seem to have cared a lot more about, oh my God, just don't take away our rate cuts. We'll do anything. Please. We'll do anything.
Yeah.
Just don't take away our rate cuts. I mean, you see it just in the way that they've behaved sort of during and since the Fed. You're watching it here right now in real time. So if what's going to happen here is the data ultimately says you don't need this many rate cuts, the markets are out on a limb, the Fed's been right, they're not going to go that hard because the inflation risk isn't going away that quickly, and it isn't, then paradoxically, I mean, normally you would think that's a much bigger risk for gold than stocks. Right. But in this environment, I might actually think the tables have turned.
I think you're missing one piece to the puzzle here. Curious to hear your thoughts on it. Big mover of the day. We've talked dollar, we've talked gold, digital gold. Ooh. What are you thinking about crypto? Crypto mover
I've been
of the
talking
day.
Smack about it all day.
And here we go. Giddy up.
He's the only crypto bear I know.
Does that fold into any sort of calculus in that view? Do you see this moving completely separately from all of that?
I do. I think, well, so to me, crypto is up because stocks are up. Because to me, crypto is not gold. I mean, obviously. Just look at a chart of crypto, then look at a chart of gold. If crypto were the same kind of asset that gold is, this would not be a chart that's been stuck in a range since early August. It would be ripping, which is what gold is doing, which is what silver is doing, which is what other precious metals are doing. This is not gold. This is not a store of value asset. Nobody's confused. What this looks like, much more so, is the stock market, only soggier, because the stock market is doing better. So, I mean, overlay a chart of Bitcoin and the S&P, and you get basically a kind of lazy stock market over the past couple weeks, because it's done less well than stocks have, generally. And so, to me, what this is a kind of barometer for risk appetite of the exuberant kind. And so there's a kind of gradient almost, like how risk on are we? Are we risk on to just buy stocks, or are we risk on enough to buy crypto?
I'd argue that it's also it's risk on and with the flow of money, like how free are funds, less so a risk and more risk But I think you do, if you're folding this into the rate cut story, these markets, these crypto markets, will be more lagged than a stock market, moving less on anticipation of lower rates sometime in the future, but here more would get more lift from the actual real-time effects of lower rate cuts, as we've seen time and time again.
Well, yeah, I mean, that's the other thing. To your point, that's the other thing. Crypto is not really responding here in a way that you'd think, oh, goody, so much liquidity is coming because the Fed is going to cut rates. It's not doing that. It's been stuck much along the same lines as the dollar has been bottoming. This has been struggling to rally. So in some sense, it is almost inherently being held back because it's priced in dollars, which is the great irony of ironies for this whole thing, right? Is it's not actually money. It's just it's just a speculative asset. And by the way, any pretensions it had to being money went out the window the moment they made ETFs out of it. So any kind of this is sort of like the original sin of crypto. Like, we're going to create an asset outside of where governments can mess with people's store of value. And then what we're going to do is give all the regulatory agencies say over all of it as a condition of giving it enough liquidity that would have made it a contender to be money in the first place. So without government's hand in it, it couldn't be liquid enough to be money. And when the only way to get it to be liquid enough was to get government's hand in it. It's not money. Certainly not alternative money.
We'll see. It's one for one. No government, crypto up. So
hey.
We'll see how long it takes.
But to Ilya's point, yeah, strong positive correlation with IBIT to SPY, 0.4 correlation to SPY in the last 3 months. I would argue it's more correlated to tech stocks.
Yes.
But yeah, strong positive correlation. Still super volatile. And I think it holds a place in a total portfolio because of that volatility, for sure.
Sure. For a trader especially.
Yeah. Absolutely. I mean, that's
now that you have ETFs that are on exchange and you don't have to think wallets and this, and you can basically look at this like any other ticker. Why not?
Yeah. But yeah, IBIT's been a great vehicle for short and long premium trades all year. But that's because it's had two-sided action, big swings in either direction. That's kind of what you need. But yeah, I think there was a question in the YouTube chat. Is there a scenario where both go down at the same time, equities and metals? Or do you think the metals move is so strong and the narrative is so strong for an anti-equity market play that you would...
There is a scenario, yeah.
What is that scenario?
The scenario is basically 08.
Yeah.
Like if you want to get a picture of what a dollar rally looks like, where everybody basically stops being able to sleep for a week, just look at what the charts looked like in the second half of 08, starting from about mid-July. Because this didn't begin with Lehman or anything like it. The markets turned earlier. The euro topped at around 160, basically mid-July, and of that year. And from there, just this relentless run into cash. And when you get a relentless run into cash, it doesn't matter if it's gold, if it's stocks, if it's crypto, if it's lean hogs, if it's soybeans, whatever, frozen OJ, you name it.
We do love
Everything
our
is
lean
just going to
hogs.
cash. Everything's just going to cash. That's it. People are just washing their hands. Because if you get to a situation like in 08, where the terror in markets is such that credit locks up, the biggest premium is on cash. because that's what you need to survive if you can't go to credit markets to get more cash. That's sort of the essence of the financial system. Everything runs on cash. You need a letter of credit to import things. I mean, virtually everything runs on the availability of credit to some extent. And if you can't get that, those with the cash survive and those without it die. And so that's really it. So if you get another credit squeeze, if the markets, for whatever reason, and by the way, it's not like we don't have the architecture for a credit squeeze. We just don't have any reason to think it's about to happen now because there's no signs of credit stress in markets to speak of. But it's not like global debt is not at record levels. It is. It's not like debt to GDP ratios are not at insane levels pretty much everywhere. They are. It's not like we don't have all the money that corporates took when rates were zero during COVID. It's not like all that money isn't rolling over right about now because it's mostly 5-year money. It's happening. It's a big risk. Rates are a lot higher. But for right now, there's just not a level of concern in credit markets. Could that concern emerge? Of course it could. Of course it could. And that would be a scenario where everything goes down at the same time. Correlations go to 1. Distinctions between assets and sectors, blah, blah, blah. All of that goes out the window. It's cash or bust.
Cash and Bitcoin.
And definitely not Bitcoin. Bitcoin in that environment can only hope for the magnanimity of the 5 hodlers that own most of it,
and have lost all their
because
their
that's
wallet
by the way,
addresses.
that's
Can't
by the way
sell.
a fun little piece of decentralized finance is it's incredibly centralized.
Well,
incredibly centralized.
I must
Most
say,
Bitcoin is owned by a tiny handful of people. Individuals.
Exactly.
To that point, though, during the April crash, we didn't see that big of a move in Bitcoin relative to other products. So I think there is something to say about the hodler narrative and how you could certainly see it at least stay more afloat than other products. But yeah, I mean, at the end of the day, it is positively correlated to the market. If everything's going down, you'd imagine that Bitcoin would be going down for the same reason we just discussed, of just cash over everything. Wait for the bottom to hit. Wait for your bigger players to tell us where the bottom is, and then you, in an ideal world, you can ride it back up. But
by the way, if you ever wanted to see me get aggressively bullish in an almost nauseating way, that kind of crash, I would buy everything.
Yeah. I mean, if you look, I just had a monthly 20-year chart of SPX. Like, it's just it's comical to me because, like, here's 08. This is when I like just graduated high school and I was just like, I don't know what I was doing. But here, 2020, you get your sell off. Everyone thinks the world is ending. 2 years later, how about we just double the price of SPX? Same thing here. Violent sell off in April, and we just slingshot the other direction. So it doesn't it just doesn't matter what the narrative is. And that's why we say, when volatility is really low, our position sizing is smaller. We have more cash on the side, because if we are fortunate enough to have a lot of cash on the side and get a move like this, where we go from 6,300 down to sub 5,000, and you have tons of cash on the side that you can start placing longer bets and getting static long shares of things, like even into a big volatility expansion in SPX or the Qs, if you're buying call options that are 2-3 years out that bring you back to all-time highs, all of those options have 7x, 8x, 10x since the bottom of April. So I'm totally on board. And the nice thing about these markets that move much faster these days is that if and when that happens, you can see the quick reversals to the upside. Like we saw it in one day, that historic NASDAQ day, where things were paused and the NASDAQ just immediately ripped up like 500 points. It was crazy. So yeah, I hear you.
Even I bought in April because it was just like this is madness.
Yeah.
There's your most
You gotta buy
reliable
that.
signal.
And I think the one important distinction that we need to make is when we're talking about buying and when you look at historic recoveries, we're talking about indexes, SPX, the NASDAQ. You can do the same thing in equities, but there are going to be equities that go down and never come back. So don't do the brushstroke of everything will recover. Not everything will recover. But
some things will die.
Indices.
Some things won't have the cash.
Exactly.
And they'll die.
Yeah. But indices where all of the money is flowing in a passive way and active way, those have recovered from even the most violent sell-offs. So that's why we say keep cash on the side, trade small, so that you give yourself the opportunity to partake in those moves when they happen. And yeah, that's it.
Well, I mean, so to preempt the natural next question, which is, well, what if everything really does break? Like what happened? Like we've had civilizational breakdowns before. It's not like we haven't. They don't call them the Dark Ages for nothing. We've had periods where things, I mean, world wars more recently, obviously. We've had periods. People are alive today that have lived through periods where the global financial order has come apart. The global financial order is only about 1973 and onward, when Nixon takes the dollar off the gold standard, finally. And sort of everything kind of organizes around that, and that's the world we live in now. So what happens if really the wheels come off the bus? And I mean, my counter to that is, well, you can't trade from a basis in Armageddon. Because if you're trading for Armageddon,
you're going to be upset. You're going to be upset for
first of all,
many bad days.
I mean, the price of the S&P will be the least of your concerns if that were to be the scenario. The investable assets at that point are canned fish and ammo.
Bags of rice. I got one.
Yeah,
no one's getting it.
If you're really betting for Armageddon, what makes you think that you're going to be able to get to a market to place a trade and have liquidity?
Yeah.
I mean, if we're really talking about that kind of unraveling, all bets are off completely. So by engaging with current financial markets, you're kind of inherently saying, well, I'm engaging with this because Armageddon is not where I think this is going.
Correct.
Just philosophically.
Yeah.
Just to zoom in here before we get out of here, Ilya, we spoke yesterday about your SPX, your thoughts slightly bearish, and you said it'll be very quick. You know when you're wrong. Have we proved otherwise today, or do we still have a little more rope?
No, I don't think we proved otherwise today. I think we really were close, but that sell-off on the close
saved it,
pushed us back to this annoyingly indecisive spot where anywhere you look, S&P, of course, a case in point, you're back at the highs and you couldn't get over. And it's the same in the NASDAQ. You're back at the highs, you couldn't get over. In Russell, you're a little bit soggier. You got back to the range top, as it were, where you've been consolidating since, let's call it about middle of last week. We established a range with a lurch down, and then since then we've kind of held that range. Let's call it between about 24.70, 24.65, something like that, and the bottom at about 24.11, 24.15, something like that. So you're in this tight bracket. It's the same thing, only sort of more potent on the S&P in the sense that you're in a range. Today, you really tried to take that range out. It didn't work. It didn't work in NASDAQ either. And so, who knows? But show me a break and I'm out.
All right.
Because I'm not looking to stand in the way of something that is this level of momentum. It's the same idea that we talked about yesterday, Glenn, that essentially, if you look at this not as an investor,
right,
whose view is, well, the AI supernova is what it is, and stock markets are biased higher, and I'll see you in 5-10 years. Like, whatever, it'll be higher. If your perspective is from a trading sort of, let's even look at the sort of regular Tasty methodology, 45 days in. If you're looking at about 5-6 weeks here for a trade, is the risk reward better to be long or short when you are literally pinned at the high and struggling to get over? I mean, obviously the risk reward is to bet short, especially when vol is cheap. That doesn't mean you're going to be right. It just means you get better odds.
Yeah, I think that's
fair. All. That's all. I mean, I'm not super. Who could be philosophically bearish here when the market is telling you that it does not care?
Yeah. I mean, we had this 3-day window where my ears were perked up. I was like, okay, what is this now? And then this was rate cut day, I believe. We got the rate cut.
Mm-hmm.
And then they said, oh, down 50? How about up 50? And then just today's move was crazy, though. We were down. I looked last night. We were down like 30, 40. This is almost a 100-point reversal from the bottom to the top. So to your point,
I was almost annoyed overnight.
Yeah.
Because we spent all week saying the shutdown doesn't matter. And then the shutdown happened and the markets were down overnight. I'm like, oh, they decided to care. No, they didn't.
Gotcha.
Yeah, it's it'll be interesting to see where we go, but volatility is super low. The market seems like it wants to grind higher. Now the government shut down. The interest rate cuts are locked in based on probabilities. Things can change, but doesn't seem like they will. Bad numbers that could move markets are no longer being announced. So it's just like, I don't know what else to say. It's crazy.
You get a hot ISM number on Friday. Let's see what this does. But if it's not a hot ISM number and there is no NFP, there's nothing in the way.
SPX 7000, baby.
Here we
My
go.
Q4 guess is 69.69, so
very nice.
Close.
Book 'em.
Close.
And with that, gentlemen, overtime is out of time. Thank you as ever for joining us. Don't go anywhere. We'll be back in just a few seconds here for Macro Money, where I will talk about this jobs report, which maybe is coming out, maybe isn't. We'll see. And why it is that the markets seem to want a weak U.S. economy. So don't go anywhere.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
frequent trips to Vegas, or there was a year I did a couple of them.
What's the most financially irresponsible thing you've ever done in your life? Doesn't necessarily have to be trading specific.
Financially irresponsible, that's a big question. Like people would say like going to college these days, I don't know. Renting, I like renting. I like the flexibility. I don't know. Maybe renting, I guess, by the book is financially irresponsible. Actually, you know what my biggest purchase right when I started my job was $4,000 on a PC setup, which was not a good idea at my salary point.
I mean, anytime you take a trip to Vegas, it's pretty financially irresponsible. I would say that frequent trips to Vegas, or there was a year I did a couple of them, which was pretty irresponsible.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
The government is shut down in the US, but the markets are up. Okay, how does that make any sense? And where's the Armageddon we were promised? And what's coming up next to infuse these markets with a little bit more directional conviction and where things might head? That's what we're going to tackle here on Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And what we're going to do here is begin with a look at what the markets did today, why they appeared to do what they did, and sort of contextualize that in the sort of scope of what is occurring here with the government shutdown and maybe now less economic data risk for the week than we initially had in mind because of that shutdown. And look at some of the data that came out that might be a stand-in and what's still pending here to give us some kind of a steer if, in fact, we get to a situation where the jobs report that, of course, we were all waiting to see as a major injection of direction into sentiment, if, in fact, the government shutdown will mean that the Bureau of Labor Statistics isn't going to publish that on Friday, and then see what that might mean going forward. So let's first look at the way that these markets performed today. We can see a little bit higher on stocks ultimately. There was certainly a meaningful sell-off in Asian and European hours in the futures overnight, but that did not stick. Once U.S. markets came online, that sell-off was undone, and as we can see here, the S&P at one point was down almost 0.9%, and it finishes the day clearly in the plus column. So the sort of operative question here, really, once the shutdown occurred and markets got a chance to take a crack at what to do, overseas markets thought, oh no, this could be an issue. Once Wall Street came into the fray, negativity melted away. And we came off these lows. Now, what's interesting is that we didn't ultimately cross the swing high in the S&P or the NASDAQ in a closing sense. So we're still nominally in the same range that we've been holding here. But nevertheless, we're certainly not looking at the markets feeling terribly perturbed by this government shutdown. More interestingly, a yield down at the same time, the 10-year off, the 2-year off, in fact, most easing that's reflected in markets tends to be kind of anchored to the 2-year, and that's where the bulk of the move happens today, largely as Fed rate cut odds get firmer. We'll take a look at that here again momentarily, but as you look through this setup, you get a sense that indeed this does seem the most about what this shutdown might mean for the market's favorite bullish catalyst of late, Fed rate cuts. Now, it would be a bit disingenuous to say that gold is up for these reasons. Gold has been up regardless of relative recovery in the dollar since mid-September, a relative recovery in yields since mid-September. But gold's just doing what it's doing. It continues to edge up here, up 0.4%. But the dollar also not exactly one-sided. And there, Fed policy expectations are looking kind of curious because the yen, which is the most kind of directly yields driven of the major currency crosses for the dollar, it does see some gains as yields come in, up 0.5%. But the euro, which is a much better benchmark for the overall direction of the dollar, it was up overnight when futures markets were down and worried. But that is not what we're seeing here. It's given up all those gains, and not for anything euro idiosyncratic, not for any euro-specific reasons. You're seeing something very similar across the major currencies. The dollar is holding up very well. The yen is the only one really making a big move. The pound was up a lot more and is closing up just 0.25%. That's giving up almost more than half of its intraday gains. The Aussie is flat. The Canadian dollar is actually down. So is the franc. And so you're in a situation where the dollar is holding up impressively well, despite whatever this might mean for the structural integrity and the faith and credit of the U.S. government, if anything at all. Because clearly the response in markets here has been to actually buy bonds, hence the lower yields. And so in this kind of thing, we get the sense this is not some sort of a great sovereign risk type of thing that the markets are interpreting, at least for now. Instead, this seems more about what this could mean for Fed easing, and the markets want Fed easing. Looking at the way that things have performed so far this week, nominal gains of close to 1% for the S&P and NASDAQ, a little bit more for the NASDAQ, a little bit less for the S&P. Yields down across the board as we rebuild Fed rate cut expectations closer to where they were in the immediate aftermath of last month's policy meeting. Again, a little bit of a soggier view on the dollar, and that seems to be mostly coming today and yesterday, but not really anything that's gaining significant traction. Now, as far as the government shutdown is concerned, this is a handy chart from the New York Times that shows us how many federal workers are furloughed as a consequence of this, and it helpfully breaks it down by share of department. And really the message here is that the most essential things, Medicare, Medicaid, defense, the DOJ, most of this, Homeland Security, relatively low impact. So the Treasury, only 2% of that workforce is furloughed. Justice Department, only 11%. The EPA, or the Department of Education, over 80%. Now, of course, this gives you a sense not only of the administration's priorities, but also of what are kind of the bare minimum things that need to function. But it does also give you a sense that the economic impact of any kind of shutdown is a long arc. It'll take a while for there to be some sort of meaningful data impact, and that's if the shutdown lasts. We saw the longest one at about 35 days in 2018, and that didn't really move the needle on the economy, but for some episodic pockets here or there that quickly got rebased in the data. So we're looking not so much at the ceiling caving in on the U.S. economy as a kind of headwind, a gradual headwind to economic activity that, from the market's perspective at least, probably means more rate cuts. Now, in so much as we may not get the jobs report this Friday from the Bureau of Labor Statistics as a consequence of this, one data point that typically is not a very good predictor of official numbers, but which for the purposes of this week, if we don't get official numbers, might be our best benchmark. One source of support for markets today, interestingly, in this rate cuts heavy environment, was the jobs report on private sector payrolls from ADP, which is a big processor of HR information and payrolls and so forth. And what we got here was unexpectedly a drop of 32K against expectations of a 50K gain. Moreover, the prior month was revised down from a 50K plus rise, 54K, to a 3K loss. And so what you end up with here then is 2 consecutive months of job losses, according to ADP, for the first time in 5 years, which of course takes us back to COVID and the shutdowns and the rollout of the pandemic. It's the biggest decline since March of 2023 on a given month. That's this right here. But as we can see, that was kind of a one-off. There was some sort of idiosyncratic thing that happened here. But you can see the pace of job gains was about this. So let's say averaging around 110, 120K in this period. So this was the biggest drop since then, but this is not exactly the world's most relevant kind of macro touch point and reference point to say, well, what was happening in the world then was X. This is the biggest decline since then. Are we back at X? It's not that kind of a reference point, and this is not the kind of thing that we seem to be looking at. This seems more like some sort of building momentum slowly for job cuts, and slowly is really the key here. These very modest declines, a mass layoff, this is not across the economy. But nevertheless, it's enough sogginess that the markets might be hopeful for rate cuts. The service sector lost 28,000 jobs, according to this, with most of that being leisure and hospitality, as well as professional and business services. Those were down 19,000 and 13,000 each. There was some gain to be had in education and health services, 33,000 added there. On the goods side of things, the sector lost 3,000 jobs, where construction and manufacturing were the biggest losers, 5K and 2K each. So it looks like the numbers were soggy, but not catastrophic, and that seems to be the sweet spot for the markets here, because what they want is rate cuts, but not economic Armageddon. It was a similar story from the ISM manufacturing report, which again takes on added significance. The Institute of Supply Management is not going to be impacted by these shutdowns. So it'll be interesting to look at what this is, of course, because we have a apparent closure of the government impacting BLS. And so these surveys, the manufacturing and the service sector survey, which comes out on Friday, they have in them an employment component. And because they have an employment component, this might be, sort of in addition to these ADP numbers, a way to get a sense for what's happening with the Fed's new favored bogey, absent the BLS data. And so in that sense, we might have a situation here where this too could start to take on some added significance. And we can see here that at least for the manufacturing side of the equation, we have a relatively benign outcome. It's still a contraction, as ever. This is in the logic of PMIs, where 50 is neutral, above 50 is growth, below 50 is contraction. The further we get above 50, the faster the growth. The further we get below 50, the faster the contraction. And we can see here what we've been looking at essentially since we started to normalize off these heady levels during the catch-up from COVID. This was COVID, obviously. Big, sharp contraction, then a rapid reacceleration as we caught back up, and then that moderated to sort of a more normal pace. And we've established a kind of range for where growth is at this point since about the middle of 2023. And the story there has been of contraction in manufacturing and of a service sector that's kind of holding the economy up. And we're still looking for that service sector number on Friday, but the manufacturing sector number at 49.1, almost exactly in line with the forecasts that were out there. Still a contraction, but the most narrow contraction since the last time that there was growth, or modest growth anyway, at the beginning of the year. So here was this kind of blip, January and February, where we briefly got into expansionary territory on manufacturing. This has been the slowest contraction since then. And if we look at the internals, the price index came down a little bit more. That's encouraging in the sense that inflation pressure eased a little. Employment still deep into contraction territory, where it's been since basically the beginning of the year. But again, the pace of contraction easing. So the market seemingly looked at this again and said, well, falling employment, easing inflation, weak ADP numbers. Sounds like the recipe for the Fed to keep cutting, and to cut in a way that is maybe a little bit more robust. And that's exactly what we see here. The outlook for rate cuts over the rest of this year and next, edging into a more dovish direction. We now have 39 basis points on the board for this year. That's net of the 25 basis points that we've already seen. Then for next year, we're at 64 basis points, and we can see the total tally here shifted back to over 100 basis points, so over 1% in rate cuts. That's the first time that we've been all the way out here in about a week. Markets were a little bit soggier. They, in fact, started this week with only 93 basis points on the board, and obviously we've shifted some. The view for this year has become the most dovish it's been since that rate cut in mid-September. And so what the markets ostensibly are saying here is that the likelihood for October is locked in. No big shock there. We knew that was coming. It's now 99% versus 96% chance of a cut. December has firmed up. It is now at 87% versus 77 yesterday, almost 88. So it looks like we're going to get these two cuts. But the biggest disconnect still is next year. If we take a look at what the Fed was forecasting when it made its announcement in September, it's got the three cuts there. And as we can see with what happened with yields and what happened with the dollar since this meeting, yields have been down, or yields have been up rather, bonds have been down, and the dollar has been higher. The markets knew that this was coming. They had most of this already priced in. Now, the probabilities weren't as high, especially for December. But the markets had the three cuts already there. So this modest adjustment here from 3.9 to 3.6, from 50 basis points to 75 this year, or from two cuts to three, that really didn't tell the markets much of anything that they didn't already know. The biggest disconnect is for 20 to 26, and of course the year thereafter, but that's far away, and all kinds of things can happen in between now and then. So let's focus speculation on next year. This is only a single rate cut. From 3.6 to 3.4 is 125 basis point cut. The markets clearly think there's going to be at least two. That would be 50 basis points out of 64. And then at 14 basis points baked in the direction of that third cut, we're talking about a probability of that cut of 56%. So just a tad better than even. About a 50-50 shot that there's the third cut, which obviously is miles apart from where the Fed is by at least a cut, maybe two. Now, what's interesting about all of this and why it matters, we can see that once we started to claw back in the wake of the September FOMC meeting, some of this easing, stock markets stalled. They're up today, not surprisingly, because we get a little bit more easing into the mix. And so we're back up at the highs. But this reversal in Fed policy odds in excess of just the one cut, because of course we can clearly see here going from 140 even to 100 basis points is more than a 25 basis point shift. So this is not just taking 25 basis points out of the outlook because they've already occurred. About another whole cut has fallen out of here. And so when you start to put it back in here, the markets seem to like it. It's the flip side for the dollar, which, as we just said, has been recovering since the Fed. But you get this dovish tick, and especially in the yen, as we said earlier, you get the dollar a little bit on the defensive, though it is still holding these lows from July and still seemingly attempting to bottom, dovish speculation notwithstanding. So if we do get a jobs report, we'll see. Some of these shutdowns have been resolved within a single 24 hours, so maybe we'll still get it. That's looking like a 50K gain in the forecast, if we see it. The unemployment rate seen holding at 4.3%. Non-controversial numbers at face value. The risk, of course, if the markets are primarily wanting rate cuts and are okay with a weaker economy and want weaker data, is that they may not get it. The direction for U.S. economic data, looking at the City Surprise Index, has been to surprise on the upside increasingly since July. That probably comports nicely with the dollar's attempt at bottoming. And so we can see here that U.S. economic data increasingly beating relative to expectations. Moreover, if we look at the Atlanta Fed's GDP Now model, we can see, never mind what it says about third quarter GDP, that's still ages away, and the model is going to change a bunch between then and now. But more importantly, we can see in the trajectory of this GDP estimate whether incoming data that feeds it every day or every other day as the data comes out, whether that data has been GDP positive or GDP negative. And clearly the model has been GDP positive. The slope of this green line is very easy to discern. And so as we look at this then, we get the sense that U.S. economic activity actually seems to be heating up, not cooling down. And the labor market is, as ever, lagged. So if the Fed is focused on the labor market and that's old news and the economy is, in fact, reheating, well, then scope for easing is going to be undermined. And this is why the markets really don't want to see a hot NFP number if they get any NFP number at all. But, of course, ISM does come out on Friday regardless. And that's the service sector, which employs the lion's share of the economy. If that is going to be firmer, especially on the jobs front, then you're not going to have a lot of scope for easing that the markets can really hang their head on. And that can start to look like basically what we've seen in the wake of the FOMC meeting. Soggier stocks and a firmer dollar. And so that's how I'm positioned here still. I haven't done anything with my exposure today. I'm still long the dollar against the Aussie, the pound, the euro, and the Canadian dollar. I still have a little bit of a tactical bearish exposure to stocks, basically just on risk-reward grounds. They're pinned near recent swing highs, and so it's better risk-reward to look for a pullback than otherwise. So I have a little bit of a put vertical exposure in the Russell, the S&P here, and in the NASDAQ. I'm doing it through ETFs just to keep sizing relatively modest and to keep these things cheap so that if they go wrong quickly and not in size. Still long silver, which continues to power higher, and still long the bonds, which was an attempt to buy the dip after the Fed, and that seems to be going okay. The way that I did this was to buy the 89 call and do it as a vertical to keep risk capped, and that seems to be working a bit. And that is the exposure that I will go into the end of the week with here. And then we'll see how it all shakes out, whether we get the data or we don't. And that is Macro Money for today. As ever, we are here right after Overtime, a show I co-host typically with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I am likewise commenting at Ilya Spivak on former Twitter and on Blue Sky, and writing for the News and Insights portion of tastylive.com. If you're watching this on YouTube, like and subscribe. Macro Money is back next week. Thanks for watching. Happy trading.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Forbes called us best online for options trading. With stockbrokers.com, we're number one for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
All right, we're back. Tasty Crypto Show. I'm Ryan Grace, and with me today, of course, Shelly Van, Dan, Cecilia. Full strength here in the cave. And we got the chat popping as well. If you're not on the Tasty Live YouTube, get over to YouTube, go to Tasty Live, and type some crazy shit into the chat. What's up, my friends?
It's October.
Need like a sound effect for that. There you go. Dan's got it. It is October. How much? Yeah, all right. Yeah. Nice. Like a golf clap for October, you know? Not a quiet start, though, to the markets for the month. What are we up in Bitcoin right now? It's been a nice move back to like 117. I don't know if you guys have it on your screens percentage-wise. I'm trying to get organized over here.
I do not, but I think
7-day percentage return on Bitcoin. We're up 3.5%.
Nice. It feels good, doesn't it?
30-day 8%, 1 year 93%. Does feel good.
How's the chat feeling about October? Let us know. Yeah, I've got Sui up 8%, Aptos kind of getting off the floor as well, 7.5%. XLM, which by the way, I believe XLM, Stellar Lumens transfers are now
live in the platform in addition to XRP. So if you want to transfer either of those assets, you can do so. But yeah, green on the screen across the board here, guys. Good start to the month after what was kind of a quiet September up until recently.
Yeah. People were starting to give me dirty looks like they were doubting me, and I was like, give it time, friends, give it time.
It is tough, right? I mean, you can obviously trade futures both ways, and there's some leverage there. You have the listed products through the CME. You can trade those here through Tasty Trade. We are typically active in the spot markets. We'll trade the ETFs like IBIT, ETH-A, some options there. The market's maturing too. I mean, when we were doing this a year ago, you really didn't have the options on the ETFs that you have today. And when they did come out, they weren't that liquid. But yeah, it is a challenge at times when the market isn't doing what we like, right? You've got this long only, unlevered spot product that I think from a long-term investment perspective makes a lot of sense, at least in my opinion. But day to day, yeah, if you don't get the volatility, it can get a little boring.
Yeah.
What do you guys do when Bitcoin's not going up 5% each day?
I mean, go to the trenches. That's where I'm at.
What are you trading right now?
Well, Dan and I are in punk strategy.
Do tell. Well, I'm not in this.
Ooh. What are we up?
What are we up on Punkster?
Percentage-wise.
Let me look it up real quick.
Like.
Yeah, we definitely don't have this on Tasty Trade yet, but if
But if you're asking me what I do as a crypto person, like.
I'm going to go to CoinMarketCap and take a look at this.
Yeah.
So Punk strategy on CoinGecko is up 187% in 7 days.
In 7 days. And when did we get in? Like 2 or 3 weeks ago?
Yeah.
What's the symbol here?
ENKSTR.
STR, okay. This one?
This one.
14 cents? Oh my God, it was at 12 cents, I think, when you guys had talked about this earlier.
We got in at a penny.
Wow.
Yeah, this is.
So explain this one to me and to everybody else.
Punk strategy is basically a play on MicroStrategy, Michael Saylor's MicroStrategy for CryptoPunks. If people aren't familiar, CryptoPunks are the most valuable NFT on ETH in the entire space, actually, the most valuable NFT.
The first.
One of the first, not the first,
Okay,
but one
yeah.
of the first. And basically what this mechanism does is they created this token, they launched this token. The fees generated from trading this token are being used to buy CryptoPunk NFTs, list them at 1.2 times the floor price. When they sell, they'll take that ETH, buy the token, and burn it. So there's this mechanism where people are betting, there's fees that are generated from trading are being used to accumulate this valuable asset, punks. The previous assets they hold, they're kind of like relisting it, so it's, the floor is increasing as they earn more. And then as they sell out, they're taking the money that they earn and going back to the token, buying it, and reducing supply. So
It's this perpetual machine to keep the floor on the punks
now let me
moving.
And you guys bought this at, when did you buy this? It's been out for, it appears, like a month.
Yeah, we talked about it on Beans, and we got in around a penny.
That's where the real alpha is, on Beans.
Yeah, it really is. If you guys want to know what's going on in the space, let me read this.
So you guys were in back like a couple weeks ago and just had the explosion here, October, to start the month.
Uh-huh.
Everything's moving higher. Nice trade. And you guys are good.
Thank you.
Thank you.
Yeah. How'd you find out about this? Aside from anyone can find out about it if they watch you on Beans, but where do you guys get your
Dan's
alpha?
a punk holder. We don't give him enough flowers.
He's in the know.
Yeah.
He's in the club.
Twitter and Telegram.
Okay.
Okay, so let me just read this real quick. So there's 4 parts to it. They call it the yo-yo, a simple mechanism for buying and selling punks while burning token supply. 10% of each trade of Punkster, the token, $Punkster, is taken as a fee and stored in the protocol. They take a 2% rake, so 2% house fee. When there's enough fees in the pool, the machine buys a floor punk. The punk automatically gets listed for 1.2 times the price. When the punk is sold, all of the ETH buys and burns the token. And it just perpetually does this.
No manual. It's all in the smart contract, or actually the Uniswap V4 hooks.
Okay.
That's how. So it's all just automatic, in perpetuity.
kind of puts this bid, I suppose, into CryptoPunks NFTs, blue chip NFTs.
Because they also did it for apes, Meebits, a bunch of the blue chips.
Moonbirds, yeah.
Yeah.
Okay.
Cryptos. I have a shout out. Jose, when is Ryan going to make appearance on Beans? Well,
Dan's going to be gone.
the
so
perfect
Ryan,
time would be Friday or next
week.
Friday. So
I'll be there. I can do that.
Sweet.
Yeah. Yeah, Jose, when am I going to be invited on Beans is the question.
Aw. Ryan, will you come on Beans with me next week?
Yes.
I might need to show you how to.
Yeah, there's some.
There's a different technical setup over there.
Yeah.
Oh yeah. Now you guys are streaming every Friday on the Tasty Crypto YouTube channel, which I don't know if everybody knows this or not. I'm sure those that are, it's like the diehard viewers, which thank you, by the way, everybody that shows up here and types in the chat and joins us on the show week in and week out. Thank you guys. So I'm sure you're familiar with this, but if you're just joining, there's an entire crypto channel for Tasty, which is Tasty Crypto on YouTube. Get over there and you can watch Beans every Friday. Awesome. Well, we got some alpha to start the show. Guys, I've put together a couple of slides and then we can go anywhere as well. We've had a great start to the month. The month is October. We've talked about this, I think, previously on air. I introduced this concept to Tony Batista earlier. It's a lot of fun to talk about this, and this is the, I suppose, seasonal component to crypto markets that we've observed. I've got to caveat that with there's not a very long time frame that we look at, right? It's 10 years, which is a very short period of time relative to many other assets. So when we look at the seasonality, like take that with a grain of salt. Past performance is not indicative of future results, obviously, as we like to say with a disclaimer. But there might be something to this, and we're going to go through the slides. I want to talk about this. Stop me at any point if you have some questions. If anybody in the chat has a question, you know what to do. But October 1st, maybe coincidentally, we've started the month off with a nice rally here in the market, and that's a continuation of what we saw earlier this week, really just to start the week, where we've seen Bitcoin now trade from, let's say, sub 110 back to closer to 120. I think we're at like 117. So we'll see if we have legs here. Nice short-term trade, if not. But October, what do we mean by that? Well, when we look at the last 10 years of price action, and again, we have to consider that we've had an asset that at one point was pennies on the dollar, and it's now $100,000 or more. So you get these very large percentage moves, which can skew it at times. But when we look at the last 10 years, there seems to be a bit of a seasonal component to Bitcoin price performance in the fourth quarter of each year, with October, over that 10-year period, being by far the best performing month. You apparently want to own Bitcoin in October. September tends to be one of the worst performing months. There's the only one here in the 10-year data set where we have a negative return pretty consistently here in September. And August is somewhat muted, June, March. You know, if you've been in this long enough, you know that obviously this has been a great performing asset. But September tends to be down, and then you get October here, where on average, we've gone up 20% when you look at the last 10 years. Do you think it continues?
Hell yes.
Okay.
Yeah, I mean, I think all the signs are pointing to this trend continuing. Maybe not as much as in previous cycles, because obviously the market structure changes over time. But can't argue with that chart.
So to your point, Dan, let's zoom in to the last 5 years. Let's go back to 2020, and you'll see that returns have changed. To some extent, you know, we've got a few more months here where you've had a negative return over the last 5-year period. Market structures changed, participants have changed as well versus where we were, and certainly the price is a lot higher over time. But you still, again, observe that seasonal component here in the fourth quarter of the year. October, even when looking at the last 5 years, is the best performing month on average, up 17% versus the 20% over the 10-year period. But November and December into the end of the year perform pretty well. And even if you go and now look at the start of the year, right, it's possible that we have another couple of quarters in front of us, another 6 months, where we could get decent returns if, big if here, all caps, this follows kind of the historical patterns that we've observed. But we do see that, right? I mean, when you look at the cycles, we've done some of the analysis on the show. You look at the 4-year post-halving cycle when we look at Bitcoin, right? And this is only looking at Bitcoin here for the seasonality chart. But mathematically, they're almost perfect. The drawdowns in terms of the size of the magnitude of the move, or the drawdown of the magnitude of the move on average from trough to peak over those 4-year cycles throughout history has been about 74%. So what I mean by that is, the size of the whole cycle, the up move in terms of the magnitude of that move has declined by about 70%, 74% each cycle. We've done some shows previously looking at where it could go if it plays out the same way.
Explain that you're saying that like the volatility has kind of come in on it.
So volatility has come down, but what's also interesting to me, fascinating maybe, is when you look at all of the Bitcoin cycles, you measure that 4-year period post-halving, and in each one of those post-halving cycles, you look at what was the size of the return ultimately from that point in time to the peak in the cycle. Now, at the end of the year, at the end of the 4-year period, it might have been a lot lower. It might not have been anywhere near where the peak was, of course. But if you just measure the size of the peak, and then you look at each one of those cycles, the magnitude of that move from the halving to the peak is about 74% lower each cycle. So, it could have been thousands of percentage points initially when the price of Bitcoin was very low around the first or second halving. But as you've moved forward through time, that peak is much lower. Let's just make something up and say it was, it's 150%, which was a 74% decline from the size of the peak before.
Gotcha.
So we did this analysis. I did this with Mad Mike a long time ago, and Frank on the show as well. I think you can still find this on the Tasty Crypto channel. But we looked at, all right, if this happens again and it plays out, you go back to the post-halving period back in, I think it was April 2024 or 2023, one of the two. How far? We're 2 years past the halving?
Oh, you have parent brain, don't you?
I do, yeah. I haven't gotten much sleep recently. I'm sorry. Whenever the last halving was, apologies, I remember it was in April, just not the year. We did this show, and we looked at then, okay, what would it imply if you were to extrapolate this? And at the time, we were using like a $60,000 Bitcoin price. So it must have been just last year.
It must have been, yeah.
You get close to like 180,000 on Bitcoin. Then he did the same thing for ETH, and it got a little silly.
Say that louder.
Yeah, like 160,000, 180, somewhere like 170, give or take, depending on what the starting price was. It was pretty volatile at the time. But the ETH move is crazy. I'll force you to go watch the episode if you want to see what the ETH move was.
We'll share it.
It's fun, at the very least. But that said, again, that is what you see in these cycles. And so if we're still in that period right now, where you're in a bull market, maybe there's a few more months ahead of us here, but October tends to be Uptober, or at least it has historically. So wanted to point this out as we start the month. That said, what else should we expect? So 2 more slides to go through here. When you think about dips and opportunities to take advantage of, if we're in that period, we're still going to experience some volatility. What does that look like historically? So we're looking at intra-month drawdowns only for Q4. So we've isolated October, November, December here, going back over the last 5 years, looking at each one of those months in each year, and looking at what was the largest drawdown and when, to just get a sense of like how this trades and what you might expect. And so the largest drawdown was 32% in December of 2021, and then in November 2022, I think this was around FTX collapse, you got a 30% drawdown in the price, which also aligns with what we've seen historically throughout bull markets, where your pullbacks in Bitcoin have been 25, 30%. Those have been real buyable dips if, in fact, we're still in that structural bear market, which is, again, what we saw if you go back to, I think, April of this year, where we pulled back from like 110 to 75,000. roughly a 30% drawdown in the price of Bitcoin. A great buying opportunity if you stepped into the market at the time. What happens more frequently, though, are drawdowns in the range of, let's call it 10 to 15%. So I think, again, as long as we recognize that we're still structurally within a bull market, which I think there's a lot of signs that we are, you get a 10 to 15% drawdown and it doesn't materialize into anything larger, that tends to be a pretty buyable dip. Maybe you wait. If it's down 15, it's down 20%, you wait. Does it start to recover? That might be the signal. But this is what we've seen historically in the fourth quarter. So while we're all bullish on October going up 20 to whatever percent on average, you do get volatility to the downside, and this in general is what you could expect. On the upside, these are the moves that you could also look for if you're trading this and, you want to put realistic expectations around something. I bought the dip. It's ripping higher. Does it triple? Does it quadruple? No. Some of the biggest moves going back in time, and we had a much lower price, and obviously you had some COVID dynamics early on. In the 2020s, 66.9% was your biggest move. More recently, though, almost a 50% move in November of 2024. And if you go back to the chart there, you'll see that Bitcoin was, about 60-some thousand and went up to 90-some thousand, and ultimately went higher and pulled back to 75 or so, like we mentioned. But 60 to 90 gets you your roughly 50% move. Wouldn't that be crazy? November, I don't think it repeats, right? But you've seen a lot of kind of consistent upside volatility here too. So you look at that October period, October 2024, 25% move, followed by a 50% move in November. October 2023, 30% move to the upside. October 21, 50% move to the upside. You guys think we get a 50% move to the upside this month? 150, 160 on Bitcoin? We hit that target? I'm not holding you to this. Shelly's like higher.
Shelly's like, yeah, we're going to 180. What's the setup? What's the setup this month that could
affect that?
Push that?
Yeah.
Wrote about this to really high level to some extent this morning in the market update. In my opinion, from what I kind of look at, what I read, what I try to synthesize as well from many people that are much smarter than I am, is that we're either in or entering into an environment in which is generally pretty supportive when you look at the economy. I know there's probably some random ass headlines out there today about the government shutdown and all these things that you absolutely should just ignore, unless you think the United States government's gonna be shut down into perpetuity. I don't. But don't get distracted by that. There's been a lot of bearishness at times. I think a lot of people too look at these moves in gold and equities. They're at all-time highs. There's some, kind of stretched valuations in some areas of the market, and people just wonder how much longer can it continue. Well, first of all, you make money in the bubbles on the upside. You got to get out. You can't be too greedy. You got to take profits at some point. But I think you want to ride that wave. That said, you have the Fed that's cutting here. In terms of the projections, we're looking at a 90% or so probability of another 25 basis point cut at the next meeting, and then another cut this year. Following that, you could get back down to if we say inflation's about 3% or so, a somewhat neutral rate, 3% in Fed funds, I think it's probably your target there. So point being, everything I look at in terms of economic data, starting to see an acceleration in both growth and inflation metrics. We had ISM manufacturing today starting to tick higher. You want to see that in expansionary territory, which is going to be above 50. You're going to get services on Friday. Labor market's been a little shaky at times. So we got NFP, non-farm payrolls here, the jobs report on Friday as well. But generally, some of the things that we're seeing, and there's a lot of different ways that you can slice this, but you look at durable goods recently, you're just starting to see a number of signs of acceleration of economic growth and inflation. It tends to be a great environment for crypto. Tends to be a great environment for tech stocks, long duration assets. I think it tends to be a good environment for commodities too. So we'll see. But if in fact we're in that environment that's generally positive or constructive, and the Fed is cutting into that, and we move away from some concern that the Fed is cutting because things are really slowing down, and it's more of this, soft landing, they're going to land the plane perfectly sort of thing, then I really think you could see a lot of people jump back into the market. We've just looked at seasonally a period of time where the summer tends to be, underperformance at times in September. We also know that historically, if you have a positive September, which I think we were kind of right near there, October's even better, or the fourth quarter is even better. I just think people have been like too bearish, or maybe more so, too apathetic. People might care again. I talked about this on Monday, but look at the index for Bitcoin, or pick your other favorite crypto term in terms of Google search trends. Nobody cares, guys.
But
there's no FOMO. Like, who's talking about it?
But we talked about this too. If you want to hop in too, but like we talked about this where this cycle, in my opinion, is a cycle of like institutions and bigger flows, right? Like previous cycles, I feel like the massive run up, this kind of like FOMO spike in prices was retail driven. And I feel like this cycle with the Bitcoin ETF, with some of the ETH ETFs, MicroStrategy, this like public market or like legitimate way of accessing the asset class, it dampens the like volatility, even though flows move into the space. So yeah, I mean, people might not care from the retail standpoint, but it seems like our bigger asset managers are,
Mm-hmm. And I think that's what you need to see, right? To your point, it might not be as volatile. And so maybe we don't get these moves. But I would still take, just to get you to some of these levels where you've had a great month, right? 10%, 15%, 20%. It's definitely not that 50% move in November, but think about the price at the time, right? We're talking about something that was $60,000 here versus something that's 120, 110, 100. You get one of these moves that we've historically realized at this point. And again, you want to take profits, I think, at the end of all of this, right? We're going to do a show where we're probably talking about taking money off of the table, if you haven't already, into some of these up moves. But off of that $100,000 base, you do get to new all-time highs if we see this play out. And again, this does not at all mean that it's going to repeat. You could have a negative Q4. Who knows? We're just looking back at the data that we do have, and it is interesting enough. But I think to your point, Dan, so volatility comes down. But I think in order for the crypto market to get to, in terms of total market cap, to these new highs, you obviously have to have these bigger pools of capital that are entering into the space, these institutions, whether it's larger funds or it's kind of from the sovereign bid, if it's countries that are looking to allocate. And I'm sure that some in the shadows already are, right? You see the bid in gold, and some of this is just driven by rates in the dollar. But I think that's where it comes from. So you might have less volatility, but you get to much, much higher prices because there's bigger inflows. We're seeing those billion-dollar inflows into the ETF complex on a, sometimes daily.
I have someone in the chat, Mauser. What month did the government give its blessing to the crypto ETFs? I don't know if he means like SEC approval. But
yeah, I don't know if it's the approval or the launch. Let me do a quick.
2024, wasn't it?
2024. I think we launched like right around January. Was the launch or the? Yeah, I don't know. We're gonna have to go to Google.
Let's go to
this
Google.
one. Yeah. I don't know if you want to take a look.
Yeah.
I'll see what I can pull up here. Yeah, it's a good question. Yeah, I think it was January 2024.
January 10th, 2024 was the launch. They officially approved several spot Bitcoin ETFs January 10th, 2024. Yeah. Yep.
Yeah, I think there's going to be less volatility, and you're definitely not going to see the same upside returns. It's going to dampen over time. But I think there's still, a bullish trend that's clearly in play here. And I think back to some of the headlines that we've seen recently. We get super excited about them, and then we completely forget that they happened. For example, 401k plans can invest in alternative assets, real estate, private equity, crypto, right? And that's where the majority of the funds are going to go into. That doesn't happen immediately, and it doesn't happen across all 401k plans. But when you start to hook more of these pipes up for capital flows, it has an impact over time. Same thing with the ETFs, right? ETFs launch, I believe if I'm correct, if I recall correctly, bid in the market leading up to that point. ETFs launch, there's probably a big correction afterwards.
That's what I mean. So here's an interesting point. Flower Power 222 I really want to go bullish on Circle stock, as I feel it's going to be over $1,000 sometimes in the future. Just don't know when to buy big or just DCA in. What do you guys think? And you just mentioned blow up. This to me is one of the same trades as Coinbase stock last cycle. Coinbase stock went public at like I think it was like $300 a share, somewhere around there. And then it trades, all this mania trades up until 2021, 2022. It crashed to $50, $40, $50 in the depths of the bear. And I just feel like, it's a similar thing, right? Stable coins is the hot narrative this cycle. Circle's a stable coin stock. Well, it went live, and what did it do? It traded up to $250. I mean, it's down to 130. I mean, I don't see why you wouldn't nibble. You can nibble a little bit here, but I wouldn't empty your clip into Circle. It's only been public for 3 months? Not even.
If you haven't had it already, there's going to be an unlock where you could get some selling pressure there from insiders. I don't know if that's happened or not yet. I think that typically 90 days or more.
Go out a year. Go out a year in the options and just, I don't know. Let's just see.
Yeah, let's just look at a little bit more than a year here, but basically December 2026. Right, I don't think Circle's a zero.
No.
It would be odd. Something went horribly wrong. There is an interest rate component to this, right? So when you think about the business, Circle is going to issue stable coins. They don't pass that yield on necessarily, at least not directly to users. If they have a they have a relationship or partnership with Coinbase, so if you hold USDC with Coinbase, you're going to get like 4.5%. That's going to come down as Fed funds come down. So point being is like this impacts their margins. They're less profitable from an interest rate perspective, right? If rates are just zero and they stay there, Circle's probably less interesting to people, though they maybe figure out a way to generate fees. But the lowest strike that I can see here, if this is looking at all of the strikes, I think we've got all the strikes up here. But I've got a 60 strike, and it's about $6. And so if you sell that, that's going to be a buying power. Let me get the shares off there. Apologies. Sell the 60 strike. My buying power reduction here in a margin account at Tasty Trade is about $1,600. And I'm going to bring in, and we'll just use the bid here that you would sell at if you wanted to be filled immediately. You could probably work this at $6 at the mid price. So you're going to bring in $500 to $600 depending on where you get filled if you were to get filled there. Not bad against a margin requirement of about $1,600. Now, you're going to hold this position to realize the full profit. Obviously, you could make some money here if the price just absolutely ripped higher. You'd see that option trade a little bit cheaper, but it's not going to lose all its value because there's a lot of time premium in here at 443 days. So you're locking up capital for a long time. But as an example, like that's one way where you could have that bullish exposure. We're looking at the 8 delta. Maybe you want to be a little bit more aggressive because the stock's at 128, 130 right now. But maybe you think, I would like to buy Circle at $100 a share. I'm bullish on Circle. Well, you get paid almost $2,000 against a $3,700, $3,800 buying power requirement here to put that on with like a 400-day duration. You can move this around clearly. And you can look at, the next 16 days. I don't think it's going to go to 100 in the next 16 days. Crazy things have happened, though. But if it doesn't go to 100 in the next 16 days, if you want to buy it there, you do have a similar buying power reduction, obviously. But you're going to bring in $58 in premium. And you can just do that every week at the $100 strike. You're going to get paid less if it does go higher, right? So you could have that delta 1 component where you're just long the shares. But there's a lot of ways to do this in addition to dollar cost averaging. You can do this with other crypto-related stocks as well.
We're not able to share watch lists across different accounts, are we? Because the one...
I don't think so.
You don't think so?
I don't think there's a way, at least not like as a feature, I don't think there's a way where if you built a watch list, you could send it to us, but we could put it together for people.
We should. So the last couple weeks, I don't know if we'll do it this week, but the last couple weeks, I had put together a list of all of the crypto treasury companies, the DATs that we've been following, crypto treasury companies, and I have a watch list. And what I really want to do is I want to figure out which ones, like how to play some of these with options, because some of these are, I don't know, they're pretty rich. They might rip higher. Like this Ford Industries, for example, is accumulating over $1 billion worth of SOL. Is that a levered bet on SOL? Maybe, but it has options, or it will. UPXI, same thing. SUI-G. I mean, let's just even look at SBET, right? Like SBET is the Sharplink Gaming. Bitmine Technologies, right, is the Tom Lee one.
Yeah, I mean, you look at the vol in here, if we just use this smooth VIX style calculation, 100%, which is a hell of a lot higher than the ETH vol right now. We know realized vol is certainly not 100% in ETH.
Right. So, and I don't know how much volume there is, but if we look at that and, do we sell?
I got 16.5 million shares traded today.
It's not bad.
No, options are a nickel wide.
It's pretty decent. I don't know what you would do. I mean, maybe you sell call spreads and see. I think that these are going to blow up at some point.
Like to the upside or the downside? See, when we're talking crypto blow up, I mean, what are we talking about, Shelly?
Both. So you got to play both. You got to play for that immediate short-term upside move, but then hedge yourself to the downside, because I feel like these are. I mean, what are these? These are levered bet. It's a levered bet on ETH, is what I think, right? And, maybe you have to do some analysis, get ChatGPT to dig into the financial statements and news and see if they're running.
Or watch Beans.
But are they running alpha strategies on top of this? Like, are they doing DeFi? Because a lot of these are doing leveraged DeFi strategies with the fund.
I think so. That seems to be like the value prop. Otherwise, I mean, maybe from the institutional perspective, it's just easier to buy some of these things. That said, I mean, there's ETH ETFs with options on them, so I'm not quite sure what the allure of SBET is versus an ETH ETF as an institution. But if they're able to participate on chain in ways that generate yield, then okay, makes a little bit of sense why you might pay a premium for that.
Right.
Why do you think they're going to blow up?
Well, because it's just, I don't know, it's just common. I don't know. I feel like it's just common sense.
It's over-levered.
Yeah, it just starts
at some
with
point in the cycle.
Yeah, it starts with MicroStrategy. It's like, it's a good idea. He got, started accumulating Bitcoin. It's a great idea. And then as we see in finance, people pile onto this trade. Now we're raising for ETH. It's like, okay, ETH is not, it's not as risky. It's definitely riskier than Bitcoin, but it's not as risky as some of these other ones. But we've interviewed the guy from SUI. I mean, that's a newer token. I'm not saying what he's doing is, I'm not saying what he's doing is.
You're just saying that, like, look, there's risk here. There's company-specific risk. There's strategy-specific risk versus owning the underlying asset in this case. Similar to, like, okay, you got gold miners.
Yeah, and like I think I interviewed the Athena stablecoin one on last Wednesday, and he talks about a beta and an alpha component. It's a SPAC. They raised $890 million. There's some other things they're doing, right? They're participating in the protocol. They're governing. It's not necessarily that it's just like some hedge fund. It's just that he talked about a beta and alpha component to the trade. And the alpha component is going out and doing yield strategies. And the Athena protocol, if people don't know, is a yield-bearing stablecoin, and the yield comes from the carry trade. Carry trades, they work and they're very common, but they do blow up. It's so my point is that it's leverage on leverage, and some of this doesn't. If you're a crypto native, just buy the token, right?
Yeah.
So it doesn't seem sustainable, is what I'm trying to say. If I'm just using heuristics, that's all.
Shelly, we're going to give you the last word here. We've run quite over, so apologies to the production team, but thank you for giving us the time here today. I think we had a great show. There's a lot going on. It is October, after all. What are you seeing in the market? Where's the alpha? What are your alpha yield strategies?
Oh, good grief. I'm watching a lot of things in DeFi and, again, in the trenches, but I'm very excited that we now offer Uniswap at tastytrade.
Yes.
Good call out.
That's one of my favorite trades.
Yeah, Uniswap launched yesterday alongside Arbitrum and BAT. We had a couple little bugs we had to fix, but I think that should be good to go now. If not, we'll have that this week. And then also XRP and XLM transfers now live. Awesome. Well, guys, thanks for joining me here in the cave. Thank you all for tuning in, watching the show, and joining us
We'll be back
in the
tomorrow
chat.
at 3.
Oh, that's right. It's Crypto Week.
It's Crypto
How
Week.
could I forget? We're here all week. I'll be on Beans, and we'll be back tomorrow at 3 o'clock. New time. Same show. Same alpha. More alpha.
More alpha.
New time. Shelly and I will be back. But until then, I'm Ryan.
I'm Shelly.
I'm Dan.
Peace.